Hello, my dear brother or sister. Welcome to Indirect Tax Marathon. In this marathon series, I will be discussing each and every chapter in detail along with the amendments applicable for your exams. And wherever I am covering the amendments, I would specify that it is a particular amendment applicable for your exams. And there are totally 15 chapters in indirect tax. I will be discussing each and every chapter. And I want you also to cover 100% syllabus along with me. Coming to direct tax, guys, the videos on direct tax is already uploaded for all the chapters. And I hope you are already done with direct tax. Am I right? Are you done with it? Yes, is what I hope for. So let us begin the indirect tax revision with chapter number 1 now, which is all about the introduction to GST. And whatever I would be covering in this revision series is from my revision material, guys, which is a colored book. If you want a printed copy of it, you can place an order on our website. Let us begin with chapter number 1. Before we get into GST part, first we will understand what is tax, what is the difference between direct tax and indirect tax, guys. Tax is a compulsory payment which every citizen has to make to the government. Sir, why do government collect taxes? Whether it is central government or state government, they have various expenditures to make, guys, like health, education, infrastructure, public security, and also various public schemes which they offer to the public or people at large of the country, like free electricity or free bus facility, or government will also offer an helping hand to senior citizens or to the farmers and all. So where do the government get money to spend for all these purposes? Is the major source of revenue to any government, whether it is central or state, is from tax collection, guys. And we have two different types of tax, that is direct tax and indirect tax. I have given in this table what is the difference between direct tax and indirect tax. Direct tax is the one where the impact and incidence is on the same person. Income tax is an example for the direct tax. Sir, if I am the person who is earning the income, who should pay tax, guys? Myself. Will you pay tax on behalf of me or for me? No. So, direct tax or income tax is one where the impact and incidence is on the same person. Sir, what is that incidence and what is that impact? Incidence means the liability to pay tax. So, if I earned an income, I am the one who is liable to pay tax? Yes. Impact means who is ultimately bearing the tax burden, means from whose pocket the tax is paid ultimately to the government. So even in case of income tax, as I told you, liability is with me. So who should pay tax now? Me. So both is on the single person. Whereas coming to indirect tax, the impact and incidence will be on two different persons, guys. Let us take GST as an example. GST is one of the indirect tax. The liability to pay GST is on the supplier. But can he charge and collect it from the recipient, that is the buyer? Yes, he can do it. So incidence is on the supplier, whereas the impact is on the buyer or the recipient. Okay. Then coming to the second difference, the viability of payment. The viability of payment, the direct taxes are lesser burden to the people, guys. Why? Because when it comes to direct tax, only if I have an income more than basic exemption limit or more than the rebate limit, I am supposed to pay tax. Sir, I have an income of 2, 3 lakh and all, which is less than basic exemption limit. Should I pay tax? Need not be. Or else, even if you have income more than that, maybe the amount of tax what you pay is minor or small. Whereas under indirect tax, it is not like that, guys. If I am buying, assume this pen on which GST is applicable, I should pay GST on it. Now, if you are buying this pen, should you pay GST? Yes. Can you take a protection telling, no, no, sir, I'm a student, I don't have so much of earning, so give pen without GST? No. If you, being a student who is not earning any income, assume income, okay? So, in the future, you will definitely be earning, but as of now, being a student, let us assume you are not earning any income, so you don't have any income tax liability, but you want to buy any product or services on which GST is applicable. Are you supposed to pay GST? Yes. Because obviously supplier is liable to pay tax. He will charge and collect it from you, irrespective of your income. Same way, assume you are joining for the classes and the academy in which you are joining for the classes is registered under GST and they are charging GST on you. Are you supposed to pay that GST? Yes, you have to. Even if you are buying our classes, you would be paying GST because I am registered under GST. Accordingly, as a supplier, can I charge and collect it from you? Yes. Fine. Then coming to administrative viability. The administrative cost of collecting the direct tax is more because it's completely based on self-assessment. Assessee himself has to calculate the total income and calculate the tax liability, pay the tax and file the returns. Many people will have that mindset, why should I pay tax? I don't like this government. What did government do for me? They have not done anything for me. They have not given any benefit for me. See the road, see that, see this, and the people will have a lot of complaints. Yes, so that is where the government has to take extra efforts in order to make the people to pay tax. And especially in income tax, government is taking a lot of initiative to bring more and more people under the tax bracket. Because there might be many people who are earning income more than basic essential limit but not paying tax. So government is trying to their best to bring all those people under the tax bracket. So they are trying to link your transactions, whichever is happening through bank account, through investments, various investments. They are trying to auto capture it and link it to your PAN. And PAN is an other PAN is a unique number for income tax purpose. PAN is a unique number. Even for GST registration, you should have PAN. So to the extent possible, they are trying to link all the transaction along with your bank account, your various investments and all guys. Oh, then coming to cost of collecting indirect taxes is very less when compared to direct tax because as a supplier, as a seller, if I am selling any goods on which GST is applicable, I am liable to pay GST. But can I charge and collect it from the recipient? Yes. So they are giving the responsibility of collecting the tax to whom? Supplier. If supplier fails to collect the tax from the recipient, then he has to pay out of his own pocket. So at least to escape from that, what does he do? He will charge and collect it from the recipient and remit it to the government. Here also people try to escape from tax liability by not disclosing the sales and all. But still, when compared to direct tax, the efforts of the government in indirect tax is less tax. Then coming to tax liability, direct tax is levied on the assessee, that is income tax. Income tax is the only form of direct tax, guys. It is levied on whom? The assessee, the person who has earned the income. In income tax, we call the person who is paying the tax as assessee. And assessee is defined in section 2 clause 7, guys. Okay. Whereas indirect tax is levied on the supplier of goods or services. Or even customs duty comes under indirect tax. Customs duty would be levied on whom? Importer or exporter. Or what is covered in your syllabus is only GST. Customs is not a part of your syllabus. So if I just consider GST, it is always levied on the supplier, guys. The liability or the incidence is on the supplier. Okay. Then coming to the last difference, that is the nature. Income tax or direct tax is progressive in nature. As the assessee progress, even government will progress. As and when I earn more and more income, I will pay more tax. Because for slab rate assessee, what is the tax rate applicable? Slab. Correct now. More and more income you earn, more and more tax you have to pay. 30% being the highest rate. Yes. Even if it is a company partnership firm and all, flat rate is applicable. But they will also end up paying more and more tax as and when they earn more and more income. Yes, sir. So it is progressive in nature. Whereas indirect tax is regressive in nature. Irrespective of how much income you are earning, sir, assume on this pen 18% GST is applicable. Just pay 18%. Just because you are earning more, they will not ask more GST on the spend. Depending upon which goods or services you are availing or purchasing, you need to pay the GST at the respective rate, guys, irrespective of the income you earn. In India, GST was introduced from 1st July 2017. But before we proceed further, I will just try to explain the concept, how the things were there, or how the indirect tax mechanism was there before 1st July 2017, guys, so that you will understand why GST was introduced in India. What were the deficiencies or disadvantages under the previous indirect tax regime? Got it? Yes. I will just try to explain with an example. Whatever I will be explaining now is before 1st July 2017, how the indirect tax mechanism was. Okay, this is only with respect to past, guys. Okay, yes, fine. I am just taking an example. Observe here. Look here. Hello. Yes. Assume there is a manufacturer who has produced a product with a manufacturing cost of 100. Previously, any manufacturer who manufacture a product, before the goods leave the factory gate, they are supposed to pay something called as excise duty. This is on the manufacturing. So the taxable event is manufacturing. Okay. So on the value of the goods, and in this example, everywhere I have taken the tax rate as 10%, guys, for easy sake. Okay, sir. Fine. So on 100 rupees, 10% excise duty comes to 10 rupees. Okay. Then the cost now including tax becomes 110. Okay, sir. He wants to earn, assume 40 rupees profit. So he's fixing the selling price as 150 and selling the product to the wholesaler of Karnataka. So manufacturer is in Karnataka and wholesaler also is in Karnataka. When there is a sale of goods within the state, the seller was supposed to pay VAT, value added tax. Let me assume even that at 10%. So 10% of selling price 150 comes to 15 rupees. Sir, can we adjust this 15 rupees against 10 rupees? No. Two different tax. Excise duty was levied and collected by central government, whereas the VAT was levied and collected by the respective state. Which state, sir? In my example, it will be Karnataka state, as the sale of goods is within the state, guys. Okay, sir. So invoice price is 165. So totally wholesaler has to pay how much to the manufacturer? 165. 165. Okay. Now for the wholesaler, what is the cost or purchase cost means 150, because for this 15 he can claim a credit. He can claim a credit means he can adjust it against his output tax. Okay, sir. So 150 is his cost. 50 rupees, assume you wants to add profit, and he is fixing the selling price as 200. And he is selling the goods to a retailer in Tamil Nadu, outside the state. When the seller is selling the goods outside the state, he was supposed to pay central sales tax. It was levied by central government, but it should be collected by the state. Which state, sir? Origination state. That is the state for which the seller belongs to, and not the Tamil Nadu in my example. So which state will get this revenue? Karnataka. Okay. So let us assume same CST also at 10%. Okay. So on selling price 200, 10% comes to how much? 20. 20, guys. Okay. So 220 is an invoice price, and assume the buyer, that is the retailer, has also requested the seller, that is the wholesaler, to arrange for transportation. So wholesaler is arranging for a transportation for which the transportation company is charging 25 rupees, and as they are providing service, that is transportation service, they are supposed to pay service tax of 5 rupees. ST stands for service tax. Got it? Yes. So I'm just taking 5 rupees to round off, guys. Okay. So transporter is providing the transportation service on which he was supposed to pay service tax. Service tax was levied and collected by central government. Okay. Let me assume it to be 5 rupees. So transportation cost plus service tax comes to how much? 30 rupees. So it is a cost borne by, assume, wholesaler. So what is the total amount which the wholesaler is charging to the retailer including transportation is 250. 250. And wherever I have written CG means it is a revenue of central government. So the tax which is levied and collected by central government, I have highlighted in red color. Okay. And the tax levied and collected by the respective states, I have highlighted in green color. Green means state tax, red means central tax. Okay, sir. Fine. Now you might ask me, sir, actually wholesaler paid 165 to the manufacturer. No, sir, but you took only 150. Guys, if I have paid any tax on my purchases for which I can claim the credit, then the tax will not form part of my purchase cost. It will not form part of purchase cost. Okay. Now on the sales, wholesaler is supposed to pay how much tax? 20 rupees. He will charge and collect 20 rupees from the retailer. Okay. But 15 rupees he has already paid on purchases. No, he will get a credit for it. He will get a credit for it. Only remaining 5 rupees he has to deposit to Karnataka state. He will collect 20 from retailer, adjust 15 rupees paid on the purchases against it, remaining 5 he will deposit. We call this as input tax credit. Okay, sir, or credit. Fine. So that is why we just took 150 rupees. If he cannot claim the credit of 15 rupees, then the cost should have been 165, guys. Got it? Yes, sir. So retailer will totally pay 250 rupees to the wholesaler, guys. Okay. Now what is the purchase cost of the retailer? 250. Sir, should we include 25 rupees and all? Yes, because he cannot claim the credit of this. He cannot claim the credit of it because the tax paid in Karnataka or to Karnataka government cannot be claimed as credit in Tamil Nadu, guys. That is the other state. Okay. So purchase cost is 250, and to bring the goods from one state to another state, in order to enter that in a particular state, you are supposed to pay something called as octroi duty or entry tax. Let me assume it as 10% of the value of the goods, which is 250 into 10%, 25 rupees. And assume retailer wants to make 25 rupees profit and is fixing the selling price as 300. And he wants to sell these goods to the consumer in Tamil Nadu within the state. When the goods are sold within the state, what was levied people? VAT at 10%, 30 rupees. And it is whose revenue? State government. Whereas octroi duty, it is a local authority revenue, guys. Local government or local authority, like municipality, panchayat, like that. Okay, sir. So now totally retailer is charging how much to the consumer? 330. 330. Okay. So consumer will finally pay 330 and consume the goods. Can he claim any credit? No. As he is not further selling it, he cannot claim any credit. Okay. Now I already told you why didn't we exclude this 20 and 5 rupees from the purchase cost, sir? Because for this credit is not available, guys. Credit is not available. Accordingly, it will be a part of cost to the buyer. Hope you understood. Yes. And this is the tax paid in Tamil Nadu government. Sir, against this, can I adjust 20 rupees? No, not possible. Not possible. Hope you understood this example. Yes, guys. So, central tax was not supposed to be adjusted against state tax, or state tax cannot be adjusted against the central tax, or tax paid on manufacturing cannot be adjusted against sales. Correct. Yes. And same way, service tax cannot be adjusted against the goods tax. Goods tax in the sense, if you sell the goods within the state, VAT, outside the state, CST, that is central sales tax. So one couldn't be adjusted against the other. This was leading to cascading effect, guys. Cascading effect means tax on tax. Tax on tax. For example, this 250 already include various taxes. No, it already include all these taxes. On that, again, we are leaving some more taxes. So tax on tax, which will lead to increase in prices, which is ultimately borne by whom? The consumer. This was one of the major disadvantage under the previous indirect tax regime. And the compliance burden, you can see, assume I am the person who is doing all this. I should file VAT returns, CST returns, service tax returns, and every month I need to make these payments. Sir, should I take care of my business or should I take care of only compliance? It was too burden for the person who is doing the business, guys, in order to file returns under each of this regime or each of this law and also pay tax. And they have to hire the experts for all this, which comes with the cost. Yes. So in order to remove all these difficulties or disadvantages, government introduced GST, guys. So same example I will try to explain under GST. That is from 1st July 2017. If this transaction happen, then how it will be. Okay. So I will start with this. Manufacturer, is the cost is 100 rupees. Assume he wants to add same profit which I took here, I will take, guys. Okay, 40, 50 and here 25. Same amount of profit I will take. Okay, yes. Okay. So manufacturer wants to make 40 rupees profit, and now once GST is introduced, there is no excise duty. The manufacturer need not pay any tax on manufacturing of goods, guys. Only on the supply. Supply is a taxable event under GST. On the supply, which is nothing but sale of goods or services, GST has to be paid. Okay, fine. So there is no manufacture excise duty now. Okay. So manufacturer has to had 40 rupees profit. So you will fix the selling price as 140 and let us assume GST rate as 10%. There is actually no GST rate of 10%. I am just taking for easy explanation, guys. Because in this example, everywhere I have taken 10% tax. Okay. Yes. Sure. So let us assume GST is at 10% of 140, which is 14 rupees. So wholesaler will totally collect how much? Wholesaler will totally pay how much to the manufacturer? 154, including GST. Including GST. 140 is for the manufacturer. Remaining 14, he has to remit it to the government. So the tax which the manufacturer has collected from the wholesaler, we call it as output GST or output tax. Okay. On that, if he has paid any taxes on his inward supply, which is like purchases, he can adjust it. But in my example, I am assuming it to be nil. Actually, even manufacturer would have purchased raw material or he would have availed various services which he is using in the business on which he would have paid GST. Can he claim a credit of it? Yes, he can claim. But in my example, I am assuming that manufacturer doesn't have any credit of input tax. So it is nil. So he has to deposit entire 14 rupees to the government. Okay, sir. Then coming to wholesaler. Wholesaler, what is the cost for him? 140, not 154. Even though he has paid 154, he can claim the credit of 14 rupees. Who? Wholesaler. So we will take only 140 as his cost. 140 as his cost. Okay. Now he wants to make 50 rupees profit, which I shown you. Same 50 rupees profit. Yes, sir. And fixing the selling price as 190. On that 10% GST comes to 19 rupees. So totally wholesaler will charge how much to the retailer? 209. So retailer will pay 209 to wholesaler, in which 19 rupees is GST, which we call it as output tax for wholesaler. But will he pay entire 19 to the government? No, no, no. Whatever 14 rupees he has paid on purchases, he can claim a credit of it, input tax credit. Remaining 5, he will deposit it to the government. Remaining 5, he will deposit it to the government, guys. Okay. Then the retailer purchased the goods for 209, but what is the cost for him is only 190. That is excluding GST. As he can claim a credit of it, we are taking only 190 as a cost. And he will add 25 rupees profit, same as your, and fix the selling price as 250. On that 10% GST comes to 21.5. So the final selling price to the consumer is 236.5. So the retailer will collect 236.5 rupees from consumer, out of which 21.5 is an output tax. Okay, we will take output tax. Should he pay it fully to the government? No, no, no. Whatever tax he has already paid on the purchases, that is retailer, he can claim a credit of it. He can claim a credit of it, which is 19 rupees. Remaining is how much, people? 2.5. 2.5. Okay, sir. So totally government is getting how much revenue? 21.5. Who ultimately paid it? The consumer. Consumer. GST is also called as the value added tax. Means at each stage, the seller will pay tax only on the value addition given by him. For example, you can observe you. What is the value addition given by the manufacturer to the product? 140 rupees. On that 10% comes to how much? 14. He paid it. Then wholesaler purchased the product at 140 and selling it at 190. What is the value addition given by him? 50. That is the profit element. Okay. And I am assuming in this value chain or in this supply chain, everyone are just purchasing the goods and selling as it is, guys. We are not considering any cost incurred by these people. Okay. Yes. Chalo. So he purchased for 140 and selling for 190. So that means what is the value addition given by the wholesaler to this product? 50 rupees. So on 50 rupees, 10% comes to how much? 5 rupees. That is what wholesaler is paying. Okay. Same way. Retailer purchased for 190 and selling it for 215. So what is the value addition given by the retailer for this product? 25 rupees. On that 10% comes to 2.5. So you can see at each stage of supply, the supplier is paying tax on the value addition given by them to the product. That is why GST is called as value added tax. But ultimately, the consumer will bear the full tax. Why? Because, sir, whatever supply we are making, if I am assume I am purchasing the goods and I am using it in my business, or if I am further selling it, I can claim a credit of whatever tax I am paid on my purchases. And on my sales, whatever I am liable to pay, I can charge and collect it from my recipient. And you can observe one of the major advantage under GST is, sir, cascading effect is removed under GST. No, yes. Accordingly, the end consumer will end up paying lower amount or less price for the same product. Under previous indirect tax regime, consumer was paying totally how much, guys? 330, which includes multiple taxes. Whereas here, 236.5. And you can see manufacturer, wholesaler and retailer is making same amount of profit under this scenario also. Got it, people? Yes. So under GST, the cascading effect has been removed. I cannot tell that it is 100% removed, because if credit is not available, automatically it will lead to cascading effect. Yes. So there are few scenarios when credit is not available. So in that case, will it lead to a cascading effect? Yes. But to the extent possible, they have tried to remove the effect of cascading under GST, guys. And now under GST, the supplier is supposed to file 2 returns. If they are small, they can also opt for quarterly. That is QRMP scheme is there, where they can file GSTR 1 and 3B quarterly. If not, they will file every month. Whereas under previous indirect tax regime, multiple returns were there. Under each law, sub-separate returns, sub-separate due date, sub-separate payment date. So a lot of confusion were there. But now it is comparatively easier, guys. Got it? Yes. And in this, there are different components depending upon whether it is the intrastate supply, interstate supply. It can be split into CGST, SGST, or IGST and all. Those things I have not covered here because this is very basic, guys. All this in detail we'll be learning in the coming chapters. Even to claim this credit, there are a lot of conditions to be satisfied. With respect to input tax credit, provisions are covered in section 16 to 21 of Income Tax Act. CGST Act. CGST Act. As I am a teacher teaching both income tax as well as CGST, sometimes by mistake, instead of telling GST, I might tell income tax, or instead of telling income tax, I might tell GST. So please forgive me. Yes, because inside me, income tax teacher also is there, guys. Okay, fine, sir. Then coming to this part. Okay. I will also try to explain the concept of GST through this. Yes, guys, under GST, the taxable event is supply. So whenever there is a supply of goods or services, the supplier is liable to pay GST, but can he charge and collect it from the recipient? Yes. Now assume supplier is supplying the goods to the recipient, which we call it as outward supply. Sales is called as outward supply. Okay. On that, he is supposed to pay output tax. Let us assume the value of sales or value of supply is 25 lakh. On that, GST rate is 10%. So 2.5 lakh. 25 lakh into 10%, 2.5 lakh. Okay. So supplier will totally collect how much from the recipient, guys? 27.5 lakh, out of which 2.5 lakh is a tax. So what is the revenue of supplier means? 25 lakh only. Okay, sir. Now assume the supplier has also made inward supply, that is purchases. Purchase is called inward supply, whereas sales is called outward supply. What I am supposed to pay on my sales or outward supply is called output tax. What I have paid on my inward supply is called input tax, guys. So let us assume the value of inward supply is 10 lakh, on that GST is 1 lakh. So totally this person has paid on his inward supply 11 lakh. And for this inward supply, this person would be called as supplier, whereas this guy will be called as recipient, guys. Okay, yes. So on outward supply, output tax is 2.5 lakh, whereas on inward supply, input tax is 1 lakh. So let us see the top part here. This is with respect to tax. So output tax is 2.5 lakh. So should this supplier deposit entire amount to the government? Not required. He has already paid 1 lakh on his purchases. No, he can adjust it. Remaining, he will pay to the government, or he will deposit it with the government, guys. This we call it as GST payable or GST paid through electronic cash ledger. And guys, see, we being in the first chapter, to whatever extent it is required now, I will be explaining it. But all these concepts in detail, we will be learning in the respective chapter also. Got it? Because we are just seeing the basics. Now, sir, what should we pay? As I told you guys, see here I have just mentioned GST. But who will earn this revenue? What will be levied, or who will be levying it? Whether central government or state government, depends on the nature of supply. Depends on the nature of supply. Whether the supply is intrastate supply or interstate supply. Sir, when do we call a supply as intrastate supply? Means when the location of supplier and place of supply is in the same state or same union territory. We call it as intrastate supply. And in case of intrastate supply, CGST plus SGST would be levied, or if it is within union territory, CGST plus UTGST would be levied. CGST plus UTGST. I have given here, you can see. For intrastate supply, that is where the location of supplier and place of supply is within the same state, we levy CGST and SGST. CGST is levied and collected by central government, whereas SGST is levied and collected by the respective state where the supply is taking place. Oh, sir, what if it is within the union territory? Then CGST and UTGST would be levied, guys. CGST will be levied and collected by the central government, whereas UTGST also is managed by central government. But whatever money is collected in the form of UTGST will be used for the development of the respective union territory. Okay. Next, sir, what if it is not intrastate supply? We call it as interstate supply. That is, when the location of supplier and place of supply is in two different states, or two different union territory, or one state, one union territory. Then we call it as interstate supply. In that case, IGST will be levied by central government. IGST would be levied by central government. Half of it they will keep, Another half they will give it to the destination state, guys. Destination state. GST is called as destination based consumption tax. So the revenue, when the supply is outside the state, the revenue will go to the destination state and not origination state. Okay, sir. Fine. So this is all about the basics of GST, guys. Till now, whatever we have seen is just a basics of GST. Yes, we'll go back to the revision material now. We will see what points are given. GST is a consumption based tax which is levied on the basis of what? Destination principle. The concept relates to taxing the supply of goods or services at the point of consumption. Guys, assume the GST rate applicable is 18%. If it is intra-state supply, 9% CGST, 9% SGST will be levied. 9% CGST will go to central government pocket and 9% SGST will go to the respective state government pocket. Sir, what if it is interstate supply? Then 18% IGST would be levied, in which half will be retained by central government as their revenue, another half will be given to the destination state. That is why we are calling GST as destination based consumption tax. Okay. For example, assume the goods are sold by me to a person in Tamil Nadu. So it is an interstate supply. 18% is the rate applicable, you assume. In that case, 18% IGST will be levied and collected by the central government. 9% will be retained by the central government. Another 9% they will give it to the Tamil Nadu government. Yes, sir. Next one. It is applicable all over India, including Jammu Kashmir. So GST provisions is applicable entire India, guys. Yes, sir. Then it adopts dual taxation model where both union, that is central government, as well as states levy and collect taxes simultaneously. So both have the power to levy and collect GST, guys. Okay. It ensures seamless flow of input tax credit to a large extent. As I explained in my example, the tax paid on inward supply is allowed to be adjusted against output tax. That is called input tax credit. So at each point of sale, the supplier will end up paying tax only on the value addition given by them to the product or service. Oh, next. For GST purpose, they have framed a GST council as per Article 279A. Any decisions with respect to GST will be taken by GST council, which is headed by the Union Finance Minister, guys. That is Madam, our Madam. Okay. Next, to essence of GST is in removing the cascading effect. Sir, what is the purpose of implementing GST? The important feature is to remove the cascading effect which was there under the previous indirect tax regime. Okay. That is tax on tax, both central and state taxes by allowing a setting off of taxes throughout the value chain, right from the original producer and the service provider's point of view up to the consumer level, guys. Got it? Yes, sir. Then, now, no government can levy tax except the authority is given to them through a constitution. So only constitution give the power to the government to levy tax or to make laws with respect to anything. Now the government didn't have any power to levy GST or to make law with respect to GST. First, they have to take that power, yes, for which they amended the constitution. So with respect to constitution, they have added few new articles or they have amended few provisions. What are those? Some important things I have given here, guys, with respect to GST. We are not covering the entire constitution. We are just seeing what is relevant with respect to GST. Okay, first one, Article 246A, power to levy. Power to levy what? GST. Because that power was not there with the government. Power to levy income tax was there. Power to levy service tax, CST, VAT, everything was there. But power to levy GST was not there. So they added a new article 246A to take that power. Okay. So this article 246A, we will override article 246 and grants power to both central government as well as state government to make law with respect to GST. Both the government is making the respective law. CGST law will be made by central government, whereas the SGST Act will be made by state government. In addition to this, there are few more laws which we will discuss later. Only parliament can levy tax on what? Interstate supply. That is outside the state. Only parliament means central government will have power. And with respect to interstate supply, it is given in Article 269A. What is it? Parliament to levy IGST, that is integrated GST, on interstate supply. Import and export is also deemed to be interstate. Guys, when it is outside the state, it is considered as interstate. Sir, what if it is outside the country, import and export? Obviously interstate. Obviously interstate. And in GST, export is treated as zero rated supply, whereas import is interstate supply and we levy IGST on it. Even the export is also interstate supply, but taxable at zero rated. We call it as zero rated supply. Whereas on import, IGST would be levied. And government is supporting the exporters by treating it as zero rated supply under GST, guys. Okay. IGST, whatever is levied and collected by the central government, will be distributed between the central government and the destination state. And the parliament means central government, will decide with respect to place of supply. There is a separate provisions with respect to place of supply, which is given in IGST Act, which is made by whom? Central government. And we have a separate chapter for it. We will cover it later. Okay. Then Article 279A, which talks about GST Council. As I told you guys, GST Council has been formed by a president, and any decisions with respect to GST will be taken by GST Council. Any announcements will be made by government, but who will recommend this announcement to the government is the GST Council. They will conduct a meeting, take the decisions and recommend it to the government, and government will finally make an announcement, guys. Okay, fine. A federal body constituted by the president on 15th September 2016, that is GST Council, and who are the members of it? The Union Finance Minister is the chairperson, currently the Nirmala Sitharaman Madam. Then Union Minister of State, who is Pankaj Chaudhary, he is also from central government, but he is in charge of states. Okay, because Madam cannot go to every state and collect what is required, what in fund they want and all, what is the need or requirement for them. So there is one person to assist the central finance minister, that is the Union Minister in charge of the states. Okay, so they both belongs to central government, guys. Then every state will have state finance ministers. They are also a member of it, guys. Okay. And what is the quorum of GST Council meeting is one of the total number of members. Okay. But before going forward, guys, I will just explain you. See, the total number of members in GST Council is 33. Sir, how is it? Central Finance Minister is one. Then Union Finance Minister or Union Minister of State in charge of revenue or finance. Okay, they are from central government but in charge of states. Okay, so they both are from central government, which I have highlighted in red color. Then the last one is state finance ministers, totally 31. For GST, we have totally 31 states, guys. How is it? I will explain you. So totally how many members are there? 33 members are there for GST Council. And for GST purpose, guys, we have totally 31 states. In India, actually, we have 28 states and 8 union territory. I repeat, 28 states and 8 union territory. But for GST, we are treating Delhi, Puducherry or Pondicherry and Jammu Kashmir as states because they have their own state legislature and they have their own chief ministers. So for GST, we are treating these 3 union territories with state legislature as what, guys? States. So totally we have how many states for GST purpose? 28 plus 3. Whereas how many union territories? 5. Which are those? Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli and Daman and Diu, last 2, Chandigarh and Ladakh, guys. Got it? So if there is any supply within the union territory, what would be levied? CGST plus UTGST. Sir, if there is any supply within the states, what would be levied? CGST plus SGST, guys. Got it? Yes. CGST plus SGST. CGST will anyway be common. Okay, fine. Coming back. Fine. So out of this members, minimum, how many members has to be present in every GST Council meeting, guys? Half of it. Half is the quorum. So half of it, half of 33 comes to 16.5, but a particular member cannot come, who cannot bring only half of his body, no? Yes. So we need to round it off to 17. 17 members minimum, guys. Okay, sir. Then, what is the voting power? The central government will have 1/3 of weightage, whereas all states put together, they have 2/3. 2/3 of total votes cast. Okay. So what is the decision of the GST Council? When majority of not less than 3/4, that is 75%, of the weighted votes of the members who is present and voting is in favor, that means decisions are taken, guys. Decision are taken. Okay, I will just try to explain with this. Observe. So out of 33 members, at least 17 members has to be present in every GST council meeting. That is the quorum. Okay, let us assume it is present. Vote of the central government is how much? 33.33. That is 1 by 3 means 33.33. I am taking it in percentage. So central government members, how much are there? 2. So let us divide it by 2 members. So each member will have a weighted vote of how much? 16.17% for each member. That is totally 2. Oh. Now votes of all states put together is how much? 2/3. 2/3 means, can I take it as 66.67? Yes. Divided by how many total state members? 31. So per member how much? 2.15. See, if I just look like for this, it looks like more, but this is all states put together. Whereas this is only for 2 members of central government. Okay. So for state government, each and every member will have 2.15% for each member voting rights, guys. Okay, or weighted vote. So what is the majority for any decisions to be taken in GST council meeting is 75% of what? Please observe here. 3/4 of the members' votes of the members who is present and voting. Who is present and voting. Okay, this is very important. May not be asked in exam, but still good to know. I will just try to explain with an illustration, guys. At intermediate level, not so important, but still, let me try to explain. Assume total number of members who are present in a particular GST council meeting is 20. Quorum is present. 17 or more. Sir, okay, accepted. Quorum is present. Next, central government members, both are present. 2 members are present. Whereas state government members, how many are present? 18. So totally 20 members. Okay. Now, each member of central government, assume they are voting. So what is the voting rate of each member? 16.17 for each member of central government. Okay. And assume both of them are voting in favor. Whoever is present, both of them are voting in favor. So 33.33 percentage is in favor, guys. Okay. Now let us come to state ministers. 18 members are totally present. In that, 15 is voting in favor, 2 is voting against, and 1 is not at all voting. 1 is not at all voting. So let us forget about him. Even though he is present, let us forget about him. So let us divide it by 17. That is the members who is present and voting. Present and voting, 17. Okay. Yes, we will not consider him. 17 members. So it comes to how much? 3.92% for each member. Into how many members are there? 15 members. Who is voting in favor? Who is voting in favor? Okay. Yes. 17 members totally voted. Out of that, how many voted in favor? 15 members. So how much is in favor of the decision is 58.83% from state members. So add up both 33.33 plus 58.83, guys. We will get 92.16, which is more than 75%. Majority obtained. Majority obtained. And you know, whoever is in the power at central, in most of the states, they may only be in power. So it would be easy for them to obtain the majority, guys. Particular party I am talking about. Yes, or alliance. Okay, let us come back. And whatever illustration I gave, guys, it is not there in the material. If you want, you can make a note of it. But don't worry, nothing with respect to these calculations will be asked in your exams at the intermediate level. Yes, fine. Chalo, we'll move forward. Yes. So there are totally 5 laws. We saw already that first the government amended the constitution to take the power to make laws with respect to GST as per article 246A. And those 3 articles, whatever I have given you guys, 246A, 269A, 279A, very important. Okay. Yes, you can expect the questions on that also. Fine, sir. So there are using that power which is given in article 246A, the government has passed totally 5 laws with respect to GST. 5 laws with respect to GST. 4 are passed by central government, whichever I have highlighted in red here, whereas 1, that is SGST Act, is passed by each and every state. Totally 31 SGST Acts. Okay, let us see. Central Goods and Service Tax Act, in short we call it as CGST Act, to levy and collect CGST on what? On intrastate supply. Who will levy and collect it? Central government. Who passed this law? Central government. Then Integrated Goods and Service Tax Act, which in short we call it as IGST Act, to levy and collect IGST on interstate supply. Okay, sir. Then who will levy and collect IGST? Central government. So who has made this IGST law? Central government. Then UTGST, that is Union Territory Goods and Service Tax Act. Who has made this law? Means central government. Because these union territories and all will not have their own chief minister or government, guys. So they are administered by central government along with the president and the governor. All these three people collectively manage it. Okay. So this law also was passed by central government to levy and collect UTGST on intra-union territory supplies. But please be careful. Government cannot combine UTGST along with IGST and CGST, because CGST and half of IGST belongs to central government, whereas this UTGST has to be used for the development of the respective union territory, guys. Okay. Next, GST Compensation to States Act 2017. This will be levied till 31st March 2026. Sir, why? To compensate the states for the loss of revenue after the implementation of GST. Now, after the implementation of GST, many manufacturing states will suffer a loss under GST because they will lose some revenue, because GST is a destination based tax. Assume every manufacturer are manufacturing the goods in Tamil Nadu and they are selling outside the state. The other states will get revenue. What will Tamil Nadu government do? So, if at all, if any state is suffering loss after implementation of GST, central government promised, I will fill that gap. I will fill that gap. That is, they will charge and collect compensation cess on some luxury goods and sin goods. Over and above GST, they will charge compensation cess. Who will charge and collect it? Central government. And out of this money, they will compensate the states who is suffering the loss because of implementation of GST, guys. Got it? Yes. Initially, it was passed only for 5 years, but as of now, it is extended till 31st March 2026, guys. Okay. Then the last one, States Goods and Service Tax Act 2017. That is, in short, we call it as SGST Act, which is passed by each and every states, guys, to levy and collect what? SGST on intrastate supplies. Yes, sir. I already explained about this. Yes. Then coming back to Article 279A, guys. 279A. I spoke about states. In India, totally how many states are there? For GST purpose, 31. How many union territories? 5, guys. 3 union territories with their own state legislature and government is treated as state for GST purpose. That is Delhi, Puducherry and Jammu Kashmir. Okay. But as per Article 279A, they have classified 11 states as special category states. Which are those? We will see. Totally 11 special category states are provided under Article 279A of the Constitution. Which are those? Guys, 3 topmost states plus 8 northeastern states. 8 northeastern states. Yes, you can see here. Jammu Kashmir, Uttarakhand, Himachal Pradesh, that is the top 3, which we call it as hilly states. Okay, then these 8 are the northeastern states: Arunachal Pradesh, Assam, Meghalaya, Manipur, Mizoram, Nagaland, Sikkim, and Tripura. It is easy for you to remember with a map. I have given India map actually in registration chapter, guys. In registration chapter of my revision material, I have given India map. There also states are very important. Okay, yes. I will just try to explain through this so that you can easily remember. You can see Jammu Kashmir, Himachal Pradesh, Uttarakhand, the top 3 states, plus 8 northeastern states. This one, starting from Sikkim. So let me just read it out once. Sikkim, Arunachal Pradesh, Assam, Meghalaya, Nagaland, Manipur, Mizoram, and Tripura. Small, small states. They are categorized as special category states. So as per Article 279A, there are totally 11 special category states. But in few selected provisions like Section 10 or in registration chapter Section 22, they have picked only few of this. Not all 11, few of this. So when we go and learn that particular topic, I will tell you. Out of this 11, how much is considered as specified special category states for that particular provision or topic, guys? Got it? Yes, sir. Okay, we are done with this. Next. Sir, which are the taxes which were levied before 1st July 2017 but now subsumed under GST? In simple, these are replaced by GST, guys, from 1st July 2017. These were the taxes which were levied by central government before 1st July 2017, and this were the taxes which were levied by the respective state government before 1st July 2017. But from 1st July 2017, all these taxes have been replaced by GST. Got it? Yes. So I have given the list separately. Please try to remember it, guys, because questions are asked in the exam on this. Even in the upcoming attempt, they may ask. They may ask only one list, either of them or both. So please remember both. I have highlighted central taxes I have given in red, whereas state taxes I have given in green, guys. Just have a look at it. And you guys can just pause the video and go through it. Especially here, please be careful. Entertainment tax except those levied by local bodies. For example, if entertainment tax is levied by local bodies, it is not subsumed under GST. It is there even today. It is there even today, guys. Okay, so fine. Then GST has been defined in the Constitution, guys. What is that definition? We will see. Article 366(12)(a) of the Constitution defines goods and service tax as the tax on supply. Okay, supply is a taxable event. Okay, of goods or services or both. Guys, they have defined all these three. These three is the key important terms. We will see the definition of all this in the next chapter. Especially supply is a taxable event under GST, which is given in section 7 of CGST Act. We will be learning in detail about supply in the next chapter, guys. And even goods and services also is defined in CGST Act. We will see that. Oh. So I will repeat, as a tax on supply of goods or services or both except supply of alcoholic liquor for human consumption. Means GST is not levied on alcohol, guys. And alcoholic liquor for what? Human consumption. It is kept completely outside GST. And please be careful only if it is for the human consumption. Sir, what if it is for any other purpose like medicine or medical? In that case, will GST be levied on it? Yes. Okay. So that means alcoholic liquor for human consumption is kept outside GST. That means no tax, huh? No, no. Excise duty is levied on the manufacturing, whereas on sale, if it is within the state, VAT is levied. If it is outside the state, then central sales tax would be levied, guys. That is whatever was already there before implementing GST. Same thing will continue on the alcoholic liquor for human consumption. Okay. So alcoholic liquor for human consumption is completely kept outside GST, whereas 5 petroleum products are temporarily kept outside GST. Any day, if GST Council decides, they can bring it under GST bracket. But as on today also, they are outside the GST, guys. That is the petroleum products. Okay, what is it? As per Article 279A 5 of the Constitution, 5 petroleum products, that is petroleum crude, high-speed diesel, motor spirit, aviation turbine fuel, and natural gas. In short, I call it as PHD, man. P for petroleum crude, HD for high-speed diesel, M for motor spirit, then A for aviation turbine fuel, and N for natural gas. Have been temporarily kept out, and GST Council shall decide the date from which they shall be included in GST. Still, as on today also, they are not included the petroleum products under GST, guys. Got it? So you can remember it easily. PhD man will not have alcohol because this have been kept outside the GST. Okay, sir. Fine. Then even on this, what would be levied, sir? On manufacturing excise duty, whereas on sale, the VAT or CST would be levied, guys. And most of the states will get the major revenue from these two products only. That is alcohol and the petroleum products. That is ಒಂದು ಗಾಡಿಗೆ ಹಾಕೋದು ಒಂದು ಬಾಡಿಗೆ ಹಾಕೋದು. One which you will put for gadi, the other one which you put for your body. Okay, not for your body, people. Okay, you guys, papa, we are very studious and serious about your studies. Okay, fine. Both have been kept outside the GST, guys. Here also, I have given the list of the items on which GST is not levied. The following subject matters have been kept outside the purview of GST: alcoholic liquor for human consumption, petroleum crude, diesel, petrol, aviation turbine fuel and natural gas. Entertainment tax levied by local bodies. If it is not levied by local bodies, it is subsumed under GST. But if it is levied by local bodies, then it is levied separately. Means it is not subsumed under GST. Even today it is levied. Oh. Local bodies means local government guys, like municipality or panchayat and all. Then motor vehicles tax, then property tax such as stamp duty. Even today all these are levied. Then the last one is electricity duty. Then one special product, that is tobacco and tobacco products, would be subject to GST. That is on sale of tobacco and tobacco products, GST is applicable. Whereas in addition to that, the center would have the power to levy central excise duty on these products guys. So on tobacco and tobacco products, government want to increase the cost of this so that people will not consume it. So that is why they are charging two tax. On manufacturing, excise is levied, whereas on sale, GST is levied. And this is the only product on which both is applicable, guys. Okay, yes. So this is all about the revision of first chapter, guys. Very simple and straightforward chapter. But from next chapter, we'll actually deep dive into GST. Now come to the first page of our revision book. In the first two pages, I have given the list of section numbers of both CGST Act and IGST Act, guys. Let us just mark it as and when we cover. Oh. Section number 1 of any act talks about short title, extent and commencement, guys. So what is the short title of Central Goods and Service Tax Act? It is CGST. And it is applicable to entire India, including Jammu Kashmir, guys. Okay, yes. Then commencement. It was commenced from what date? 1st July 2017. GST was rolled out from 1st July 2017, which is also a Chartered Accountants Day. Yes, sir. Fine. Then section 2 of any act talks about definition of various terms used in the act, guys. So we will also be learning as and when we cover a respective chapter or topic, we will also see the definition with respect to that particular topic, guys. I will not cover it as a separate chapter. Okay. Even for IGST also, if you see, section number 1 and 2 is same. For any act, it will be same, guys. Got it? And majority of the provisions covered in your syllabus is from CGST Act. Few provisions of IGST Act is covered like place of supply and all or nature of supply. But when I go to that particular topic, I will stress on it. If not, any section which we are learning is a part of CGST Act. Majority of the portion is from CGST Act. Okay, sir. Fine. Then 3 to 6 is actually administration, which is not a part of your syllabus, guys. Which is not a part of your syllabus. Even under IGST Act, actually section 3 and 4 talks about administration. It is not a part of your syllabus. So these are few basic things which we have covered in this chapter. Guys, now it's high time for you to change the gear. I know till now maybe you would have relaxed, but not from now. So however good you are prepared till now, the last few days or few months before the exam is very crucial, guys. So you have very limited time, but you have to cover too many things. I hope you guys would have already finished studying and all. So it's just now time to revise. But still, guys, so please change your gear. If not, if you are changed till now, if you already changed, great. You're God. Yes. But make sure that you allocate time for each and every subject. Being a tax teacher, I will not tell you only study tax, get exemption in tax. No, no. Please allocate time for all the subjects. Make sure that in every paper you are aiming exemption. Don't target that 40 marks, guys. Because if you just prepare for 40 and try to write for 40, you will definitely not get 40. You should be knowing this reality even before going to the exam. So please don't under prepare. Prepare for even for the most toughest paper, challenging exam, so that at least even if you are not able to attend one or two questions fully, still you will be able to get exemption, guys. Because I believe that even in the toughest exam, getting 60 is not tough. You can easily get it. I am not asking you to get above 80 or 90. I'm just asking you to get above 60. And please accordingly prepare, guys. And it's possible. Prepare well. Yes, students, now we will revise the second chapter in our indirect tax, which talks about the supply under GST. We'll be focusing on two sections of CGST Act in this chapter. That is section 7, which talks about the meaning and scope of supply, read along with schedule 1, 2 and 3. So this has to be studied together, guys. Okay. Then we also learn section 8, which talks about the taxability of composite and mixed supply. But first, let us focus on section 7 along with the schedules. Then we will take up section 8, guys. So as we have learned in the previous chapter, the taxable event under GST is a supply. So whenever there is a supply of goods or services, then it is taxable under GST, guys. We also learned the definition of GST given in the Constitution. Goods and service tax is a tax on the supply of goods or services, except on the supply of alcoholic liquor for human consumption. So it is very important for us to understand these three terms, guys. What are those? Supply, goods and services. Because if any one of this is not there, then it is not at all covered under GST, guys. So let us see that. So section 7 is very, very important, guys, because only when an activity or transaction is a supply, it is covered under GST. If an activity or transaction is not at all a supply, then it is outside the ambit of GST, guys. Okay. So first, section 7(1)(a), which talks about the mode of supply or the form of supply. What is it telling? We will see. Supply includes all forms of supply of goods or services. Okay. So that means we need to understand what is goods, what is services. If something is not a goods or services, then it is not at all covered under GST. Yes, because GST is applicable on the only on the supply of goods or services. So if there is anything which is not goods also, which is not services also, it will not at all attract GST, guys. Okay, sir. Are both, such as, means they are giving few example. Which are those? Sale, transfer, barter, exchange, license, rental, lease or disposal for a consideration. So consideration has to be there in the course or furtherance of business. Okay, all these conditions has to be satisfied, guys. So wherever they would have given the condition, I would have highlighted that conditions also in the green color in the form of equation. Only when all these conditions are met, only then the activity or transaction will be supplied as per the respective section, guys. Okay, first let us try to understand the definition of goods and service as given under CGST Act. Goods is defined in section 2 clause 52, whereas services is defined in section 2 clause 102. Guys, as I already mentioned, the definition in any act will be given in section 2 of various terms used in the law. And it will always be in the alphabetical order, guys. If by chance, if you get confused, sir, 252 goods are services are. You just try to recall. Will G come first or will S come first? Okay, that is one of the way to recall their section number, guys. Okay, yes, fine. First, let us learn goods. It is almost the same definition given in the Sale of Goods Act, guys. Okay, what is it? Goods means every kind of movable property. Movable. That means immovable is not covered under goods? No. Fine. Other than money and securities. So money and securities is not covered under goods definition. Okay. But goods includes what and all? These two are goods, guys. Actionable claim. Okay. Sir, what is actionable claim? Guys, you would already be knowing it. It is just in simple, if I have to tell, it is a claim towards unsecured debt. For example, assume I have purchased a lottery ticket, I am holding it. If at all, if I win the lottery, then can I claim that money using this lottery ticket? Yes. Or else, assume I am having an insurance policy in my name. I am holding the policy document. Now, when policy matures using this document, can I claim the money? Yes. That is called actionable claim. Okay. Then, growing crops, grass, and things attached to or forming part of the land which are agreed to be severed before the supply or under the contract of supply. Guys, if anything is attached to the land, it is like immovable. Sir, immovable is not at all covered in the goods. Yes, I agree. But if I have agreed to cut it down and sell it, or if I have agreed to sever it from the land and I have agreed to sell it, is it as goods? Yes. For example, assume there is a tree attached to the land. I have agreed to cut and sell it to you, chop and sell it to you. Now, is it a goods? Yes. Same way, assume crops. See, crops for agricultural activities, exemption is given, but let me just explain the definition of goods here. Oh, now assume there is a crops grown on the land. Now I have agreed that I will sever this crop and sell it to you. So is it a goods? Yes. If it is attached to the land, it will not be a goods. But if I have agreed to sever it or cut it down and sell it to you, then it becomes a goods, guys. Okay, sir. Fine. Then coming to service definition. Service definition is very easy. Service is defined in section 2, clause 102. It is anything other than goods. So for you to know what is services, first you should know what is goods. Anything which is not a goods is a services. Okay. But other than money and securities. So money and securities is neither the goods nor the services, guys. And securities, you know, okay. So, and money means even foreign currencies. Okay, yes. Then coming to securities like bonds, shares, debentures, all those things come here. So if there is any buy and sale of securities, sir, on buy and sale, is GST applicable? No, people. It is not applicable. Okay. Then, but services includes what and all? Activities relating to use of money or conversion of money by cash or by any other mode from one form or currency or denomination to another, for which a separate consideration is charged. This is very important line. For which separate consideration is charged. Guys, if there is any transaction in money, then if separate consideration is not charged, money is neither a goods nor a services. But assume I went to a bank. I wanted to buy a DD for 1 lakh. So I paid 1 lakh rupees and they gave me a DD whose face value is 1 lakh. And for this service, bank is charging, assume 500 rupees for me. On 500 is GST applicable? Yes, because this is the consideration which bank charged for the services they gave me. Got it? Separate consideration is charged. Same way. Now assume I went to an authorized dealer to convert my Indian rupees into US dollar and he is charging, assume 1000 rupees commission for it. On 1000 rupees, is GST applicable? Yes. But whereas whatever money is exchanged, no, Indian rupees into US dollar and all, on that will GST be levied? No, no. But converting one form of currency to another form of currency is done by an authorized dealer. So he is rendering a services for which he is charging 1000 rupees commission. On that is GST applicable? Yes, people. If I have to give one more example, assume I have a demat account with Zerodha. Now, whenever I buy and sell securities through Zerodha, there is no GST applicable on it because securities is neither a goods nor a services. But assume Zerodha is charging some minimum reasonable brokerage for me or annual maintenance charges for me as a demat account holder. On that is GST applicable? Yes, guys. So on the brokerage or platform fee or annual maintenance, whatever they charge, on that GST is applicable, people. Hope you understood. Yes, sir. Fine. And so at the end, what we should understand is we know the definition of goods, we know the definition of services. And please be careful, guys. Goods will not include something which is immobile. Correct? Yes, sir. So anything other than goods or services is not at all covered under GST, guys. Example is money and securities. Money and securities. Okay, fine. We are done with this. So we have discussed 7.1a, but they have given few example here, no? So you can easily understand this term and all, sale, transfer and all. But there is a difference between especially barter and exchange, guys. Barter means I gave services to you, you gave services to me. There is no money involved. There is no money involved. So for both of us, is it a supply? Yes. Sir, money is not involved, no sir. Still, we can calculate value of supply on which GST is applicable. And in that case, if there is no consideration, consideration is there, but not in money. Consideration is there, but not in money. Then the value of supply on which GST is applicable will be decided as per the valuation rules, guys. But valuation rules is not a part of CA intermediate syllabus. Okay, sir. Now coming to exchange. Now what is the exchange? Guys, assume I am exchanging my old laptop for a new laptop by paying 30,000 extra. Means consideration is partly in money and partly in kind. Assume I am purchasing a laptop whose selling price is 50,000, but I am not paying 50,000 entirely because I am exchanging my old laptop which is worth assume 20,000, remaining 30,000 I am paying in money. So that is called exchange, guys. Means partly consideration will be in money, whereas in barter it will be completely in kind. Nothing will be in money. Hope you understood. Yes. Then license, rental and all is covered here. Even lease, all these are like service given, guys. Whereas disposal, disposal means assume I am putting an asset for a scrap, or I am putting an asset, I am selling the asset for a very lesser value. Please be careful. There should be a consideration here. There should be a consideration, because if asset is disposed of free of cost, it is not covered here. It will be covered maybe in the schedule 1, which we need to check later. Okay. So what are the prerequisites for an activity to be a covered here or to be a supply as per section 7(1)(a) means there should be a supply of goods or services, okay, for a consideration and in the course or furtherance of business. In the course or furtherance of a business means supplying that goods or services should be in the ordinary course of business. For whom? For the supplier. For the supplier, okay, because majority of the times the supplier is the one who is supposed to pay tax, guys, under the forward charge mechanism. If in case if reverse charge is applicable, then for whom should we check whether it is in the course or furtherance of business? For the recipient. But if nothing is mentioned in the question, please always assume for supplier. Okay. Yes. And sir, what is consideration? Guys, consideration can be in money or it can be in kind also. It need not be always in money. Got it? Yes. And if I am doing anything to you and for that you are paying me from my side, whatever I am doing itself is a consideration. Clear? Or else I gave an example. Assume I am giving professional services to you and you are giving legal services to me. Sir, is there a consideration from both the end? Yes. Whatever is the monetary value of what I am doing, same way whatever is the monetary value of what you are doing or what services you are rendering is considered as consideration, guys. Clear? Yes. So fine. And sir, in the course or furtherance of business also should be there. Yes. For example, assume, guys, I'm selling this pen to you. My business is not to sell the pen. I had purchased it for my personal use, but now I'm not using it. So I thought, okay, let me sell it to you. And you are ready to purchase it. So is it in the course or furtherance of business for me? No, people. So please be careful. All the three conditions has to be satisfied. Only in that case, an activity will be a supply as per section 7(1)(a), guys. Okay, we are done with this. We'll move forward. Next, section 7(1)(a). Activities or transaction by a person other than an individual, okay, to its members or constituents or vice versa, for cash or deferred payment or other valuable consideration. That means here also they're stressing on consideration. Consideration has to be there. Whether it is paid immediately or later doesn't matter. But consideration has to be present, guys. Okay. Let me try to explain this with an example. Okay. Here, I have drawn a small chart, guys. For this is for section 7(1)(a). Okay. Assume there is an association or a club who is providing any services to their members or constituents for which they are charging consideration, whether it is paid immediately or not. Even if it is paid later also, or in the form of EMI or monthly, however it is, lump sum monthly, however it is. Is it a supply? Yes, as per section 7(1)(a). Sir, what if it is vice versa? For example, members are providing some services to the club or association and for which they are collecting consideration from the association. Is it a supply? Yes. Both the ways it is covered, guys. Both the ways it is covered. Yes. Next. 7(1)(b). Import of services for a consideration, whether or not in the course or furtherance of business. Purpose doesn't matter here, guys. Only two things. There should be import of services and for a consideration. Then it will be a supply as per section 7(1)(b), guys. And import of services is always taxable under reverse charge mechanism, where the importer is the one who is liable to pay IGST, guys. Okay. So in that case, we need not worry about why they are importing the services. Assume I am importing the services for a consideration. Whether it is for my business purpose, professional purpose, or personal purpose, doesn't matter, guys. It is treated as supply as per section 7(1)(b). And it has connection with para 4 of schedule 1, which I will explain once I cover para 4, guys. Oh, so we are done with the three section 7(1)(a). A and B. For all this three section, one of the prerequisite for an activity to be covered under that section is consideration, guys. All the three section talk about what? Consideration. Correct? Yes, sir. Now, section 7.1c. Are you seeing? 7.1c is telling few activities are considered as supply even without consideration. But which are those activities is not given in section 7.1c. They are referring to schedule 1. They are referring to schedule 1. So whenever we are discussing the activities which are supply even without consideration, we need to refer to section 7.1c read with schedule 1, guys. Even in your exam, you need to answer like that. And each of the case is given in the respective para, that is para 1, 2, 3, 4. So when you are answering any questions with respect to this, guys, it is also called as deemed supply. You need to answer like this. As per section 7.1c, read with para 1 or 2 or 3 or 4 of schedule 1. Clear? Yes. Of CGST Act, then explain the provision. Then explain the provision. And guys, easy to remember, 7.1a is very important, that is forms of supply, but for a consideration in the course or furtherance of business, AA. Okay, it is a supply between the association and its members. Okay, so AA, try to remember as association and its members, associates, association and its associates, which are called as members, guys. Then 7.1b is with respect to import. Oh, fine. C is without consideration. C actually consideration, but remember it as vice versa. That is without consideration. Oh. As per schedule 1, in the following 4 cases, supplies made without consideration will be treated as supply under section 7 of CGST Act. So which are those? One by one. Try to remember along with the para numbers, guys. I have arranged here. Para 1. Permanent transfer or disposal of business assets where ITC has been availed on such assets. Okay, guys, see, if an asset is sold for a consideration, then obviously it is covered under section 7.1a. But what we are talking now is, sir, for my outward supply, no consideration is there, sir. That is when it is covered here. Okay, but condition is what? There is a permanent transfer or disposal of business asset. Okay, title is transferred, but on that there is no consideration. But when you have purchased that asset, you have claimed an ITC. When you have purchased the asset, on purchase you have paid input tax. No, you have claimed the credit, and later after using it for some days or some months in your business, you are giving it free of cost. So when you gave it free of cost, is it a supply? Yes, it is a supply. Yes, it is a supply, but there is one exception telling transfer of entire business as a going concern will not be a supply, guys, because it is covered in exemption. Now I will sell my entire business to you. Obviously, I will not give it free of cost. There will be a purchase consideration for you, but still, when a business is sold as a going concern, even if by chance if it is given free of cost, show will be continued by you. Entire business has been transferred to you. Is it a supply as per para 1? No, guys. It is actually exempt and it is covered in exemption list. Okay, let me try to explain this with some cases. Yeah, just a minute. Yeah, here I have taken one example, guys. And if at all, if you want to make a note of all this, guys, means whatever I am using as an example, you can just pause the video and take it down. Okay, or else you can just pause and observe after I explain. Yeah. Assume I had purchased an asset for 1 lakh on which GST is 18%. So 18,000. Total amount is what I have paid on my purchase is 1 lakh 18,000. Now the question is whether I have claimed a credit for this or not. So ITC claimed. Assume when I purchased, I have claimed credit for 18,000. That means I have adjusted 18,000 against my output tax. In that case, later, after using the asset in business for few months, assume I have sold it. Sold it for a consideration. I have sold it for a consideration. Is it a supply? Yes, as per 7.1a, because consideration is there. What if I have disposed the asset without consideration? As I have claimed ITC, it will be a supply as per para 1 of schedule 1, guys. That is read along with section 7.1c. Oh. Sir, what if I have not claimed ITC for this 18,000? For some reason, it was blocked. Credit was blocked. In that case, check whether the asset is sold for a consideration. If yes, it is a supply as per section 7.1a. 7.1a doesn't have any condition with respect to ITC claimed or not claimed. Guys, whether you have claimed ITC or not, if you have sold it for a consideration, it is always a supply as per 7.1a. In 7.1a, did we learn anything about ITC and all? No, no. But, sir, what if the asset is disposed of free of cost without consideration when ITC is not claimed? Then it will not be a supply, guys. Then it will not be a supply. I've tried to cover all the 4 different possibilities here. Hope you understood. Actually, what is covered in para 1 is only this part. Para 1 of schedule 1. Clear? But I know somewhere you might get confused if they have turned the question or twisted the question. So that is why I have covered all the 4 possibilities, guys. If there is consideration, no doubt it will be a supply as per 7.1a. If it is sold even for 10 rupees, sir, it is put for scrap and some minimum value is earned, sir. Reasonable, small amount is earned. Still, it will be a consideration, no? It will be supplied as per 7.1a. Got it? Yes, sir. Fine. Let us move back. Para 1 done. Next, coming to para 2. Supply between related person or a distinct person made in the course or furtherance of business. Okay. Now we should understand who is related person, who is distinct person, guys. Okay. Important. Because only when there is a supply between the related person or distinct person in the course or furtherance of business, it is covered here, even without consideration. Okay. So that means who is related, who is distinct. Let us understand. Related person. As per explanation to section 15 of CGST Act, actually section 15 talks about value of supply. Their explanation to section 15 talks about related person. Because if the supplier and recipient is related, then the value of supply cannot be determined as per section 15. They're telling, please refer to valuation rules. So they're telling, I repeat, if supplier and recipient is the related persons, then whatever is actual sale value, we cannot adopt that as the value of supply for section 15 purpose. So in that case, the value of supply on which GST has to be levied has to be decided as per the valuation rules. So there they have actually defined who is related person in the explanation. And the same thing is taken here. What is it? We will see. If such persons are the officers or director of one another business, assume I am an officer of your business. We both are related. Or else, assume you are a director of my company. Are we both related? Yes. Then they are legally recognized partner. Assume you and me, we started a business by being a partners. Are we both related? Yes. So here related need not be blood relative, guys. Okay. Blood relative also is covered, but in addition to that, various other scenarios are also covered. Yes. Then employer and employee are related for GST purpose. Okay. Next, one of them controls directly or indirectly the other. Together control directly or indirectly a third person. Or a third person controls or own or directly or indirectly more than or equal to 25% of voting stock or shares of both of them. Okay, let me explain this. Control, guys, whether directly or indirectly, if control is there, if one person is controlling the other, they both are related. Okay. Assume I am controlling you or you are controlling me. We both are related. Or else assume both of us are controlled by our institute. Both of us are controlled by our institute. Are we all three related? Yes, we all three are related. Next, assume I and you both are controlling a third person. Assume your friend. I, along with you, are controlling a third person. Are we three related? Yes. You, me, and that third person are related, guys. Got it? Yes. Next. Are the members of same family? Okay, so that means blood relative is covered here. Yes. But everyone in the family is covered? No. Important. Even family has been defined. What is it? I will just tell you. Family here covers spouse and children always. Spouse and children always. Whereas parents, grandparents, brothers, and sisters are covered only if they're only or mainly dependent on that person. If they're independent, then they're not a part of family for GST purpose. Okay. Whereas if they're dependent on this person, then they're a part of family and they're related for GST purpose. Okay. I repeat, spouse and children will always be relative. irrespective of, means relative in the sense members of same family, they are a part of family. Okay, yes. Spouse and children, irrespective of whether they are dependent or not, they are always a part of family. Whereas parents, grandparents, brothers and sisters, they are said to be a part of family only if they are only or mainly dependent on that person. Okay, sir. Last one. One of them is the sole agent or sole distributor or sole concessioner of the other. Now assume you are working as a sole agent for me. I am your principal. Are we both related? Yes, we both are related. Okay. So we understood who is related person. Then coming to distinct person specified under section 25. Guys, this talks about registration, which is very important. Actually, distinct person is specified in section 25. Section 25 talks about procedure for registration. Oh. Under GST, please listen here. Look here, hello. Yes, we'll just try to connect it to registration topic. Under GST, registration is state-wise but PAN-based. So if an assessee is having, sorry, not assessee, if a person is having a business in more than one state, in each and every state he has to take separate registration. Sir, within the state, if he has multiple branches, then what? One registration is mandatory, even though he has different businesses, all business put together, one registration is mandatory. But if he wants, he can take multiple registration, which is optional. Which is optional. Let me try to explain this with example, guys. Yes, just a minute. Ah, please pay attention. Yes. So as I told you, registration under GST is state-wise and PAN-based. Okay. Assume I have operations in 5 states. I need to take minimum 5 registration, but all under my PAN. And each registration will be treated as what? Distinct person. So if there is any supply from one branch to another branch, which is registered separately, even without consideration, is it a supply? Yes, guys, it is a supply as per para 2 of schedule 1. Got it? Yes. Yes. So I will just discuss with few example. Please pay attention. Assume, guys, I have a business in Karnataka, Tamil Nadu, Telangana state and Kerala. How many registration minimum I should take? 4. And each registration is treated as what? Distinct person. Now assume from Karnataka to Tamil Nadu, I am sending some goods without consideration. Is it still a supply? Yes. It is still a supply as per para 2 of schedule 1, guys. Got it? Yes. Now, sir, assume from Tamil Nadu to Telangana state, I am sending some goods for a consideration. Is it a supply? Yes, but as per 7-1 when there is a consideration, obviously we will not worry about schedule 1, guys, because schedule 1 covers 4 cases only when an activity is being supplied without a consideration. Without a consideration. So whenever there is a consideration, we never think about schedule 1. Okay, next. Assume within Karnataka, I have 3 branches. One is in Bangalore, the other one is in Mysore, the last one is in Tumkur. All 3 places is a part of Karnataka, guys. Okay. Now, should I take multiple registration? No. One registration is mandatory. In that case, do we treat it as distinct person? No, no. They are not distinct because they are not registered separately. Now assume I have taken only one registration for all the 3 branches within Karnataka. If there is any transfer of goods from Bangalore branch to Mysore branch or from Mysore branch to Tumkur branch, will there be any supply? No, guys. If it is without consideration, it is not a supply because para 2 is not getting attracted here. Okay, yes. But do I have an option to take separate registration for each of this branch? Yes, I have an option. If in case, assume I take a separate registration for each of this branch. In that case, do we treat it as distinct person? Yes, people. We treat it as distinct person. We treat it as distinct person. In that case, if there is any transfer of goods from one branch to another branch which is registered separately, even if it is within the state, but without consideration, is it a supply? Yes, it is a supply. Oh, next. So this is what? Distinct person. Next, we will discuss the establishment of distinct person. Establishment of distinct person. Okay, even that I will try to explain with an example. Assume, guys, I have a petrol pump or station in Karnataka and I have a restaurant in Telangana state. Okay. So petrol pump, should I take a registration in Karnataka? No. Assuming I am supplying only petrol within Karnataka, no registration is required because it is outside GST. Whereas restaurant is within GST, should I take registration in Telangana state? Yes, assuming my threshold, my turnover has crossed threshold limits. Okay, fine. And what is the threshold limit for registration and all? We will learn in registration chapter, guys. Okay. So I have taken registration in Telangana, but not in Karnataka. Okay. Now assume a petrol has been supplied to my Telangana state branch to the vehicles used there. Assume we are using a few vehicles for our restaurant business in Telangana. So that is why petrol has been supplied from Karnataka without consideration. Is it a supply, guys? No, no, sir. It is not a supply. Okay. Now assume, sir, from restaurant in Telangana, few food items has been sent to my Karnataka office members or employees without consideration. Is it a supply? Yes, it is a supply. Even without a consideration, it is a supply as per para 2 of schedule 1 because it is an establishment of distinct person. We treat this as establishment of distinct person. Even though they are not registered, still, if any goods is supplied with this which is covered under GST, or if any service is supplied which is covered under GST, between establishment of distinct person, even without consideration, it will be a supply. But when petrol was supplied, as it is outside the GST, we don't treat it as a supply, guys. Okay, one more example. One more example. Assume I have a liquor shop in Maharashtra, which is outside GST, so I need not take registration in Maharashtra. Assuming I am supplying only liquor in Maharashtra. Okay, sir. Then in Rajasthan, I have a restaurant which is covered under GST, so I have taken registration in Rajasthan. Now, assume guys, in Maharashtra, I have liquor shop along with restaurant means I need to take registration in Maharashtra also. But as per my example, I told I am supplying only liquor in Maharashtra. That means no registration is required. Okay. Now assume from my Maharashtra liquor shop, I supplied some liquor to my Rajasthan branch without consideration. Without consideration, it is not a supply, guys. It is not a supply. Whereas if it is vice versa case, assume from my restaurant in Rajasthan, I supplied some food items or snacks to a Maharashtra branch without consideration. Is it a supply? Yes, guys, it is a supply because it is a supply without consideration between establishment of distinct person. We call this as establishment of distinct person. Even though they are not registered separately, we treat it as establishment of distinct person. And I repeat once again, if there is any supply between them of goods or services which is covered under GST, even without consideration, it will be a supply. It will be a supply, people. Okay, that is what is given here. Let me quickly read it. A person who has obtained or is required to obtain more than one registration, whether in one state or union territory or more than one state or union territory, shall, in respect of each such registration, be treated as what? Distinct person. Then next paragraph is about establishment of distinct person. Further, where a person who has obtained or is required to obtain registration in a state or union territory in respect of an establishment as an establishment in another state or union territory, then such establishment shall be treated as establishment of whom? Distinct person, even though it is not registered separately under GST. Okay, sir. Fine. Then coming back to para 3, sorry, para 2. We are not yet done completely with para 2. Okay. Now, we learned that employer and employee is related. Yes. So that means if there is any supply of goods or services between them, even without consideration, is it a supply? Yes, it is a supply. But listen here. So the employee is providing services, that is employment services to employer, for which employer is paying salary. On salary, is GST applicable? No, guys, because it is a part of employment service, is a part of schedule 3, which is a negative list. It is neither the supply of goods nor the supply of services. So for employment service which is provided by employee to the employer, for which employer will pay salary, is outside GST because it is a part of schedule 3. But what is covered here is gifts up to 50,000 by employer to employee in a financial year is not a supply. So if employer give any gift to the employee is not giving anything for this. So there is no consideration. Is it a supply? As per para 2, it is a supply. As per para 2, it is a supply because employer and employee is the related persons. So employer gave a gift without consideration. He is not getting anything in return. And please be careful, sir. He is paying salary, no, sir. Employee is giving employment service, no, sir. Guys, gift is not agreed in the employment contract. So employer is giving it voluntarily. So if there is any other allowance, perquisite and all, that and all forms part of salary. Actually speaking, for income tax purpose, even gift by employer to employee is a part of salary, which is taxable as perquisite in the hands of employee under the head salary. But here, for GST purpose, from employer point of view, who is a supplier of gift now? If he is giving any gift to employee, is it a part of para 2? Yes, but one exception is there. If the value of the gift is 50,000 per year per employee, then it is not taxable. Sir, what if it is more than 50,000? If it is more than 50,000, entire value of gift is taxable and employer being a supplier is liable to pay GST on it, guys. Is liable to pay GST on it. Is that clear? Yes. Let me explain this. Listen, people, important. Yeah. One chart is there. If there is, guys, let me clarify one thing before I cover this. In income tax, please listen here. If employee render any service to the employer, which is employment service, and anything which employer pay to the employee in the form of basic pay, bonus, or commission, or allowance, or perquisite, everything is taxable in the hands of employee under the salary head on due or receipt basis, whichever is earlier. And the basic criteria for an income to be taxed under the head salary in income tax is employer-employee relationship. So anything which employee receives is taxable in his hands as salary income. And the same thing is not covered under GST because it is a part of Schedule 3. It is neither the supply of goods or services. That means on salary paid by employer to employee, no GST, guys. But here, as an exception, they are trying to cover only the gift given by employer to employee. They are not trying to cover any basic pay allowance and all or other perquisites. They are just trying to cover only gift. So if employer give gift to the employee and if the value is up to 50,000, it is not taxable per year. If it is more than 50,000, entire value will be taxable. And who is liable to pay GST is not employee because employee is the recipient here. Who is liable to pay GST is employer being a supplier on the value of the gift, guys. Chalo. So gift by employer to employee, value of the goods means or value of the gift you assume is less than or equal to 50,000, not taxable. And please be careful, 50,000 is a limit per annum per employee. Now assume employer is giving gift to 10 employees of the goods worth 30,000. So for each employee it is 30,000. So is it taxable? No. For each employee he can give gift up to 50,000 per year. Okay, fine. Sir, what if the value of the gift is more than 50,000? Then fully taxable in the hands of employer. As per para 2 of schedule 1, read with section 7(1)(c), guys. Is that clear? Yes. And one thing, there is a connection to even income tax again, guys. As I already told you, the gift given by employer to employee is taxable in the hands of employee under the head salary for income tax purpose. So there we need to check whether the gift is in money form or in kind. If it is in money, whatever is the value of money, it is fully taxable, irrespective of the amount. Whereas if it is in kind, we need to check whether it is less than 5,000 or more than or equal to 5,000. If the value of the gift is less than 5,000, not taxable. If it is more than or equal to 5,000, then the entire value of the gift will be taxable. So please be careful because students might get confused. Here the limit is 50,000, whereas there, if the gift is in kind, they are putting it as 5,000, 10 extra here. Clear? And in income tax, if gift is given by any others, then it is covered in section 56 to 10 under the head income from other sources. Got it? I'm just trying to connect, guys, so that you will not get confused with these figures and provisions especially. Okay, so for GST, 50,000 is the value of the gift, whereas for income tax, if it is less than 5,000, not taxable. If it is 5,000 or more, fully taxable. 1 0 less there, or if you take from that as a base, in GST 1 0 more. Got it? Yes. Okay, sir. So what are the prerequisites here? Supply between whom, related person or distinct person, and it should be in the course or furtherance of business. Only then it will be a supply as per para 2. Okay. Next, para 3. Supply of goods by a principal to his agent or vice versa. That is purchase as well as sales. Both are covered. Without consideration, where the agent undertakes to supply such goods on behalf of the principal and invoice is issued in the name of the agent. So if invoice is issued in the name of agent, there will be two supply, guys. There will be two supply. No, sir, invoice is issued in the name of principal, then there will be only one supply. There will be only one supply. So let me try to explain with an example here. Yeah. Pay attention, people. I will try to cover all the possibilities. Yes. And here agent includes even del credor agent. Del credor agent means who will take the risk of the bad debt. Okay. They will bear the bad debt loss. Okay. Now, assume principal want to sell the goods through an agent to a customer. So principal doesn't have any direct contact with the customer or recipients. So only agent will help the principal to get the customers. Okay. So principal will send the goods to the agent and agent will find the customer and sell the goods on behalf of whom? Principal. Okay. When agent sells the goods to the customer who is the recipient, invoice is issued, assume in the name of principal. So that means there is only a one supply. There is only one supply from whom to whom? Principal to recipient as per section 7(1)(a). Here para 3 is not attracted because invoice is issued in the name of principal. Next, assume principal sent the goods to an agent and agent sold the goods to the customer or recipient but issued invoice in his own name. Whose name? Agent. So as per invoice, who is the supplier? Agent, it seems. So that means there are two suppliers. One is from agent to recipient. This is as per section 7(1)(a) because consideration would be there. Whereas the other one is when principal sent the goods to an agent, even without consideration, it will be a supply, guys, as per para 3 of schedule 1. Para 3 of schedule 1. Is that clear? Yes, because for this transaction, invoice is issued in the name of agent. So there are two different suppliers. One is from agent to customer, the other one is from principal to agent. This is with respect to sales. Sir, what if it is purchases? Now assume principal wants to purchase some goods, but he doesn't have any contract with the suppliers. He doesn't have any contact with the suppliers, so he has asked agent, please purchase goods on behalf of me and give it to me. Okay. So supplier will supply the goods to an agent and assume invoice is issued in the name of principal. So principal is the recipient as per the invoice. So agent will receive these goods and send it to principal. Or maybe the goods might be directly delivered to an agent also, sorry, principal also. From whom? From the supplier. So that means there is only one supply between whom? Supplier and principal. As per section 7(1)(a). Sir, is there any supply between principal and agent? No. Because in this case, the invoice is issued in the name of principal as recipient. Sir, what? Agent purchased the goods from the supplier and when supplier issued the invoice, the name of the agent is mentioned as recipient. The name of the agent is mentioned as the recipient. And then agent is sending the goods to the principal. That means there will be a two supply, guys. One is between supplier to agent as per section 7(1)(a) because consideration would be there. Then when agent send the goods to the principal, it will be a supply as per para 3 of schedule 1. Because the invoice is issued in the name of agent, guys. Is that clear? So all the four possibilities I have given you. Okay. And in all these cases, guys, we have just discussed the supply of goods. There will be one more services that is from agent to principal for which the agent will charge commission. That is anyway there. But that transaction is not covered in para 3, but it will be there. Supply of services from whom to whom? Agent to principal for which agent will charge commission. That is a supply of services in all this case. In all this case, guys. Is that clear? Yes. Let us go back. So what is the prerequisite I have given in green color? Supply of goods by a principal to agent or vice versa. Okay, either purchase or sales, both are covered. Plus invoice is issued in the name of agent. Only then an activity or transaction between principal and agent is covered here, even without consideration. So one thing we have to check here is very importantly in whose name the invoice is issued, guys. Okay, the last one. Import of services without consideration. Okay, by a person from a related person or from any of his establishments outside India in the course or furtherance of business. Okay, guys, import of service was already covered in 71B, but there it was very plain. Import of service for a consideration. Why and all doesn't matter. Whereas here it is without consideration. Okay, from whom are you importing? From a related person outside India or from an establishment outside India? And it should be for what purpose? In the course or furtherance of business. And here in the course or furtherance of business, for whom? Recipient. Because in case of import of services, we are targeting whom? Importer. He or she is the one who is supposed to pay tax under reverse charge mechanism, guys. Whenever we see this in the course or furtherance of business, normally it will be for supplier because they are the one who is liable to pay tax under forward charge. But when it is import of services, we always know that it is taxable under reverse charge. So we need to check it for whom? Recipient, guys. So what are the prerequisites here? Import of services should be there from whom? Related person or establishment outside India, and it should be in the course or furtherance of business. If any one of this is missing, if any one of this is missing, then it is not a supply as per para 4. Got it? And import of service is covered in two provisions. So that is why I just made one simple chart for it. Guys, whenever there is an import of services, first thing you have to check is consideration. Whether consideration is there or not. When there is a consideration, it will be a supply as per 71B, irrespective of why the services is taken, whether for personal purpose or business purpose, doesn't matter. Okay, sir. Next, if it is without consideration, then we need to check from whom it is imported and for what purpose. It is very important. If it is from a related person or establishment outside India, or in the plus means both has to be satisfied. In the course or furtherance of business, if both this condition is satisfied, then it is a supply as per para 4, guys, of schedule 1. Okay. If not, it is not at all a supply. For example, sir, I have imported the services from my related person, but for my personal purpose. Is it covered here? No, not covered. Or else, sir, I have imported the services without consideration for my business, but not from my related person. Assume it was from my friend who is not a related person. He didn't charge me any amount. Is it a supply covered here? No, sorry. Even if one of the condition is missing here, it will not be covered here, guys. Hope you understood. Got it? Yes. So till now what we have learned is, sir, which are the activities or transactions which will be treated as supply, for which we need to refer to which all sections, guys? 71A, AA and B, 71B, which tells an activity or transaction will be a supply only when there is a consideration. Whereas section 71C, read with schedule 1, will tell there are 4 activities which is deemed to be supply even without consideration. Okay. So when we decide whether an activity or transaction is a supply as per any of these sections, then we need to check whether it is a supply of goods or supply of services, for which we need to refer to section 71 capital A, read with schedule 2. 71 capital A, read with schedule 2, guys. Got it? Yes. Now we will see it. But sir, why do we require, sir? Supply of goods as well as service both is covered under GST, no sir. Simply tax it, sir. No, no, no. There are different rates applicable for goods, different rates applicable for services. So it is very important for us to classify whether the supply is a supply of goods or supply of services, guys. Got it? Yes. And in my question bank, guys, in my question bank, I will just show you. I have given question number 1, that is in chapter 2, where I have given number of transactions. I have given number of transactions which we need to identify whether it is a supply, if yes, as per which section. So I already given the solution also. Please go through it so that once you studied the provision of section 7.1 and then you go through this question, you will completely get an idea. Okay, this is how we have to decide whether an activity or transaction is a supply. And this is more for a practice purpose, because in the exam you cannot simply write just like this. If it is asked as a descriptive question, then how to answer also I have given. You can just check question number 2, where I have given the detailed presentation, how you have to start, how you have to present the answer for each and every question. Got it, guys? Yes. So solution also is given already in detail. So please go through it, because in the revision session, I will not be able to go through all these questions because it will consume a lot of time, guys. Wherever required, I am explaining through an example or illustration, or even if it is required, I will explain it through a question. But I cannot discuss each and every question. So I want you guys to go through it. So the soft copy of this question bank is available on our website under the free resources. So do download and practice the questions, guys. Oh, shall let me come back. Activities to be treated as supply of goods or supply of services as per section 7(1)(a) read with schedule 2. So which are those? We will see one by one. Very easy, guys. Very easy. Just by applying common sense, we can classify whether it is supply of goods or supply of services. Yes, listen quickly. Transfer. Hello? Pay attention. Brother, sister, pay attention. Look here. Be attentive. Don't get lost. Yeah, get lost in the provisions. Yeah, transfer of title in the goods. Whenever there is a transfer of ownership along with all the risk and rewards, it is always a supply of goods. But sir, what only if right in goods is given? That is, it is rented out, or if the property is leased out. Guys, assume I have sold a machinery to you. I have given a title, so it is a supply of goods. What if I have rented out the machine to you or furniture to you? I have just given a right to use it along with the possession. So it is a supply of services. Next, any transfer of title in goods under an agreement which stipulates that property shall pass at a future date. That means EMI or hire purchase. Assume I have sold a machinery to you where I have given an option for you to pay in installments. Now you paid a down payment and took the possession of the asset or machinery. Immediately you started using it. Is it a transfer of title? Yes. You will get the ownership actually when you pay the last installment. But still, is it considered as that supply of goods or supply of services? Supply of goods, guys. Irrespective of whether title is transferred now or later, it is a supply of goods. Okay. Then coming to land and building, which is an immobile. Okay. But any lease, tenancy, or easement or license to occupy the land, or any lease or letting out of building is supply of services. Is a supply of services, guys. Yes, please be careful. Sale of land or building is not covered here. Only renting it out or giving it for lease. Only right is given. Okay. And please be careful if building is let out for residential purpose and all. Few exemptions is there. But as of now, we are not covering any exemption, guys. We are just identifying whether an activity or a transaction is it a supply. If yes, is it a supply of goods or is it a supply of services? That's all. We will talk about the taxability or exemptions and all later. Okay, next, treatment or process. Any treatment or process which is applied to another person's goods is always a supply of services. For example, I went and left my bike or car for a service. They will do the service and give back my car to me or bike to me. Is it a supply of goods? No, no, no. It is a supply of services. I gave my vehicle, they did the service and gave back to me. So what they are providing is supply of service. Same way, assume I have given my clothes for stitching for a tailor, or I have given my clothes for an iron. In that case, whatever work they are doing is supply of services. They will give back my clothes to me after the work is done. But is it a supply of goods? No, no, it is a supply of services. They are just giving a process or treatment for my goods, guys. Okay, next, transfer of business assets. Transfer of business assets. Goods forming part of business assets are transferred or disposed of by or under the direction of a person carrying on the business. Now assume, sir, I had purchased an asset for a business, now it is disposed of or sold it. If it is for a consideration, 7(1)(a), supply. If it is not for a consideration, then we have to check whether ITC was claimed when it was purchased. If yes, it is a supply as per para 1 of schedule 1. Yes. And I will also give you guys the shortcut to remember these para numbers. I didn't mention it. Let me tell it now. There is a shortcut to remember this para numbers, guys. Para 1 talks about the permanent transfer or disposal of business asset on which ITC is claimed. Yes. So asset, it talks about asset in simple. So asset start with A, which is the first alphabet. So para 1. Next, para 2 talks about supply between related person or distinct person. So related person or distinct person means at least two people has to be there. Yes, para 2. Then supply of goods by a principal or an agent or vice versa. So actually totally three people are involved here, no people. That is principal, agent and recipient, or if it is a purchases, supplier, agent and principal. So totally three people are involved in these transactions. Yes. So para 3. Para 3. And para 4, as that is import of services, that as should always be studied along with 7.1b. So 7.1b, just if I take it as reverse, it looks like D. Yes. D is the fourth alphabet. Yes. So try to remember like that. Whenever there is an import of services, guys. So I have given in this chart, no, please refer to both the provisions and check where it will fit in. Where it will fit in, whether it is 7.1b or para 4 of schedule 1. Yes. Coming back. Yes. Next. Goods held or used for business or put to private use or made available to any person for use for any purpose other than business by or under the direction of a person carrying on the business. Simple. Business asset is used for personal purpose. It is not sold. It is just used for personal purpose. It will be treated as supply of services, guys. Supply of services. Next, goods forming part of the assets of any business carried on by a person who ceases to be a taxable person, means whose registration is cancelled, shall be deemed to be supplied by him in the course or furtherance of business immediately before he ceases to be a taxable person. Okay. So first of all, who is a taxable person? The person who is registered or who is liable to be registered under GST. Okay. Fine. Assume guys, I was registered under GST. Now for some reason, my registration is getting cancelled. I myself is asking for cancellation, or the proper officer is cancelling my registration as per section 29. Cancellation of registration is covered in section 29, guys. Okay. On that day, whatever goods I am holding, no, is deemed to be supplied by me, and it is a supply of goods, guys. This provision we will cover it again in section 29 also. Just mention there, read with section 29. Okay. Exceptions means in the following case there is no supply. When is it? When business is transferred as a going concern to another person. Assume I have sold my entire business to you. From tomorrow you will continue the show. In that case there is no supply. As I already mentioned, this is actually covered in exemption list, guys. There is no supply on, or there is no GST on it. Next, business is carried on by personal representative. Now, for example, assume business was carried on by a father. Now it has been succeeded by a son who is acting as a personal representative, or someone else is carrying on the business on behalf of a registered person. In that case also there is no supply, guys, because show will continue. Show will continue. If your registration is cancelled only, it will be treated as supply of goods. If show continues even by others, it will not be a supply. Got it? Yes. Next, immobile property. Renting of immobile property. Actually, it was already covered here. Again, they're repeating it here. Renting of immobile property is always a supply of services, guys. Okay. Then construction or sale, important. Connected to schedule 3 also. Construction of a building for sale before the construction is completed. Okay. That means pre-construction building, or the building is sold before the construction is completed. Then it is treated as supply of services, guys. Supply of services. Sir, when the building is set to be completed or when the construction is set to be completed, I will try to explain with an example, guys. Just a minute. Yes. Yeah. Assume I am the builder who is constructing flat or apartments or any building, and construction is completed, and I obtained the completion certificate from the competent authority on 10th October 25 telling property is ready to occupy. So completion certificate is obtained on 10th October from the competent authority. Okay. And the buyer first occupied the property on 20th December. That is the date of first occupation by whom? From the buyer. By the buyer. Okay. Whichever is earlier we need to take. That is the date on which completion certificate is obtained or the date of first occupation, whichever is earlier, 10th October. So if seller, that is me, I am the one who built it this, or I am the one who constructed this building, right? Yes. if entire consideration is received by me from whom? Buyer. After 10th October 2025, then it is treated as post constructed building, and it is not a supply as per schedule 3, negative list. Sir, what if part of the consideration at least is received on or before 10th October 2025, that is whichever is earlier? Then it will be treated as supply of services, guys. That is supply of pre-constructed building is like a supply of plan. Still building is not ready. You already sold it. It is like a supply of plan. So it is treated as supply of services as per schedule 2. I repeat this. I have also given one more example. If you want, you can just pause and look into it. Okay, let me explain this. Listen, people. Sir, when the building is set to be completed or when the construction is set to be completed, the date on which the completion certificate is obtained or the date of first occupation, whichever is earlier. If at least a part of the consideration is received on or before this date, whichever is earlier date is there, no? In my example, 10th October, at least if part of the consideration is received on or before 10th October, then for the supplier or the seller, it is a supply of services. Sir, what if entire consideration is received after this? Then it is not a supply as per schedule 3 because it is covered in negative list, guys. Clear? So if entire consideration is received after 10th October, assume sale consideration is 1 crore. If entire 1 crore is received after 10th October, we consider it as a sale of post constructed building. That is, once the construction is completed, building is sold. So it is covered in schedule 3, neither the supply of goods nor the supply of services. Sir, what if seller or the builder has received at least a part of the consideration on or before 10th October? Assume out of 1 crore, only 1 lakh is received as a token advance. And in what mode it is received also is not important here. Whether it is received in cash or other mode, doesn't matter. At least a part of the consideration is received on or before this date means it is treated as supply of pre-constructed building, and it will be a supply as per supply of what? Supply of services as per schedule 2, guys. Hope you got it. Yes, sir. Let me go back. So this is connected to two schedules, schedule 2 as well as schedule 3, guys. So we need to check whether when building is sold, whether it is pre-constructed building or post-constructed building. Got it? Yes, sir. Fine. Next, intellectual property right. Temporary transfer or permitting or use or enjoyment of any intellectual property right is always a supply of services, guys. Assume I know something which I am sharing, for which I am getting paid. It is always a supply of services, guys. Okay. Next, information technology software. Development, design, programming, customization, adaptation, upgradation, enhancement, implementation of IT software will always be a supply of services, guys. Anything related to softwares. Okay. Then action. This is important. Action. Ready for the action? Yes. Not with me, with the institute. Agreeing. Don't go and fight with them. I'm just telling you from the exam point of view. Getting prepared for exam. Agreeing. It is also kind of war which you will guys will play with whom? With the institute. You have to make sure that you will win it no matter what. Yes, Chalo, fine. Agreeing to an obligation to refrain from an act or to tolerate an act or a situation or to do an act. In simple, I have named it as art. Act, refrain from an act or tolerate an act. Actor, refrain from an actor, tolerate an act for which consideration is charged. It is a supply of services tax. Yes, listen here. I have agreed to teach you. So you are paying me, assume a fees of 10,000. It is a supply of services. Yes. Next, now an academy has told, because sir, you don't teach anywhere, for which we will pay you, assume 5 lakh rupees. I will not agree, but assuming I will agree, for which they are paying me 5 lakh consideration or 5 crores consideration. Is it a supply? Yes, supply of services. Refrain means I have agreed not to do something. Refrain means I have agreed not to do something for which I am getting consideration. Okay. Last one, tolerate. Now assume you guys will come and sit in my class every day 6 to 7 hours, and I will put full blade for you. And I have told, please tolerate my lecture for which I will pay you. Come and sit every day, I will pay you. So you agreed. Oh, anyway, just for going and sitting, sir will pay no. So let us go. So every day you will come and sit for 6 or 7 hours of my lecture and I will pay you. So you're tolerating my lecture. You're tolerating my torture. Not lecture, let us consider it as torture. I am torturing you every day for 6 hours or 7 hours. No, right? I'm just giving it as an example. Don't take it seriously. Yes. So in that case, you're tolerating my act for which I am paying you consideration. Is it a supply, guys? Yes, it is a supply. Actually, what happens? No, tolerating means assume I own a building or else I have taken a shop for a rent. Let us take it as I have taken a shop for a rent. That outside the shop there is one space which I have let it out or subletted it to a Golgappa person. So Golgappa person is using a part of my space which I am tolerating. For that, he is paying me some small amount of rent every month. Is it a supply? Yes, supply of services. Clear? Yes. Refrain from an act. Let me give one more example for this. Assume guys, I have obtained a permission from my local authority to construct 3-floor building. But my neighbor requested, because don't construct 3-floor building because our sunlight will be affected. So construct only 2 floor. Not to construct third floor, I will pay you. Assume he told, I will pay 10 lakh. So I agreed. Not to construct third floor, he is paying me. My neighbor is paying me 10 lakh. So I thought, okay, fine, I will not do it. Is it a supply? Yes, it is a supply of services. It is the supply of services, guys. Got it? Yes. But no claim bonus given by the insurance company is not treated as supply, guys. No claim. What is it? I will just explain with an example. No claim bonus part. Yes. I've just given an example here. Let me explain. Assume medical insurance policy is taken by Akash for 10 lakh rupees, which is a policy amount. Yearly premium which he has to pay is 25,000. It is a health insurance or medical insurance policy, guys. Okay. He has paid in 2025 25,000 premium. So what is the value of supply for the insurance company? 25,000. That is whatever premium they are charging. Okay. And there was no medical emergency for Akash in the year 2025. So he didn't claim any amount from the policy. Okay. He didn't claim any amount. So in the year 2026, he was supposed to pay again 25,000. But insurance company told, Akash, last year you didn't claim any amount under this policy. So we are offering you 3,000, no claim bonus. No claim bonus, similar to discount. Okay, that means Akash has to pay only 22,000 in the year 2026. So for insurance company, if I ask you what is the value of supply in the year 2026, it will be 22,000 because this is similar to discount which is allowed to be reduced while calculating the value of supply as per section 15 subsection 3, guys. Okay, that is from insurance company point of view. Now from Akash point of view, who is the insured, he received 3,000 discount or no claim bonus for not claiming the policy. For not claiming the policy, is it treated as supply of services? No, no, guys. Because he didn't agree that he will not claim policy. So insurance company has to pay 3,000 for it. Did he agree for it? No, no. Clear. The purpose of taking the policy itself, if there is any medical emergency, I should make use of it. Just because there was no medical emergency for him in the year 2025, he didn't claim it, for which he is getting a discount of 3,000. So as it was not agreed at the time of taking the policy that Akash will not claim the policy in 2025 for which the insurance company will give discount. It was not agreed before. Still, insurance company is offering a discount or no claim bonus. But will it be treated as a supply of services? No, guys. It will not be. So, for any activity to be covered here as a supply of services, two things are very important. What is it, sir? There should be an agreement or contract between both the parties to do or not to do or to tolerate an act. Okay. And there should be a consideration flowing from the other end. Both the condition has to be satisfied, guys. I repeat, there should be an agreement or contract between the parties and there should be a consideration. If I have agreed to do something or not to do something or to tolerate something, you should have agreed to pay me. Got it? Yes, sir. Fine. Next, right to use goods. Transfer of right to use any goods will always be a supply of services, guys. Then the last one, which are composite supply, work contract services and restaurant services is treated as supply of services under GST. Under previous indirect tax regime, there was a confusion, should we charge service tax on it or VAT on it? But now under GST, they have clarified that it is a supply of services. It is a supply of services. And one more important clarification is, guys, see, only four activities, even without consideration, is treated as supply. Only this four. Only this four. If there is any other activity or transaction where there is no consideration, will we treat it as supply? No, we will not treat it as supply. Please be careful. Whenever there is no consideration, check whether that activity or transaction will fit in any of these paras. If yes, it is a supply as per the respective para. If not, it is not at all a supply. Got it? For example, assume I donated a blackboard to a charitable institution or for a government school. On that blackboard, they have written donated by Vikas. Is it a supply? No, guys. Because from their side, no consideration is there. From my side, consideration is there. Whereas from school side, there is no consideration. What if they tell donated by, assume on the blackboard which I donated, they have printed donated by Vikas, owner of Vikas Gowda classes or the partner of Vikas and Associates. If they have given reference to my business or profession, then it will lead to a promotion or publicity. So is there a supply? Yes, there is a supply of service from their side. Clear? For which I am giving a donation. Hope you understood. So whenever a donor is giving any donation to a charitable institution or temples or religious trust or any schools, and if the receiver gives promotion for the business or profession of the donor, then it will be treated as supply of service, guys. Got it? Yes. Same way, assume I am an artist. I have sent my art to an exhibition. Is it a supply? No. When I have sent it to an exhibition just for a display sake, it is not a supply. But if it is sold in the exhibition, consideration is there. Is it a supply? Yes, supply of goods. Supply of goods, guys. Okay, we are done with schedule 2. Let us move to schedule 3 now, guys. Okay. Section 7, subsection 2, read with schedule 3 will tell the following activities or transaction is neither the supply of goods nor the supply of services. In simple, there is no GST on it. It is neither the supply of goods nor the supply of services, means it is not at all a supply. Hence, no GST, guys. So which are those? Schedule 3 is very, very important, guys. So what is it? Activities or transactions specified under schedule 3 in the CGST Act. Oh, one by one. First, sale of land is always covered here. Sale of building, we need to check whether it is pre-constructed or post-constructed. Whereas for land, sale of land is always covered here. But if land is let out, then it is a supply of services. It is covered under GST. Okay. Then sale of constructed building, that is after construction is completed. I explained it along with an example, no? 10th October example. Yes. So if entire consideration is received on or after. Okay, sorry, one second. I will just go to that example. Where are you? Yeah. Yes. If entire consideration is received after this date. Sir, how do I decide this date? Date on which the completion certificate is obtained or the date on which the property is first occupied, whichever is earlier. So if entire consideration is obtained after this, then it is a part of schedule 3, guys. Part of schedule 3. Yes, sir. Okay. Next, actionable claims other than specified actionable claim. Okay. Actionable claim is covered in schedule 3, but other than specified actionable claim means on specified actionable claim is GST applicable? Yes. What specified actionable claim? I have given you in blue color. Specified actionable claim means the actionable claim involved in or by way of betting, casinos, gambling, horse racing, lottery, or online money gaming. So all these are termed as specified actionable claim on which GST is applicable, guys. Any other actionable claim actually is a goods. Actionable claim is a goods. But here they are telling it is a part of schedule 3. Means on that GST is not applicable. But not all actionable claims. So specified actionable claim is covered under GST. Any other actionable claim is covered in schedule 3, which is outside GST. No GST on it. Okay. Yes, sir. Next, And in whatever order I have given here is not as per the para number, guys. I have developed one shortcut for this. As per that, I have arranged the scenarios or transactions here. Okay, sir. Fine. Next, services of funeral, burial, crematorium, or mortuary, including transportation of deceased. Sir, already the family members are in sad, they're already in feelings. Now if government go and ask on whatever services you are taking for the procedures which you are doing now on the death of a person, pay GST, how bad that family will feel about government, right? Yes. So that is why they told on this services no GST. Okay. Then services by a court or tribunal, and court here includes the district court, high court, or supreme court, guys. Or whatever fees they are charging on that, no GST. Next, functions performed by the members of parliament or members of state legislature, that is MP or MLA, members of panchayat or member of municipality, and members of other local authorities. Guys, for whatever work they are doing, they are representing the constituency from where they are elected, they get paid as salary. But in income tax, we have learned whatever salary MP, MLAs, or other leaders will receive, it is not taxable under the head salary because there is no employer employee relationship. So whatever salary they receive, where is it taxable? Under the Income Tax Act, in other sources, guys. That is the last head of income. Whereas here, on that amount, is GST applicable? No. GST is not applicable because it is a part of Schedule 3. Sir, what if a person is receiving salary under the employment contract? Then it is given here, which we will see later. Ah. Duties performed by any person who holds any post in pursuance of provisions of the Constitution in that capacity, like President, Vice President, Speaker, or the election commissioner, all those, or C and AG, all those people are holding the position as per the constitution. And for their role, if they get paid any amount on that, no GST. Last one, duties performed by a person as a chairperson or a member or a director in a body established by the central government or a state government or a local authority. For example, Madam, that is Nirmala Sitharaman, who is the finance minister of the country, is acting as a chairperson of GST Council, and she will participate in all the GST Council meetings for which she will get paid. Yes. Is it liable for GST? No. Hope you understood. Yes, sir. Now, services by an employee to an employer in the course of an employment. So, whatever employment service which employee is giving, for which he get paid salary by employer, is not liable for GST, guys. And please be careful, whatever is covered here, no, they are not in employment, because employment scenario will fall here. These people are not acting as an employee. There is no employer-employee relationship here, but still covered in Schedule 3. Sir, what if there is an employment? Assume I am an employee of a central government or state government or RBI or wherever, any undertaking which is under the control of government, then I will fall here. Please be careful. These people, whatever we covered here, no, they are not in employment, but still they are getting paid for acting as so and so. In that case, whatever they get paid or whatever they earn, on that, no GST. Okay, fine. Let us move forward. Last two cases is a recent amendment, guys. It is important. I will try to explain with an example. First, co-insurance. Assume Vikas took a insurance policy on his assets, which is co-insured jointly by. Okay, there are two insurance company, which is SBI and ICICI. Okay, and let us consider SBI as a lead insurer. Means they will direct. See, I have taken policy jointly with both of them, but I cannot communicate everything with both of them, no? Yes. So there is one insurance company who will play the lead role. In my example, I am taking it as SBI. Okay. They collect the total premium and apportion with co-insurer for their share of risk. Okay. Let us assume insurance is bearing 60% of risk, SBI, whereas ICICI is bearing 40% of risk. It can be 50-50 also, guys. Okay. For easy sake, just to identify the difference in amounts and all, I am taking 60-40. Okay. It can be 50-50 also. Oh. And assume Vikas is totally paying the insurance premium of 10 lakh rupees, guys. 10 lakh rupees per annum. Okay. For the policy taken on his assets. So out of this, how much belongs to SBI? 6 lakh. Remaining 4 lakh, they have to give it to whom? To ICICI for their share of risk. Okay. Assume the policy is totally taken for 10 crore rupees. This is the premium amount, whereas policy amount assume is 10 crore rupees. So if anything goes wrong tomorrow, who should pay this amount, guys? They both have to pay jointly. So out of 10 crore, if I take the same ratio 60-40, 6 crore has to be paid by SBI and 4 crore has to be paid by ICICI. Okay, fine. So now in case of SBI, collects the total premium, that is 10 lakh from Vikas, and apportion with the co-insurer for their share of risk. So that means 4 lakh they will give it to ICICI. So what is the earning of SBI? If I ask you, it is 6 lakh. But under GST, as they are the lead insurer, they are telling you pay GST on entire 10 lakh. You pay GST on entire 10 lakh. So liable to pay GST on the entire gross premium, which is 10 lakh. On entire 10 lakh, who has to pay premium, people? SBI, who is the lead insurer in my example. Okay. Whereas coming to this person, what is he called as? Co-insurer. Co-insurer. Oh. Receives the share of premium from the lead insurer for their share of risk, which is 4 lakh in my example. And on 4 lakh, should they pay GST? No. So in schedule 3, what they are telling is, co-insurer, you need not pay GST on 4 lakh, provided lead insurer has paid GST on the entire 10 lakh. So not liable to pay GST on the amount of co-insurance premium. Co-insurance premium is 4 lakh. Received from lead insurer, that is as per schedule 3. This is only if lead insurer has paid GST on entire 10 lakh. If by chance, if lead insurer has paid GST only on 6 lakh, in that case, should co-insurer pay GST on 4 lakh? Yes. Yes, they have to pay. So in schedule 3 condition is, if lead insurer has paid GST on entire 10 lakh, then co-insurer, you don't pay tax on 4 lakh, which is the co-insurance premium, guys. Got it? Yes. Let me read that provision. Activity of apportionment of co-insurance premium by the lead insurer to the co-insurer for the insurance services jointly supplied by the lead insurer and co-insurer to the insured in the co-insurance agreement, subject to the condition that lead insurer pays the GST on the entire amount of premium paid by the insured. And in my example, who is the insured? Vikas, myself. Is that clear? And please be careful, it is a co-insurance where I have taken the policy jointly with both the insurance company. Both the insurance company. Okay. Next, one example for reinsurance. Assume VG classes as taken in insurance policy with safety insurance for assume 50 crore rupees. The policy amount is 50 crore and pay the entire premium. Assume the premium amount, let us take it as 20 lakh. Premium amount is 20 lakh. So VG classes paid entire 20 lakh to safety insurance for the policy. But safety insurance thought, oh, yo, the amount involved in this policy is huge. If anything goes wrong, then we have to pay huge amount to VG classes. So let us reinsure this with SBI. As they couldn't take a full risk, they thought, let me shift it to SBI. So transfer the risk to SBI, who is called reinsurer. Whereas safety insurance is called as what? Insurer. So transfer the risk to SBI, who is called reinsurer, and pays reinsurance premium after deducting the ceding commission. Okay, so what is ceding commission means? The share of safety insurance. The share of safety insurance. Okay. So because VG classes totally paid 20 lakh to safety insurance, assume they are ready to bear 20% risk. Remaining 80%, they are transferring it to SBI. So out of 20 lakh, how much is the ceding commission? 20 lakh into 20%, guys, which comes to 4 lakh. They will keep remaining 16 lakh, they will give it to SBI, that is reinsurer. So what they are telling in the law is, SBI being a reinsurer, they are taking the majority of the risk. So you pay GST on entire 20 lakh, not only on 16 lakh, on entire 20 lakh. Who should pay GST? SBI, who is the reinsurer. I have given here. Let us read it. Reinsurer is liable to pay GST on the entire amount of gross reinsurance premium, which is 20 lakh in my example, before deducting ceding commission. What is the amount of ceding commission? 4 lakh, which is nothing but the earnings of insurer. So an entire 20 lakh reinsurer has to pay GST even though their earning is 16 lakh. But on whatever amount they are paying GST, can they charge and collect it from the recipient that is insured? Yes. Guys, no matter who is liable to pay GST, whether lead insurer or co-insurer, can they charge and collect it from the Vikas? Yes, who is the insured. Same way here, no matter who is liable to pay GST, can they charge and collect it from VG classes? Yes, guys. Okay. But liabilities on whose set we are seeing. So if reinsurer has paid GST on entire 20 lakh, Schedule 3 is telling insurer, you don't pay GST on ceding commission of 4 lakh. You don't pay GST. Because including this 4 lakh, GST is already paid by whom? Reinsurer. So on entire 20 lakh, reinsurer is liable to pay GST, but that amount can be charged and collected by reinsurer from whom? VG classes. Okay, I have mentioned here. Not liable to pay GST on the ceding commission as per schedule 3. Now let us go and read it. Actually, if you just read this paragraph, you may not be able to get 100% clarification or clarity. That is why I am just explaining it through an example, guys. Okay, sure. Services by an insurer to the reinsurer for which ceding commission or the reinsurance commission, one and the same, which in my example is 4 lakh X, is deducted from the reinsurance premium paid by the insurer to the reinsurer, subject to the condition that the GST is paid by the reinsurer on the gross reinsurance premium payable by the insurer to the reinsurer, inclusive of the said ceding commission or reinsurance commission, guys. Hope you understood. The major difference between co-insurance and reinsurance is, see here I myself is jointly taking the policy with 2 or more insurance company. Whereas here, VG classes had contact only with safety insurance. Did they take the policy with SBI? No, no. If by chance, if anything goes wrong today, VG classes will question whom? Safety insurance. But they can collect 80% of the money from SBI and give it to Vikas and remaining 20% from their own pocket. So here, VG classes didn't take the policy with SBI. They don't have any direct contact with them. They took the policy with whom? Safety insurance, guys. Hope you got it. Yes. Fine. We will continue. We are done now? Yes. And I have developed a shortcut to remember this provision, guys. That is Schedule 3. What is the first thing you will learn in English? A, B, C, D, E. So learn A, B, C, D, E is a shortcut here. Okay. And after E, you can directly go to I. I is insurance. Even insurance is covered here. Okay. What are those? One by one. Learn. L. Okay. First one. Land. Sale of land. Then A, B, C, D, E. A for actionable claim, B for burial services, then C for court services or tribunal services, then D for duties performed by so and so people. There are few set of people covered here. Okay. Then E for employment service. Clear? Actually, even for F, G, H, there is point, but those things are not a part of your syllabus with respect to import and all. But what is covered for you is the next one, which is I, that is insurance related thing. Clear? So learn A, B, C, D, E and straight away go to I. That is insurance. Got it? Yes. Fine, guys. We will move forward. We are still in section 7 to. We are done with schedule 3, but we will continue with section 7 to other items. Activities or transactions notified by the government. Services by way of an activity in relation to a function entrusted to a panchayat under Article 243G of the Constitution or to a municipality under Article 243W of the Constitution. Guys, as per Constitution, whatever municipality or panchayat is supposed to do, they are like a local authority. Municipality is for urban area, whereas panchayat is for rural area. Whatever they are supposed to do, as per the Constitution, if they do it, sir, is it a supply? No. It is neither the supply of goods nor the supply of services. Hence, no GST on it. Oh, next, services by way of grant of alcoholic liquor license by the state government. So, if I want to sell alcohol or if I want to keep a liquor shop in any state, first I have to obtain a license from a state government for which I need to pay the amount. So now state government assume is giving a license for me to keep a liquor shop. for which I am paying you a license fee. Is it liable for GST? No. And please be careful, guys. Only the grant of alcoholic liquor license by state government is covered here. If it is any other license, like assume for mining and all, is it liable for GST? Yes. Only these two activities is neither the supply of goods nor supply of services. As per which section? 7.2. And please be careful, sir, is this a part of Schedule 3? No. Whatever we learned above this, okay, that is this part is a part of Schedule 3. Yes. So section 7 subsection 2 covers various activities which is neither the supply of goods nor the supply of services. One list is given in Schedule 3 which we already learned in detail. One more is given here. This is also as per section 7.2. Then there is a clarification given through a circular telling the following is also neither the supply of goods nor the supply of services. Which are those? We will see one by one. Interstate movement of various modes of conveyance. Interstate movement of various modes of conveyance between distinct person, that is who is registered separately under GST, including train, bus, truck, tankers, trailers, vessels, containers, aircraft, carrying goods or passengers or both, or for repairs and maintenance, and therefore not liable to IGST. Not liable to IGST. So if there is any bus movement from one place to another place, giving transportation services to the passengers, is there a supply of bus? No. Sir, there is a supply of service, but can we consider it as a supply of bus? No. Same way, assume there is a truck movement from one state to another state to transport the goods. Can we consider it as transportation service provided? Yes. But can we consider that truck is supplied from one state to another state? No, no, no. Even if there is a movement between distinct person, sir, without consideration also, can we treat it as a supply as per para 2? No, guys. If it is a movement of conveyance, which will come back, obviously, it is not treated as supply of respective conveyance. Got it? Yes. But except in cases where such movement is for further supply of the same conveyance, then it will be treated as supply. For example, listen, people, very interesting. Tata Motors have a manufacturing plant in Maharashtra. They will manufacture the car there and send it to various showrooms throughout India. Yes. So when they send the car from Maharashtra to various other states, assume they are sending it to Karnataka now. 10 car, they are sending it to Karnataka. Is it a supply of car? Yes. As it is for further sale in Karnataka, even without consideration, as it is a supply between distinct person and it is for further supply in Karnataka, it will be a supply when the cars are sent from Maharashtra branch to Karnataka showroom. Okay, but assume there is a truck carrying all this 10 car. Obviously, car cannot come by themselves, no. So there is a truck which is carrying this 10 car, which is coming from Maharashtra to Karnataka. So they will deliver the car here and they go back. Is it considered as the supply of truck? No, 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 guys. It is not a supply of truck. It was just a transportation of goods service and for which a consideration will be charged, and it is a supply of service and not a supply of truck, guys. Got it? Yes. And if in case, if any repair service is provided for this truck or conveyance for which a consideration is charged, it is a supply of service. But when there is a movement of conveyance for transportation of goods or transportation of passenger from one place to another place, can we consider that the truck or bus itself is supplied? No, there is no supply of conveyance, but there can be a supply of services. Oh, next. Interstate movement of rigs, tools, and space, and all goods on wheels like cranes. When there is an interstate movement of rigs, tools, or space and all, guys, these are the equipment which is used to give shape for the products. Assume I want to produce 1,000 pens of the same style, same standard. So for that, I will be using some equipments to give for each and every product the same shape. Correct? Yes, they are talking about this. When there is a movement of rigs, tools, and space, and all goods on wheels like cranes, and consequently, no IGST would be applicable on such movement because when I have sent that goods, it will be used in the manufacturing in the receiver's branch. But except in cases where movement of such goods is for further supply of the same goods. Means if I have sent any of this for further selling it in the receiver's factory or receiver's place, then will it be a supply? Yes. For example, assume I have sent a rigs or tools from Karnataka branch to Tamil Nadu branch, which will be sold in my Tamil Nadu branch. When I sent it from Karnataka to Tamil Nadu, even without consideration, will it be a supply? Yes, it will be a supply. But assume I have a manufacturing plant in Tamil Nadu. So I purchased these tools in Karnataka and I sent it to my Tamil Nadu branch to use it in my manufacturing plant in Tamil Nadu. I will not further sell it. Is it a supply in that case? No, guys. It is not a supply. Hope you understood. If it is further supply, it will be a supply when I sent it. No, sir, it is to use it in that particular branch. In that case, when I sent it, it is not a supply. Okay. However, for both the cases, applicable CGST, SGST or IGST as the case may be shall be leviable on repairs and maintenance done for such conveyance or goods. For example, assume in Tata Motors example, I told you there is a truck which is coming from Maharashtra to Karnataka to deliver 10 car. Okay. They will deliver the car and go back. But before they go back, there was some small repair services which they took in Karnataka. And for that repair service, whoever is doing that repair service, will they charge consideration? Yes. Is it a supply of service? Yes. Is it liable for GST? Yes. Okay. Then, but sometimes what happens? No, this is interesting. Assume I am engaged in transportation of goods business. I own various trucks. And whenever there is any repair work there, I will send my truck to, assume, Rajasthan. There it will go, get repaired and come back. Rajasthan is too far. Let me take, assume, Andhra Pradesh. I will send my truck to Andhra Pradesh. So there is some expert serviceman. He will give the service and send back my vehicle or truck. When my truck is going from Karnataka to Andhra Pradesh for service, is there a supply of goods? No, no, no. But when I take service, that is repair service in Andhra Pradesh, for which the serviceman will charge consideration. Is it a supply? Yes. On which GST is applicable, guys. Okay. Then the third one is a recent amendment, guys. Clarification regarding transactions in vouchers. So there is a clarification given with respect to this. I have not included that clarification in my revision book, guys, because if I include it, it will become 2-3 pages, but it is very simple. It is very simple. I will just show you in ICI material. If you want, you can just go through it once. Okay. It is given for 2-3 pages, but I will just try to explain it in simple, guys. In simple. If there is sale of voucher or coupon, it is neither the supply of goods nor the supply of services, guys, because it is actionable claim, and actionable claim is covered in Schedule 3 is neither the supply of goods nor the supply of services. Sir, what if it is used as prepaid instruments? For example, sir, I have a card for which I will load the balance and I will use that card to buy various goods or services. In that case, guys, as we are adding balance to it and then using it, it is considered as money. And money is neither the goods nor the services. Got it? So transactions in vouchers is not a supply, guys. Very simple. Got it? Yes. And there was a time of supply provisions given in section 2 subsection 4 for supply of goods, whereas for supply of services in section 13 subsection 4, even those has been removed due to this clarification. Due to this clarification, where they have clearly told when the voucher is sold, there is no supply. And there was a time of supply provisions covered in section 12.4 and 13.4 for goods and services, which depends on whether supply was identifiable or not at the time of issue of voucher, is now removed, guys. I will also mention that when I go to time of supply provisions, but as it is connected to this clarification, I am mentioning here also. If you already studied this, you can just forget about this. There is nothing contained in this subsections, that is 12.4 and 13.4 is applicable for your exams, guys. Is that clear? Yes. I will try to give more clarification with one example. Assume, guys, now I have purchased a voucher from Tata Chromo to purchase any item or a particular item. That doesn't matter now. Okay. I have paid 10,000. I have purchased a voucher from Tata Chromo. Using this voucher, I can buy any goods in Tata Chromo or a particular goods in Tata Chromo. Yes, sir. Now, when Tata Chromo sell the vouchers to me for 10,000, is it a supply? No, not at all. It is not a supply. Okay, as per this clarification. Next, tomorrow, if I go and buy goods using this voucher, is it a supply? Yes. Whatever I am purchasing, assume using this voucher, I purchased a mobile phone. It is a supply of goods to Tata Chromo. That is actual supplier. Got it? So using voucher, if I buy anything, it is a supply, either of goods or services. Okay. Or else, assume I gave this voucher to my employees or to my friend. They went and purchased a mobile phone in Tata Chromo. So when it is using voucher or coupon, whatever we are buying, there is a supply of goods or services, guys. Clear? Sale of voucher or coupon is not a supply, but redeeming it against a goods or services is a supply. Is a supply. Supply of what? Goods or services. And then the time of supply will not be decided as per this section. It will be decided based on whether it is taxable under forward charge or reverse charge by applying subsection 2 or subsection 3 of section 12 for goods, of section 13 for services, guys. Is that clear? Yes, sir. Fine. Fine, guys. So we are completely done with section 7 with all the schedules. Now we will move to section 8. I have given good number of questions on each and every case, guys, in my question bank. So please make a time and go through it. Oh, fine. Flexibility of composite and mixed supply is given in section 8. Guys, what is composite, what is mixed is not given in section 8. But what is the tax rate applicable on composite supply or mixed supply is given in section 8. But before that, we should understand what is composite supply, what is mixed supply. Guys, see, assume if two or more goods or services is supplied for individual prices, we never think about composite or mixed supply. Then when do we think about composite or mixed supply means? Sir, when two or more goods or services or both in combination is sold for a single price, then should we check whether it is a composite supply or mixed supply? Yes, guys. So remember properly, when two or more goods or services or both has been sold for a single price as a single package, only then we need to check whether it is a composite supply or a mixed supply. So let us see what is composite supply, what is mixed supply. Composite supply is defined in section 2 clause 30. Easy to remember. Composite start with CO. C is the third alphabet, so 3. And O, assume it looks like 0, so 30. Yes, sure. What is it? We will see. Composite supply defined. Section 2 clause 30 defines composite supply as supply made by a taxable person. Who is taxable person? A person who is registered under GST or who is liable to be registered but not yet registered. Even he is treated as taxable person? Yes. So now my turnover has crossed threshold limit and I have registered. Am I a taxable person? Yes. Now my turnover has not crossed threshold limit, but still I have taken registration. Am I called as? I took voluntary registration. Am I called as taxable person? Yes. Last one. My turnover has crossed threshold limit. I am supposed to get registered, but still I am not applied for registration. Am I treated as taxable person? Yes. When I am liable but still not obtained registration, still I will be treated as taxable person, guys. Okay. To a recipient consisting of two or more taxable supplies of a goods or services or both, or any combination thereof, like one goods, one service, or two goods, one service, like that, which are naturally bundled. Sir, what is naturally bundled is not defined in the law. But when majority of the customers are willing to buy it together, we call it as naturally bundled. Or it is a general practice to sell this together in the industry. It is a general industry practice to sell it together, guys. Got it? Yes. And supplied in conjunction with each other means together. And each other in the ordinary course of business, one of which is a principal supply. So when two or more goods or services or both are supplied together for a single price, which is naturally bundled, we need to identify which is a principal supply there. which is a principal supply means which is having a predominant element, means because of this the other things got supplied. For example, mobile phone supplied along with charger. So mobile phone is a principal supplier. Laptop supplied along with laptop bag. Laptop is a principal supplier. Clear? Because of that only you are getting the other products, right? Yes. So charger supplied along with mobile phone. So here what is the principal supply, guys? Mobile phone. And coming to section 8, which talks about taxability, they tell in case of composite supply, it shall be treated as the supply of principal supply. So entire supply will be treated as a supply of principal supply. Or the entire value of composite supply will be charged at the rate applicable to whom? Principal supply, the GST rate. The GST rate applicable for the principal supply will be applicable on the entire sale value, guys. Got it? Yes. Then coming to mixed supply, very easy. What is not composite is mixed. That is, sir, two or more goods or services or both are supplied for a single price together, but they are not naturally bundled. They are not naturally bundled, sir. Then we call it as what? Mixed supply. So naturally bundled is a keyword. Okay, let us see. Under section 2 clause 74, mixed supply means two or more individual supplies of goods, or individual supplies means it is not sold individually. They are individual products or services, but they are sold together as a package. Can it be sold separately also? Yes, it can be sold separately. But is it sold separately by the seller? No. He is combining all that and making it as one package. Or any combination thereof made in conjunction. Conjunction is together, guys. With each other by a taxable person for a single price, where such supply does not constitute a composite supply. When it is not a composite, it is a mixed. When it is not a composite means when it is not naturally bundled, guys. Example, gift pack comprising of chocolates and sweets. Can it be sold separately? Yes. But maybe as a selling strategy, the seller is making it as a package and selling it. In that case, what is the tax rate? Is given in section 8. Mixed supply shall be treated as a supply of that particular supply which attracts highest rate of tax. The entire value of mixed supply will be charged at the rate applicable to the supply that attracts highest rate of tax. Oh, so I have made one simple chart on the exam days and all. You guys can just go through this chart, guys. The revision book especially will be very helpful on the exam day because you will have only 1.5 day time to cover both direct tax as well as indirect tax. And now itself plan smartly, guys. When you're studying and revising itself, please plan from which book and which all provisions, which all questions you will solve on the exam day, because you will not be able to cover each and everything on the exam day, guys. So don't unnecessarily panic on the exam day. So you should plan immediately after law exam. How do I study? Will I start with direct tax? Will I start with indirect tax? From where will I study? That is which book, or revision book or provision book, or which questions will I solve? Even questions you will not be able to solve all the questions. Please mark some important questions and keep. Maybe only those you will go through, or important adjustments. Clear? Yes. So please plan smartly, guys. When two or more goods or services are both supplied together by a taxable person for a single price, if it is naturally bundled, then it is called as composite supply as per section 2 clause 30. So one checkpoint which is very important is naturally bundled, guys. Got it? Yes. So in that case, it will be treated as a supply of principal supply, which has a predominant element. Predominant element means because of this, other things are getting supplied. That other things we call it as ancillary supply, guys. Okay. The rate applicable to the principal supply is applicable to the entire value. Where is it given? In section 8. Please be careful. Section 2 clause 30 defines composite supply. But what is the GST rate applicable on composite supply is given in section 8. I have given in this last point in the table. Oh, next. If it is not naturally bundled, then it is not a composite supply. Accordingly, it will become what? Mixed supply as per section 2 clause 74. And it will be treated as a supply of that particular supply that attracts highest rate of tax. Rate applicable to the supply that attracts the highest rate of tax is applicable to the entire value. So whatever I have given here is a part of section 8, guys. I have also given an example here. Goods has been supplied along with transportation service and insurance in transit. So which is the principal? Is it a composite supply? Yes, because they are naturally bundled. Because majority of the customers want all this together, or it is supplied together as a general business practice. Oh. But what is the principal supply? Goods here. The rate applicable for the goods will be applicable for the entire value if single price is charged. Now you might ask me, sir, what if separate consideration is charged? For example, for goods 10,000, for transportation 3,000, for insurance 2,000. So separate consideration is charged. Then there is no question of composite or mixed. Each supply is treated as individual and respective rate will be applicable on each amount, guys. What I told was at the beginning itself, I told you for all these three put together, assume a single price is charged 15,000 without any breakup. In that case, I should know what is the GST rate applicable on 15,000, for which we need to identify whether it is naturally bundled. If yes, it is a composite supply. Then you identify which is the principal supply. Assume goods. For goods, assume the rate applicable is 5%. Apply 5% on entire 15,000. Got it? Yes. Then coming to the other example, which is for mixed supply. Assume guys, chocolate is supplied along with beverages and food items or snacks as a single package for 5,000. For 5,000. Single price is charged for all the three products. Is it naturally bundled? No, sir. It can be sold separately. In that case, identify which product has the highest rate. Assume for chocolate, the rate is 28%. For this, assume it is 18%. For this also, it is 18% or 5%. Okay, let me make it once again. The actual selling price is 5,000. So on this 28%, on this 18%, let me assume this as 5%. What is the highest rate? As it is a mixed supply, we need to take highest rate and apply it on the sale value. 28%, guys. Highest rate, mixed supply. Got it? Yes. Fine, guys. So we are done with section 8. In my provision book, guys, I've just given few examples. I will just show you. You can pause the video and go through, or else I will quickly read. Yes, okay, I will quickly read. This is an example for composite supply. When a consumer buys television set along with the warranty and maintenance, in that case, is it a composite supply? Yes. So what is the principal supply? Team. Remaining two would be ancillary. Then Mahesh manufacturer enter into a contract with Chiku Limited for supply of ready-made shirts packed in designer boxes at Chiku's limited outlet. Further, Mahesh manufacturer would also get them insured during transit. So ready-made shirts are sold along with package and insurance. Is it a naturally bundled? Yes. So it is a composite supply. And which is the principal supply? The ready-made shirts, which is a main product. Okay. Next, a travel ticket from Mumbai to Delhi may include service of food being served on board, free insurance, and the use of airport lounge. Okay. So, is it composite supply? Yes, guys. It is naturally bundled. Yes, it is a composite supply. But which is the principal one here? The principal one is the transportation of passenger service, guys. That is a principal supply. Rest all is ancillary. Okay. It is a part of my provision book. Okay. Yes. Don't get confused. Those who have a provision book can just refer to this. Then I have also given an illustration which includes even rate. Guys, if the question is just to identify whether it is a composite supply or mixed supply, stop it there. But if they also asked you to decide what is the rate applicable, if the rate information is given in the question, accordingly follow like this. Rathi Computer supplies laptop along with laptop bag to the customer for 55,000 being naturally bundled. Okay, laptop along with laptop bag. Is it naturally bundled? Yes, sir. So both supplied for 55,000. As they are naturally bundled, it is a composite supply. Which is the principal supply, sir? Of course, laptop. And assume the rate applicable for laptop is 18% and laptop bag is 28%. What is the rate applicable for principal supply, guys? 18%. So on entire 55,000, 18% GST would be levied. Got it? Yes. Then coming to the examples of mixed supply people. One buys a consolidated package of beauty products, that is shampoo, comb, conditioner, nail polish, lipstick and tooth powder. As they are not naturally bundled, it is a mixed supply. And when it is a mixed supply, none of them will be principal supply. Almost everything will have same value, guys, or same importance. Okay. Next, A shopkeeper selling storage water bottles along with the refrigerator, even that is mixed supply because they are not naturally bundled. Then a supply of packets consisting of canned foods, sweets, chocolates, cakes, dry fruits, aerated drink, and fruit juices. Even they are not naturally bundled, so it will be a mixed supply. And each of this can be sold separately also, guys. See, as a strategy, maybe seller is combining all this and selling it as one package. But will majority of the customer want to buy it together? No. Or is it a general industry practice to sell it together? No, sir. Then one illustration, including the tax rate part. Srinath Enterprises supplies 10,000 kits at rupees 50 each, amounting to 5 lakh to Raghav General Store. Each kit consists of one shampoo, one face wash, and one kajal pencil. Guys, it is a mixed supply. As they are not naturally bundled, it is not a composite supply, it is a mixed supply. And what will be the rate applicable? Highest rate. Let us assume what is the rate. On shampoo, it is 18%, face wash, it is 28%, and kajal pencil, it is 12%, which is the highest rate, guys, 28%. So on entire 5 lakh, 28% GST would be livid people. Got it? Yes, sir. Fine. Coming back here. So we are done with the provisions. Few clarifications with respect to composite and mixed supply, guys. See, if there is supply of food or snacks in a cinema hall, it is treated as a separate supply and it is a restaurant service, supply of services. But, sir, if a ticket price also includes the food and snacks, then if it is naturally bundled and if it meets the criteria of composite supply, we will treat it as a composite supply. But what would be a principal supply there? Ticket. The exhibition of movie or cinema will be a principal supply. So whatever rate is applicable for the exhibition of cinema service will be applicable on the entire value when both are provided for a single price, guys. Okay. Then if a food is provided to a patient who is admitted in an hospital, again, it is a composite supply, guys. So healthcare along with food is provided. And what is the principal supply here? Healthcare. And if principal supply is exempt, then the entire supply will be exempt. In my example, healthcare is exempt under GST. So entire value, including the food supplied to the patient who is admitted, is it exempt? Yes. Then coming to printing service. There is a confusion with respect to printing. Sir, is it a supply of goods or services? On which is a principal supply? Or if is it a first of all composite supply? If yes, is it a which is a principal supply? Oh. Guys, assume I want to print books for my taxation, direct tax as well as indirect tax. So I own a content. So I want to print a books. So I approached a publisher. I gave a content, what has to be printed. So they will use the book or pages or sheets. They will print my content and give it. So from their side, that is from publisher side or assume printer side, there is a supply of goods as well as services both because they are using their own book or sheets to print my content. So there is a supply of goods along with service both, printing service. So assume they are charging single price. Is it a composite supply? Yes, it is a composite supply. But which is having a predominant element, guys? Printing service. Because if a empty book is given, will I purchase? No, no. Book along with the content whatever I want. So printing service is a principal service supply. Whatever rate is applicable for printing service will be applicable on the entire value. I repeat, if I have given my book for printing, where the printer will use his own book or sheets and print whatever content I have given to him, then from printer point of view, there is supply of goods as well as supply of service for which they are charging single price. So which is the principal supply? So printing. So whatever rate applicable for printing service will be applicable on the entire value. Okay. Next, one more example. Assume I want to purchase a t-shirts. So I went to a shop, I selected the t-shirt and I asked them, sir, can you print my logo and give it on this t-shirt? They told, okay. So they're supplying the t-shirt along with printing of my logo. What is the principal supply here, guys? T-shirt. So it is a supply of goods. It is a supply of goods. Please be careful. So even in this case, is it a composite supply? So yes, they are naturally bundled. Okay, now yes, because especially me, when I want to buy it, I want to buy it along with printing. Sir, what if I buy only t-shirt? Then that is individual supply. Got it? Yes. Now, or else assume I want to buy a tissue or envelopes along with my logo printed on it or my brand name printed on it. So in this case, it will be a supply of goods, guys. Even though both service as well as goods are involved, we will treat it as the supply of goods because that is the principal supply. That would be the principal supply. That is the tissue or envelope. And in the first example, it is t-shirt. Got it? Yes, guys. Fine. So we are done with this chapter. So let us just mark the section number, whatever we have covered. Come to the section list, guys. Section list. Yes, I have given the list here. Section 7 is completely covered. 7 1A, AA, B, C, 1A, 2, 3. And 3 actually gives power to the government to clarify whenever there is any confusion. Government can clarify whether it is a supply of goods or supply of services. For example, assume, sir, there was a confusion with respect to supply of a particular item or supply of any service, whether it is goods or service or both are element are there. Now government can pitch in and tell it is a supply of goods and not a supply of services. Or else they can tell it is a supply of services and not a supply of goods. Especially with respect to restaurant and work contract services, even though goods as well as service both are involved, government has clearly told we will treat it as supply of services under GST. We have to strictly follow that. Clear? And government will use this power only when there is a confusion among the people, whether it is supply of goods or services, they can clearly clarify how to treat it. Okay, then we have also covered section 8, guys. So this is all about chapter 2 revision, guys. Yes, students, now we will revise the third chapter under GST, which talks about charge of GST or levy of GST. In this chapter, we would be covering section 9 and 10 of CGST Act along with section 5 of IGST Act. But before we learn the section, we'll just go through some basics, guys. Yes, India has adopted a dual GST model where both central government as well as state government simultaneously will be levying GST, guys. And it is a part of concurrent list in the constitution. Yes, sir. First, we need to classify whether the supply is an intrastate supply or interstate supply. Sir, when do we call a supply as intrastate supply? Is when the location of supplier and place of supply is in the same state or same union territory. In that case, we call it as intrastate supply and we will levy CGST and SGST. CGST will be levied by central government as per the CGST Act and SGST will be levied by the respective state government under the SGST Act. Sir, what if it is within the union territory? Then in place of SGST, UTGST would come, guys. That is CGST plus UTGST would be levied. And UTGST would be levied under the UTGST law. And UTGST law is applicable only for 5 territories. Totally we have 8 union territories in India, but 3 union territories with their own state legislature will be treated as state for GST purpose. We already covered this. Sir, which are those 5 union territories for which UTGST is applicable is, I have given you. I will just read it out once. Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, that is all together one, guys. Then Chandigarh, the last one is Ladakh. Whereas Delhi, Puducherry or Pondicherry and Jammu Kashmir are actually union territories, but they have their own state governments. So for GST, we treat it as state and assume if there is any supply within Delhi, whether UTGST would be levied or SGST, guys. SGST would be levied. So for these 3 territories, SGST would be levied, people. Yes. Next, when do we call the supply as interstate supplies? When location of supplier and place of supply is in 2 different states or 2 different union territories or 1 state, 1 union territory. Yes. So we call it as interstate supply. And in case of interstate supply, only central government has the power to levy and collect IGST. But half of it will be shared by central government with the destination state, guys. Yes, sir. So this is all about the basics. Now we will learn section 9, which is a charging section for GST, guys. So section 9 under CGST Act or section 5 under IGST Act is a charging section under GST. Like how we have charging sections in income tax. No, that is section 4, which is a general charging section. And the first section under each head is a specific charging section which tells what income is taxable under the respective head. Same way, we have a charging section for both CGST Act as well as IGST Act. So what is it? Both section 9 of CGST Act as well as section 5 of IGST Act has 5 subsections. It has similar content, guys. So what is it? We will see now. Yes. So as per section 15, which talks about value of supply, GST is levied on what people? Value of supply. Okay, it is an ad valorem levy. That is, it is charged as a percentage of value. But we should know who is liable to pay GST. That is when we can fix the liability, right? Yes. So in section 9, we will be seeing in which cases who is liable to pay GST. Is it supplier or is it recipient or is it electronic commerce operator, guys? Okay, we'll begin. 9 subsection 1. What is it telling? CGST will be levied on all intrastate supplies of goods or services both except means on this no GST. What are those? On the supply of alcoholic liquor for human consumption and undenatured extra neutral alcohol or rectified spirit used for the manufacture of alcoholic liquor for human consumption. Guys, assume I am the manufacturer of alcoholic liquor for human consumption. Now, if I sell the alcohol, on that GST is not applicable. Same way, to manufacture alcohol, if I purchased any of this, that is undenatured extra neutral alcohol or rectified spirit, this is like my raw material to manufacture alcohol. So assume I have purchased this as a raw material. On that is GST levied? No, even that is outside GST. Sale of alcoholic liquor is outside GST. Same way, if I purchase this raw material to use it in the manufacture of alcoholic liquor for human consumption, even on that GST will not be levied, guys. Is that clear? Yes, sir. Then on the value determined under section 15, that is value of supply, and at such rate not exceeding 20%, means maximum CGST rate that can be levied by the government is 20%. Previously, the highest rate of GST was 28%, but recently the government has increased the rate to 40% on some luxury and sin goods, guys. So maximum CGST rate is 20%. That is even SGST and UTGST also, because CGST and SGST would be equal, guys. And the maximum rate of IGST that can be levied by the government is 40%. And government has used this power and they have introduced 40% slab for some luxury and sin goods, guys. Okay, yes. So 9.1 is done. Next, let us go to, and as per section 9.1, who is supposed to pay tax, people? Supplier. Under forward charge mechanism. Yes. Sir, what about 92, 93, 94, 95? 92 is telling 5 petroleum products have been kept outside the GST temporarily. But any day GST Council may include this under GST. So this power is given to GST Council to include this 5 petroleum products, which in short I call it as PhD man. What is it called as? PhD man. Yes, sir. So these 5 petroleum products have been temporarily kept outside, but GST Council has been given the power to include this under GST any day. But even today, it is outside GST. Even today, it is outside GST, guys. Please be careful. Alcoholic liquor for human consumption is completely outside GST. Even if GST Council wants to bring it under GST, they don't have that power. Whereas 5 petroleum products, that is PhD man, can be brought under the GST if GST Council decides so. Okay. Then section 9394 talks about RCM, guys. So please be careful. RCM means the recipient is the one who is liable to pay tax. We will talk about it. So 9394, both are talking about RCM. What is it, sir? 93, let me read it. The government may by notification specify categories of supply of goods as well as services or both. The tax on which shall be paid on reverse charge basis by whom? By the recipient. Here they didn't talk anything about the supplier should be registered or recipient should be registered, nothing. So this power is given to the government. You notify any goods or services which is taxable under reverse charge mechanism. Got it? Yes. Whereas 9.4 clearly telling if the supplier is unregistered, but if recipient is registered, government, you notify such supplies which are taxable under reverse charge mechanism. They clearly told here supplier should be unregistered, whereas recipient should be registered. Let me read out. 9 subsection 4 guys. The government may by notification specify a class of registered persons, that is recipient. So recipients are registered. Okay. Yes. Who shall in respect of supply of specified categories of goods or services or both received from unregistered supplier pay the tax on reverse charge basis, guys. So please be very careful. 9394 both gave power to the government to notify goods or services which is taxable under reverse charge mechanism. But 93 didn't specify anything about registration. Whereas 94 is clearly telling government can notify any goods or services which is supplied by unregistered supplier to registered recipient. It is taxable under reverse charge mechanism, guys. Got it? And government has used this power and they have notified few goods and services which are taxable under reverse charge mechanism. Which are those? The list is there. We will see it later. Okay. Then coming to 9.5, the government may by notification specify categories of services. Only power is given to notify services. The tax on intrastate supplies of which shall be paid by electronic commerce operator who is a third party. Here is neither the supplier nor the recipient, guys. Okay. If such services are supplied through HIT. So now assume I am ordering few services or if I am taking any services through e-commerce operator. E-commerce operator may not be the actual supplier. There is someone else who is supplying such services. But e-commerce operator is providing a flat platform for us. They are connecting the supplier and recipient. Government is asking e-commerce operator, you pay tax on it. Because you are the better person to know who is the supplier, who is the recipient, and supplier might be a small supplier. So they are targeting e-commerce operator. But even when e-commerce operator is liable to pay GST, can they charge and collect it from the recipient? Yes, guys. They can charge and collect it from the recipient. Okay. So in simple, if I have to tell, as per 9 subsection 1, who is supposed to pay tax people? Supplier under forward charge mechanism. Whereas 9394, who is supposed to pay tax under reverse charge mechanism? Recipient. Whereas 95, it is e-commerce operator. E-commerce operator. Yes, sir. And whatever we learned under section 9 of CGST Act, same content is there even in section 5 of IGST Act, which is applicable for interstate supply. But minor changes, for example, is like this. In section 5, subsection 1, instead of intrastate supply, there it would be interstate supply. And maximum here 20% is there, no? There it would be 40%. Same way here also, instead of intra, there it will be inter, guys. Got it? So all other things are copy paste. Then, sir, who is liable to pay GST and what are the different mechanism under GST? We will see. So there are two mechanism, guys, forward charge mechanism and reverse charge mechanism. Which supplies are taxable and forward charge mechanism is not given in the law. We should know which are the goods or services which is taxable under reverse charge mechanism, but only services are a part of your syllabus. The goods which are taxable under reverse charge mechanism is not a part of your syllabus. Okay, we will learn that list. Yeah. So only what is taxable under reverse charge is given. That means how will I know what is taxable under forward charge? Guys, simple. Anything which is not covered under RCM and which is not covered in exemption list, it is understood that it is taxable under forward charge mechanism. I repeat, anything which is not covered in RCM list and it is also not covered in exemption list means it is taxable but not under RCM, which means who should pay tax people? Supplier under forward charge mechanism. I will explain both this mechanism here. Yeah, I'm just taking this to explain. Yes. So under forward charge mechanism, supplier normally would be registered. That is why he is supposed to pay tax. Yes, he is supplying goods or services, and for supplying, he will issue tax invoice in which the tax amount along with the rate would be mentioned. Okay. So from the recipient, he will collect the consideration along with GST. That is sale value along with GST. Assume the value of supply for this is 10,000. On that GST 18%, assume 1,800. So the total amount which recipient will pay to the supplier is how much, people? 11,800. So now supplier will receive totally 11,800. He will keep 10,000 with him, whereas 1,800 he has to deposit with the government because it is government revenue. Yes. And for this, as soon as the supplier deposit it with the government and file GSTR 1, giving the details of his outward supply, recipient can claim a credit of it. So for recipient, it is an input tax and he can claim it as a credit, people. So this is under forward charge mechanism. Sir, what about reverse charge mechanism? So under reverse charge mechanism, the supplier will supply goods or services and issue invoice or a bill. It is not a tax invoice because he is not collecting tax from the recipient. Why so? Because the liability to pay GST is with whom? Recipient and not supplier. Okay. So recipient will pay only consideration to the supplier and he will also issue a document called payment voucher. Okay. So in this case, recipient will pay only 10,000 to the supplier and not GST. So that is why supplier is not issuing tax invoice because he is not collecting it. Okay, sir. Whereas the recipient, he himself has to pay 1,800 to the government under reverse charge mechanism. Now, can he claim a credit of it? Yes. Even under reverse charge mechanism, if recipient himself pay the tax to the government, it is still an input tax for him and he can claim a credit of it. But in both the cases, obviously recipient has to satisfy the conditions given under section 16 and the credit should not be restricted as per section 17, guys. Hope it is clear for you. Whether it is forward charge or reverse charge, can recipient claim the credit for whatever input tax he has paid? Yes. Under forward charge, the liability will be under or on the head of the supplier. Can he charge and collect it from the recipient? Yes. Whereas under reverse charge, the liability itself is on the head of recipient. He himself has to pay it. But ultimately, whether it is forward charge or reverse charge, GST is paid from whose pocket? Recipient's pocket. Will he get a credit for it? Yes, guys. He will get a credit for it. Hope you got it. Yes, sir. And when reverse charge mechanism is applicable, it is as if the recipient is liable to pay GST. All the provisions of GST would be applicable for him, guys. Yes, sir. Now we will learn the list of services which is taxable under reverse charge mechanism. There are number of services. One by one we will cover. The first one, transportation of goods by road by a goods transportation agency. So the supplier is GTA, whereas the recipient, they have given the list of recipients here, guys. Even if one of them are covered, then RCM would be applicable. But here there is also an option of forward charge mechanism, which I will explain. But we should always cross check whether recipient is covered under any of these guys. In simple, I call them as specified recipients. So who are those? One by one. Any factory registered under the Factories Act, then any society registered under the Societies Act, any cooperative society, or any person registered under GST. Any person registered under GST. But one exclusion is there. If a person is registered under GST only to deduct TDS, but they are not providing any outward supply, then in that case, for them, it is covered under exemption list, guys. No RCM, no FCM. It is exempt. It is exempt. Sir, who are those? I will just show you. It is a part of my provision book. I will just show. Yeah, so any person registered under GST is covered in recipients list. Yes, but one exclusion is there. That is the department or establishment of central government, state government or union territory or a local authority or a government agencies. If any of these three person is registered under GST only to deduct TDS, because whoever is deducting TDS, for them registration is mandatory as per section 24. Yes, sir. So this three or any of these three is registered under GST only to deduct TDS. In that case, they are telling even though they are registered, even though they are receiving the services from goods transportation agency, it is exempt. It is exempt, guys. It is covered in exemption list. Yes, sir. Coming back. Next, any body corporate, whether they are registered or not, body corporate means a company, guys. Yes, including foreign company. Next, any partnership firm, whether registered or not, including association of person. And the last one, any casual taxable person. Guys, for casual taxable person who is covered under section 27, okay, there are two people who are covered in section 27, casual taxable person and non-resident taxable person. As per section 24, both of them has to compulsorily get registered. But as per section 23, for casual taxable person, one exemption is given. What is it? If a casual taxable person is supplying a notified handicraft goods or the goods which is predominantly made by and, if they are supplying it even outside the state, they need not get registered until their aggregate turnover crosses the threshold limit of either 10 lakh or 20 lakh. That means if they are a small suppliers, for them registration is not mandatory. They have to get registered only if their aggregate turnover crosses 10 or 20 lakh. Got it? So if by chance if they are covered there, then they would have not registered. So if they are not registered, is it covered here? No, it is exempt. So that means who is covered here is only the casual taxable person who is registered under GST. Who is registered under GST. So if a casual taxable person is supplying notified handicraft goods or goods which is predominantly made by and if their turnover is within 20 lakh or 10 lakh, then they would have not registered. If by chance, if they are receiving any transportation services by road, through whom? Goods transportation agency. Are they covered here? No, guys. It is exempt actually. It is covered in exemption list, sir. Okay. And all these people, whoever has been mentioned, no, they have to be in the taxable territory. That is India, guys. Yes, sir. But they told if recipient is any one of them, RCM is applicable. But still, before this, they are giving the option to the supplier to pay tax under forward charge mechanism. So the first option is always for the supplier to pay tax under forward charge mechanism. If supplier doesn't opt to pay tax under forward charge mechanism, then if recipient is covered in any of this, they have to pay tax under reverse charge mechanism, guys. Is that clear? Yes. I have given one chart. Come to that chart, which is after one page. Yeah. Come to this chart, guys. Yes, what is it? Goods Transportation Agency, person who is liable to pay GST for GTA service when recipient is one of the specified recipients, means whoever is given in the last column. Only if recipient is one of them, either forward charge or reverse charge is applicable, guys. Sir, what if the recipient is not specified recipient? I have given a note here. You can see connected to exemption list where recipient is other than specified recipients, means who is not covered in that list. Like few example I have given: unregistered recipient or unregistered casual taxable person, then GST will be exempt. GST will be exempt. So for GTA service, when is it taxable is only if the recipient is a specified recipient, guys. Only if a recipient is a specified recipient. Okay. Specified recipient need not be always registered. For example, assume they are a factory registered under Factory Act but not registered under GST. Are they still covered under the specified recipients? Yes. Or as body corporate or partnership firm, assume they are not registered under GST. Are they still covered under GST? Or sorry, specified recipients? Yes. I am not telling all recipients should be registered under GST. No, no, people. Only this person is registered under GST or even this person. Whereas others may or may not be registered under GST. Are they still called as specified recipients? Yes, they are called as specified recipients. Okay, going back to the chart. Yes. Now, if the recipient is one of the specified recipients, the first option is for GTA to pay tax under forward charge mechanism. Okay. So GTA opts to pay GST under forward charge mechanism. There are two rates. One is 18%, the other one is 5%. So if they opt to pay tax at 18% under forward charge mechanism, they will pay it, but on their inward supply, they can claim full credit, no restriction. On their inward supply, they can claim credit. Whereas if they opt to pay tax at 5% on their outward supply, that is, if they are paying output tax at 5% on their inward supply, they cannot claim any credit. Even though they have paid input tax, no credit for it because you are paying tax on your outward supply at a lower rate. And please be careful, guys. This rate previously was 12%. Now, recently, it has been amended to 18%. It is 18% now. Okay. Now, no, sir, the supplier, that is GTA, is not opting to pay tax under forward charge mechanism. Then the second option is recipient, being a specified recipient, has to pay tax under reverse charge mechanism. They have to pay tax under reverse charge mechanism at what rate? 5%. And please be careful, for the specified recipient, do we call it as output tax or input tax? Input tax. So on their inward supply, they have to pay tax at what rate? 5%. In that case, can GTA claim credit? No. GTA, they are not paying any tax on their outward supply. They are asking recipient, you pay. So that is why government is not giving credit for GTA on their inward supply. But now the specified recipient on their inward supply they pay tax under reverse charge mechanism, right? Yes. Can they claim that as a credit? Yes. Whatever input tax they have paid for the services received by GTA, they can claim the credit. But I am talking about GTA. GTA didn't pay tax on their outward supply. So on their inward supply, credit is blocked. Any inward supply they have taken, they cannot claim credit, guys. They cannot claim credit. Got it? Yes. And who is called as recipient for this service? So, guys, whoever is liable to pay freight, that is for transportation service, transportation of goods, we call it as freight, which is nothing but transportation charges. So, whoever is liable to pay freight is called as recipient. Hope you got it. Yes, sir. So, it is also connected to exemption list. So, please be careful. Okay, sir. Fine, sir. Ultra careful. Okay, chalo. We'll move forward. Second one, legal services supplied directly or indirectly. Even this has a connection to the exemption list, guys. Yes. So who is the supplier? An individual advocate, that is practicing lawyer, including a senior advocate or a firm of advocates, that is law firm. Who is the recipient? Business entity located in taxable territory. Yes, this is what is told in the RCM list. But after reading the exemption list, we will understand here every business entity is not covered. What is covered here is only the business entity whose aggregate turnover in the last financial year is more than the threshold limit for registration. Guys, what is the threshold limit for registration means? It is either 10 lakh or 20 lakh or 40 lakh, which is covered in section 22 of CGST Act. Yes. So we will learn that in registration chapter, when exactly 10, 20 or 40, we will learn there. So whatever is the threshold limit applicable for the supplier, for the recipient, that is business entity, if their aggregate turnover in the last financial year has crossed the threshold limit, which is applicable for them for registration, then in the current year, they are supposed to pay tax under reverse charge mechanism for the legal services received. That means in the current year, they would have already registered. Yes, because if the aggregate turnover has crossed the threshold limit in last year, section 25 of registration chapter will tell within 30 days, you have to apply for registration. So by now, by current year, they would have already been registered. Yes. So in the RCM, actually, they would have used the word any registered business entity, but actually they have not used. But after learning exemption topic, we will see that if business entities aggregate turnover in the last financial year is up to the threshold limit for registration, then it is exempted SIMS. Then it is exempted SIMS. That means what is covered under reverse charge mechanism is only if business entities last year aggregate turnover is more than threshold limit for registration. In the current year, it is taxable under RCM if they receive any legal services, guys. Hope you got it. So please be very careful. Even this has a connection for exemption list, guys. Hope you understood. I repeat, please pay attention. Please pay attention here. If business entity has received any legal services from a lawyer or firm of lawyers, then we need to check what is their aggregate turnover in the last financial year. So 2 are a mark below that. If their aggregate turnover is within the threshold limit for registration of 10, 20 or 40 lakh, then in the current year, it is exempt for them. Whatever legal services they are receiving from lawyers or firm of lawyers is exempt. But second part, sir, what if their aggregate turnover in the last financial year is more than the threshold limit? Then in the current year, it is taxable under RCM. Business entity has to pay tax, guys. Got it? And what is business entity, guys? Anyone who is doing business is called business entity. It need not be company. It can be anyone, including partnership firm, sole proprietor, anyone who is doing business is called business entity. Oh, chill. We'll move forward. Next, services supplied by arbitral tribunal to any business entity located in taxable territory, and the condition is same as above, whatever I told. Means it is covered only registered business entity. Guys, when you are explaining any answer that is for the question, With respect to RCM, you need not straight away use the word registered business entity. You tell business entity whose aggregate turnover in the last financial year is more than threshold limit for registration. For them, if they receive any services from arbitral tribunal, it is taxable under RCM. Sir, what if the aggregate turnover in the last financial year is within the threshold limit? Then it is exempt, people. Then it is exempt. Yes. Next, sponsorship services. Who is the supplier? Any person other than the body corporate. Any person other than the body corporate means supplier should not be body corporate. But who should be the recipient? Body corporate or partnership firm. Okay, that means recipient should be body corporate or partnership firm. But supplier should be anyone other than body corporate. Sir, what if in case supplier is a body corporate? Taxable under FCM. I told you, whatever conditions are given in all the three columns has to be satisfied for RCM to be applicable. If any one is missing, people, then RCM is not applicable. Is that clear? Yes. Okay, sir. Next, fifth one. Fifth one is important, connected to exemption also. Services supplied by, who is the suppliers? Central government or state government or union territory or local authority. Okay. Including court and tribunals. Okay. Who is the recipient, sir? Any business entity who is located in the taxable territory. Same story again. Same story like here. Okay. Any business entity is covered as a recipient, but if their aggregate turnover in the last financial year is up to the threshold limit for registration, then it is exempt. Then it is exempt. Means who is covered here is only whose aggregate turnover in the last financial year is more than the threshold limit. Okay, sir. But is all the services covered? No. Few are excluded. Few are excluded. Who are those? Or which are those? Excluding the following services. Renting of immobile property. Guys, renting of immobile property is excluded from entry 5, but they have included in entry 5A. So let me read that. 5A. Renting of immobile property. Who is the supplier? Central government, state government, union territory, local authority, including court and tribunal. Who is the recipient, people? Any person registered under GST. Means tenant is registered under GST. Taxable under RCM. But it will not include the Ministry of Railways. If Ministry of Railway, assume they are letting out their assets or immobile property or staff quarters. In that case, who is supposed to pay tax? Indian Railways under forward charge mechanism. So if Indian Railways has let out any of their immobile property like staff quarters or any of their railway stations, assume they are letting it out. In that case, is it taxable under RCM? No, it is not taxable under RCM, guys. Okay. Now assume, sir, state government or central government, they own various halls or immobile property. If they are letting it out to a tenant who is registered under GST, is it taxable under RCM? Yes, it is taxable under RCM. Okay, sir. So please be careful. Renting of immobile property, they excluded from entry 5, but for that there is a separate entry. Okay. Then they have excluded 3 more. What are those? B point. Services specified below, that is services by the Department of Post and Ministry of Railways, that is in simple Indian Railways. Then services in relation to an aircraft or a vessel inside or outside the presence of the port, that is within the premises of a port, that is for vessel, whereas airport, that is for flights, guys. Okay, last one, transportation of goods or passengers. Guys, see, these 3 are excluded from entry 5 and there is no separate entry for it. So it is excluded completely from RCM list? Yes, sir. So is it included in exemption list? No. That means it is taxable under forward charge mechanism. The actual supplier for these 3 services has to pay tax under forward charge mechanism, guys. Very important. This 3 is there, no? Is excluded from RCM list. Even in exemption chapter, they have excluded these 3 services. So if government is providing any of these 3 services, they have to pay tax under forward charge mechanism, guys. Hope you understood. So you guys also can just put a flower bracket and write taxable under FCM, because these three are very special. They're excluded from RCM also. They're excluded from exemption list also. That means it is taxable under forward charge mechanism, guys. Yes, I have put one shortcut for it. Trap. Government has trapped themselves. They have to pay tax on the following services. What are those, guys? Transportation of goods or passenger, then R for railway services, Then A, within the airport. P, port, that is within the presence of airport or port. The last one is postal. Postal. Got it? Yes, sir. Fine, people. So anything other than this. Anyway, A is taxable under RCM, but the recipient is not business entity. They told any person registered under GST. Any person registered under GST. Okay. So renting of immovable property is anyway covered, whereas the remaining three are excluded. Any services other than this, if it is provided to a business entity who is registered under GST, is taxable under RCM, guys. Okay, sir. Then government thing is done. 5AA. Renting of residential dwelling for a registered person. Okay. Who is the owner? Any person. Who is the tenant? Registered person under GST. So if a residential dwelling is let out, residential dwelling is let out, then whether it is, just a minute, whether it is for residential purpose or commercial purpose, doesn't matter. I repeat, please listen here. If a residential dwelling is let out for what purpose, they didn't specify here. They didn't specify. So whether it is for residential purpose or commercial purpose, taxable under RCM? Yes, provided the tenant is registered. Provided the tenant is registered, guys. But there is one exemption given where if a residential dwelling is let out for residential purpose to an unregistered tenant, for an unregistered tenant, it is exempted. Okay, I repeat, residential dwelling let out for residential purpose to an unregistered tenant is exempt. Okay. Whereas what is covered under RCM is renting of residential dwelling for what they didn't tell. That means, can we understand that it is for residential as well as commercial purpose? Yes. But normally, residential dwelling will be let out for residential purpose. Yes. But sometimes it can be let out even for commercial purpose. For example, 1 BHK or 2 BHK has been let out for office. There are few offices which are run in the 1 BHK or 2 BHK homes, guys. If by chance in that case, if tenant is registered, is RCM applicable? Yes, RCM is applicable. Is that clear? Yes. Whereas in exemption, they clearly told if residential dwelling is let out for residential purpose for an unregistered tenant, only then RCM. Sorry, only then it is exempt. Only then it is exempt, guys. So please be careful. I have just added a word here for residential or commercial. It is not given here, but I am just telling you guys, please be careful. If a residential dwelling is let out either for residential or commercial purpose to a registered tenant, RCM. RCM, yes. Yes. Wherever I feel students might get confused, I am repeating again and again so that you will have 100% clarity, guys. Yeah. 5AB. I will explain again when I go to exemption topic also. We will try to connect wherever it is connected to RCM, we will try to connect, guys. Yes. 5AB. Renting of any immobile property other than residential dwelling means commercial property. So what is covered here is commercial properties. Who is the supplier? Any unregistered person means owner. Whereas tenant is any registered person but other than under section 10. So who is covered here is only person who is registered under section 9. If by chance, if tenant is registered but under section 10 means no RCM. No RCM, people. Got it? So please be careful. Tenant covers only the registered person under section 9. Got it? Whereas what about here, sir? Any registered person, including whether it is 9 or 10. Here they didn't give any exclusion. Whereas here they told section 10 pavan, section 10 person is not covered. Okay. Next, entry 6. Services supplied by a director of a company or a body corporate. So who is the supplier? Director. Who is the recipient, guys? Company or body corporate. So whatever services director is giving in director capacity to a company or a body corporate is taxable under RCM, guys. So this has some connection to income tax also. How is it? I have given one chart. We will see that. Come to this chart, guys. It has connection to income tax as well. Yeah. Pay attention. Look here. Now, whatever company is paying to a director, first check, is it under employer-employee relationship? If yes, that is, if a director is a full-time director, he will also receive salary under employer-employee relationship. Then that amount will be taxable under the head salary in the hands of director in income tax. And the company would deduct TDS on that amount under section 192, TDS on salary. Whereas in GST, whatever salary is received under the employer-employee relationship is covered in Schedule 3, guys. It is neither the supply of goods nor the supply of services. So GST is not applicable on it. Now coming to the director fee or sitting fee which the director is receiving, any director, whether is a whole-time director or part-time director, for participating in the board of directors meeting, he would be getting director fee or sitting fee. What about that? In income tax, it will be taxable in the hands of director under the head other sources, and the company would be deducting TDS on this amount under section 194J. And please be very careful, the threshold limit under section 194J is 50,000. Now it has been amended 50,000, but there is no threshold limit applicable for the payment made to a director as director fee or sitting fee. Any amount paid, TDS has to be deducted at 10%. There is no threshold limit applicable for director fee or sitting fee under section 194J, guys. Very important. Yes, sir. Sir, okay. We understood in income tax, how is it taxable? What about GST? This director fee or sitting fee is taxable under GST, but under RCM. Who is the recipient here? The company or a body corporate. They have to pay GST on this amount under reverse charge mechanism, guys. Got it? Yes, sir. Fine. Come back. Come back to the list. We have done till entry 6. Now, 7th entry. Insurance agent services. Who is providing it to whom? The insurance agent to the insurance company. Okay. So, this person sell the policies of the company, and whatever premium the company will earn from the insured, they will share that a part of it as a commission to whom? Insurance agent. So here the supplier is agent who will earn in the form of commission, and who is the actual recipient? Insurance company. But insurance company has to pay GST on that commission amount under reverse charge mechanism, guys. Okay. Next, eighth one. Services supplied by recovery agent to whom? To a banking company or a financial institution or an NBFC. These people will help the bank or financial institution to recover their loan whenever there is a default by the borrower. And for this, they will be earning some commission, guys. So on this, who is supposed to pay tax or GST? That is the recipient under reverse charge mechanism. Yes, and please be careful. This recovery agent will help the bank or financial institution or NBFC to recover the loan from the people or the borrowers. Yes, sir. Then there are few more with respect to bank. We will just read that. Come to entry 11, guys. 11. Supply of services by individual direct selling agent. So who is the supplier? Means individual direct selling agent. Means only if the agent is an individual. Sir, what if by chance, if supplier is a company, partnership firm and all, it is not covered here. Oh. Then who is the recipient? Bank or NBFC. And here they didn't tell what agent and all. Any individual direct selling agent. They might be selling various services or products of the bank. Oh, as an agent, not as an employee, as an agent. Yes. So in this case, who is supposed to pay tax? The bank or NBFC is liable to pay GST under reverse charge mechanism, guys. Okay. Then we also have business facilitator and business correspondent. Guys, let me just tell who are they. Even this has a connection to the exemption list, guys. Yes. The business facilitator or business correspondent are the agents which are appointed by the bank in order to provide knowledge to the people about the services offered by the bank. Bank would be providing various services, no, especially the people in rural area might not know what services the bank is offering. So this agents, that is business facilitator or business correspondent, will help the bank to reach each and every corner of the country. Yes. And what exactly is the difference between business facilitator or business correspondent? Means business facilitator can enter into transaction on behalf of the bank. They have that power. Whereas business correspondent will not have that power. Business facilitator will have a power to enter into a transactions on behalf of the bank. With whom? With the people, as if bank has entered it. Whereas business correspondent will not have that power. Oh, yes. So business facilitator or business correspondent will help the people, especially in rural area, to know how to apply for a loan or how to open a bank account, how to operate a ATM machine. All this they will spread a knowledge or awareness among the people. Yes, sure. What is it? What is covered under RCM? We will see now. Services provided by business facilitator to a banking company. is taxable under RCM, but only with respect to urban area. Sir, what if it is with respect to rural area? It is exempt. It is covered in exemption list. Clear? Please be careful. Whatever I have given here, no, it is actually, you will understand it only after covering exemption list. But by now, you would have at least studied GST once minimum. I'm telling you, yes. So now you guys already have an idea about what is covered in exemption list. So you will be able to connect with me whenever I tell urban area or anything which I have mentioned, especially in bracket in green color, guys. Got it? Yes. So because in RCM list, they didn't tell only rural area, urban area, nothing they mentioned. They just told a banking company located in taxable territory. But after reading the exemption list, we will understand if it is with respect to rural area branch, it is exempted. That means what is taxable here is only if it is with respect to urban area branch. Urban area branch, guys. Is that clear? Mainly these people are appointed by the bank to target rural area in order to spread awareness among the people in rural area. But if in case, if they provide the services in urban area, then it is taxable under reverse charge mechanism, guys. Got it? Yes. Next, services provided by agent of business correspondent. Look here. See, first of all, business correspondent is appointed by whom? Bank. So business correspondent is providing agency service to the bank, but that is not covered here. This business correspondent, assume he is lazy guy, he is not going and working in the field. He has appointed one agent. So this agent is providing services to business correspondent. No. Yes, that is covered under RCM. That is covered under RCM. Hope you understood. I repeat, business correspondent himself is an agent appointed by whom? Bank. But they are not talking about the services given by business correspondent to bank. They are talking about if this guy has appointed any agent to work for him, then whatever services that agent is giving to business correspondent, no, yes, that is covered under RCM. That is covered under RCM, guys. Yes, sir. Yes. So who is the supplier? Agent of business correspondent. Whereas the recipient is business correspondent located where? In taxable territory. And this is the services which is given with respect to urban area branch. Because if it is a rural area branch, covered in exemption list, guys. Covered in exemption list. So please be very careful. I will also explain this in detail when I go to exemption chapter. But as of now, you should exactly know what is covered here. Business facilitator to banking company, RCM. Agent of business correspondent to business correspondent is covered under RCM only if it is with respect to urban area branch. Sir, did they talk about agent to business facilitator? No, no, they didn't talk about this. Did they talk about in RCM about business correspondent to bank? No, they didn't talk. They didn't talk about it. Got it? Yes. Coming back. So this is all about the agents, guys. Okay, and please be careful. Wherever here agency services are covered under RCM list, obviously they are not employees, guys. Because if they are employees, they are getting salary, and salary is covered under Schedule 3 outside GST. Clear? So these agents will be earning in the form of commission. Yes. Chalo. Next, ninth one. Coming back to ninth one. Supply of services by a music composer, photographer, artist, or the like by way of transfer or permitting the use or enjoyment of copyright. So, who is the actual supplier here? Music composer, photographer, artist, or the like. Who is the recipient? Music company, producer, artist, or the like located in the taxable territory. For example, assume guys Anirudh, who is a music director, has composed a music and he is giving that copyright or right to assume Sun Music. So who is the recipient here? Sun Music. So they are the one who is supposed to pay GST on it, even though the supplier is Anirudh. Same way, assume I am a photographer who click the photos and I will sell it to any person. So in that case, who is I am the supplier, I am the photographer, whereas the recipient has to pay GST under reverse charge mechanism, guys. Is that clear? Same way, artist, whoever acts in movies, in that case, if producer is the actual person who is making the payment and he is the recipient or the production company. So for the actors, whatever payment the production company is paying, on that they are liable to pay GST. On that they are liable to pay GST, guys. Yes. Next, 9A. Supply of services by an author by way of transfer or permitting the use or enjoyment of copyright. Okay. So author is a supplier, whereas publisher is a recipient. For example, assume I am having a copyright for my books. I am giving that copyright to the publisher to publish the book, to publish my books. I am the supplier, publisher is the recipient. Now, is it taxable under RCM? Here also, similar to GTA, supplier has been given an option to pay GST under forward charge mechanism. So me as an author, can I pay GST under forward charge mechanism? Yes. In that case, should recipient pay tax under RCM? No. But if I don't pay tax under forward charge mechanism, then recipient has to pay tax under reverse charge mechanism. Similar to GTA service, guys. Even for GTA, this option was there. Please be careful for all services, whatever we are learning under RCM, for everything option is there. No, no, no. So only for few they are giving option either forward charge, if not forward charge, reverse charge. Whereas for other services and all like this, always taxable under RCM. There is no option. Got it? Yes, sir. Sure. So I have given a note here, you can see. However, an author can choose to pay tax under forward charge. In that case, RCM won't be applicable. Next, 10th one. Supply of services by the members of overseeing committee to RBI. So RBI being a recipient has to pay GST under reverse charge mechanism, guys. And what is this members of overseeing committee doing? Guys, they will help the RBI to manage the stress assets, and also they will help them to form the policies, overview the policies or various norms of RBI. Yes. 11, 12, 13 we have already covered with respect to agents. Next, 14th one. Security services. Who is the supplier? Any person other than body corporate. Okay. Supplier should not be body corporate, anyone else. Oh. Next, who is the recipient? A registered person located in taxable territory. Okay, any registered person, but they have excluded two of them. Who is it? TDS deductor and composition supplier. TDS deductor, even in GTA service they excluded, no? Who is registered only to deduct TDS and they are not providing any outward supplies. In that case, even though recipient is registered, still RCM is not applicable. Correct? Same people here, same recipients, as well as one extra person here, composition supplier, who is registered under section 10. Who is registered under section 10. So in simple, who is covered here is only those who are registered under section 9, guys. Only who is registered under section 9, and that too they will not include TDS deductor, who is registered only to deduct TDS and they are not providing any outward support. Got it? Yes, sir. Next, renting of motor vehicle. Important. So please be attentive. Renting of motor vehicle is a service. Who is the supplier? Any person but other than body corporate. Means supplier should not be body corporate. Sir, what if supplier is a body corporate? FCM. FCM is applicable. Or any person other than body corporate who has not paid CGST at 9%. That is total GST at 18%. Previously it was 12%, guys. Means CGST was at 6% and total GST was at 12%. But now recent amendment is there. Please be careful with this. So it is 9 and 18. So if supplier has not paid GST at 18% and supplier is not a body corporate, only then RCM, yes, but also check recipient. Recipient should be body corporate. Supplier should not be body corporate, it seems. Okay. Whereas recipient should be body corporate. Okay, sir. Fine. I have given one chart for it. Come to that chart. Yeah, this one. Yes, look here, look here. What is it, sir? Person who is liable to pay GST for renting of motor vehicle. Check who is the supplier, who is the recipient. Yes, but before that, at what rate GST is applicable? For renting of motor vehicle, there are two rates, guys. The supplier can choose it. That is either 5% or 18%. This 18 was previously 12%. I am telling it again. Yes, but now 18%. Now, if supplier opts to pay tax at 18%, then forward charge mechanism is applicable. Forward charge mechanism, no matter who is the supplier, who is the recipient, we will not even check that. If GST is paid at 18%, no matter who is the supplier, who is the recipient, it is taxable under forward charge mechanism. But if it is taxed, that is the renting of motor vehicle is taxed at 5%, means we need to check who is the supplier, who is the recipient. If supplier is a body corporate, again forward charge mechanism is applicable. Forward charge mechanism, supplier is liable to pay GST. Okay. Sir, what if supplier is other than body corporate? Check who is the recipient. check who is the recipient. Sir, what if recipient is other than body corporate? FCM. Sir, what if recipient is a body corporate? RCM. Only in this case RCM, guys. Clear? So you try to remember this. Rest all is FCM. Rest all is FCM. And when it is 18%, we don't even check who is the supplier, who is the recipient. It is always FCM. It is always FCM. But, sir, as two rates are given, if by chance, if GST is paid at 5%, can they claim full credit? No, guys. There is some restriction for it. I will just show you just a minute. Yeah. Assume renting of motor vehicle is an outward supply. If GST is paid on outward supply at 5%, whether under FCM or RCM. Now, sir, is credit available? No. Credit is not available fully. Credit is available only for the same nature of inward supply. For example, assume my outward supply is renting of motor vehicle. But to provide this, I am taking the motor vehicle on rent. On that, whatever GST I have paid, can I claim the credit? Yes. For the same nature of inward supply, I can claim credit. Whereas for any other goods or services, no credit, guys. Why? Because your outward supply is getting taxed at a lower rate. So that is why they are blocking the credit. Now, I repeat, I am providing renting of motor vehicle. And on this, I am paying GST at 5%. And on my inward supply, can I claim full credit? No. Only for one supply, there is a credit. That too, whatever outward supply I am providing, no, same service, if I take and provide it on renting of motor vehicle, whatever I have taken, on that, if I have paid GST, I can claim credit. Sir, what if I have not taken that service? I myself own a motor vehicle. I am providing it on renting of motor vehicle. Then for me, no credit at all. No credit at all. I might be taking other goods, other services and all, but on that credit is not available. On such goods or services, credit is not available. Sir, what if renting of motor vehicle is taxed at 18%, means outward supply is taxed at 18%, then they can claim credit on inward supply, guys, subject to conditions. Means if they have satisfied all the conditions given under section 16, and if credit is not blocked under section 17, they can claim the credit. They can claim credit for all their inward supply. Is that clear? Yes, sir. Coming back. Coming back? Yes. So let us go back to the list. 15th is done. Last one, 16th. Services of lending of securities and under Securities Lending Scheme 1997. Guys, we have something called as short selling. If you are doing trading, especially intraday trading, you will be aware of it. Short selling. That is, first we will sell, later we will buy the same securities. When do we do it? Sir, whenever we expect that the share price will go down, first we will sell, then we will buy it. But how is it possible, sir? Because without even owning the shares, how can we sell it? Guys, before I sell, I will borrow it. Later, I will sell it. And once the share price goes down, I will buy and repay it. I repeat, please listen here, listen here. Securities is neither the goods nor the services for GST. Both in goods definition given under section 252 as well as services definition given in section 2102. Securities are excluded. Means on buy and sale of securities, GST is not applicable. Yes, sir. But if there is lending of securities for which separate consideration is charged, it is a supply of service. It is a supply of services which is taxable under reverse charge mechanism, guys. So assume I want to do short selling. So what do I do? First, I will borrow the shares, sell it, then I will buy it later and repay my borrowings. And for this transactions, whatever amount I am paying is taxable under reverse charge mechanism, guys. So lender is the supplier here, but who is supposed to pay GST is the borrower. Is the borrower, guys. Is that clear? Yes, sir. And whatever services we learned till now is the services which are notified as per section 9.3 read with notification to be taxable under reverse charge mechanism. And same to same services are also notified under IGST Act. Even if the following services are taxable interstate, is it still taxable under RCM? Yes, guys. But in addition to this, there are few more services which are included under IGST Act, especially with respect to import of services, but they are not a part of your syllabus. They are not a part of your syllabus. So in simple, whatever list of services we learned which are taxable under RCM, same list are also included under IGST Act. Whether it is supplied intrastate or interstate, it is always taxable under reverse charge mechanism, guys. Yes, sir. One more important thing, people. See, here they didn't tell always recipient should be registered. Recipient should be registered or not. They are told in the respective entries. So in few entries you can see they clearly told recipient only if he is registered, RCM is applicable. That means if recipient is not registered, no RCM. Yes, sir. Whereas in few entries they told company or body corporate. Correct. So whether they are registered or not, still RCM applicable? Yes. Yes. So you can see in all the list they didn't tell the recipient should be registered, recipient should be registered. No. For example, here they told located in taxable territory. Did they use the word registered? No. Here also bank or NBFC banking company they told yes. So that means here also body corporate. So if recipient is covered in this list, whether they are registered or not, RCM is applicable? Yes. But please be careful. I repeat again. In few entries, for few services, they clearly told RCM is applicable only if recipient is registered. Yes. If recipient is registered only, we will go with RCM. But whenever recipient is like body corporate, company, bank and all, they didn't specify about registration. That means even though they are not registered, still RCM applicable? Huh? Yes. But once RCM is applicable, as per section 24 of registration chapter, registration is mandatory. Registration is mandatory. So in simple, if I have to tell, if recipient is supposed to pay tax under reverse charge mechanism, if they are already registered, good, pay tax. If they are not yet registered, take mandatory registration. Irrespective of your aggregate turnover, you have to get registered when RCM is applicable on your inward supply, guys. Is that clear? For example, assume body corporate or a company is covered in recipient list when it is taxable under reverse charge mechanism. If they have not yet obtained the registration, now should they obtain the registration? Yes, because section 24 tell if recipient is paying tax and reverse charge mechanism, for them it is mandatory to get registered. Got it? Yes, sir. But one more thing, one more special thing. Sir, in few cases, when the recipient is a business entity, like here, in RCM list, they told any business entity. But in exemption, they went ahead and told if this business entity's aggregate turnover in the last financial year is within the threshold limit for registration, then it is exempt. Then it is exempt. So after reading exemption list, we will understand that the business entities covered here is only the registered business entity. Because if their aggregate turnover in the last financial year, if it has crossed the threshold limit, by now they would have registered, guys. By now they would have registered because section 25 clearly tell once your turnover crosses the threshold limit and if you are liable for registration, you have to apply for registration within 30 days. So just imagine if their aggregate turnover in the last financial year has crossed threshold limit means by today, by now, in the current year, they would have already been registered people. Got it? Yes, sir. Fine. We'll move forward. Done with this. 9.3 we have done completely. Yes. Now 9.4 people. 9.4. Now section 9.4 gave the power to the government to notify any supply made by an unregistered supplier to an registered recipient on which the recipient has to pay tax under reverse charge mechanism. Some real estate transaction has been notified here, guys. List is very small, don't worry. Only real estate transaction has been notified here. What are those, sir? Okay. First, let me cover this. If cement and capital goods is purchased from an unregistered person, assume a real estate developer has purchased cement and any capital goods to be used in his business from an unregistered supplier, then the recipient, the promoter is nothing but the real estate developer, the recipient has to pay tax under reverse charge mechanism as per section 9.4, guys. Where the cement or capital goods is purchased from whom? Unregistered supplier. Okay, sir. Next, if it is any other goods or services, then at least 80% has to be purchased from registered supplier. Means up to 20% can I purchase from unregistered supplier? Yes. Any other goods or services. For cement and capital goods, there is no percentage and all. Okay. What is it? Inward supply for promoter or real estate developer who is the recipient other than cement and capital goods. Up to 80% should be from whom people? Registered supplier. That means up to 20% can it be from unregistered supplier? Yes. But what if I have purchased more than 20% from unregistered supplier? Then they are telling whatever is the shortfall no, on that the promoter or real estate developer being a recipient has to pay tax under reverse charge mechanism, guys. Under reverse charge mechanism. Yes, sir. So I will just explain this with an example. Assume the total inward supply for a promoter is 10 lakh other than cement and capital goods. And 7 lakh out of this is purchased from registered supplier, whereas 3 lakh is purchased from unregistered supplier. Okay. So minimum 80% of 10 lakh should have been purchased by from unregistered supplier. Yes, which is 8 lakh. But how much he has actually purchased? Only 7 lakh. So how much shortfall is there? 1 lakh. On this 1 lakh, the recipient has to pay tax under reverse charge mechanism, guys. Is that clear? Yes. We can also cross check from another way, that is, sir, totally how much is purchased from unregistered supplier? 3 lakh. But maximum how much can he purchase from unregistered supplier? 20% of 10 lakh. So 20% of 10 lakh comes to how much? 2 lakh. So how much extra he has purchased from unregistered supplier? 1 lakh. This is taxable under RCM. Not entire 3 lakh, only 1 lakh. Is that clear? Yes. Means up to 80%, sorry, minimum 80% has to be purchased from registered supplier. It should be B2B. Whereas up to 20% you can purchase from unregistered. If it is more than 20%, then on the difference, recipient has to pay tax under RCM, guys. This specifically is included under RCM because these people try to manipulate a lot. They will try to show various purchases. They will try to inflate their purchases, telling we have purchased from unregistered suppliers so much, this much, and all. And they will try to claim it as an expenses and all. So that is why they clearly told you can purchase from unregistered supplier, but maximum 20%. Rest all should be from registered. Got it? Yes, sir. Fine. Whereas in this list, whatever list inward supply we covered, no, the following items are not included, guys. Means can this be purchased or availed by an unregistered supplier also? Yes, but no RCM. So the above has been kept outside. What are those? However, the following goods or services or both are not required to be purchased from registered supplier by a promoter. So this can be purchased from anyone, na? Yes. Which are those? Quickly we will go through. Services by way of grant of development rights. Services by way of long-term lease of land against upfront payment in the form of premium, salami, development charges, etc. Because sometimes the real estate developer will take the land on lease from the actual owner to build an apartment or flat on it. Yes. Then FSI, that is including additional FSI. FSI means floor space index, guys. Means out of the total area, how much can be used to build up? Built up area we call it as. Sir, how much space can we use to build a building? Yes, that is called FSI, floor space index. Then electricity, high speed, diesel, motor spirit, natural gas. So this are not included here, guys. So in simple, what is covered here is other than cement, capital goods, as well as this. If any other supply has been taken by whom? Promoter or real estate developer, minimum 80% should be from registered supplier. Is that clear, people? Yes, sir. So this is all about 9.4. Next, let us move to 9.5. 9.5 is telling, again, 9 subsection 5 gave power to the government to notify any services. They didn't tell both goods services, only services. Power is given to the government to notify only services, people. Yes, only services. The tax on which has to be paid by electronic commerce operator. So electronic commerce operator is neither the supplier nor the recipient. He is like a middleman. He is just providing the platform. He is just connecting the supplier and recipient through his platform. But section 9.5 is telling you pay GST. So using the power given to the government has notified few services which are supplied through e-commerce operator, on which e-commerce operator is liable to pay GST, guys. So which are those we will see, but I also mentioned as in short What is e-commerce operator? Let us just read it. E-commerce operator is any person who owns, operates, manages an electronic platform for supply of goods, services, or both. Even goods can be supplied through e-commerce operator like Amazon, Flipkart, and all, but goods are not notified here. What is notified here is only people, services. Got it? So in simple, e-commerce operator means Amazon, Flipkart, or even the Ola, Uber, Oyo, Airbnb, those platforms guys. Got it? Yes, sir. Fine. So using the power given to the government, they have notified few services on which e-commerce operator is liable to pay tax. Which are those? One by one we will learn. So please pay attention. I have named it as Devara Yatra or Ratha Yatra. But what is the full form of it? I will explain at the end. First, let me talk about all the services. Yes, one by one. Services by way of transportation of passenger. Goods is not covered, only passengers. By a radio taxi, motor cab, maxi cab, motorcycle, or any other motor vehicles except omnibus. Okay, if it is a company. Okay, omnibus is excluded. So let us learn only about this. Okay, sir. Just a minute. I will try to take a chart. Yeah, pay attention. You'll understand it better when I explain like this. Now assume guys, you are a recipient who is booking a cab through Ola or Uber. You are booking a cab or even two-wheeler through Ola or Uber or Rapido. Now, Ola or Uber is the actual supplier? No, they don't own any car. They don't own any two-wheeler. They are just a cab aggregator. It is just a platform in simple. Okay. And for their service, they charge commission. Okay, sir. Now, Ola or Uber has received your order, they will pass on it to the actual supplier. We call them as driver, pop-up. They are actual owner of the car. Yes, most of them, they will be the owner of the car. So they will come and provide you the services. So even though they are the supplier, they are telling in section 9.5, read with notification, e-commerce operator, you pay tax. You pay tax, but other than omnibus. Sir, what if it is omnibus? There is a separate provision. Okay. Now assume Vikas is booking a seat, not entire bus, a seat in VRL bus through Abibus. So Abibus is a platform through which I am booking a bus ticket or a seat in the bus. Okay. So actual supplier is a VRL. Okay, sir. They are engaged in transportation of persons. Now first check whether VRL is a company or not. Actually, VRL is a company. Okay. Yes. Now, if VRL is a company, they should pay tax under forward charge mechanism. Okay. No, sir, VRL, assume it is not a company. It is other than company. Then they're telling e-commerce operator, you pay tax as per section 9.5. So with respect to omnibus service, it is not straight away 9.5. We need to check who is the supplier. If supplier is a company, then forward charge mechanism. Supplier has to pay tax. If it is other than company, then they are telling e-commerce operator, you pay the tax. Is that clear? Yes. And one more thing, I had already told this, I am repeating it. Whenever e-commerce operator is liable to pay tax, can they charge and collect it from the recipients? Of course, sir. Even if supplier is liable to pay, can he charge and collect it from the recipient? Yes. Same way, if e-commerce operator is liable to pay, he will charge and collect it from the recipient only. But only the liability is on their head. That's all. Oh. So reading this. So omnibus was excluded in the first paragraph, right? Yes. The tax on omnibus services provided by a company, that is if supplier is a company through ECO, is payable by the company itself under forward charge mechanism. So the first service done. Next one. Second one, accommodation. Services by way of providing accommodation in the hotel, inn, guest house, clubs, campsites, or other commercial places meant for residential or lodging purposes. Okay. Who should pay tax? E-commerce operator. But except where the person supplying such services, that is the supplier, is liable for registration under section 22 subsection 1 of CGST Act. Guys, here if supplier is covered in section 22 subsection 1, then he will pay tax under forward charge mechanism. If he is not covered, then they are telling e-commerce operator has to pay tax. Let me tell you what is covered in section 22 subsection 1. Section 22, which talks about registration, who is liable for registration. 22 subsection 1 talks about aggregate turnover. If aggregate turnover of a person is more than 10 lakh, 20 lakh or 40 lakh, they have to get registered under GST. Whereas for services, only 10 or 20 is applicable, 40 is not applicable because 40 is for exclusive supplier of goods. So for a supplier, if his aggregate turnover is more than 10 lakh in case of special states or in case of normal states 20 lakh, they have to get registered. And if they are registered, they have to pay tax under forward charge mechanism. Sir, what if supplier is a small person? They are not registered. They are small hotels, sir. Their aggregate turnover is within 20 lakh or 10 lakhs, sir. In that case, they're telling e-commerce operator, you pay GST. You pay GST. So examples are like, oh, you make my trip, like that, guys. So let me explain this also with an example. Assume recipient, you, let us take your example only. You are booking a room in this hotel through what? Airbnb. So Airbnb is a e-commerce operator. Okay. Now check whether this supplier is registered under GST. Registered means their aggregate turnover is more than threshold limit. So obviously, if aggregate turnover is more than threshold limit, they would have registered. Yes. So that is why I'm using the word registered. Now, so if supplier registered, then he will pay tax under FCM. No, sir. Supplier, assume is a small hotel. Their aggregate turnover is within 20 lakh, or in case of special states, within 10 lakh. Then, as they are small, we are not targeting them. We are targeting whom? E-commerce operator. You pay tax. So if supplier is unregistered, e-commerce operator will pay tax as per section 9(5), guys. Got it? Yes, sir. Next, housekeeping. Services by way of housekeeping, such as plumbing, carpentering, etc., except where the person supplying such service is liable for registration under section 22, subsection 1 of CGST Act. This is similar to what we discussed for accommodation, guys. Okay. So assume a recipient is booking a house cleaning services through urban company. House cleaning services through an urban company, which is the domestic service or housekeeping service. Yes, sir. Okay. The supplier will come and provide the services to the recipient. Okay. Check. Normally, these people will be very small. They would have not registered under GST, guys. But assume they are registered. Then they will pay tax under FCM. Who? The actual supplier. But majority of them would have not registered under GST because they are very small. Whereas if they are unregistered, then e-commerce operator, you pay GST as per section 9(5). Got it? And please be careful, what is covered here is only housekeeping services, because you can book various services through urban company, including beauty, salon and all, or even massage. But are those covered here? No, only housekeeping. Only housekeeping. Okay. Next, supply. This is interesting. Pay attention. Pay attention. Your Swiggy, Zomato, most of you will be using it. Supply of restaurant service other than the services supplied by restaurant eating joints located at specified premises. What is specified premises we will see, but before that, sir, assume you, I will take your example only again. Yes, you booked a food through Swiggy or even Zomato in which hotel? Assume Sarvana Bhavan, famous in Tamil Nadu. Yes, sir. So you booked a food in Sarvana Bhavan through Swiggy. Now, they are telling Swiggy, you should pay tax as per section 9(5), provided it is not a specified premises. This should not be a specified premises. Sir, what is specified premises? They have told you. Specified premises would mean premises providing hotel accommodation service having declared tariff of any unit, means even for one room. Accommodation above 7,500 per unit per day. So simple. Specified premises means they are providing accommodation along with restaurant, guys. Oh, assume this is a hotel where they are providing accommodation service along with restaurant. Restaurant is in the top floor, or sometimes even it can be in ground floor. So they're also providing accommodation. They have various room category. Even if for one room, if they're charging per day, per room, more than 7,500, this is called specified premises, guys. This entire hotel along with restaurant is called specified premises. Okay, sir. Now, assume you book a food in the specified premises through Swiggy. Who is supposed to pay GST? Specified premises. They will be paying GST under FCM. Okay. Chalo. You can see here. Assume you booked a food in a specified premises. Who is the actual supplier? Assume it is some star hotel. They have accommodation along with restaurant. And obviously, guys, in that restaurant, you can walk in and have dine. dine in, and also can we book it through Zomato or Swiggy? Yes, few of them will be open for Swiggy or Zomato. And few of the star hotels and all, they may not be open for Swiggy, Zomato and all. They will tell only for our customers. Okay, na? Yes, assuming it is also open for Swiggy and Zomato, you can book the order through Swiggy or Zomato. In that case, the accommodation charges at least for one room is more than 7,500. In that case, the supplier has to pay tax under EFCMIs. Is that clear? Yes, sir. And only if question is specifying anything or if they are giving any hint about specified premises, go with it. If not, assume e-commerce operator has to pay tax under section 9(5), guys. Okay, last one. This is a new addition. This is an amendment, new addition. What is it? Attentive, be attentive. Look here. Services by way of local delivery of what? Goods. Okay. Except where the person supplying such service is liable for registration under section 22 subsection 1 of CGST Act. Yes. Sir, what is it? Yes. Assume you are booking a delivery service through porter. Through porter. And guys, porter provides the delivery service, but normally they are not the actual supplier. They don't own the vehicles. The actual owner of the vehicles would have attached their vehicles with porter. And whenever they receive the order, they just come and provide the services. Yes, sir. So assume you have ordered for any delivery service of any goods through porter. Now actual supplier will come and provide you the delivery service. Okay. Check whether the actual supplier who owns the vehicle, are they registered under GST? If yes, they will pay tax under forward charge mechanism. No, sir, they are small suppliers, Papa. They don't. They are not registered under GST because their aggregate turnover is within the threshold limit. Then they are telling e-commerce operator, you pay GST as per section 9(5). And I can give number of example for this, guys. Even Dunzo, instead of porter, if it is a Dunzo also, it is covered here. Yes, there are many platforms who are providing this local delivery services, especially for goods. Okay, so which are those? Even today we have a lot of platforms like Blinkit, Swiggy, Instamart, Amazon now. So there are number of services like this, guys. Clear? See, please be careful. You can also order the goods through it. But I am talking about delivery. Like groceries and all, you can order no through Blinkit. Yes, sir. So in that case, is it taxable here or is it covered here? Yes. And please be careful. Only goods transportation is covered here. Got it? Yes. Because if it is a passengers, then it will fall here. And if it is a food, it will fall here. Clear? And please be careful. Now through Swiggy, Zomato, we can book food. No, sir. Is it covered here? No, no, no. Food, we have a separate point. If it is other than food, assume groceries, then that will fall here. Got it, people? Yes, sir. Fine. So this is a new entry. So please be very careful with this, guys. Yes. Yeah. So whenever e-commerce operator is liable to pay tax as per section 9(5) of CGST Act or 5(5) of IGST Act, it is as if they are the supplier who is liable to pay GST. They have to comply with the provisions of GST. And if they have physical presence in India, means if they have any office or branch in India, they will take care of GST, they will pay GST. Sir, what if e-commerce operator doesn't have any physical presence in India? They don't have any office or branch. Then there should be a person who is representing them in India who is having physical presence. They will take care of GST. No, sir, there is no person who is representing them in India. They don't have any physical presence also. In that case, e-commerce operator, you appoint a person who is taking care of all the GST compliance on behalf of you in India, and they will pay GST as per section 9(5). Is that clear? Yes, sir. So this is all about section 9 of CGST Act, or even the same to same provisions are covered in section 5 of IGST Act, guys. Yes, now we will learn section 10 of CGST Act, which talks about composition scheme. This is the benefit given to a small suppliers to pay tax at a lower rate, but quarterly. If you are a person who is covered under section 9, then you have to pay tax monthly. Whereas if a person is covered under section 10, they have to pay tax quarterly, that too at a lower rate. And composition scheme has its own advantages and disadvantages. We will discuss it. But this is the benefit given only to a small suppliers in order to support them. Yes. Similar, and this is similar to whatever the presumptive schemes we have in income tax, no, under the PGBP head. That is the presumptive scheme for business under section 44 AD, for profession under section 44 ADA, and for goods carriage business under section 44 AE, where to reduce the tax burden and compliance burden to the small business persons or small professionals. Yes, this is similar to that, but under GST. But under GST, guys. So there are two composition scheme. One is under section 10.1 and 10.2. The other one is under section 10.2A. So let us learn about each of these, guys. Okay. So now who is eligible for a composition scheme under section 10.1 or 10.2 is manufacturer of any goods other than notified goods. Few notified goods have been kept outside. Okay. Or trader of any goods, and only one service supplier is covered, that is restaurant. Any other services are not covered here. Okay. If you are doing any of this, then you have an option to follow composition scheme given in section 10.1 and 10.2. In short, I call it as RTM, guys. R for restaurant, T for trader, M for manufacturer. Or you can also remember it as MTR. Okay. Now, first, we need to check the eligibility of a person. Is he eligible for composition scheme or not? For which we need to check the aggregate turnover in the last financial year. Am I eligible for composition scheme or not in the current year? Depends on my aggregate turnover in the last financial year. Okay, sir. Fine. First, what is aggregate turnover? How do we compute it? Is given in section 2 clause 6, guys. Very important definition applicable for the entire act. Not only for section 10, for the entire act. So what is it? We will see. Aggregate turnover means it includes taxable outward supplies, but it will not include the inward supply on which RCM is applicable, guys. Guys, what is turnover? Sales. So only it includes the outward supply. Even on my inward supply, if I am supposed to pay tax under RCM, it will not be counted in aggregate turnover because it is my purchases and not sales. Okay. Then exempt supplies, exports, interstate supplies of a person having same PAN to be computed on all India basis. Now I have 10 different registration. I am doing business in 10 different states. This aggregate turnover should be branch wise, registration wise, or all India basis. All India basis. You can calculate it branch wise, registration wise, but at the end you need to aggregate it. So whatever aggregate turnover we are talking about is always on pan India basis, guys. But it excludes GST and cess. Means anything charged under GST should be excluded. Got it? Yes, sir. So if I have to explain this with an example, I have put one illustration. Yeah. You can just observe here, guys. What aggregate turnover includes? So taxable outward supply, should it be included? Yes. Next, CGST and SGST on the above should be included? No, we should not include it. So I have taken it till here. Next, inward supply, which is taxable under RCM, it is my purchases. Should it be included in my aggregate turnover? No. Next, exempt supply exports, should I include? Yes. Even if it is exempt supply, I should include it. Okay. Then interstate supplies between distinct person. Even though if it is without consideration also, it will be a supply as per para 2 of schedule 1. Should we include it? Yes. And the value will be decided as per the valuation rules. And you need not worry, they would have given it like market value or something, they would have given it in the question, you take it. So should I include that also? Yes. So as per this example, what is the aggregate turnover? Under section 2 clause 6, it is 61 lakh, guys. Hope you understood. If you want, you can just pause for a second and go through. Yes, fine. So we need to check the aggregate turnover of which year? Last financial year, to know whether I am eligible for composition scheme in the current year or not. Okay. So for 10.1, 10.2, the threshold limit for composition scheme is 1.5 crore, guys. That is, if my aggregate turnover in the last financial year, if it is up to 1.5 crore, I am eligible. And in case of 8 special states, they have told it is 75 lakh. 75 lakh. Sir, for which states it is 75 lakh? I have given here. For the states, namely Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Uttarakhand, aggregate turnover limit shall be 75 lakh. Means if I am having operation in any one of the special state, the limit applicable for me is 75. And 75 lakh is not only for that state, for entire India, pan based. For example, assume I have a business in Meghalaya, Karnataka, Tamil Nadu. What is the limit applicable for me? 75 lakh. All three branches, all three states put together. If the aggregate turnover in the last financial year is within 75 lakh means I am eligible. I am eligible. And once I am opting for composition scheme for all three states, I have to follow composition scheme. It is not like one state I will follow composition scheme, another state I will follow section 9. Oh, no, no, no. You cannot do it. Okay. And as per Article 279A people, which we have already learned, there are totally 11 special category states, but here only they have taken 8. They have taken only 8 out of 11. Okay, sir. Fine. And if my aggregate turnover in the last financial year is within this limit, is it mandatory for me to follow composition scheme in the current year? No, no, it is optional. Means even though my aggregate turnover in the last year is within this, can I still follow section 9 and pay tax at normal rate? Yes, you have that freedom. This is optional scheme. It is not mandatory. It is a benefit given. If you want, you encash it. If not, ignore it. That's all. Oh. Sir, what is the tax rate? So if you are a manufacturer of any goods other than notified goods, then it is 1% of total turnover. Whereas if you are a trader, 1% of taxable turnover. Hello, hear me out. 1% of what for trader? Taxable turnover. Whereas for restaurant supplier, it is 5% of total turnover. So for manufacturer and restaurant supplier, they have to pay tax even on exempt supplies because this 1% or 5% is on total turnover. Whereas for trader, it is 1% of taxable turnover. So if I have to explain this with an example, please pay attention. Look here, look here. Ah, assume this is the turnover in the current year. One more important thing. Sir, this percentage is on which year turnover? Current year. They have to pay tax quarterly. So for each quarter, calculate the turnover in the current year and pay GST at this rate. Got it? So please be careful. For eligibility, we will check last year turnover. But to pay tax, we will pay tax on the current year turnover, which is calculated quarterly. Because under composition scheme, GST payment is quarterly. Okay, sir. So assume the taxable turnover of a person is 40 lakh and exempt turnover is 20 lakh. So the total aggregate turnover comes to 60 lakh. If he is a manufacturer, he has to pay 1% GST on how much amount? 60 lakh total turnover. Whereas assume the person is a trader, then he will pay only 1% on 40 lakh. That is taxable turnover, which comes to 40,000. Hope you understood. He cannot be both, either manufacturer or trader. Correct. But I have just explained from both the point of view. From both the point of view. Got it? Yes, sir. Okay. Now, only one service is covered here, restaurant services. If I am providing only, assume, advisory service or saloon services or consultancy services, can I enjoy the composition scheme given under section 10.1, 10.2? No, you cannot. You are not at all eligible. But, sir, what if I am providing RTM? Along with RTM, I also want to provide one marginal service, means small service. Can I do it? Yes. They are given that benefit through a proviso. What is it? I will read that. Note. In order to enable the small service providers avail the benefit of composition scheme under section 10.1, the following proviso has been inserted. So this is a proviso to section 10.1. The proviso permits a registered person opting for a composition scheme under section 10.1 to supply services of a specified value not exceeding. Means for that marginal service, your turnover cannot be more than this. How much is that? 10% of the turnover of last financial year or 5 lakh, whichever is higher. So the turnover from that additional service which you are providing other than restaurant, no, it should be within this. Within this. I repeat, guys. Assume you are already providing any of this R or T or M. Along with that, you want to provide one more services. They're telling, okay, you can include all this under section 10.1, provided this service, whatever you are providing, no, is marginal service, small service. Is that clear? And please be careful. Along with this, you are providing marginal service. Sir, what if I am providing only consultancy? Now, I am not providing RTM. Then you can straight away go to 10.2A. 10.1 is not at all applicable for you. Got it? What they are trying to tell in proviso, I repeat, please pay attention. Along with RTM, you want to provide any other service which is not restaurant. Can you provide it? Yes, but only up to certain limit. Only up to certain limit. What is it? 1 second. I have an illustration in my provision book. I will just show you. Just a minute. I will open. If you also have a provision book, you just open it. Come to section 10. Yeah. This is an illustration or example for the proviso. I will just read it out. Rama is engaged in the manufacture of goods. Is aggregate turnover. Okay, is a manufacturer. If he is a manufacturer, is he eligible for section 10(1) composition scheme? Yes, sir. And if they don't specify which goods, assume it is not a notified goods. Assume it is not a notified goods, because if you are a manufacturer of notified goods, then you are not eligible for composition scheme. So if they don't specify which goods, they have just told goods, assume they are eligible. Means it is not a specified good. Sorry, it is not a notified goods. Okay. Which are those notified goods? I will cover. Don't worry. Yes. Is aggregate turnover in the preceding financial year is 60 lakh? Since is aggregate turnover in the preceding financial year does not exceed 1.5 crore, he is eligible for composition scheme in the current year. Okay. Further, in the current financial year, he can supply services other than restaurant service up to what value? Last year turnover was 60 lakh. Take 10% of it, which is 6 lakh. Or standard amount 5 lakh, whichever is higher, 6 lakh. So in the current year, other than restaurant, he can provide any other services, but maximum up to how much? 6 lakh. Maximum up to 6 lakh. Now assume he wants to start advisory services. So the turnover from advisory services throughout the year cannot cross 6 lakh. Sir, what if it cross 6 lakh? Then advisory services is not eligible for 10(1). You have to take entire composition outside. Including your goods, you have to take it outside, because even if one business is not eligible for composition scheme, you have to move out completely. And once you are not eligible for 10(1), you can go and knock the door of 10(2)(a). If you are eligible there, you can follow it. If not, move to section 9. That is normal scheme. Hope you got it. Yes. Some more example. Just a minute. Listen. Just a minute. Yeah. Assume the person was providing RTM, either of them or all of them, in the last year. Their turnover is 40 lakh. In the current year, they want to provide any service other than restaurant. To what extent? 10% of 40 lakh comes to how much people? 4 lakh. Or standard amount 5 lakh, whichever is higher, 5 lakh. So the turnover from that additional service other than restaurant can be up to how much? 5 lakh. Up to 5 lakh. Same thing if I take last year turnover, assume was 80 lakh. Then 10% of 80 lakh is 8 lakh or 5 lakh, whichever is higher, 8 lakh. So up to 8 lakh, they can provide any services other than restaurant in the current year. And please be careful, in this 5 lakh or 8 lakh, the turnover of restaurant service will not be covered. Whatever extra service other than restaurant they are willing to provide, no? Yes. That turnover has to be within this limit. Clear? Yes. So please be careful. This 5 or 8 lakh is for the turnover of a service other than restaurant. Yes. Got it. Fine. So we covered it. Then coming to 10(2)(a). Sir, who is eligible for 10(2)(a) means they didn't tell anyone specifically. They told whoever is not eligible for 10(1) can go and opt for 10(2)(a). Means you are providing services which is not restaurant, straight away. You have to go to 10(2)(a). For example, assume I am providing professional services. In that case, can I follow this? No. You have to straight away go to 10(2)(a). And I told you, please be careful. Along with RTM, you can provide marginal service. Sir, what if I am not doing any of these three? I am doing only service which is not restaurant. Then you obviously have to go to 10(2)(a). Obviously, you have to go to 10(2)(a). Got it? Yes, sir. So, can I go and check section 10(2)(a)? Yes. Or else, sir, I am providing RTM. Along with that, I am also providing services. But that service is not marginal service, sir. So in that case, this service become ineligible for composition scheme under section 10(1). Yes. You have to take your entire business either to 10(2)(a) if you are eligible. If not, to section 9. Yes, sir. So here service suppliers or mixed supplier who is not eligible for 10 means you are supplying maybe goods along with service, but service is not marginal. So take goods along with service to 10(2)(a). Okay. So what is the eligibility criteria here is? Last year aggregate turnover should be up to 50 lakh for all the states. Here there is no bifurcation. For all the states, it is up to 50 lakh, pan India based. Okay. What is the tax rate, sir? In the current year, you have to calculate the turnover quarterly. On that turnover, you will pay 6%. That is 6% of total turnover. Got it? Only for trader, it is taxable turnover, guys. Got it? Yes, sir. Fine. So please be careful. Who is not eligible for 10(1) only can go for 10(2)(a). No, sir, I am eligible for 10(1). Can I still go for 10(2)(a)? No, you cannot. And you are not a fool also, no, because here the tax rates are lower, especially for goods and all. Correct? Huh? Will you go and pay more tax under 10(2)(a)? No. So they have clearly told who is eligible for 10(1) cannot come for 10(2)(a). Okay, fine. Sure. Next, we have list of persons who are not eligible for both the composition scheme. The list is common. Who is not eligible for composition scheme at section 10.1 is given in 10.2. Who is not eligible for 10.2a is given in 10.2a. Okay, but the list is same. List is same. So we will study it together. So the following persons, irrespective of their aggregate turnover, they are not eligible for composition scheme. Who are those? A person who is engaged in supply of goods or services which are not liable to tax under GST, which is non-taxable supply. For example, I am supplying petrol or alcohol. Can I follow composition scheme? No. Assume I am supplying pen along with petrol or alcohol. For pen, can I follow composition scheme? No. If you are supplying any goods which is not covered under GST, you are not at all covered under composition scheme, or you are not at all eligible for composition scheme. So for my pen business, I have to follow section 9, guys. Okay, next. A person engaged in making interstate outward supply of goods or services. I cannot supply outside the state. Sir, can I purchase from outside the state? Yes. Your outward supplies, that is sales, cannot be outside the state. Whereas your purchases, that is inward supply, can be outside the state. Guys, they are asking question on it. Please be very careful. Composition supplier cannot make outward supply which is interstate. They cannot supply outside the state. Whereas can they purchase from outside the state? Yes. Next. A person, that is who is a supplier, engaged in making supply of services through electronic commerce operator, who is required to collect tax under section 52. Important, guys. Now, I told you for 9.5, I have found a shortcut. Okay, I will just tell that. Devara Ratyatra. Devara Rathayatra. So, especially if you guys are following, there will be something called as Rathayatra, which will happen in Odisha. That is for Puri Jagannath. And even in your local areas also, there will be Rathayatra, which will be happening. Yes. So, Devara Rathayatra, you remember. D for local delivery service, R for restaurant, A for accommodation, T for transportation of passenger, and H for housekeeping services. Easy to remember, guys. Easy to remember. Previously, it was only Rath or Ratha, but now D has been added. So, remember it as Devara Rathayatra. Got it? Yes, sir. Fine. Coming back to this. No. Just a minute. Yes. Now, sir, if D Rath services, that is whatever I just now explained, is supplied through e-commerce operator, e-commerce operator has to pay tax. So in that case, should he collect TCS and all? No, he himself is liable to pay GST. No, why will he collect TCS? Okay. Sir, what if any other services are supplied by the supplier through e-commerce operator other than D Rath or Devara Rathayatra? Other than Devara Rathayatra services is provided through e-commerce operator. Who is providing it? Supplier. In that case, e-commerce operator will collect the payment from the recipient. They will deduct their commission and give it to the supplier. And before they give money to the supplier, they should also collect TCS as per section 52. As per section 52. And what services this supplier is providing other than DRAT? Clear? Yes, sir. Any other services? In which case, the e-commerce operator is supposed to. They are telling supplier, you should pay tax under FCM. Okay. Supplier is not eligible for composition scheme itself. Who is supplying the services through e-commerce operator on which e-commerce, in that case, the supplier is not eligible for composition scheme, guys. Got it? Sir, what about this? If it is this services, that is Devara Ratyatra services, then supplier is not at all registered, guys. Supplier is not at all registered. They are asking e-commerce operator, you pay tax. So there is no question of composition scheme here for supplier. And obviously, can e-commerce operator follow composition scheme? No, he cannot. Okay, yes. But here, whom they have spoken about is the supplier of services which are supplied through e-commerce operator. When e-commerce operator is supposed to collect TCS on it. Okay, fine. Next, a person who is engaged in the manufacture of which products? Notified goods. Okay, I was telling about notified goods. No, I'm talking about that now. I'm covering it now. Fly ash bricks or fly ash aggregate, fly ash blocks, bricks of fossil mills or similar siliceous earths, building bricks, aerated water, earthen or roofing tiles, tobacco products, ice cream, pan masala. Yes. So if you are a manufacturer of any of these goods, you are not eligible for both the composition scheme. Sir, what if I am doing trading? You are eligible. If you are trading these products, you are eligible. But if you are a manufacturer, not eligible, guys. Please be very careful. They will test you on this in the exam. And for this products, I have formed a shortcut bat tip. You know, for a bat, there will be a tip. Yes, sir. So I am talking about that bat tip. So what is the full form of this, sir? B for bricks or blocks, A for aerated water, T for tiles, another T is for tobacco, I for ice cream, P for pan masala. So if you are a manufacturer of bat tip, then you cannot opt for composition scheme. And guys, please be careful. These are the shortcuts which I am formed for you guys to remember it easily. Please don't use this in the exams. You please use full forms. Wherever I am giving you any short form or shortcuts, that is only for you to recall the provisions. Please don't use them in the exams because the evaluator is not my student. They will not know what is this short form stands for. Yeah. Next one. Casual taxable person and non-resident taxable person. These people are the special people who are covered in section 27. They have also been defined in the law. Who are those? We will cover in registration topic. But they both cannot opt for composition scheme, guys. Got it? Yes. So these are the list of people who are not at all eligible for composition schemes. Okay, sir. Then coming to conditions and restrictions, which are common for both the composition schemes, guys. Okay, what are the conditions and restrictions? First, now for eligibility, we will check last year turnover. Yes, sir. What in the current year, if our aggregate turnover crosses the threshold limit of 1.5 crore or 50 lakh or 75 lakh, immediately we need to go to section 9. That is normal scheme. Sir, can I continue till 31st March? No, no. That is, I repeat, listen, yes. Now assume suppliers aggregate turnover in the last financial year was within threshold limit of 1.5 crore or 75 lakh or 50 lakh. So he was eligible, he was paying tax under composition scheme. But in the current year, in between the year, assume on 15th December, their aggregate turnover crossed the threshold limit of 1.5 crore or 75 lakh or 50 lakh. Can they still continue under composition scheme? No, immediately on the same day, they have to move to section 9 and start paying tax at normal rate. At normal rate, people. Yes, this provision is given in section 10, subsection 3. Then, coming to the second point. The composition supplier shall not collect any tax from the recipient. Means they have to pay tax out of their own pocket. For their outward supply, they have to pay tax at composition rate, right? Yes, they have to pay out of their own pocket. Okay. On supplies made by him, and he shall not be entitled for any credit of input tax on their inward supply. So output tax they have to pay at composition rate out of their own pocket. They cannot collect from recipients. Whereas on their inward supply, whatever input tax they would have paid, they cannot claim the credit of it. They cannot claim the credit of it. So there is no credit for them. Whatever is their output tax, they have to pay through electronic cash ledger. For them, the credit will appear in their credit ledger, but they cannot utilize it. They have to just see it, feel happy. That's all. Forget it. You cannot utilize it if you're a composition supplier. Or next, the recipient of such supplies cannot claim input tax credit on supplies from such suppliers who have opted for composition levy. Guys, see, assume I am a composition supplier who is supplying goods to you. Now, can I collect tax from you? No, I cannot. First of all, I cannot collect tax from you. But assuming I collected, can you go ahead and claim the credit? No. If you are a person who has taken the inward supply from composition supplier, you are not eligible to claim credit on that supply. First of all, I should not collect. Assume I have collected it. Now, can you go ahead and claim the credit? No, sorry, you cannot. And as I cannot collect the tax from my recipients, assume that is you, I cannot issue tax invoice for you. Instead of that, I have to issue a document called bill of supply. And on the top of the bill of supply, I should have mentioned composition taxable person who is not eligible to collect tax from recipients. I should have mentioned it. What document should I issue to my recipients? Bill of supply. Important, guys. All this, they will ask questions. Next, Even in my place of business and in my name board, I have to disclose that I am a composition taxable person, because anyone who is dealing with me should know that I am under section 10. Only after knowing that they should enter into a transaction with me. That is the intention here. So I need to disclose even in my place of business along with my name board that I am a composition taxable person, guys. Okay. Then whatever condition and restriction we just now learned is same for both the composition scheme. Then the composition scheme, if opted, is applicable under one PAN, and then it is applicable for all the businesses under the PAN or none. Guys, please listen here, few important things. Now, if I am a composition supplier, they told I cannot supply outside the state. But can I have operation in more than one state? Yes. I can have business in more than one state. Assume I have operations in Karnataka, Tamil Nadu, and Kerala. Am I still eligible for composition scheme? Yes. Provided in all these three states, I am selling only within the state. In all the three states, I am selling it only within the state. And the aggregate turnover, all three branches put together, is within the limit. Is within the limit, guys. Yes. And if by chance, if they have not given the state name, and you are supposed to check the aggregate turnover, go with 1.5 crore. Because if it is a special state, they will tell that it is a special state, or they will give the name, guys. Is that clear? Yes. Okay. And one more thing. Even if in one state, assume you supplied the goods outside the state. For example, assume one supplies you made from Tamil Nadu to Pondicherry, outside the state. Now, only your Tamil Nadu business is ineligible, or all your entire business are? Entire business. All three registrations, I have to bring it under section 9. Even if one of the state or one of the registration or one of the business becomes ineligible for composition scheme, entire business has to go to section 9, guys. Entire business, all registrations has to go to section 9. So they may give you a question like this: because he's having multiple businesses, or he has taken registration in multiple states. For few states or for few business, he wants to follow section 10. For few business, he wants to follow section 9. Can he do so? No, he cannot. It should be either all in or all out. Your entire business, all your registration should be under section 10, or everything has to be under section 9. You cannot keep few here, few there, guys. Hope you got it. Yes, sir. Okay. Then I have given you few things. Yes. What is it? I will try to explain both section 10 as well as 9 together. Now assume, people, I was registered under section 10 composition scheme, and I was paying tax on my outward supply at what rate? Composition rate. That is as per section 10. Please remember the rates. You are supposed to remember the rates: 1%, 5%, 6%. Please remember the rate. Yes. So on my outward supply, I am supposed to pay tax at what rate? Composition rate. Whereas I am not eligible to claim any credit of whatever tax I have paid on my inward supply. Can I claim ITC? No, sorry. But one thing, please listen here. Assume I am a composition supplier. On my inward supply, RCM is applicable. Means I am supposed to pay tax as a recipient. Should I pay at composition rate or normal rate? Come on, tell me, should I pay tax on my inward supply at composition rate or normal rate? Normal rate. Please be careful, guys. Whatever composition rates are given under section 10, it is only for outward supply. If I am a composition supplier, I have received any inward supply which is taxable under RCM, means I have to pay tax at normal rate. But the disadvantage is I cannot claim credit of it. Whether my inward supply is taxable under RCM or FCM, the tax would have been paid at normal rate. Can I claim the credit of it? No, I cannot. Okay, sir. Fine. So when I am under composition scheme, what are the things I need to follow? I have given it here, guys, below that. Pay GST out of pocket because I cannot collect tax from my recipients. Okay. And what document should I issue to my recipients? Bill of supply. And I cannot issue tax invoice. Please be careful because I am not eligible to collect tax from my recipients. Then I cannot supply outside the state. I cannot make my sales outside the state. Okay. Then I have to pay GST quarterly and file a payment statement quarterly in CMP 08. I have to pay tax quarterly and file payment statement in CMP 08 quarterly, and it is not written payment statement. Okay. Whereas I have to file the returns annually. There are two annual returns, GSTR 4 and 9A. Both are annual. We will learn about this in returns chapter. Then the last one, I cannot claim ITC on my inward supply. And even I cannot pass on any credit to my recipients, guys. Got it? Yes, sir. Now, assume on 15th February, I become ineligible for composition scheme. CS means composition scheme here. Yes. So on 15th February, I become ineligible for composition scheme. Why, sir? Maybe I started supplying outside the state, or my aggregate turnover crossed the threshold limit on 15th February. My aggregate turnover crossed 1.5 crore. Immediately I become ineligible. Yes, sir. Or else I started manufacturing any of my bad tip products, notified goods. Yes. So can I still continue under composition scheme? No. Immediately I have to move to section 9. From what day? 15th February only. 15th February only. But there are few things I need to take care. What is it? Once I become ineligible for composition scheme, I need to file an intimation to withdraw from composition scheme in form GST CMP 04. CMP stands for composition. CMP stands for composition. Within how many days? 7 days from 15th February. I need to file an intimation telling, sir, I became ineligible, so I want to move out of section 10. And also in section 18, they are telling whatever stock you had on the preceding day, that is preceding 15th uh, February, that is 14th February, special day. Yes. So whatever stock you are having on that day, give the details. That is, I will read it. Provide stock details of raw material, work in progress, finished goods, along with capital goods, as on 14th February 2026. Within what time? Within 30 days from this date. In ITC 01. ITC stands for Input Tax Credit 01, guys. Form number 01. Yes. And this provision is covered in which section? Section 18. Got it? Which we will cover in Input Tax Credit chapter. Sir, why are they telling this? Because they will give the credit of whatever tax you have paid on any of these items which are still in your stock as on 14th February. Why so? Because you will use it when you are under section 9. So this stock, even though it was purchased when I was under section 9, it will be used when I am under section 9. So that is why they are telling, when you are under section 9, you are paying tax on your outward supply at normal rate. So for whatever goods you are using, once you come under section 9, we will give a credit of it. Even though you have purchased it before 15th February, you have not yet used it. So we will give the credit. Sir, what if I have purchased something and used already here itself? Then obviously no credit. Here clearly they told whatever stock you are having on 14th February only, we will give credit for it. Obviously, whatever you are having as a stock, closing stock on 14th February will become an opening stock on 15th February. And if you are selling it or using it in the manufacturing on or after 15th February, on your outward supply, you have to pay tax at what rate? Normal rate. You can claim the credit. Got it? Yes. I will explain this in detail when I go to section 18 in ITC chapter, guys. Okay. So from 15th February, I am under which scheme? Normal scheme under section 9, guys. Okay. So on my outward supply, I have to pay tax at what rate? Normal rate. And for whatever inward supply I will take on or after 15th February, can I claim the credit? Yes, I can claim the credit. So what are the things I need to follow when I am under section 9? I have given here in green color. Can I collect the tax from my recipients? Yes. Can I issue tax invoice to my recipients as I can collect tax from them? Yes, you can issue tax invoice. Next, can make interstate outward supply. Can I sell outside the state? Yes, I have full freedom now. Then pay GST monthly. One of the disadvantage. I have to pay it every month and file GST returns monthly or quarterly. GSTR 1 and 3B, I have to file monthly, or if I am following QRMP scheme, then I can file it quarterly. But I should always pay GST monthly. Whether I am filing returns monthly or quarterly doesn't matter. But I have to pay tax always monthly only. Clear? And QRMP is a scheme available for the person who is under section 9, not for the person under section 10. Please be very careful. Provided their aggregate turnover is within 5 crore. Got it? I repeat, QRMP scheme is available only for a person who is under section 9 if their aggregate turnover is within 5 crore, guys. We will learn this topic in returns chapter. Okay. Now, can they claim the input tax credit on their inward supply? Yes, they can claim. Obviously, they have to satisfy the conditions given under section 16, and it should not be restricted under section 17, guys. That means they can claim it. Okay, fine. So you can just pause for a second and go through this important. I have tried to cover both section 10, section 9 here. Okay. We'll move forward. Now let us see what are the advantages and disadvantages of composition scheme, both the schemes. First, let us see advantages. Classification of goods is not required. If you're under section 9, you have to classify the goods or services based on HSN code or SAC code. Yes. But here, is it required? No. Because here the rates are fixed. No matter which goods or services you are supplying, rates are fixed. Go with it. Okay. Single GST rate is applicable on all the supplies, whatever you are making. Okay. Then no requirement to issue tax invoice. Fine. They will issue bill of supply. Then payment of tax is quarterly and return filing is annually. But when they pay tax quarterly, they should also file payment statement in CMP 08. So compliance burden is reduced for them. Then coming to disadvantages of composition scheme, it has its own disadvantages also. What are those? Composition dealer cannot avail the benefit of ITC and they cannot even pass on the credit to their recipients. Yes. They have to pay the tax out of their own pocket. They cannot collect it from the recipients. Yes. Even recipient cannot claim ITC. Okay. Then they have a limited territory of business because they cannot supply outside the state. They cannot supply outside the state, guys. Okay. Then coming to aggregate turnover. Guys, aggregate turnover for the entire act is given in section 2 clause 6. What is it, people? We already learned it. Aggregate turnover includes all outward taxable supplies, exempt supply, exports, interstate supplies. Should be calculated on pan-India basis. But it will not include CGST, SGST, UTGST or IGST or cess. In simple, anything charged under GST. And it will also not include value of inward supply on which RCM is applicable. So this is the definition of aggregate turnover given in section 2 clause 6, which is applicable for the entire act. But for composition scheme, there is a two explanation given, explanation 1 and 2. Explanation 1 to section 10 talk about the eligibility turnover. To know whether I am eligible for the composition scheme or not, we need to check the aggregate turnover of which year? Last year. While checking it, they are telling exclude one more extra thing. Exclude it. Don't include it in aggregate turnover. Means take it as it is as per section 2.6. But aggregate turnover as per section 2.6 will include all exempt supplies, right? Yes, sir. But they are telling one exempt supply you don't include. So there are number of goods and services which are exempt, guys. But they are telling one financial service which is actually exempt, which we will be learning in next chapter. They are telling don't include that, exclude it. That means any other goods or services which is exempt should be included here in the aggregate turnover. Yes, but except one service, which is financial service. Okay, let me read it. They're asking to exclude this. Value of exempt supply of services provided by way of extending deposits, loans, or advances insofar as the consideration is represented by way of interest or discount. This is one of the service which is exempt, guys, provided by banks or financial institution. They're telling don't include this in your aggregate turnover while checking the eligibility. And to check the eligibility, we will check which year turnover, people, preceding financial year turnover. Got it? So if at all, if the supplier has this, exclude it. Don't include it. Sir, what if supplier doesn't have it at all? Then ignore. That's all. Got it? Yes. And what is covered here is, assume bank or financial institution, they give loan or advance for which they charge interest. They will also get the principal amount repaid, but that is not their consideration. What is their consideration is interest. Should they pay GST on it? No. Interest is exempt from GST. Yes. Then what about discount, sir? That is discounting of bills and all. Assume I have a bills of exchange whose face value is 1 lakh and the maturity period of this is 3 months. But I cannot wait till 3 months. I want some money immediately. So I went to a bank and discounted this bill. Bank paid me only 90,000. Remaining 10,000 is a discount. Loss for me, whereas gain for or earnings for bank. Now bank will wait for 3 months and encash the bill. They will honor the bill. When they honor, they will get totally how much? 1 lakh. They paid me 90,000 only, but when they are encashing the bill, they are getting 1 lakh. So in between, how much did they earn? 10,000. So is that 10,000 liable for GST? No, people. It is exempt. Got it? Yes. So this is to calculate eligibility turnover. Whereas there is one more explanation, explanation 2 to section 10, which is telling while calculating the turnover to pay tax in the current year, current financial year, you will calculate the turnover to pay tax no every quarter. Yes. You should not include two things. There are two things here which has to be excluded. Okay, see, the definition is as if given in section 2.6, but two extra thing they're asking you to exclude. So let us focus only on that. What is it, sir? Value of exempt supply of services provided by way of extending deposit, loans, or advances insofar as the consideration is charged or represented by way of interest or discount. Okay, that has to be excluded, which is same like explanation 1, nothing new in this. Whereas this one, this is supplies from the first day of April of the financial year up to the date when such person become liable for registration under this act. Guys, simple. See, there is a threshold limit for registration given in section 22, that is 10 lakh, 20 lakh or 40 lakh, depending upon what you are supplying and in which state. So either of these three, one of them will be applicable for you. Yes, either 10, 20 or 40 lakh. Now what they are telling is, whatever is the threshold limit applicable for registration for that supplier who is following composition scheme, to that extent exclude it. Why is? Reason is simple. Now, if I want to follow composition scheme, for me registration is mandatory. From day one itself, I should obtain registration. Now, assume guys, I am applying for registration. From day one itself, I want to follow composition scheme. Then in part B of REG01, which is an application for registration, I have to choose. I am willing to pay tax under section 10, and accordingly registration will be granted. Accordingly registration will be granted. Or else assume I was under section 9. I want to move to section 10. I was not registered under section 9 because my aggregate turnover was within threshold limit. But now I want to move to section 10. I can move to section 10 only from the beginning of financial year. If I want to move from 9 to 10, it is only possible from 1st April of the financial year. Okay. In that case, I have to intimate. I have to provide an intimation to the department. Okay. But if I am going from section 9 to 10, registration is mandatory, because if you want to be a composition supplier, registration is mandatory. Okay, sir. Sir, what if I want to move from 10 to 9? You would have already been registered. You would have already been registered. Now it will continue here. But now you are under section 9. That's all. Got it? But if I want to move from 10 to 9, can I move at any point of time? Yes. You became ineligible in my example on 15th February. Can I wait till 31st March and move to section 9 from 1st April? No. Immediately a person has to move to section 9. So 10 to 9 anytime. Whereas from 9 to 10, it is only from the beginning of financial year. And one more thing you have to take care is, whenever a person wants to follow section 10, it is mandatory for them to get registered. So if you are under section 9, you will get registered only if your aggregate turnover crosses 10, 20 or 40 lakh. Whereas Papa, for this person, they are asking you to get registered from day one. It is unfair for them if we ask you to, if we ask him to pay GST from rupee 1, right? Yes. So that is why they told, whatever is the aggregate turnover limit applicable for registration, up to that limit, don't pay GST. Up to that limit, you reduce it. Got it? Yes. Even though you have taken registration from day one, we are asking you not to pay tax from rupee 1. Up to whatever is the threshold limit applicable for you for registration purpose, don't pay GST. Don't pay GST. I have few illustration in my provision book. I will just go through it because you will get more clarity once I explain that. Yeah. So this is explanation 1 to section 10. For that I have illustration here. Yeah. Let me read it. Determine aggregate turnover of a person to check eligibility. Okay, that means we are checking last year turnover. Under composition scheme for financial year 25-26. So we need to take care of which explanation? Explanation 1 to section 10. Okay. So what is their aggregate turnover last year? So they want to follow composition scheme in the current year 25-26, for which they are checking aggregate turnover of last year. Okay. What and all they have? Taxable outward supply in a state 80 lakh. We need to take it. Exempt supply, two category are there. Financial service 20 lakh. We should not take it. Any other exempt supply 40 lakh. Should we take it? Yes. Then inward supply 50 lakh. It is a purchases. We should not take it. So only two things we need to take is 80 and 40. So what is the aggregate turnover of the last financial year to check the eligibility, guys? 1 crore 20 lakh. And if by chance, if state name is not mentioned, assume normal state, So as it is within 1.5 crore, are they eligible? Yes, they are eligible. Oh. Then coming to explanation 2 to section 10. Yeah. Illustration. Determine the aggregate turnover of a manufacturer for determining tax payable. That means in the current year. Under composition scheme, assuming the threshold limit applicable for registration is 40 lakh. Let us assume they are good suppliers because they are manufacturer, they are supplying within the state. Okay. Only when you are supplying within the state, you are eligible for composition scheme. And the aggregate limit or the turnover which is applicable for you for registration is 40 lakh in that case. Also, tax payable by him under the composition scheme for financial year 25-26, that is in the current year. And manufacturer is in the first year of his business itself. Okay. So what is his current year turnover? Taxable outward supply in the state is 60 lakh. Exempt supply, financial service 10 lakh. We should not include it. Then exempt supply, other than financial service 5 lakh. Then inward supply is 25 lakh, which we should not include. So aggregate turnover for the current year to pay tax includes 60 lakh plus 5 lakh. Correct? Yes. But as per explanation 2, we need to remove 40 lakh. That is the threshold limit applicable for registration. As is in the first year of business, we will deduct 40 lakh. Okay. So only on the remaining 25 lakh, he has to pay 1%, guys. Hope you understood. Only on the remaining 25 lakh, he has to pay 1%. Sir, even in the next year, subsequent years, we will keep on reducing 40 lakh. No, no, no. Once they cross 40 lakh, they have to pay tax from rupee 1. Assume in the next year, their turnover is 80 lakh. They have to pay tax on entire 80 lakh at 1%. We should not deduct 40 lakh again and again every year. Up to the level they cross 40 lakh, we will deduct that much once they cross. Whereas in the subsequent year, they have to pay tax on the entire amount. But we need to exclude this financial service. One exempt supply, we need to exclude. Okay, na? Yes. Sir, what in the same question, instead of manufacturer, if he is a trader, same illustration, but the person is trader, then he need to pay tax. Then he need to pay tax on 60 lakh minus 40 lakh. Sir, why you took only 60 lakh, sir? Here you took 65 lakh, no, sir. 60 plus 5, no, sir. Here we are not taking 5 lakh because for a trader, 1% tax is on taxable turnover. 1% tax is on taxable turnover. So we should not include any exempt supplies. Any exempt supply for a trader, only for a trader we should not include. So that means 60 we need to take minus whatever is the threshold limit for registration deducted, remaining 20 lakh he has to pay. Sir, is this every year we need not include exempt supplies? Yes, for a trader it is always 1% of taxable turnover. Whereas this 40 lakh, we will reduce it only till the extent he cross it. Whereas in the subsequent years, every year will we deduct 40 lakh? No, no. In the subsequent year, assume is aggregate turnover, which is only taxable turnover. Okay, let me take like this. Assume in the subsequent year, is aggregate turnover is taxable turnover 40 lakh and exempt turnover is 20 lakh. He should pay tax only on 40 lakh at 1%. You need to pay tax on 40 lakh at 1%, guys. That's all. Got it? Yes. But one more thing. Sir, here aggregate turnover includes export, interstate supplies and all. But you told that the composition supplier cannot supply outside the state. No, sir. Yes, they cannot supply outside the state. But assume in the current year they want to follow composition scheme. In the last year, can they be engaged in this? Yes. Yes, they can be. But once they come under composition scheme, can they supply outside the state, outside the country? No. But why is it given here, sir? Guys, it is given in aggregate turnover definition given in 2.6, which is common for entire act, not only for composition scheme. So if you ask me, here it is irrelevant. Because once you come under composition scheme, in the current year, can you supply outside the state or outside the country? No, you cannot. So for this purpose, this will be irrelevant actually. Got it? Yes. But don't worry. This is a definition given in section 2 clause 6 for aggregate turnover, which is applicable for the entire act, guys. Entire act. I repeat. Now, in the current year, if I want to follow composition scheme, what if I have supplied in the last year outside the state or outside the country? Is there any problem? No. But include it in your aggregate turnover. But once I come under composition scheme, can I do any of this? No, sorry, you cannot supply outside the state or outside the country. Got it? Yes, sir. Fine, guys. So we have covered completely chapter 3. Come to the section list. We'll just mark the sections which we have covered. Yes. So under CGST Act, we have covered section 9 along with section 10, guys. Whereas under IGST Act, we have covered section 5. And sir, what about composition scheme under IGST Act? Guys, we know that a composition supplier cannot supply outside the state. So obviously, with respect to composition scheme, there is no provisions covered under IGST Act, guys. So this is all about chapter 3. Yes, students, now we will revise the exemptions topic, the lengthiest topic in GST, but don't worry, it is very easy, guys. So let us begin with. Exemptions under GST is given in section 11 of CGST Act or section 6 of IGST Act. And both these sections have same content, similar content, and it has 3 subsections. It is giving power to the government to notify any goods or services which is exempt under GST. So what is section 11 of CGST Act is telling, we will see. 11 subsection 1, where the government is satisfied that it is necessary in the public interest, it may, on the recommendation of GST Council by notification, exempt generally. That is, we call it as general exemption. And general exemption will always be given by way of notification, guys. And the exemption can be either absolute or subject to conditions. Absolute means without any conditions. So any person who is supplying such services which is exempt can avail that exemption without any if and but. Whereas if it is subject to conditions means only if I satisfy the conditions given there, I will enjoy the exemptions. Okay. So goods or services are both from the whole or any part of tax, which is GST. Okay. So we call this as general exemption. So 11 subsection 1 is giving power to the government to give general exemption by way of notification. Okay. Then coming to subsection 2, where the government is satisfied that it is necessary in the public interest, same like above, it may, on the recommendation of GST Council, by special order. So this is called special exemption, which can be given only by way of special order. Sir, when, sir? Only under the circumstances of exceptional nature. Exempt from payment of tax, any goods or services or both. So we call this as special exemption, and it can be given only by way of what? Special order. General exemption is by way of notification, whereas the special exemption is by way of special order. Okay. Under which circumstances? Circumstances of exceptional nature. Okay. Then subsection 3 is talking about the explanation. Now, whatever exemption has been given either by way of notification or by way of special order, for that an explanation can be given by the government within 1 year. Within 1 year. And that explanation can be given by way of what, sir? The notification. The explanation will always be added through the notification. Why, sir? Why do they want to give explanation? Because to give more clarity, why did we give this exemption? And why is it in the public interest? They will explain that. Okay. But one important thing. Assume, guys, there is an exemption which is notified through a notification or even by a special order on 1st July. But explanation for this is given by way of notification on 1st December. Now the question is the exemption effective from 1st July or 1st December? Guys, it is from 1st July. That is the exemption notification or special order, and not from the date on which explanation is given. Even though explanation is given later, whatever is the original notification giving the exemption or the special order, the exemption will be effective from that date. So from 1st July, within 1 year, they can give an explanation by way of notification. And sir, on the date of exemption itself, assume in my example, on 1st July itself, can they give the explanation? Yes, they can give it on that day itself or maximum within 1 year, guys. Got it? Yes. Then there is an explanation to section 11. What is it? We will see. And whatever we discussed here is an explanation to exemption. Okay. Now, coming to the explanation. For the purpose of this section, where an exemption from whole or part of the tax is leviable thereon, has been granted absolutely, that is without any condition. The registered person supplying such goods or services or both shall not collect the tax in excess of the effective rate on such supply of goods or services or both. For example, my outward supply is exempt. So as it is exempt, I am not liable to pay GST. But still, can I go ahead and collect tax from my recipients and keep it with me? No. When my outward supply is exempt, I'm not supposed to collect tax from my recipients, guys. Or else assume a part exemption is given. For example, the GST rate applicable for my outward supply normally is 18%, but government has given a 50% exemption. That means I need to pay only 9%. Yes. So when I am liable to pay 9% GST on my outward supply, how much can I collect it from my recipient? Obviously 9%. Can I do like this? Sir, I will collect 18%, 9% I will keep it, 9% I will remit it to the government. No, I cannot do it. So whatever I am liable to pay, only that much I can collect it from my recipient, guys. Okay, sir. And whatever we covered here under section 11 of CGST Act, same to same content is given in section 6 of IGST Act. Even that is the section 6 of IGST Act has three subsections, same to same content, but it is for interstate supply, guys. That's all. And whatever is the list of exemptions we will learn, it is same whether it is supplied intrastate or interstate. Is it exempt, sir? Yes, guys, it is exempt. Oh, next. The absolute or unconditional exemption is always mandatory in nature. We need to claim it. Sir, can I reject it? No, no fool will do it, but still they are telling if it is an absolute or unconditional exemption, every person who is enjoying it has to claim it. Okay, or whoever is eligible for it has to claim it. Okay. Then, however, where the exemption is conditional, means subject to condition, they are told the exemption is available only if the following conditions are satisfied. In that case, is it optional for me to claim it? Yes. Simply violate the condition, automatically you will not be eligible for exemption. Got it? So this become optional if it is conditional. Whereas if it is unconditional or absolute, I need to claim it, guys. Got it? Yes. Then exemption under GST. Guys, exempt supply is defined under section 2 clause 47. Very important definition. And exempt supply includes three categories. What are those? Nil rated supply, wholly exempt supply as per section 11 or as per section 11 of CGST Act or section 6 of IGST Act. Or the last one is non-taxable supply. It includes all the three. So let us just see the definition. Exempt supply has been defined as supply of any goods or services or both, which attracts a nil rate of tax or which may be wholly exempt from tax and therefore includes non-taxable supplies also. Okay. Sir, what is non-taxable supply means? It is defined in section 2 clause 78, guys, in simple, which is kept outside the GST. Like alcoholic liquor for human consumption or PhD man, that is the petroleum products, those items. So I will just read it out. Non-taxable supply means a supply of goods or services or both which is not leviable to tax under CGST Act or even under IGST Act. Okay, so even that is a part of exempt supply? Yes, and I have also given an example here. So which are called as non-taxable supply. So in simple, whatever is outside the GST. Okay. So I will just try to explain the difference between all these three. There is a thing. Anyway, all three are part of exempt supply only. Yes, sir. But just a minute. Okay. So you can come to this. I have given this table at the end of input tax credit chapter, guys. So you can just open it. At the end of input tax credit chapter, I have just given this table with respect to zero rated supply, nil rated supply, exempt supply, and non-GST. So what is zero rated supplies? Exports as well as supplies made to SEZ or SEZ unit or SEZ developer is called as zero rated supply. And if my outward supply is zero rated, on my inward supply, can I claim ITC? Yes, input tax credit is available. Okay, zero rated is different, nil rated is different. Sir, what is the difference between zero and nil? One and the same, no, sir? Yes, it is one and the same. But for GST, it is different, guys. So exports and supply to SEZ unit and SEZ developer is zero rated, for which credit is available. Output tax might be zero, but still on your inward supply, whatever input tax you have paid, you can claim the credit. Okay, sir. Then coming to this three, whatever we just now learned, nil rated. Sir, what is nil rated? Supplies that have declared rate of 0% GST. Means these goods are supplied or services are supplied within the country, but the rate is as on today, zero. Sir, can government increase this rate to 5%, 12%, 18% or any other percentages? Yes, they can increase it. But as on today, the rate would be nil or zero. Okay. Example is like salt, grains, jaggery, etc. Then coming to exempt supply, whatever list we will be learning in this chapter. Supplies, it is a supply but do not attract GST because exemption is given under section 11, read with notification, guys. Read with notification. Okay. Example is fresh milk, fresh fruits, curd, bread, etc. I have given only products here. There are number of services which we will be learning after this, which is exempt under GST, like healthcare, educational, or agricultural activities. All these things are exempt. Okay. Next, coming to non-GST, which is nothing but non-taxable supply. These supplies do not come under the purview of GST, means they are outside GST. They are not at all under GST. See, exempt and nil rated means, sir, it is covered under GST, but maybe the tax is not leviable. Whereas non-taxable supply means it is completely outside GST. Okay. Example, alcoholic liquor for human consumption or petroleum products, guys. Now, if my outward supply is any one of this, that is this three I'm talking about, not zero rated. I repeat, if my outward supply is any one of this, which is nothing but exempt supply, then there is no credit available for my input tax, guys. There is no credit available. So I will also explain you. You can see this is with respect to supply to or buy. Guys, SEZ unit or SEZ developer. Now, if I am having a branch or business in a unit or a zone which is declared by the government as SEZ, that is called SEZ unit. Whereas when government assign a task to a real estate developer to develop an area which the government has notified as the SEZ, that person is called as, whoever is developing that area is called as real special economic zone developer. Okay, sir. So any supply to them or by them, that is both inward as well as outward, is called as interstate supply, guys. Inward as well as outward by them is considered as interstate supply, and IGST would be limited. Whereas supply to SEZ unit or SEZ developer is interstate as well as zero rated. It is traded at par with exports. And I had already mentioned, guys, for GST purpose, SEZ is considered to be a location outside India. So anything going to that is considered to be at par with export. And we treated it as zero rated supply. Got it? Yes, sir. Now, a registered person is providing an outward supply which is exempt, that is either nil rated or non-taxable supply or exempt supply. On their inward supply, can they claim credit? No, sorry, they cannot claim. Sir, what if the outward supply is zero rated supply or taxable supply within India? In that case, they can claim credit on their inward supplies, guys. Is that clear? Yes. So this topic is connected to exemption along with input tax credit. I have tried to explain it here itself. Clear? So in simple, I repeat, if my outward supply is exempt, I cannot claim credit on my inward supply. And exempt supply will include what and all, guys? Wholly exempt supply, nil rated supply, and non-taxable supply. Yes. Coming back to this. Yes. So which are the goods which are exempt from tax? I've just given few list here, but goods is not a part of your intermediate syllabus, guys. Okay. Under GST, everyday items used by the common man have been included in the list of exempted items. Items such as unbranded atta, maida, besan, unpacked food grains, milks, eggs, curd, lassi, and fresh vegetables are among the items exempted from GST. Okay, yes, sir. But this is not the complete list of goods. Anyway, whatever I have given here is only illustrative list, guys. And as I mentioned already, goods which are exempt from GST is not a part of your intermediate syllabus. Then what is the part of our syllabus, sir? Services. Very small list is there. We will see. List of services exempt from tax. Notification number. Okay, guys, section 12 of CGST. Sorry, not 12, 11. Section 11 of CGST Act or section 6 of IGST Act gave power to the government to notify any goods or services which is exempt under GST. Using this power, government has released a notification. So what is it? We will see. Notification number 12 bar 2017, Central Tax Rate dated 28th June 2017, herein referred to as notification, unless otherwise specified, as exempted the various services wholly from CGST, that is whole exemption. Okay, sir. Then same way. Exemption from IGST has been granted to various services via notification number 9 bar 2017, integrated tax, that is ITR we call it as integrated tax rate dated 28th June 2017, and whatever services has been exempt as per the notification, that is this notification, same list is covered here also, guys. I have just mentioned a sentence here. All the services exempt from CGST have also been exempted from IGST Act. So should we learn the list separately? No. So whatever list we will be learning, whether it is applied within the state or outside the state, it is exempt, people. Got it? So same to same list, whatever is given here is exempt here. But under IGST, few more additional services are also exempt, but those are not a part of your syllabus. So whatever list we are going to learn from now, they are always exempt, whether it is supplied within the state or outside the state, guys. Is that clear? And whenever you are answering any questions with respect to exemption, start your answer like this under descriptive type. As per section 11 of CGST Act, read with notification. And if they are not mentioned the nature of supply, always consider it as intra, guys. Sir, what in the question they have clearly given it is interstate supply. Then instead of section 11, you can use section 6 of IGST Act. In that case, your answer will be like this. You will start your answer. As per section 6 of IGST Act, read with notification. Got it? If question is silent, always go with CGST Act sections, guys. Got it? So we'll be focusing only on two sections in this chapter. Section 11 of CGST Act or section 6 of IGST Act. Yes, guys. Chalo. So we'll begin with the list of services which is exempt. Yes. And for few of the list, there is a connection to RCM, and wherever there is a connection, I will just try to connect it and explain it, guys. Be ready for it. When I was explaining RCM itself, I have given some connection to exemption, but now again I will repeat it or connect it. Okay. And before I start with the list, guys, see, I know the list is lengthy. I told it is small, but actually not. It is very lengthy list. I know some of the students might take this topic as an optional. No, sir, I will quit it or I will not read it. I will take it as an optional question. Guys, please don't do it. Because there will be a question on GST liability calculation and all where they would have adjusted or where they would have given few adjustments with respect to exemption. Or even they would have asked you to calculate value of supply where one or two supplies they will give, which is exempt. So while calculating the value of supply, if there is any supplies which is exempt, we need to consider nil for that while calculating the value. Yes, sir. For that, we should know what is exempt. Yes. And trust me, the list is very easy, guys. Even if you just have an idea about the list, you can easily answer the questions in the exam. And some int will be dropped already in the question itself. By just reading it, you will be able to tell whether it is exempt or taxable. So for that, at least you should have an idea about the list. And few list or few exemptions are based on monetary limit. Like for example, they would have told it is exempt only if the value is within 500. In that case, you have to remember that values. And wherever any exemption is given with respect to monetary limit, guys, for example, if the exemption is available up to 500, that means if it is more than 500, it is fully taxable. Please be careful with it. For example, assume the value is 800 or 1000, then it is fully taxable. If it is within 500, exemption. More than 500, full value would be taxable, people. Got it? Yes. So with this, we will begin it. Come on, be attentive. Yes. And all the exemptions is arranged category wise. It is not given entry wise here, guys. So we will be learning it category wise. So the first category of the services which are exempt are charitable and religious activities. And whatever we will learn, especially in the initial stage, now they are very important, guys. Like charitable or religious activities, agricultural, educational, healthcare, government services, all those are very important. Okay, we'll begin with. So much of build up about exemption. Let us begin with. Services by an entity registered under Section 12AA of the Income Tax Act 1961 by way of charitable activities. Yes. Guys, whatever an entity is providing with respect to charitable activities who is registered under Section 12AA of Income Tax Act is exempt. Is exempt. Okay, sir. And I have given three notes for it below. Yeah. What is it? We will see. Services provided by an entity registered under Section 12AA of the Income Tax Act 1961 by way of advancement of religion, spirituality, yoga are exempt as such activities are covered in the definition of charitable activities. So all this will fall under the charitable activities are yes. Irrespective of whatever amount is charged, it will be exempt. Guys, if there is no monetary limit given for that particular exemption, It is understood any amount charged is exempt. Okay. Next, coming to the second note. Activities of schools, colleges, or any other educational institution run by a charitable trust by way of education or skill development of abandoned, orphans, homeless children, physically or mentally abused persons, prisoners, or persons over the age of 65 years or above residing in rural area. Okay, only in rural area for these people. Okay, yes, will be considered as charitable activities, and the income from such supplies will be wholly exempt from GST. Okay, sir. So all this also fall under the charitable activities? Yes. Next, hostel accommodation services provided by a trust to the students do not fall within the ambit of charitable activities as defined above. So if see, if education is provided to the children's, like who was abandoned or orphaned or disabled children's, it is exempt. Educational activities, part of charitable. But if education is provided along with hostel is not a part of charitable activities, guys. So that means it is taxable? Yes. And when we are learning the list of exemptions, guys, I have used 2 or 3 different colors. What are those, sir? I will just tell the impact of it. Wherever I have given anything in green, guys, that means it is exempt. In between, something I would have marked in red, which means taxable. So you should understand the difference. So anything highlighted in red is taxable. And if there is any monetary limit and all, normally the monetary limit I would have highlighted in blue color. But here I have given in red because if it is more than this amount, they are telling it is taxable. So I have highlighted in red. So red means taxable, green means exempt. Okay, now? Yes. Fine, sir. So we read all the 3 notes? Yes. And guys, before we continue with this list, there are different types of exemptions. We'll just have a look into it. We didn't cover this part. Yeah. Yes, this one. Come back to this. There are different types of exemptions available. What are those? We will see. It is important to note that exemption under GST may be provided in any of the following manner. First one, exemption to specified activities or transaction, irrespective of who is the supplier, who is the recipient, they enjoy this exemption. For example, transfer of a business as a going concern. Doesn't matter who is the transferor, who is the transferee, it is always exempt. Got it? Yes. Same way. Sir, if there is any loading or unloading or packaging or warehousing of agricultural produce, they're telling it is exempt. No matter who is the supplier, who is the recipient, guys, they enjoy the exemption. Next, exemption to specified suppliers. For example, few supplies of few services provided by government is exempt. So only when supplier is a government, they enjoy the exemption. Like that. Then exemption to specified recipients means only if the services is provided to them, it is exempt. For example, few services provided to government, where government is the recipient, they enjoy the exemption. Or few services provided to an educational institution is exempt. So only if the recipient is so and so person, they enjoy the exemption. Okay. And if recipient is enjoying the exemption, obviously for supplier also it is not taxable. Will they charge and collect it from the recipient people? No. Then the last one, exemption to specified suppliers and specified recipients means they are clearly told who should supply, to whom they should supply. Only then they will enjoy the exemption. For example, services provided by ESIC to the persons who are governed under that act, ESIC Act, is exempted. So they are clearly told who should be the supplier, who should be the recipient. If both the conditions are met, only then it is exempt. Got it, people? Yes. So these are the different types of exemptions which are provided. Okay. We'll continue with the list now. Okay. Entry number 1 is done. Entry number 13 now. Yes. Services by a person by way of what? Conduct of any religious ceremony under any religion, guys. Irrespective of the amount, it is exempt. Hello. Please listen here. Hello. Hello. Listen. Any services provided by a person for conduct of religious ceremony under any religion is fully exempt irrespective of how much amount they are charging. I have given a note for it. Note 4. It can be inferred that the amount charged by whatever name called for the conduct of any religious ceremony is exempt from GST. The religious ceremonies are like life cycle rituals, including the special religious pujas conducted in terms of religious text by a person so authorized by such religious text, like the priest, pujari, or molvi, or father, whatever we call them under the respective religion. So, whatever services they are providing, for which whatever amount they charge, there is no monetary limit. It is fully exempt, guys. Okay, sir. So for doing any puja, homa, like that. Okay. Then coming to B. Please be careful. B is available as exemption, but subject to some monetary limit. Subject to monetary limit. So for clause B, there is some monetary limit, guys. Okay. Renting of presence of a religious place meant for general public, owned or managed by an entity registered as a charitable or religious trust under section 12AA, or a trust or an educational institution registered under section 1023C5, or a body and authority covered under section 1023 BBA. So here body or authority means who manages the religious and charitable trust, guys. Okay. They are the government body or authority who manages the religious and charitable trust. Okay. Of the Income Tax Act 1961. So if any religious or charitable trust or even educational institution which is run by a charitable trust, if they own any place which they are renting it out for others for a rent, they will enjoy exemption. But always no, it is within some monetary limit. What is it? However, entry B shall not apply to. Okay, only for entry B. Please be careful, guys. Entry A is not covered here. Renting of rooms where charges are 1000 rupees or more per day. Okay, if it is 1000 or more, fully taxable. If it is less than 1000, 999 exempt, 1000 taxable. Okay, next. Renting of premises, community halls, Kalyana Mandapam or open area and like where the charges are 10,000 or more per day. Okay. 10,000 or more taxable. Less than 10,000 fully exempt. Okay, sir. Next. Renting of shops or other spaces for a business or commerce where charges are 10,000 or more per month is taxable. So please be careful. In the following case, it is taxable. 1,000 or more, 10,000 or more, it is taxable. Less than that, exempt people. Is that clear? Yes. And whenever you guys would have visited any temple, mosque, or church which is famous, you guys would have observed they will have their own premises which they would have let out for rent. Especially when you go to any famous temple, I would have observed as a child, you would have told, Appa, Amma, I want this. So they would have owned a place which they would have rented it as a shop for a person who wants to sell the items like puja items or any other the toys or anything like that. Yes, sir. And please be careful, guys. Year and year it is per day, because normally when we are taking a room or even a kalyana mandapa or all, it will be per day. Will you take it for months together? No, no, sir. Whereas if it is a shop and all, it is per month. 10,000 whatever is there is per month. Got it? Yes. Chalo, let us move to the next entry. Entry 60. Services by a specified organization in respect of religious pilgrimage facilitated by the government of India under bilateral arrangement. Only two events or two religious pilgrimage has been notified here. What are those? I have given in note 5. Let us see it. As per entry 60, the services provided by the Hajj Committee and KMVN in relation to pilgrimage to Mecca, that is by Hajj Committee to Mecca, whereas by KMVN to Kailas Manasa Sarovar, respectively, are not liable to GST, means it is exempt. Any other religious pilgrimage will be taxable. Okay. Then entry 80. Services by way of training or coaching in recreational activities like arts or culture by an individual. Only if a coach is an individual, it is exempt. Sir, what if coach is partnership firm, company and all, it is taxable? Clearly they are told that by an individual. That means the coach has to be an individual, guys. Okay, sir. Next, second one. Sports by a charitable entities registered under section 12AA or 12AB of the Income Tax Act. Okay, guys, please be careful. If there is any sports training provided by a charitable entity, it is not a part of charitable activities. So it is not covered in entry 1, but it is separately covered in entry 80. It is separately covered in entry 80. So sports training provided by a charitable entity is not a part of charitable activities, but it is separately exempt as per entry 80. Okay, I have given note 6 for it. Besides charitable activities, services provided by way of training or coaching in sports by a charitable entity registered under section 12AA of the Income Tax Act are also exempt. Is that clear? Yes. And wherever they are talking about charitable trust or religious trust, they are clearly telling it should be registered under the Income Tax Act, guys. It is a must. Okay, to enjoy the exemption. Okay, sir. Next, we will go through the next list, that is agriculture related services. Guys, if you can recall income tax provisions, Even in income tax, the agriculture income is exempt. What is agriculture income is defined in section 2 clause 1a. If the farmer himself is cultivating or if he is letting out the agriculture land for agricultural activities to someone else, whatever the tenant as well as the owner or the farmer or the landlord is earning from the cultivation or the rent which is received either in money or in kind is always considered to be an agriculture income. For example, if I myself grow the crops, I will chop it or I will sever it and I sell the crops. Whatever I will earn from the sale of crops is an agriculture income. Next, no, I am not growing, I am not cultivating the crops, I am letting it to you. So you are a tenant, you are using my land for agricultural activities. Now you grow crops, you will sell crops. Whatever you will earn from sale of crop is an agriculture income for you. And whatever rent you pay me, whether it is in money or in kind, it is an agriculture income for me. And also they have told income from a farm building which is attached to the land or which is next to the land is also an agriculture income subject to certain conditions. It should not be situated in specified area. Some conditions are there. Yes, sir. And section 10 clause 1 of Income Tax Act clearly tells if there is an agriculture income from a land situated in India used for agricultural activities, it is fully exempt. Sir, what if land is situated outside India? Then it is taxable under the head other sources tax. Oh. So 10.1 clearly tell land should be within India and it should be used for agriculture purpose. Only then income is exempt. Okay, sir. And if an assessee has both agriculture income as well as non-agriculture income, then we need to apply something called as partial integration for the purpose of computing tax liability. So this is from income tax point of view, guys. It was just a recall. Now let us get back to GST. So even under GST, agricultural activities or any services related to agriculture is exempt. So what all are covered, we will see one by one. First, 24. Services by way of loading, unloading, packing, storage, or warehousing of rice. Actually, rice is not an agricultural produce. But still, services with respect to loading, unloading, packing, storage, or warehousing of rice is exempt by way of entry 24. Okay, sir. Next, services by way of warehousing of minor forest produce is exempt. Minor forest produce means other than timber, because timber is a major forest produce, guys. For timber, is it taxable? Yes. Next, 24b. Services by way of storage, warehousing of cereals, pulses, fruits, vegetables is exempt. Okay. Then 54. 54 has number of items. We will see one by one. Services relating to cultivation of plants and rearing of all life forms of animals except of rearing of horses. Rearing of horses is taxable, whereas any other animal exempt, guys. For food, fiber, food and all, like sheep or the chicken or even, sir, if it is like, sir, this is for non-veggie people, whereas for veggie people, so you can consider plants. Okay, chill. For food, fuel, fiber, fuel, raw material, or non other similar products or agricultural produced by way of what and all, one by one. Agricultural operations directly related to production of any agricultural produce, including cultivation, harvesting, threshing, plant protection, or testing. Next, supply of farm labor. Supply of farm labor means assume you want to do farming, but you want more labors. So I am like an agency. I will supply farm labors to you, for which I will charge you the amount. Similar to security agencies, guys. Okay. So whatever I will charge you for supply of farm labor, who will work for you in your land, agricultural land, whatever I am charging you is exempt under GST. Okay. Next, processes carried out at an agricultural farm, including tending, pruning, cutting, harvesting, drying, cleaning, trimming, sun drying, fumigating, curing, sorting, grading, cooling, or bulk packaging, and such like operations, which do not alter the essential characteristics of the agricultural produce, but make it only marketable for primary market. So is it an agricultural activities? Yes, it is exempt, guys. So this, especially this line, or even this, it is similar to what is the definition given in income tax of agriculture income under section 2 clause 1a, guys. Got it? Yes. You should not change the nature of the agricultural produce. For example, sir, I am growing sugar cane. If I sell it as it is, agricultural activities. Okay. Sir, what if I convert it into sugar or jaggery and sell it? Then that is not considered as agricultural activities, guys. Got it? Yes, it is more of manufacturing. Next, renting or leasing of agro machinery that is used for agricultural purposes, various machinery or equipments, or vacant land with or without structure incidental to its use. So, sir, I am letting out the agricultural land for use for to be used for agricultural purpose. Whatever rent I am charging, is GST exempt on it? Yes. Next, loading, unloading, packaging, storage, or warehousing of agricultural produce. Guys, please be careful. Agricultural produce will not include rice. So for rice, there is a separate exemption given. Sir, what if it is jaggery, sugar, or coffee, tea, and all? Even they will not come under agricultural produce, guys. They are more of manufactured products. Okay. Next, agricultural extension services, that is providing training to the farmers, like how to improve the soil fertility, or how to use technology in the agricultural, or how to market their products once it is grown, like that. So in simple, creating awareness to the farmers, guys. Last one, services by an agricultural produce marketing committee, that is APMC in short, or a board or a services provided by a commission agent for sale or purchase of agricultural produce. So this commissioning agents or APMC will act as a middleman. They purchase the crops or agricultural produce from the farmers and they sell it to the people. And for their service, they charge some commission. And on that commission, GST is exempt. Got it? Yes. Next, entry 55. Carrying out any intermediate production process as a job work in relation to cultivation of plant and rearing of all life forms of animals except rearing of horses. They are taxable. Okay. For food, fiber, fuel, raw material, or other similar products or agricultural produce. Yes, sir. And guys, what is this? See, if I myself is doing all the activities, then there is no question of this. But assume I am not able to do all the work with respect to my growing of my crops. I am taking your help. You are providing me some job work with respect to putting pesticides or fertilizers to my crops or to graze my animals. Okay, in order to graze my animals, you are helping me. So you are doing a job work for me, for which I am paying you. Whatever I am paying you is exempt under GST. Oh, next, 55A. Services by way of artificial insemination of livestock other than horses. Horses is taxable. Whereas for other animals, if you make them artificially give birth, artificial insemination is nothing but making the animals give birth artificially, guys. Even birds. Animals are birds. Okay. But if it is for horses, it is taxable. Next, 57. Services by way of preconditioning, pre-cooling, ripening, waxing, retail packing, labeling of fruits and vegetables which do not change or alter the essential characteristics of said fruits or vegetables. Especially as they are perishable, guys, like vegetables or fruits, we need to do some packing, or we should also make sure we will try to increase, especially the sellers, they may do some few things with respect to increase their lifespan. In that case, whatever services are provided for this is exempt under GST. Okay. Next, 58. Services provided by the National Center for Cold Chain Development under the Ministry of Agriculture, Cooperation and Farmers Welfare by way of cold chain knowledge dissemination. Okay, means providing the knowledge to the farmers, like within what temperature the items has to be stored, especially like fruits, vegetables, and all, because they will have very limited lifespan or they are perishable, even crops. So, in order to train them with respect to in what temperature it has to be stored and all. So, if any seminar has been provided or if any training is provided for which the amount is charged, it is exempt under GST, guys. It is exempt under GST. Yes, sir. Sure. We'll move forward. Yes. Next one is the educational services. Yes, sir. Our area. So, educational services. Before we learn what is exempt here, first we should know who is considered as educational institution for GST purpose, guys. Okay. So, there are three categories: one, two, and three. I will just give the number so that we can address it accordingly. This is three. Okay. So there are three institutions which are covered as educational institution for GST purpose. Which are those? First one, educational institution providing preschool education and education up to higher secondary school or equivalent. So in simple, you can consider up to your 12th or PUC or plus 2. Okay, from kindergarten, play school up to 12th. Okay, sir. The second one is your degree or university, or degree college or university, guys, where you obtained your degree, UG or PG, both. Educational institution providing education as a part of curriculum for obtaining a recognized qualification, whether it is UG or PG. So we can consider it as your degree college or universities. Okay, sir. Then the last one, educational institution providing education as a part of approved vocational education course. Vocational means professional. Okay. So our ICAI or ICSI will fall under this, guys. Got it? Yes. Now, fine, sir. So the educational institution means only this. What about the private coaching, sir? Many academies are there, or many private centers are there where coachings are provided. Are they covered under the educational institution? No, people. They are not covered. So if you guys are taking any coaching by paying the fees, will the coaching center enjoy the exemption here? No, they are liable to pay GST as it is private tuitions. Oh. So the exemption available in respect of input as well as output services of an educational institution have been tabulated as follows, guys. So educational institution, normally when they give exemption, it is for outward supplies. Okay, but here for educational institution, they are giving exemption for outward as well as inward, both, guys. So first we will see outward. Come to this point. Entry 66. Services provided by an educational institution to its students, faculty, and staff. In short, I call it as SFS, is fully exempt, guys. And whatever they are providing means services provided by an educational institution, they told. Is it only education? No. Obviously, what they provide to students, especially, is educational services. Yes, it is exempt. But what if they provide transportation services to the students, faculty, and staff? Or what if they provide catering services? It is always exempt, guys. So, if an educational institution is providing any services to students, faculty, and staff, including transportation, education, catering, food, all those are exempt. Okay, sir. Next, second one. Yay, yay. By way of conduct of entrance examination against consideration in the form of entrance fee. Guys, this is not for the students because before you take an admission into a school or college, if there is any entrance examination is conducting and if you are taking part in it, you are still not a student. Maybe once you pass the entrance examination, you can enroll yourself as a student, but till then you are not called as a student. You are yet to be a student. Okay, so here that is not covered. Yes, sir. So for conducting any entrance examination for any school or college or universities or even IIT, IIM, if any amount is charged on that, GST is exempt, people. Is that clear? Sir, once the student take an admission, we conduct yearly examination or monthly examination. For that also we are charging examination fee. Is that exempt? Yes, that will fall here because you are already a student. Whereas before you enroll yourself as a student, if you are taking any entrance examination in that college or university or even school, then it is exempt as per EAA, people. Whatever amount you pay for entrance examination is exempt from GST. Okay, fine. So this is with respect to an outward supply by an educational institution. Now let us talk about inward supply. Here you have to be very careful, people. Here you have to be very careful. Okay. See, last one I will cover first. See, this services. If any educational institution means out of these three, if they take these services, no, it is always exempt. So it is covered for all three. What is it? Let me read it. The last one. Just a minute. Yeah. What is it? Services relating to admission to or conduct of an examination by such institution. Guys, see, if an educational institution itself is conducting it, it is covered here. No, sir, educational institution is not conducting the examination. They have outsourced it to an agency. They are expert in doing it. So this agency is providing services to an educational institution. So for educational institution is an input service or inward supply. Is that exempt? Yes. In all the three cases, it is exempt, guys. So you can see for all the three category of educational institution. Okay, sir. Whereas for the second category, there is one more exemption. That is only for second category educational institution. That is for degree college or universities, guys. What is it? Supply of online educational journals or periodicals. So if they are buying any online, once again, yeah, online educational journals or periodicals, for that whatever amount they are paying on that, GST is exempt. Sir, is it exempt for first and third category? No, no. For them it is taxable. Got it? Yes. Now we have three more. We have three more here, which is exempt only for the first category of educational institution, guys. First category of educational institution means this one. Sir, what is it? Please be careful. We are talking about input services. If educational institution itself own the bus or the vehicle, if they are providing the transportation services to the students, it is always exempt here because it is an outward supply. Sir, what if school itself has a canteen? It is run by the school and they are supplying the food items, snacks there to the students. That will fall here. Got it? I told you. Any outward supply provided by an educational institution to students, faculty, and staff, any of this educational institution, it is covered here. It is exempt as outward supply. Whereas now we are talking about inward supply. So if educational institution is taking any of these three services, it is exempt only for the first category of educational institution. Whereas for second and third, it is not exempt, which means it is taxable. Okay, which are those three? We will see. Transportation of students, faculty, and staff means school doesn't own the bus. They have given the transportation of students service out. They have outsourced it to a travel agency, assume. So now this travel agency is providing services to whom? To the school. Is it exempt for the travel agency who is providing that transportation service to the students, faculty, and staff? If it is for the first category of educational institution, exempt, guys. Yes, sir. Next, second one. Catering including any midday meals scheme sponsored by central government, state government, or union territory is exempt. Okay. Then third, security or cleaning or housekeeping services performed in such educational institution is exempt. So if these services are provided only within the campus, it is exempt. Sir, what if security, cleaning, or housekeeping services are provided in principal's house, which is outside the premises of the school? It is taxable. Or else, assume a school is conducting an annual day or a sports day in a ground which is outside the campus. So they have taken the ground on a rent. There they are conducting an annual day function or a sports day function. And there some security services are provided or housekeeping, cleaning services are provided. Is it exempt, sir? No, it is taxable because it is outside the institution, guys. Only if security, cleaning, or housekeeping services are provided within the educational institution, it is exempt. That is within the campus, in simple. Got it? Yes. So please be careful. This anyway is exempt for all three, guys. Whereas this is only for second category. Whereas this three is only for first category. And which are this? Outward or inward? Inward supply. So for a supplier who is providing the following services to an educational institution, if it is exempt for them, will they charge and collect the GST from the educational institution? No. For a supplier, if it is exempt, obviously it is exempt for recipient also. So supplier will not charge and collect GST from the recipients, guys. Got it? Yes. Next, 66A. Services of affiliation provided by the central or state educational board or council or any other similar body by whatever name called to a school established, owned, or controlled by the central government, state government, union territory, local authority, governmental authority, or government entity. Guys, simple. If there is any affiliation services provided by state education board or central education board, state or central education board to the government school, it is exempt. To the government school, it is exempt. Sir, what if it is for a private school? It is taxable. It is taxable, people. Okay, sir. Next category of services, healthcare. Entry 46. Services by way of veterinary clinic in relation to healthcare of animals or birds is exempt, guys. Sir, what about human beings? It is covered here, 74. Services by way of healthcare services by a clinical establishment, that is nothing but hospitals or clinics. An authorized medical practitioner or paramedics, guys, these people are trained to give some first aid treatment. They are not the doctors, they are not past MBBS, but still they are trying to give a first aid treatment. Okay, whenever the patient rushes into the hospitals, okay, is exempt. Okay, sir. Next, I will also read out this. B. This part I will take care later. Services provided by way of transportation of patient in an ambulance other than those specified in A above. Guys, healthcare will include also the transportation of patient by ambulance. Means if a hospital itself own an ambulance And if they are providing transportation service of a patient, then it will fall here. Sir, no, sir, I was in a hurry to admit my parent, assumed to an hospital, and the hospital was far away. So by the time the ambulance reaches, it will be late. So we took the ambulance services from some outside agency. In that case, whatever is the transportation of patient through an ambulance, is that exempt? Yes. Even if it is provided by a third person, it is exempt. If it is provided by an hospital itself, it is also exempt because it is covered in healthcare only. Whereas if it is provided by a third person, even in that case, it is exempt as per clause B, guys. Hope you understood. Yes. Now, what is healthcare? I have given a note because anything provided by hospitals will not be considered as healthcare for GST purpose. Yes. Healthcare services means any services by way of diagnosis or treatment or care for illness, injury, deformity, abnormality, or pregnancy in any recognized system of medicines in India, and includes services by way of transportation of patient to and from a clinical establishment. Means if hospital itself is providing the ambulance services, it is a part of healthcare itself, guys. Okay, sir. But it does not include a transplant or cosmetic or plastic surgery. Okay, you guys would have seen some of the cricket players, especially, sir, last season they didn't have hairs, but this season full hair, sir. How come? Because they would have got a transplant. So, is it a part of healthcare? No. For that, whatever amount is charged on that GST is applicable, guys. Okay. So, if it is a hair transplant, cosmetic, or plastic surgery, especially which is done to enhance the beauty, you guys would have seen some stars also. They do lip injury, sorry, not injury, lip surgery, nose surgery, like that. So, to look better, sir, is that services a part of healthcare? No, guys. It is taxable except when undertaken to restore or to reconstruct anatomy or functions of body affected due to a congenital defects, development abnormalities, injury or trauma. Sir, a person was suffering from a disability, and to overcome this disability, they have got some surgery, sir. In that case, is it a part of healthcare? Yes. So if you have got surgery to overcome any disabilities or any abnormalities, they are telling it is a part of healthcare. But if you have done it to enhance your beauty and all, it is not a part of healthcare, guys. Okay. Next, as it is apparent from the definition of healthcare services, only services in recognized system of medicine in India are exempt under this entry. What are those? Following systems of medicines are the recognized system of medicines in India, that is allopathy, yoga, naturopathy, ayurveda, homeopathy, siddha, unani, or any other system of medicine that may be recognized by the central government. Got it? Yes. Then rent of rooms provided to inpatient. Inpatient means the patients who are admitted in an hospital. In hospital is exempt subject to the limit and purpose specified. Guys, healthcare will also include the accommodation provided to a patient who are admitted. Okay. So, sir, whatever is charged as room rent, no, is it exempt? Yes, but there is some limit here. What is that? Let me read it, guys. However, so for clause A, we have one condition. However, nothing in this entry shall apply to a services provided by a clinical establishment by way of providing room. Okay, that is accommodation. Having a room charges exceeding 5,000 per day to a person receiving such healthcare services. So if room charges is more than 5,000, it is fully taxable, guys. Sir, what if it is 5,000 or less? Fully exempt. Fully exempt. And you guys know in an hospitals and all, they will have different category of rooms with AC, without AC, with TV, without TV, with extra bed or without extra bed, like that. So if room charges is less than or equal to 5,000, fully exempt. More than 5,000, fully taxable. But 5,000 limit is not applicable in the following cases, guys. Which are those? I have highlighted here in the bracket. Other than intensive care unit, that is ICU, critical care unit, that is CCU, or intensive cardiac care unit, that is ICCU, neonatal intensive care unit, that is NICU. Okay, for them, for whatever I have given here, no, within the bracket, there is no monetary limit. Any amount charged as room rental is fully exempt. Whether it is 5,000 or 50,000 per day, it is fully exempt. Is that clear? For any other room category, they are telling maximum exemption is for 5,000. If it is more than 5,000, fully taxable. Assume it is 6,000. For other than this, full 6,000 would be taxable, guys. Got it? Yes, sir. Okay. Third note, healthcare services provided by a clinical establishment will include food supplied to a patients. Okay. Sir, whoever is the patients who are admitted in hospital, so doctor will advise them to have the food given by the hospital itself. Yes, sir. In that case, whatever food has been supplied for that also hospital would be charging. Yes. So is it a part of healthcare? Yes, guys. But such food may be prepared by the canteens run by the hospital or may be outsourced by the hospital from outdoor caterers. Doesn't matter. Okay. So food supplied to an inpatient means the patients who are admitted as advised by the doctor or nutritionist is a part of composite supply of healthcare and not separately taxable. And if a single price is charged for healthcare along with food, is it a composite supply? Yes, naturally bundled, especially for the patients who are admitted. And what is the principal supply there? Healthcare. And when principal supply is exempt, your entire supply will be exempt, guys. Because in case of composite supply, whatever is the rate applicable for the principal supply will be applicable for the entire value. If principal supply is exempt, then the entire supply would be exempt. Got it? Yes. Sir, what if the food items has been purchased by the patients who are not admitted? They just came for a blood checkup or any other regular checkup. They had some food in the canteen. Or the attendants or the person who came to see the patients had some food in the canteen. Is it liable for GST? Yes, guys. And definitely the hospital will be keeping a separate account for it. And when they are giving to the patients who are admitted, normally it will be supplied to the bed or to a particular room, guys. Whereas for others means you need to go to the canteen and buy it. So anything bought in the canteen will be liable for GST. Whereas anything provided, any food provided to a patient who is admitted is exempt, people. Okay, sure. Yeah. Other supplies of food by the hospital to the patients who are not admitted or other attendants or visitors are taxable. Okay, sure. Just a minute. Yeah, next one. Supply of services other than healthcare services such as renting of shops to any pharma or auditoriums. Assume auditorium is let out in the premises of the clinical establishment or display of advertisement will be subject to GST because all this will not fall under healthcare, guys. Now assume within the premises of an hospital there is a shop which they have let out, maybe for pharma or for any other purpose. Sir, whatever rent they are charging, is it exempt from GST? No, it is taxable. Assume there is an auditorium within the premises of an hospital. Actually, there is a hospital called Nimans in Bangalore, which has an auditorium. When I was a student, there was a conference going on. ICA was conducting a conference in the hall, which is there within the premises of Nimans. And when I was there, my mother called me and she asked, "Where are you?" I told Nimans. Just imagine her reaction. Next 5 minutes, only she spoke. And for those who don't know what Nimans provides, what services they provide, or what healthcare services they provide, you can check it on Google. Yes. So, fine. Next, also advertisement. For example, assume you go walk into any clinic or hospitals. When you are waiting for a doctor, you guys would be seeing some TV there where the advertisement and all will be displayed. And for giving that advertisement, the clinic or the hospital will be charging the amount for that particular brand or company. Yes. So is it exempt? No, it is liable for GST. Okay. Next, services provided by government. Okay. So who is the supplier here, people? Government. There are few services which are provided to government also exempt. That we will see later. But here, the government is the supplier. Here, the government is the supplier, people. Okay, sir. Sure. One by one, we will see. Entry number 4. Okay. Let me read both the entries, then I will explain. Services by a government authority. Okay, who is the supplier? Government authority. By way of any activity in relation to any function entrusted to a municipality under Article 243W of the Constitution are exempt. Next, 5. Services by a government authority by way of an activity in relation to any function entrusted to Panchayat under Article 243G of the Constitution. What is covered here is municipality, that is for urban area, whereas Panchayat is for rural area, guys. Both are called as local authorities. Okay. Guys, if you remember, as per section 7, subsection 2, if municipality or panchayat provide any services to the public, whatever they are supposed to do as per the constitution, if they provide that services, it is neither the supply of goods nor the supply of services as per section 7.2, means outside GST. GST is not applicable for it. Okay. Now they are telling whatever municipality or panchayat is supposed to do as per constitution, it is done by a government authority. To whom? Maybe to the public. Okay. Now who is the actual supplier? Government authority. What are they doing? Whatever municipality or panchayat is supposed to do as per the constitution. Now that such services are provided by whom? Governmental authority. They're telling it is exempt. The services provided by governmental authority is exempt, guys. Is that clear? Yes. And what is governmental authority or government entity and all? The definition is given in GST law. I will just show you 1 second. Yeah. Simple. It is when 90% or more control is with the government, we call it as government authority or government entity, guys. It is like a body or an authority where at least 90% of the control is with the government. You can just pause the video and go through it. And business entity also, we will use this term in few exemptions. Business entity means anyone doing the business. Let it be a company, sole proprietorship, partnership, anything, guys, including AOP, POI, anyone doing business. Okay. So you can just pause the video and go through it. Both government authority as well as government entity. Yeah, fine. We'll get back. Next, entry 6. Guys, from entry 6, there is a connection to RCM. So please be very attentive. Services by the central government, state government, union territory, or local authority, excluding the following services. So the supplier is a government. Okay. Excluding the following means the following is not exempt. So then what is exempt? Any other services excluding this. Okay. So excluding, in short, I have given it as trap. What are those? We will see. Let me read it once. Services by the Department of Post and Ministry of Railways, that is Indian Railways. Services in relation to an aircraft or a vessel inside or outside the precincts of a port or an airport. Next, transport of goods or passengers or any service. Okay, this three put together I call in short trap. Sir, what is the full form of trap? Please listen. I already explained when I was covering RCM. I will repeat. T for transportation of goods or passengers. Okay. R for railway, that is Indian Railways. A for airport. P for port, that is within the precincts of airport or port. Precincts means premises, guys. The last one is postal. Indian Postal Department, guys. Okay. So in short, I call them as trap. And please don't use shortcuts in the exam, guys. This is just for you guys to remember. Okay. Then the last one. Any service other than the services covered under A to C, that is other than trap, provided to a business entity. Okay. So if service is provided to a business entity, it is not exempt as per entry 6. But they have added one separate entry for it, entry 7. There it is exempt. Subject to some condition. Okay. So in simple, now, if trap is provided to anyone by government, it is not exempt. And it is always taxable under FCM. It is not covered in RCM also. It is not exempt here also. That means it is taxable under FCM. That means government only has to pay tax under forward charge mechanism. Okay. Whereas here, this services other than trap provided to a business entity, they excluded from entry 6. So that means as per entry 6, it is not exempt. But I have mentioned here, refer to entry 7. Let us refer it. Direct connection to RCM. Services provided by central government, state government, union territory or local authority to a business entity with an aggregate turnover of up to such amount in the preceding financial year as makes it eligible for exemption from registration under CGST Act 2017. Okay. So who is the recipient? Who is the supplier, guys? Government, any government. Who is the recipient? Business entity. So is it always exempt? No, no, no. They clearly told, check last year aggregate turnover. If the last year aggregate turnover of a business entity is within the threshold limit for registration, then it is exempt. Sir, what if it is more than the threshold limit for registration? Then it is taxable. Taxable under what? RCM. Business entity has to pay tax under RCM as a recipient, guys. Okay. Explanation. For the purposes of this entry, it is hereby clarified that the provisions of this entry shall not be applicable to the following services. Which are those? The trap. Okay. So entry 7 will not include trap and even RIP. That is renting of immobile property. Guys, if you remember, even in RCM list when we were covering government services, these two were excluded from RCM. But RIP was anyway added in the next entry. RIP was anyway added in the next entry. They told renting of immobile property by a government And who is the recipient there? Registered person under GST. RCM is applicable. So if tenant is registered under GST, RCM is applicable. Correct? Yes. Okay, fine. Same way. This two they are excluding. Okay, sir. Then note, if the aggregate turnover of the business entity in preceding financial year is more than 20 lakh or 10 lakh or 40 lakh, guys, this is the threshold limit for registration. Sir, for whom, how much is applicable when? We will learn it in registration chapter. Okay. Then such business entity has to pay tax under reverse charge mechanism, guys. Is that clear? So if you guys recall, I had explained this when I was covering RCM itself. So let me repeat it once again. Listen, people. If government is providing services to a business entity which is other than TRAP and RIP, any services other than TRAP and RIP, check who is the recipient, business entity. Check their aggregate turnover in the last financial year, 2 RMR guys. If their aggregate turnover in the last financial year is within the threshold limit for registration, it is exempt. If it is more than the threshold limit, it is taxable under RCM. Very easy. Got it? Yes. Next, entry 8. Services provided by central government, state government, union territory or local authority to another central government, state government, union territory or local authority, means government to government. It need not be same. For example, can it be from central government to state government? Yes. Can it be state government to central government? Yes. Government to government. Need not be same governments. Okay, sir. Then, however, nothing contained in this entry shall apply to services referred to in item ABC. That is nothing but trap. ABC is nothing but this one, guys. So if trap services are provided by government to anyone, it is always taxable under FCM, guys. Okay, sir. Next, ninth one. Services provided by central government, state government, union territory or local authority where the consideration for such services does not exceed 5,000, means 5,000 or less. If it is more than 5,000, taxable. Okay. However, this 5,000 limit is not applicable for trap. So for trap, whether it is less than 5,000 or more than 5,000, it is always taxable under FCM, guys. Yes, sir. Further, in case where the continuous supply of services is provided by government to anyone, then 5,000 is a limit per service or per month or per year. Per year. So if service assume is provided throughout the year, continuous supply of service means when service is provided for more than 3 months. But let us assume the government is providing the services to me throughout the year. So only if the value for a year is less than 5,000, less than or equal to 5,000, it is exempt. Sir, what? Every month they are charging 4,000. Every month 4,000 means 4,000 into 12. In a year, it is 48,000. Fully taxable. Fully taxable, guys. Got it? Yes. And you can see wherever exemption we just now discussed, from entry 6, 7, 8, and 9. Everywhere they excluded trap. So trap is always taxable under FCM, guys, irrespective of the amount. Got it? Yes. So till here, I have made one chart, which is in the next page. You can come to this. I have tried to connect the RCM along with exemption here. So be attentive. Very interesting chart. Services provided by. So who is the supplier, people? Central government, state government, union territory, or local authority. Okay. Which is the service you see? First one, trap. That is nothing but A, B, C, what they have used. Okay. Yes. Trap. It is always taxable under FCM, irrespective of who is the recipient and what is the amount charged. Always taxable, guys, under FCM. That means government itself has to pay tax. That is GST. Okay. Next, if it is RIP services, that is second category of services. RIP means renting of immobile property. Okay. Check who is the recipient. If recipient is registered, then it is taxable under reverse charge mechanism. Okay. But only if consideration is more than 5,000. Okay, sir. Sir, what if recipient is not registered? Tenant is not registered, sir. Then it is taxable under FCM. But only if consideration is more than 5,000. So that means this 5,000 is applicable, huh? Yes. So you can observe here. For this 5,000, they have just excluded trap, but they have not excluded RIP. So for RIP also 5,000 limit is there. Yes. If it is less than 5,000, it is exempt here as per entry 9. Okay. Okay, sir. So both these cases, RCM or FCM, it is taxable only if the rent in a year is more than 5,000, not per month, per year. Assume rent is charged per month only, but take an aggregate. In a year, if it is more than 5,000, fully taxable, people. Yes, sir. Next, other services. Other services means other than trap and RIP. Check who is the recipient. If it is business entity, then also check that what is their aggregate turnover in the last financial year. If the aggregate turnover in the last financial year is more than the threshold limit applicable for registration, then by this year they would have been registered, no? Yes, sir. Because as per section 25, once a person is liable for registration, they have to apply for registration within 30 days. Okay. So if their turnover has crossed the threshold limit last year, obviously by this year they would have been registered, guys. Okay. So in that case, it is taxable under RCM, but only if consideration is more than 5,000. Okay. Sir, what if business entities aggregate turnover is in the last financial year is within the threshold limit? Is within the threshold limit means it is exempt, people. Is exempt. But listen here. One special case can be there where, sir, last year their aggregate turnover is within the threshold limit. But in the current year, before they receive this service, their aggregate turnover has crossed the threshold limit and they have taken registration. They have taken registration. Now, is it taxable or is it exempt? It is exempt, people. It is exempt. Even though they are registered in the current year, but their last year aggregate turnover was within the threshold limit? Yes. So in that case, in the current year, will they enjoy the exemption? Yes. But in the next year, they will fall under this category. Is that clear? So in the current year, if the aggregate turnover has crossed the threshold limit and if they have obtained the registration before taking these services, if they are registered in the current year, still it is exempt, people. Because what they have referred to is not the current year aggregate turnover, it is last year aggregate turnover. Hope you got it. Yes, sir. And if recipient is any other person, including government, it is exempt always. It is always exempt, people, including government to government. Okay, fine. So we are done till 9. We will continue from 9C. Hello, seeing? Please look here. Yes. Supply of service by a government entity. What is government entity? We already seen. To central government, state government, union territory or local authority, or a person specified by central government, state government, union territory or local authority against a consideration received from central government, state government, union territory or local authority in the form of grants. Guys, simple. A government entity is giving services to government, any government, for which government is giving grant. It is exempt. It is exempt. Okay. Next, government entity. Okay, government entity is giving services to a third person for which government is giving grant to government entity. I repeat, government entity is giving services to a third person who has been specified by whom? Government. So government has told a government entity give services to so and so person for which government is giving grant to government entity. Even this is exempt, guys. Even this is exempt. Oh, next, 9D. Services by an old age home run by central or state government or an entity registered under section 12AA of Income Tax Act, that is charitable or religious, to its residents aged 60 or more in any area. Here there is no restriction, rural, urban, nothing like that, any area. Against a consideration of up to 25,000 per month per member, which includes food, accommodation, lodging, boarding, maintenance, everything, guys. So if it is up to 25,000, that is 25,000 or less per month per member, it is exempt. So what if it is 30,000? Fully taxable. Fully taxable, people. Next, 9E. Services by Ministry of Railways, that is Indian Railways, to individuals. So who is the recipient? Individuals, by way of sale of platform tickets. So this is a person who is not traveling, but maybe they are going to drop a person who is traveling. So assume you want your parents are traveling somewhere through Indian Railways, so you are going and dropping them. So you are also helping them to get the respective seat or the coach. So you are going inside the premises of Indian Railways. So you need to buy a platform ticket, right? Yes. For that, they charge some nominal amount, which is exempt from GST. Okay. Next, facility of renting rooms or waiting rooms, clock room services. The last one, battery operated car services, which you call it as buggy van, which provided transportation service only within the premises of Indian Railways. Correct, pick and drop. So even for that, they charge some amount, which is exempt from GST. Okay. Next, 9F. Services provided by one zone division under the Ministry of Railways, Indian Railways, to another zone or division under the Ministry of Railways, Indian Railways. That is within the Indian Railways, guys. From one zone to another zone or from one division to another division. If they are providing any services, it is exempt from GST. Okay. Next 24C. Services by the Department of Post by way of postcard, inland letter, post, book post, and ordinary post envelopes weighing less than 10 grams is exempt. Sir, what if it is like speed post and all? It is taxable, guys. So please be careful. The actually postal is part of trap also, but few services provided by postal is exempt, guys, which we just now covered. 24C. If it is any other services provided by postal department, it is taxable under FCM. Okay. Next, 34A. Services supplied by central government, state government, union territory to their undertakings, that is government undertakings or public sector undertakings, by way of guaranteeing the loans taken by such undertaking or PSUs from the banking companies or financial institution. Assume, guys, there is a PSU or government undertaking which is borrowing loan from bank, for which guarantee is given by central government. Guarantee is given by central government, for which PSU is paying them some commission. On this commission, GST is exempt. Commission paid by government undertaking or public sector undertaking to a government for providing guarantee to the bank for the loan borrowed by whom, the PSU or the government undertaking, is exempt. So whatever commission is paid to the government is exempt. Okay, sir. Next. 47. Services provided by central government, state government, union territory by way of what? Registration required under any law for the time being in force. For example, sir, I want to set up a company. I want to obtain a registration. So we need to obtain the registration from MCA. MCA, yes, sir, for which some nominal amount has to be paid. On that, is GST levied? No, it is exempt. Not only under Companies Act, under any act, if you are supposed to take registration and if you are paying any nominal amount as government fee or registration fee, on that GST is exempt, guys. Okay. Next, testing, calibration, safety check or certification relating to protection or safety of workers, consumers or public at large, including fire license required under any law for the time being in force. So whenever I am supposed to set up any industry or even assume a hotel, I'm supposed to obtain various licenses. And to obtain that license, whatever amount I have paid, sir, on that is GST exempt? Yes, guys, GST is exempt. Or else assume I want to set up a factory where I need to obtain the fire license. Okay, that sorry, not fire license, sir, safety license, telling that the workers are safer here to work or the machinery is safer to operate. So assume I am obtaining that license. For that, I have paid some nominal fee as government fee. Is it exempt from GST? Yes. Next one. 61. Services provided by central government, state government, union territory or local authority by way of issuance of passport, visa, driving license, birth certificate and death certificate. All these are issued by governments, guys, for which they charge you some amount. On that, GST is exempt. Okay. Anything you do, if a person is born, we have to intimate to the government. If a person is gone forever, we need to intimate to the government and obtain a certificate for it. Or if I want to go outside India, obtain respective passport or visa. Yes, sir. 61A. Services by way of granting national permit to a goods carriage to operate throughout India or contiguous states, means neighboring states. Okay. Guys, you know yellow board? Yes. So if you want to obtain a yellow board for your vehicle, you need to pay some extra amount. On that, is GST applicable? No, it is exempt. Next, 62. Services provided by central government, state government, union territory or local authority by way of tolerating non-performance of any contract for which consideration is in the form of fines or liquidated damages. On this, GST is exempt. Who is charging it? Either central government, state government, union territory or local authority. Got it? Yes. So on liquidated damages or on the fines paid to the government for non-performance of a contract, GST is exempt. Okay, sir. Next, 63. Services provided by central government, state government, union territory or local authority by way of assignment of right to use natural resources to an individual farmer for cultivation of plant and rearing of all life forms of animals except horses for food, fiber, fuel, raw material or other similar products, guys. So for example, assume for a farmer right to use water, natural resources, let us consider water. A right to use water is given to an individual farmer for which some government fees or nominal amount is charged. On that, GST is exempt, guys. Okay. Next, 65. Services provided by central government, state government, union territory by way of deputing officers after the office hours or on holidays for inspection or container stuffing or such other duties in relation to import export cargo on payment of merchant overtime charges. Okay, guys, these deputing officers are nothing but the employees of the customs authority or customs department for which they are paying salary. Salary anyway is a part of Schedule 3, not covered under GST. But assume after the office hours, they have been appointed to take care of some import-export procedures. Whenever the goods are loaded, unloaded into Indian port, they are taking care of. And for that, they have been paid an extra amount called, other than their salary, in addition to their salary, they have been paid what? Merchant overtime charges on which GST is exempt. On which GST is exempt, guys. Okay, sir. Next. And sir, what if they are not paid any extra amount? They told, for government told, hey, anyway, we are paying salary for you. Go and work little extra during peak time. Whatever salary, part of employer-employee relationship or employment services is a part of Schedule 3. It is not liable for GST, guys. Okay. Next, 74A. Services provided by rehabilitation professionals recognized under the Rehabilitation Council of an Indian Act 1992 by way of rehabilitation therapy or counseling and such other activity as covered by the said act at a medical establishment, educational institution, rehabilitation centers established by central government, state government or union territory or an entity registered under section 12AA or 12AB of the Income Tax Act 1961. Guys, simple. Now assume a person has been addicted to any of the bad habits. Okay, what is it? I need not tell, you will know it better. Yes, now he wants to come out of it or his family members want him to come out of it. So he have been appointed, he have been admitted to any rehabilitation centers where the rehabilitation professional is providing some training for them to come out of that addiction. And for that, whatever amount they are charging, no, is exempt under GST. If you guys have watched Sanju movie where Sanjay Dutt has acted, it is a biopic of whom? Okay, sorry, it is a biopic of Sanjay Dutt which has been acted. Who has acted? Ranbir Kapoor. Yes, sir. So in that case also, in that movie, Ranbir Kapoor will be admitted in a rehabilitation center. Okay, to come out of his addiction. So whatever amount that rehabilitation center or the professionals are charging for their services is exempt under GST, guys. Yes. Okay, this chart we already covered. Next, construction services. Entry 10. Entry 10. Services provided by way of pure labor contract. Okay, only labor charges. Only labor charges are exempt here. Okay. Of construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, or alteration of civil structure or any other original works pertaining to the beneficiary led individual house construction or enhancement under which scheme? Housing for all, urban mission or Pradhan Mantri Awas Yojana. Guys, this is a government scheme under which the government want to eliminate a hut in India. Huts in India means they want to provide housing for all those people who are staying in slums. Okay. Now this is a government yojana or scheme under which the government will construct the houses and distribute it to the people, whoever doesn't own their houses or who doesn't have their houses. Okay. Now, will government itself construct the houses? May not be. Assume they are outsourcing the work of construction builder, to a builder, and that builder is providing pure labor contract with respect to construction of these houses, which will be later distributed by the government to the people. So, whatever services the builder is providing with respect to pure labor contract for which he will charge the amount is exempt from GST, guys. Next, 10A. Services supplied by electricity distribution utilities by way of construction, erection, commissioning, or installation of infrastructure for extending electricity distribution network up to the tube well of the farmer, not for anyone, only for farmer or for agriculturist, for agricultural use is exempt, guys, for distribution of electricity. Okay. Next, last one, 11. Services by way of pure labor contract, again, pure labor of construction, erection, commissioning, or installation of original works pertaining to a single residential unit, otherwise than as a part of residential complex. Okay. Now assume I want to construct a house. I have appointed a contractor to construct a house to me. So he is providing a pure labor contract with respect to the construction of my house. And he is charging me, assume, for that 20 lakh rupees. Is it exempt under GST? Yes, entire 20 lakh is exempt. Is that clear? And they have told single residential unit. They didn't clearly specify whether it includes only one floor or multiple floors and all. Even if it is multiple floors, still it is considered a single residential unit and it is exempt as. Okay. Sir, what if it is a residential complex, sir? Like apartment, flats, or even if it is a commercial properties and all, it is taxable. Yes. It is taxable. Okay. Only single residential unit, they are telling it is exempt. Okay. Next, transportation. Passenger as well as both goods are covered. But first, let us learn passenger. Passenger transportation services, entry 15. So be attentive, guys. Your if and buts are there. Okay. Transportation of passengers, if and but means condition. Okay. Transport of passengers with or without accompanied belongings, that is with or without luggage, by. Okay. Air in economic class. That means if it is a business class, taxable. Or any class other than economic class, taxable. Okay. Air in economic class embarking from or terminating either starting point or ending point is in an airport located in the state of Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. Any airport in these states, guys. Either your starting point or destination point is in any airport of these states. If it is economic class, on the airfare, GST is exempt. Okay. And the last one, Bagdogra located in West Bengal. Not the entire West Bengal, only the Bagdogra airport located in West Bengal. Guys, please be careful. It is one of the place in West Bengal. They didn't tell any place in West Bengal. No, no, no. For example, assume I am traveling in an economic class from Bangalore to Kolkata airport. Is it exempt? No, no. Because Kolkata is not covered here. Kolkata is a part of West Bengal, but not covered here. Is that clear? Whereas for other states, they didn't mention any particular place. That means any airport of these states, if it is embarking point, that is starting point, or terminating point, any one is in that state, it is exempt class. For example, assume I am going from Bangalore to Assam in an economic class. On airfare, GST is exempt. Sir, what if I am coming from Manipur to assume Hyderabad? Even in that case, on airfare, GST is exempt. Got it? Yes. And please be careful, class they have clearly mentioned. Yes. And guys, in questions, sometimes they are confusing you. Assume I am booking a air ticket from Bangalore to Manipur in an economic class. On airfare, GST is exempt. But I myself is not booking. Assume I am booking it through an agent. And the agent is charging me 1000 rupees commission. On that also GST is exempt? No, on that GST is applicable. They told only on airfare it is exempt here. Doesn't mean that on commission also, which is charged by the dealer to book the air ticket for me, is that also exempt? No. On commission, GST would be applicable. Is that clear? Yes, sir. Next, let us continue. Next, non-air conditioned, that is non-AC, contract carriage. Okay. Contract carriage means I have wired the entire vehicle, guys. Now it will go as per my direction. I will tell you where it should go. Got it? Yes. So for example, assume I have hired a bus for my sister's marriage, which will happen in Mysore. So it will go as per my wish. It will start and travel as per my wish. Or that is how I will guide it. As per my directions, guys. Okay. Other than radio taxi, which is taxable, for transportation of passenger, excluding tourism, conducted tour, charter or hire. If it is for this purposes, it is taxable, guys. Okay. Contract carriage means I have hired a vehicle itself altogether. Okay. Yes. So sometimes whenever you guys are going for any family tour or any temple visits also, you guys, your parents would have hired a vehicle, no? Yes, like that. Contract carriage. Okay. Yes. Next. Stage carriage other than air conditioned stage carriage. In simple, non-AC stage carriage. Stage carriage is nothing but public transport. Can I decide where it will go? No. It has already pre-decided destination. If I want to go there, I need to embark that particular vehicle, guys. Got it? Yes. So for example, there is a bus going where they have put a board, Chennai. If I want to go to Chennai or any other midpoint in between Bangalore and Chennai, I have to get into that bus. If not, I cannot tell, hey, once I get into the bus, I cannot tell, hey, drive it to Hyderabad, drive it to Kochi. No, I cannot tell that. Clear? So it is similar to stage carriage is nothing but the public transport, guys. Okay. However, the last line, last paragraph. However, nothing contained in items B and C, that is B and C above, shall apply to a services supplied through an electronic commerce operator and notified under section 9(5) of CGST Act, and tax on such services shall be paid by whom? E-commerce operator. So if this services are booked through e-commerce operator, where e-commerce operator is supposed to pay tax as per section 9(5), then it is not exempt. Then it is not exempt. Means when it is exempt here means when I myself is booking it. Okay, yes, without using e-commerce operator. Without using e-commerce operator, guys. Got it? Maybe the direct booking like that. Or else directly I went and I got the bus. I embarked it. Or else I went to a travels, I hired a bus directly. Those things are covered here. Okay, sir. Next, entry 16. Services provided by central government by way of transport of passenger with or without accompanied belongings by air, embarking from or terminating at regional connectivity scheme, that is RCS, airport, against a consideration in the form of viability gap funding. Sir, what is this viability gap funding? Guys, let us take any small state. Let us assume Meghalaya. Now, Meghalaya wants to build an infrastructure, that is airport. They want to build and they don't have sufficient funds. Assume totally they require 50 crore, but they don't have so much money. They have only 30 crore. Now, under RCS, that is Regional Connectivity Scheme, government is telling we will fill the gap. Whatever gap you have now, 20 crore, we will provide it. We will provide it. So central government will help because the small states might not have so much funds in order to develop the air infrastructure. Okay, yes. So in order to improve the air connectivity, the government might support the small states. Okay, so whatever gap of 20 crore was there, it was filled by the central government. Now in return, if central government is booking any air ticket from or to that state, in my example, it was Meghalaya, right? Yes. So if central government is booking any air ticket, assume for their employees or ministers, MLA, PM, CM, whoever it is, if they are booking any air ticket from or to Meghalaya, on that airfare, GST is exempt. GST is exempt. But is it forever? No, no, no. Only for 3 years. 3 years from the date of commencement of operations of the RCS airport, guys. Is that clear? So central government will enjoy exemption only for 3 years. After that, GST will be applicable on airfare. Then entry 17. Service of transportation of passenger with or without accompanied belongings by railways in a class other than first class and AC. So if it is a first class or AC, it is taxable. Any other class exempt. Okay. Metro, monorail or tramway. Tramway means which will, sorry, see, monorail or tramway means it will travel in a single track. Single track. Yes, sir. Next, inland waterways, which will go within water or inside the water. Last one, public transport other than predominantly for tourism purpose in a vessel between places located in India. For example, I am going in a ship or cruise from Chennai port to Lakshadweep. Is that exempt from GST? No. Whatever amount they are charging, it is taxable, guys. Okay. Then metered cab or auto rickshaws, including e-rickshaws, are exempt. But if this is booked through e-commerce operator, then e-commerce operator has to pay tax as per section 9(5), guys. In that case, it will not be exempt. Then when is it exempt, sir? For example, assume auto. I was going on the road. I called, hey, auto. And I get into the auto. I booked myself. In that case, whatever the auto person is charging you is exempt from GST. But you sitting at your place, you are booking the auto through Ola or Uber. In such case, the Ola or Uber is liable to pay GST, hence it is not exempt. Got it? Yes. Done with passenger. Now goods. Goods transportation services. Entry 18. Services by way of transportation of goods by road, except the services of, means the following two is taxable. Goods transportation agency or courier agency. Guys, for courier agency, it is always taxable. Whereas for goods transportation agency, they are excluding from entry 18. Whereas they have a separate entry for it. You can see here, I have given. Okay. So Goods transportation agency, whatever transportation services they are providing, is excluded from entry 18, but there is a separate entry for them. Okay. Whereas for courier agency, it is taxable because it is excluded in entry 18 and nowhere it is included in any other entry. Okay. Then by inland waterways, that is underwater, it is exempt. Whether it is passenger transportation or goods transportation by inland waterways, it is exempt, guys. Okay. Then there is an explanation, which is an amendment, guys. So be attentive. Nothing contained in this entry shall apply to. So it is a new amendment. Applied to what? For whom? Local delivery services provided by electronic commerce operator. Okay. Or local delivery services provided through an electronic commerce operator. Okay. Means entry 18 will not cover for the local delivery services provided by e-commerce operator itself, means they only own the vehicle, they themselves is providing, or else the local delivery services is provided by supplier through e-commerce operator. Through e-commerce operator, guys. So both of them will not enjoy the exemption given in entry 18. And hope you guys remember this. This is a new addition in section new 9.5, guys. If there is any local delivery services provided by or through e-commerce operator has to pay GST as per section 9.5. Is that clear? Yes. I will just try to explain it. Just a minute. Listen. Yeah. We have seen this already under section 9.5, which is a new addition. If a recipient is booking any delivery services through porter, the actual supplier, who is a like third person, please be careful. This e-commerce operator is not the actual supplier in this case. So the actual supplier who owns the vehicle will come and provide the delivery service. So in that case, we need to check whether they are registered. If supplier is registered, they will pay tax under FCM. If not, the e-commerce operator has to pay tax as per section 9.5. Correct? Yes, we already learned it. Yes. Now what they are telling is entry 18 is not applicable for the local delivery services provided by e-commerce operator. Assume the porter itself owns this vehicle and they themselves are providing local delivery services. So in that case, they themselves are the supplier. Yes. Are they covered in entry 18? No, they are not covered. Next, let us assume actually the vehicles are not owned by porter. In reality, vehicles are owned by suppliers. They would have attached their vehicle with porter, guys. Okay, coming to that. Assume the local delivery services is provided by a supplier through porter. To whom? To the recipient. Even this is outside entry 18. So entry 18 exemption is not applicable in both the cases, guys. Is that clear? Yes. Sure. We'll continue. Entry 20. Services by way of transportation by rail or vessel from one place in India to another of the means within India of the following goods. So only if the following goods are transported by rail or vessel, or even if it is transported by goods transportation agency as per entry 21, it is exempt, guys. Okay. So here as per entry 20, rail or vessel is covered within India, whereas in 21 by goods transportation agency. But the items covered or the goods covered are same. Which are those? Relief materials meant for victims of natural or man-made disasters, calamities, accidents, or mishap. Assume there was a flood in Wayanad. So throughout the country, people came forward to contribute some items for the people who are affected through these floods. So if the goods are going to that Wayanad place by way of rail, vessel, or even goods transportation agency, whatever amount they are charging as transportation charges on that GST is exempt. Okay. Defense or military equipments, newspaper or magazines registered with the register of newspapers, agricultural produce, milk, salt and food grain including flours, pulses and rice. And the last one, organic manure, which we call in Kannada, we call it as gobra, which we use to improve the soil fertility, guys. Okay. So same items are listed even under entry 21, guys. But the mode of transportation would be goods transportation agency, GTA. Got it? Yes. And for GTA, I have given a separate list here. So 21 is the same items as. Got it? Yes. So if the following items are transported either by rail or vessel or goods transportation agency, it is exempt, people. On freight charges, GST is exempt. Okay. 21A, 21B connected to RCM. Connected to RCM. The first entry under RCM. What is it, sir? Services provided by a GTA to an unregistered person, including unregistered casual taxable person. other than the recipients who are covered under RCM. Okay. Means, guys, in the RCM list, last column we learned factory registered under Factory Act, society registered, yes, body corporate, all those things. Yes, one of the person covered there, a person registered under GST. Yes. So all those put together, I gave them one name. What is it? Specified recipients. So if recipient is a specified recipients, even if they are not registered under GST, for example, body corporate not registered under GST, are they still covered? Yes. Or else a partnership firm not covered, not registered under GST, are they still covered? Yes, they are a part of specified recipients. Okay. So if recipient is a specified recipients, then first option is taxable under FCM. If not FCM, then recipient who is a specified recipient has to pay GST under reverse charge mechanism. Got it? Yes. And what is exemption is talking about is if recipient is not a specified recipient, then it is always exempt. Then it is always exempt, guys. So just a minute. I will go back to that chart. One chart was there, no? I will just go back to that. I will show you. Yes. Yeah. You can see all these people put together. We call them as specified recipients. And after that, I had given a chart. Yes, sir. So only if the recipient is a specified recipient, the supply would be taxable either under forward charge, first choice. If not, then reverse charge. Then I had also given a note telling if recipient is not a specified recipient, then it is exempt. Got it? Yes, sir. Okay. Then next, here one more point was there. That is, for recipient, one of the person is a person registered under GST, but other than TDS deductor. Because for TDS deductor, exemption is given. That is what we are learning now. Yes, let us go back to exemption. Yes, people. So this exemption is available only if the recipient is a unspecified recipients. If it is a specified recipient, it is taxable either under FCM or RCM, guys. Okay, sure. Next, 21B. Services provided by GTA by way of transport of goods in a goods carriage to means the following people are the recipients. Who are those? A department or establishment of central government or a state government or union territory or a local authority or a government agencies. Okay. And they are registered under GST only to deduct TDS under section 51. And they are not providing any outward supplies, guys. In that case, I had mentioned even in RCM in bracket, yes. So in that case, even though the recipient is registered under GST, still it is exempt as per section, as per entry 21B, guys. No RCM, no FCM. It is exempt. Okay. Then goods transport agency has been defined and it has been amended, guys. So please be careful with this. Goods transport agency means any person who provides service in relation to transport of goods by road. Okay. And issues a consignment note by whatever name called. Consignment note is nothing like an acknowledgement. Once I hand over my goods to the goods transportation agency, they will give an acknowledgement telling, yes, we have received so many kgs or so much quantity of goods and we will be delivering it to the following address. They would be giving me a consignment note. Okay. But it will not include, so GTA will not include whom? An electronic commerce operator by whom the services of local delivery are provided, that is by themselves. Okay. Or else an electronic commerce operator through whom the services of local delivery are provided. Means supplier is different, e-commerce operator is different. So supplier is providing local delivery services through e-commerce operator to whom? To the recipient. That is covered in the second point. Whereas first point, e-commerce operator himself is providing the delivery services to the recipient. Means maybe they only own the vehicles. Got it, people? Yes. And the goods transportation agency or goods transport agency or GTA in simple will not include the following two people. Same way in entry 18 also they excluded, no, telling entry 18 exemption is not applicable for the following two. Same way now they are telling GTA will not include the following two. Got it? Yes, sir. Okay. Next, banking and financial services, guys. Services by way of, very important. Entry 27A, very important. Extending deposits, loans, or advances in so far as the consideration is represented by way of interest or discount is exempt. Okay, sir. For example, a bank is giving a loan of 10 lakh and in return they are collecting 11 lakh. that is 1 lakh interest. So 10 lakh anyway is not an income for them because whatever they gave, they got it back. It is a principal repayment. Whereas 1 lakh, whatever interest they are charging on that, is GST applicable? No, guys, it is exempt. On interest, GST is exempt. Sir, interest, okay, what is this discount? Guys, that is with respect to bill discounting and all. Assume I have a bill whose face value is 1 lakh and I need to wait for 2 months to encash this or to honor this bill. So I cannot wait for 2 months. So I went to a bank and I discounted the bill. They paid me 90,000 today only. So what is the discount amount? 10,000. So bank will wait for 2 months and they will honor the bill. And when the bill is honored, they will receive entire 1 lakh. So by doing this transaction, bank earned an amount of 10,000, which is nothing but discount. On that, GST is exempt, guys. On that, GST is exempt. But interest which is charged on credit card services. So if you have overdrawn the money and if you have not paid it within the time, then whatever interest is charged for it, it is liable for GST. So for whatever interest is charged on credit card, it is chargeable for GST, guys. Okay. I have given a note here. Note 1 and 2. Let us read it. Service charges, fees, documentation fees, broking charges, administrative charges, entry charges, or such like fees or charges collected are not exempt from GST, guys, because only interest or discount is exempt. Now, for I am applying for a loan, they have charged loan application fees or any other bank charges, debit card charges, credit card charges, or annual maintenance. Sir, is that exempt from GST? No, it is taxable. Next, interest charged on outstanding credit card balances has been specifically excluded from entry 27. That means it is taxable. That means it is taxable. And especially this one, very important, guys. It is an exempt service. In short, I call it as financial service. As per explanation 1 and 2 to section 10, which talks about composition scheme. So let me just try to connect it because this has some connection to that. As per explanation 1 to section 10, while calculating the aggregate turnover of the last financial year to check the eligibility for composition scheme, this particular services, even though it is exempt, we need to exclude it. The financial services has to be excluded. Same way as per explanation 2 to section 10, while calculating the turnover in the current year to pay GST under composition scheme, we need to exclude this financial service. Okay, sir. Then one more thing. In registration chapter, for the exclusive supplier of goods within the state, the higher threshold limit of 40 lakh is applicable. That is only for those who are supplying goods. But if a person is supplying goods along with this financial service, then still he will be considered as exclusive supplier of goods and he will be eligible for 40 lakh limit. Only this one service they're ignoring. If the supplier is supplying goods along with financial service, we will ignore the service part and we will consider that he is the exclusive supplier of goods. And this is a topic covered in registration chapter. Got it? Yes, sir. Fine. Next, B. Interstate sale or purchase of foreign currency amongst banks or authorized dealers of foreign exchange or amongst banks and such dealer means between banks or authorized dealers or between bank and authorized dealers if there is any exchange of currency for which they may charge commission for the other person, it is exempt, guys. On commission, GST is exempt. But what if I go and avail this service or any person from public go and avail this service? Assume I wanted to convert Indian rupees into US dollars. I went and availed the services of bank or authorized dealer. They charged me a commission of 10,000. On 10,000, GST is applicable. On 10,000, GST is applicable. Got it? Yes. So only if the currency exchange services is provided between banks or authorized dealers among themselves, it is exempt. Okay. 27A. Services provided by a banking company to basic saving bank deposit account holders under Pradhan Mantri Jan Dhan Yojana. It is a central government scheme where they want every citizen to open a bank account, guys. Clear? And in that case, if there is any account opening fees charged, which is a nominal amount, on that GST is exempt. Oh, yes. And please be careful, it is not any account, only the basic saving bank deposit account as per this Yojana. Okay, yes. Next, 34. Services by an acquiring bank to any person in relation to settlement of an amount up to 2,000 in a single transaction transacted through credit card, debit card, charge card or other payment card service. Okay. So example is Syndicate Bank got merged with Canara Bank. Assume I was holding a bank account or I was having an account with Syndicate Bank. Now they asked me, you have to move to Canara Bank. but I didn't wish for. So I don't want to continue with Canara Bank, so I want to opt out. And to settle whatever is there with respect to my account, they are paying up to 2000 or less than 2000, 2000 or less. In that case, no GST on it. Sir, what if the settlement amount is more than 2000? On the entire amount, GST will be applicable. Clear? This is only when I don't want to continue my account with Canara. I was very loyal to Syndicate. Now Syndicate got merged with Canara. I don't want to continue there. So I want to close my account. For that, they are making a settlement. If the amount is up to 2000, it is exempt, guys. Okay. 39A. Last entry here. Services by an intermediary. Okay. Of financial services located in multi-services SEZ with International Financial Service Center IFSC status to a customer located outside India for an international financial services in currencies other than Indian rupees, in simple foreign currencies. Okay. Guys, listen here. Assume I am an intermediary of a financial services or financial entity which is located in IFSC, which is a gift city located in Gujarat. Okay. So I am an intermediary or a middleman for an entity who is providing financial services from where? From IFSC. And where is their customer? Outside India. Okay. And whatever the customer is paying is in foreign currency. In that case, whatever services I am providing as intermediary, for which I may earn some commission, is exempt from GST, guys. Is exempt from GST. I repeat, I am an intermediary who is providing financial services to the client of a financial entity. Where is financial entity located? It is located in IFSC. So they are providing financial services, but on behalf of them as an intermediary, I am providing to their customer. Where is the customer? Outside India. And that customer is paying the consideration in what form? Foreign currency. In that case, whatever I will earn for my services is exempt from GST, guys. Okay. Next, life insurance business services. Number of services are covered here. Entry 28. Services of life insurance business provided by way of annuity under the National Pension System regulated by the Pension Fund Regulatory and Development Authority of India under the Pension Fund Regulatory and Development Authority Act 2013. Guys, under the scheme, once a person retires, the fund would be paying a pension that is a fixed amount till his death. Till his death. Okay, sir. So such services is exempt? Huh? Yes, such services provided by insurance company is exempt from GST. Yes. So the person would have taken a policy with the insurance company. Once he retire, he will be getting a regular annuity or pension. Okay. He will not receive the lump sum amount. He will be getting it in the form of pension, guys, regularly. Okay. Next, services of life insurance, guys. All these are like central government. So who has actually taken this policies is central government, but in the name of the people who are working in Indian Army, including Navy or Coastal Guard, like that. Okay. Or Air Force. Let me read it. Services of life insurance business provided or agreed to be provided by the Army or Naval or Air Force Group Insurance Funds to the members of Army, Navy or Air Force respectively under the group insurance schemes of central government. So normally this scheme will be taken by whom? Central government, because all these people are the employees of central government. So if central government has taken a group insurance plan in the name of these people, then whatever premium is paid on that life insurance policy on that GST is exempt. Okay. Next, 29A. Services of life insurance provided or agreed to be provided by the Naval Group Insurance Fund to the person of Coastal Guard who is safeguarding the coastal areas under the group insurance schemes of central government is also exempt, similar to the above. Then 29B. Services of life insurance provided or agreed to be provided by the Central Armed Police Force. Central Armed Police Force, guys. So whatever police are there locally, they are actually managed by central state governments. Whereas here we are talking about Central Armed Police Forces like BSF, CRPF, like that. Uh, Under the Ministry of Home Affairs, which comes under central government, group insurance funds to their members under the group insurance schemes of concerned Central Armed Police Force. Guys, in simple, all this comes under central government. So if central government has taken the group life insurance policy in the name of the respective people, okay, yes, that is here also Coastal Guard. Whatever premium has been paid by central government for the insurance company on that GST is exempt. Okay, sir. Fine. Next, 36. Services of life insurance business provided under the following schemes. Okay, only under the following schemes it is exempt, no matter who took it. Whoever is taking it, they enjoy the exemption on the premium amount. Janshri Bima Yojana, Aam Aadmi Bima Yojana, life micro insurance product as approved by the Insurance Regulatory and Development Authority, having a maximum amount of cover of rupees 2 lakh. Only if the policy amount is up to 2 lakh, exemption is there. So what if it is more than 2 lakh for this policy? It is taxable. Yes. Next. Next one. Varishta Pension Bima Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Jandan Yojana, Pradhan Mantri Vaya Vandan Yojana. Okay. And whoever is offering this scheme, not only LIC, guys, because people believe that insurance company means only LIC. No, no, no. There are number of insurance company like ICICI, SBI, LIC, HDFC. Number of insurance companies are there. Okay. I just named a few. Still, there are many. Okay. So anyone offering this, any of the schemes given here, whatever premium they are charging for this life insurance schemes, GST is exempt on it. Okay. 36 C, D, and E is a new entry, guys. New entry. So please be attentive now. Services of life insurance business provided by an insurer to the insured. Insurer means insurance company. Insured means in whose name the policy is taken. Okay. Where the insured is not a group. If it is a group insurance, it is taxable itself. Okay. But it can be a family group. It can be a family group, but not the other group. What I will explain. Don't worry. Yes. So this is life insurance. Same way health insurance also is there. I have taken here only. Actually, the heading is life insurance. Please don't get confused. But I have added one health here because they both are connected. Both are new. Okay. Services of health insurance business provided by an insurer to the insured, where the insured is not a group. Okay. It should not be a group insurance, but it can be a family group. It cannot be another group. Okay. Fine. Then 36E is telling, if life insurance policy or health insurance policy is taken, assume in the name of an individual or my family members, whatever premium we are paying for an insurance company, it is exempt under GST. It was an offer given by the Prime Minister for the people of the country on Diwali, guys. Last year, Diwali. Yes. Okay, sir. So, what if these policies are reinsured? For example, I have taken the life insurance policy in my name for 10 crore. Insurance company thought, oh, huge risk is there. What if anything happens to Vikas? Then we will end up paying 10 crore. So, they reinsured this policy with another insurance company. So, whatever services the insurance company is offering me, as well as they have reinsured, So, the third insurance company will offer. Okay, let me give an example. Simple. Assume Vikas took an insurance policy with ICICI for 10 crore. ICICI thought it is huge risk, so they reinsured with SBI. So ICICI is providing the insurance services to Vikas. Is it exempt? Yes. They are in turn receiving the insurance services from SBI. Is that also exempt? Yes, guys. Even reinsurance services with respect to whatever is covered in entry 36C or D, both life as well as health, is exempt. Okay, sir. Fine. So here they are told it should not be for a group. So there is an explanation provided for that. What is it? For the removal of doubts, it is hereby clarified that for entry 36C and 36D, this exemption shall apply to a contract of insurance where the insured is an individual or an individual and a family of the said individual. Means there can be a group, but only family group. Okay, fine. And for the purpose of clause A, family shall include all individual insured as the family as per the contract. So in GST, they have not defined who is covered under family. They have told whoever is mentioned as family in the contract of insurance, we will consider them. Okay, for example, listen people. Assume I have taken a life insurance policy or health insurance policy in the name of me, my spouse, children's, or even parents. Whatever premium I am paying for that is exempt from GST. Even though it is a group, as it is a family group, it is completely exempt. Now assume TCS or Infosys or any other private employer took insurance, that is life insurance or health insurance, in the name of all their employees as group insurance. Whatever premium they are paying, is it exempt? No, because it is a group insurance and it is not family group. Sir, employer and employee family? No, no. Got it? Yes, but there is one more twist. Few things were already covered here in 29, 29A and 29B. That is, if group insurance plans are taken by the central government for the people who are working in Indian Army, Navy, Air Force, or Coastal Guard and all, will that be still continued? Yes, guys. So in this cases, even though if it is a group insurance, still whatever premium is paid is fully exempt because it was already there. Even now, it will continue to be there, guys. Is that clear? Yes, sir. So as per this, if anyone else take the group insurance, including the private companies, if they take the insurance in the name of their employees as a group insurance, exemption is not available. Exemption is not available. But one exception is it can be a family group. It can be a family group. And what is family for this purpose means whoever name is included in the contract of insurance as family, they all are covered. Is that clear? Yes, sir. Next, services provided by specified bodies. Very easy, guys. Okay. So, with respect to opening an account and all, if any amount is paid to the respective organization or a fund, then whatever amount you pay for opening an account or administrative fee and all on that GST is exempt. What is it? I will quickly read it. Entry 30. Services provided by the Employees State Insurance Corporation, in short we call it as ESIC, to the person governed under the Employees State Insurance Act 1948 is exempt. Then whatever services are provided by Employees Provident Fund, that is EPF organization, to the persons who are governed under Employees Provident Fund and Miscellaneous Provisions Act is exempt. Then 31A, services by Coal Mines Provident Fund organization to the persons governed by Coal Mines Provident Fund and Miscellaneous Provisions Act 1948. The last one, 31B, services by National Pension System, that is NPS, trust to their members against a consideration in the form of administrative fee. On that administrative fee, GST is exempt, people. Got it? Yes, sir. Fine. Next, general insurance. General insurance is normally taken on the assets or on the goods. Okay. Entry 35. Services of general insurance business provided under the schemes notified by the government. There are number of schemes which are notified. So I will just show you once. It is there. It is not there in my revision book. I will just display it here. Once I display, you guys can just pause and go through the list. So if any of the scheme is purchased on that premium paid, no, GST is exempt on such premium amount. Oh, yes. So just pause the video and go through the list, guys. Sir, should I mug it up? No, no. Just have an idea about it. Okay. Fine. So these are the notified schemes, guys. Next. For the same scheme, what if any reinsurance services are provided? Sir, what if it is reinsured by the insurance company with another insurance company? Even such services are exempt, guys. Okay. For the schemes which are notified as per entry 35. Okay. Next, 36B. It is an amendment. It was an amendment last year. Okay. Services of insurance provided by Motor Vehicles Accident Fund constituted under the section 164B of the Motor Vehicles Act 1988 against contributions made by the insurer out of the premiums collected for third party insurance of motor vehicles. See guys, if I own a motor vehicle, whether it is two-wheeler or four-wheeler, we need to also take third party insurance for which we need to pay premium. If in case, assume we hit that any person on the road, that person for whom we have hit can claim our policy, which is called as third party insurance. So for third party insurance, whatever premium we pay, no, on that GST is exempt. GST is exempt. Next, pension schemes. Entry 37. Services by way of collection of contribution under the Atal Pension Yojana, for which deduction is available in income tax under section 80CCD. So whoever is the person who is collecting from both employer as well as employee, so for their services, they may charge some amount on that GST is exempt, guys. Same way, services by way of collection of contribution under any pension scheme of the respective state governments. Even state governments might have various pension scheme for their employees, that is state government employees. And whoever is providing collection services, whatever amount they charge for their services on that GST is exempt, guys. Okay. Next, services provided by business facilitator or correspondent or the agent appointed by them to a banking company or even insurance companies is exempt here. But it also has some connection to RCM. So be attentive. I will try to connect to RCM also here through the charts. But before that, let us go through the entry first. Services by the following persons in respective capacities. Business facilitator or business correspondent to a banking company with respect to the accounts with respect to rural area branch. So who is the supplier here? Business facilitator or correspondent. And who is the recipient? Banking company. And the services is provided with respect to rural area branch. And this people will help the people to know what are the services provided by the bank, how to open the bank account, how to apply for a loan, or how to operate a ATM, like that, or how to get the credit card, or whatever, guys. With respect to banking services, they will try to provide information or knowledge, especially to the people of rural area. Okay. And sir, what if such services are provided in urban area? It is taxable. Only if it is provided in rural area, it is exempt. Whereas, if you ask me what is the difference between business facilitator and business correspondent, one major difference is business facilitator can enter into transaction on behalf of the bank, whereas bank correspondent will not have that power, guys. Okay. Yes. They can only provide the information about the services provided by the bank to the people. That's all. Okay. Next, by any person as an intermediary to a business facilitator or business correspondent with respect to rural area branch. Okay. Means who is the supplier here? Intermediary. Who is the recipient? Business facilitator or business correspondent. Even such services are exempt? Yes, only if it is with respect to rural area branch. Okay. Last one. This two is with respect to the bank, whereas the last one is with respect to insurance, guys. C. Business facilitator or business correspondent to an insurance company in rural area is exempt, guys. Okay. So as it has connection to RCM also, I am just try to explain through this, guys. So first, let us learn entry 39A and 39B. Okay. Yes. So first, I am taking business correspondent. So is an agent appointed by the bank? Yes. He's not an employee of a bank, because guys, if these people are employees, they would be getting salary, and that is a part of Schedule 3 outside GST. It is neither the supply of goods nor the supply of services. But these people are not employees. They are getting commission. They are like an agent. Okay, sir. So if business correspondent is providing services to a banking company with respect to rural area branch, it is exempt. If it is with respect to urban area branch, it is taxable. But under FCM, business correspondent has to pay GST, because it is nowhere connected in RCM, guys. This part, this is not covered in RCM. Okay, sir. Next. Sir, this business correspondent is not providing direct services, sir. He has appointed one agent. So this agent will provide services to business correspondent, and in turn, he will provide it to banking company. Oh. Now let us talk about this. So agent or intermediary is providing services to a business correspondent with respect to rural area branches exempt. Okay, as per clause B here, it is exempt. Sir, what if it is with respect to urban area branch covered in RCM? So the recipient has to pay GST and a reverse charge mechanism, guys. Okay, sir. Next, coming to business facilitator. So business facilitator providing services to a banking company with respect to rural area branch is exempt. Whereas if it is with respect to urban area branch covered in RCM list, you can go back. You can pause for a moment, go back to RCM list and check it there. If business facilitator is providing services to a banking company, in RCM they didn't tell rural area or urban area, but I have given in green color, last column, if you remember. I mentioned only urban area, because if it is a rural area, it is exempt, given in exemption list. Got it? Yes, sir. So if it is with respect to urban area branch, it is taxable under reverse charge mechanism. So banking company has to pay GST, guys, on whatever commission they are paying to business facilitator. Okay. Next, sir, what if this guy has appointed one agent for him? He is not working directly, so he has appointed one agent for him. Okay, in that case, if it is with respect to rural area branch, exempt. If it is with respect to urban area branch, not covered in RCM, not exempt also. That means it is taxable under FCM, guys. Taxable under FCM. Just keep one thing in mind, guys. If any supply which is not covered under RCM, if it is not exempt, it is understood that it is taxable under FCM, because FCM list is not given in the law. We should know what is covered in RCM, what is covered in exemption. If any particular supply is not covered in both the places, then it is understood that it is taxable under forward charge mechanism, guys. Okay, sir. Then coming to entry 39C, that is with respect to insurance. If business facilitator or business correspondent who is an agent for insurance company provides services with respect to rural area branch, it is exempt. If it is with respect to urban area branch, not covered in RCM list. That means it is taxable under FCM. So the supplier has to pay GST. Sir, what if these people have appointed agent? Then whether it is rural area or urban area branch, it is always taxable under FCM, guys, because this is not covered in RCM also, it is not covered in exemption also. If in case, if they appoint agent, whatever service agent is providing to business facilitator or business correspondent, whether it is with respect to rural area branch or urban area branch, it will be taxable under forward charge mechanism. Okay. Next, services provided to government. To government means government is a recipient here, guys. Okay. Entry 3. Pure services provided to government. Pure services means 100% it is services. No goods is involved. Okay. Pure services excluding the works contract service or other composite supply involving supply of any goods. Means no goods should be involved here. Not even 1%. Okay. Provided to central government, state government or union territory or a local authority by way of any activity in relation to any function entrusted to panchayat or municipality as per the constitution. Okay, means whatever municipality or panchayat was supposed to do as per the constitution, this has been done by whom? Any person, but such services are provided to whom? The central government, state government or union territory. Simple, guys. Assume government has given me a contract with respect to waste management or the drainage cleaning or the installation of street lights, which was supposed to be done by panchayat or municipality as per the constitution. So assume the state government or central government has given me this contract. So whatever services I am providing to the government as per the work which is to be done by panchayat or municipality as per the constitution, for my services, assume I am charging totally 20 lakh. It is exempt from GST, guys. It is exempt from GST. Is that clear? So please be careful. The recipients are the following people. And what services I am providing them is what is supposed to be done by panchayat or municipality as per the constitution, because there are few services or functions which are entrusted to panchayat or municipality. They have to take care of it, especially the local work. Got it? Yes, sir. Fine. Next, 3A. Composite supply. Okay, here only services was there. No, now goods plus services, but goods should be within some limit. What is it? Composite supply of goods and services to government. Composite supply of goods and services in which the value of supply of goods constitutes not more than 25%, that is less than or equal to 25% of the value of the said composite supply provided to central government, state government or union territory or local authority, means the following people are the recipients, by way of in relation to any function entrusted to panchayat or municipality as per the constitution. Okay, sir. Means here it was only services, same to same. Now assume along with services, goods is there. But goods should be within 25%. Okay. So assume government has given me a contract to provide services to them or to the public on behalf of government. Okay. So I am providing services along with goods. Totally I am charging, assume to the government 10 lakh rupees. So for my service, I am charging, for my supply, I am charging totally 10 lakh. I need to give a breakup. As service along with goods is there, I need to give a breakup. Assume for services I am charging 7 lakh, for goods I am charging 3 lakh. 3 lakh out of 10 lakh is for goods, 30%, which is more than 20%. Sorry, more than 25%. It is fully taxable. Entire 10 lakh will be taxable, people. Not only 3 lakh, entire 10 lakh will be taxable. Is that clear? It's always to keep good to keep the goods component less than 25%. So assume now I am providing services, I am providing supply to the government, that is central government, state government or local authority. I am supplying both goods as well as services. I am totally charging 10 lakh, for services 8 lakh, for goods 2 lakh, fully exempt. Because for goods I am charging 2 lakh, which is 20% of 10 lakh, which is within 25%, exempt. Full 10 lakh is exempt. So in simple, guys, when goods along with services are provided, the goods component should be less than or equal to 25%. Or if it is only services, full 100% exempt as per entry 3. 3B. Services provided to government authority by way of. Okay, who is the recipient? Government authority. With respect to what services, sir? Water supply, public health, sanitization conservancy, solid waste management, or some slum improvement and upgradation. Whoever is providing these services to a government authority, they enjoy the exemption, guys. The recipient should be government authority. And who is government authority, government entity and all, we already seen, guys. Okay, at least 90% of the control is with the government. Next, 11A, services provided by fair price shops to central government, state government or union territory by way of sale of food grains, kerosene, sugar, edible oil, etc. under public distribution system, that is PDS, against a consideration in the form of commission or margin. Right? There will be a fair price shops where they distribute the grains or items distributed by the government to a people who are holding the BPL cards and all. Yes, or whoever is eligible for that. Yes. So the person who is in charge of that shop may not be an employee of government. If he is an employee, then obviously he is getting salary part of Schedule 3. Yes, but no. What we are covering here is not an employee. He is just acting as an agent. Maybe once or twice in a month, he will come open that shop and distribute the grains given by the government, and he will close the shop and he will carry with his own work, whatever he is doing in his life. Okay. And for whatever he is doing with respect to the distribution of the items in the fair price shops under the public distribution system, you would be earning it in the form of commission or margin. On that, GST is exempt. On that, GST is exempt, sir. Then 40th, services provided to central government, state government, union territory, okay, under any insurance scheme for which the entire premium is paid by the government, guys. That is central government, state government, or union territory. So whenever a government has taken a policy either for their own assets or maybe for their employees, when the entire premium is paid by government, no matter which scheme it is, the entire premium is exempt from GST, guys. Okay. Sir, what if by chance a part of the premium is paid by the employees? In that case, there is no exemption. As per entry 40, it is not exempt. Because sometimes partly the premium may be paid by employees and partly by, assume, government. Government is the employer. In that case, no exemption. No exemption, guys. Okay, 72. Services provided to central government, state government, or union territory administration under any training program. Okay, what is the services provided? Training. For which 75% or more of the total expenditure is borne by central government, state government, or union territory administration. Okay, assume guys. Now, a state government, Karnataka state government has appointed me to provide training to their employees about income tax filing or how to plan income tax and all. They have just appointed me. And for this, entire cost is borne by government. Assume the total cost is 2 lakh, entire cost is taken care by state government. In that case, whatever amount I am charging for my training services on that, GST is exempt. Is that clear? Yes. Next, let us assume the total cost is 1 lakh, where 50% is borne by government, 50% is paid by employees. In that case, as less than 75% is borne by government, whatever amount I am charging for the my training is liable for GST. Full amount is liable for GST, guys. Got it? Sir, what if it is like 80% is borne by central government and 20% by employees? In that case, whatever amount I am charging for my training is fully exempt, because at least 75% of the expenditure is borne by whom? The government. Any government, that is central, state, or union territory. Got it? Yes. It is clarified that free coaching services provided by coaching institution and NGOs under the central scheme of scholarship for students with disabilities, where 75% or more of the expenditure is borne by the government to the coaching institution. Means government is paying to the coaching institution, where they are offering free coaching to the students. Okay. By way of grant in aid is covered under this entry and hence is exempt from GST, guys. So on that, whatever amount is charged for training is exempt, provided the government has to meet at least 75% of the expenditure. Okay. Then legal services connected to RCM. Connected to RCM. First, let us see what is given in entry 45. Later, I will connect and explain. Services provided by arbitral tribunal or partnership firm of advocates, that is law firm, or an individual as an advocate, that is lawyer, practicing lawyer, including senior advocate by way of legal services. Okay, so they are the suppliers. Now, who is the recipients? Any person other than business entity. Okay, any person other than business entity. Okay, business entity is covered in second part. A business entity with an aggregate turnover of up to such amount in the preceding financial year as makes it eligible for exemption from registration under CGST Act 2017. Means business entities whose aggregate turnover is within threshold limit for registration in the last financial year. For them also it is exempt. Oh. Sir, what if it is more than the threshold limit for registration? Then it is taxable under RCM, guys. The last one. The central government, state government, union territory, local authority, government authority, or government entity. Guys, for the first one and second, the last one. First one and last one, there is no condition. Whereas for business entity, there is a condition. Okay. Note. In addition to the above, legal services provided by a partnership firm of advocates or an individual as an advocate other than senior advocate to an advocates or partnership firm of advocates providing legal services is also exempt, guys. Means if legal services are provided among themselves, that is from lawyer to law firm or law firm to lawyer, it is exempted. But if the supplier is a senior advocate, then it is taxable. Then it is taxable. Oh, I have made one chart for it connecting even RCM. Yeah. If legal services are provided by the arbitral tribunal, individual lawyer or law firm, means they are the supplier. Now let us see who is the recipients. There are three possibilities. If the recipient is a business entity, check what is their aggregate turnover in the last financial year. If it is more than the threshold limit for registration, that is 10 lakh, 20 lakh or 40 lakh as applicable, then in the current year, it is taxable under RCM. Business entity has to pay GST as per RCM. Okay, sir. Sir, what if business entities turnover in the last financial year is within the threshold limit? That means we can call them as unregistered. Yes, in that case, it is exempt. It is exempt as per point 2 year. Okay. And please be careful, we are checking the last year aggregate turnover to decide whether it is exempt in the current year or not. Okay. Next. Sir, what if the recipient is an advocate or firm of advocates? Supplier is also them only, recipient also them. Means like from individual lawyer to law firm or law firm to lawyer, like that. It is exempt. But if the supplier is a senior advocate, then it is taxable under FCM. Because it is not exempt also, it is not covered in RCM list also. So it is understood that it is taxable under forward charge mechanism, guys. The last one, others. Others means other than this two, including central government, state government, union territory, local authority, government authority, or government entity. It is exempt, people. It is exempt, sir. Okay. Next, sponsorship of sports event. Services of by way of sponsorship of sporting event organized by the following people on that GST is exempt. So who are those? By a national sports federation or its affiliated federation where the participating teams or individuals represent any district, state, zone or country, by an association of Indian universities, inter-university sports board, school games federation of India, all India sports council for deaf Paralympic committee of India or special Olympics Bharat. Third, by the Central Civil Services Cultural and Sports Board as part of national games by the Indian Olympic Association or under a Panchayat Yuva Krida all or Khel Abhiyan scheme. This is especially for rural areas or for rural talents. Yes, sir. So, if the sponsorship services are provided for sporting events organized by them, on sponsorship, whatever fees is paid, no, it is fully exempt. Fully exempt. Okay. Next, performance by an artist. Entry 78. Services by an artist by way of performance in folk or classical art forms of music or dance or theatre, if the considerations charged for such performance is not more than 1,50,000 is exempt. Means less than or equal to 150. So what if it is more than 1,50,000? Fully taxable. Fully taxable. And please be careful, this 1,50,000 is per performance. Okay. What if a person has given multiple performance in a year? Then for each performance, you can consider 1,50,000 as a limit, guys. Okay. So few notes are there. Let us read it. The activities by a performing artist in folk or classical art forms of music, dance, or theatre are exempt if consideration does not exceed 1,50,000. However, if the consideration is more than 1,50,000, then entire consideration will be taxable. For example, assume consideration charged for performance is 2 lakh. Entire 2 lakh will be taxable. Entire 2 lakh. Don't reduce 1,50,000 in that case. Okay. Next, second no is in rate. That means taxable. Yes, sir. However, The exemption shall not apply to a service provided by such artist as a brand ambassador. So if they are promoting any brand or product, whatever amount they are charging is fully taxable, guys. And sometimes in the exam, intentionally they will give less than 1,50,000, irrespective of the amount. If the service is as a brand ambassador, it is always taxable. Even if it is 50,000, 1 lakh, 2 lakh, whatever is the amount, fully taxable. If you are promoting any brand as an artist. Last one. Further, all other activities by an artist in other art forms, example, Western music or dance, modern theatres, performance of an actors in films or television serials would be taxable. Okay. Only these forms are exempt, guys, including theatrical performance. Theatrical means not the film theater. Okay. Yes. That is with respect to any drama or acting. There will be a theaters, no? That one. Yes. Similarly, activities of artists in still art forms like painting, sculpture making, etc. are taxable under GST. Okay. Next, skill development services. Nothing much to explain here, guys. They have given the list of few training services or skill development services which are exempt. We'll quickly go through. Entry 69. Any services provided by means the supplier is the following people. Supplier is the following people. Who are those? The National Skill Development Corporation set up by the Government of India, the National Council for Vocational Education and Training, an awarding body recognized by the National Council for vocational means professional, guys, education and training, an assessment agency, assessment means conducting test or exams, an assessment agency recognized by the National Council for Vocational Education and Training, a training body accredited with an awarding body that is recognized by the National Council for Vocational Education and Training. The last one is the recent amendment. A training partner approved by the National Skill Development Corporation. So the following people are the supplier. Okay, what are they providing? In relation to the National Skill Development Program or any other scheme implemented by the National Skill Development Corporation or a vocational skill development course under the National Skill Certification and Monetary Reward Scheme or any national skill qualification framework aligned qualification or skill in respect of which a national council or for vocational education and training has approved a qualification package. Sir, should I mug up this list and all? No, guys. You just have an idea about it because in the question, if they have used any of this, no, where you have an idea that, oh, the following service is exempt. Accordingly, you exempt. Got it? Yes. Not so important, but still part of your syllabus, so good to know. Entry 70. Services of assessing bodies empaneled centrally by the Directorate General of Training, Ministry of Skill Development and Entrepreneurship by way of assessments under the Skill Development Initiative Scheme is exempt, guys. Okay, assessment or assessing bodies is nothing but those who are conducting tests or examinations. 71. Services provided by training providers, that is project implementation agencies under Deen Dayal Upadhyaya Gramin Kaushalya Yojana, that is for rural areas or rural talents, implemented by the Ministry of Rural Development, Government of India by way of offering skill or vocational training courses certified by the National Council for Vocational Education and Training. This is mainly targeted to rural talents, guys. In order to increase their employment opportunities, the government has taken this initiative. Oh, next, right to admission to various events. Entry 79. Services by way of admission to museum, national park, wildlife sanctuary, tiger reserve or zoo is fully exempt irrespective of the amount charged as entry fees, guys. It is fully exempt. No monetary limit. Okay. 79A. Services by way of admission to a protected monument so declared under the Ancient Monuments and Archaeological Sites and Remains Act 1958 or any of the state acts for the time being in force, like any palace or anywhere, they would have protected what was used by the previous Rajas, Ranis and all. So there, if they are charging any entry fee, is it exempt from GST? Yes. Then entry 81 is exempt but subject to monetary limit. Subject to monetary limit, what is it? First we will see. First, we will see what are the things covered here, then what is the monetary limit. Services by way of right to admission to means on the entry fee, GST is exempt for the following events. What are those? Circus, dance, or theatrical performance, including drama or ballet, award function, concert, or pageant, or musical performance or any sporting event other than recognized sporting event. So recognized sporting event is excluded from B, whereas C is that only. Recognized sporting event, the last one, planetarium. It is a place where the stars and all this would be displayed, guys. The planets, stars and all. Okay, for education purpose, especially helpful for children's. Okay. So for any of this event or the place, whatever amount is charged as admission or entry fee, GST is exempt provided it is 500 or less per person. So assume entry fees is 200, 400 or 450, it is exempt. So what if it is 600? Entire 600 would be liable for GST tax. So that is what is given here. For all this four, A, B, C, D. Means entire 81, the limit is this one, entry 81. Where the consideration for the right to admission to the events or places as referred to in items A, B, C, D of entry 81 above is not more than 500. That is less than or equal to 500. If it is more than 500, fully taxable. Okay, sir. Next, services by an unincorporated body or a non-profit entity. So there are two lists here, 77 and 77A. What is it? We will see. Services by an unincorporated body or a non-profit entity registered under any law to its own members. Okay, so the recipient is members. By way of reimbursement of charges or share of contribution as a trade union, it is a union of employees, guys, which is formed to protect their interest, especially against the employers. Okay. For the provision of carrying out any activity which is exempt from levy of GST, like charitable or educational, healthcare, or even agricultural, like that. Or up to an amount of 7,500. Okay, guys, for A and B, there is no threshold limits. There is no monetary limit. Whereas for C, up to an amount of 7,500 per month per member for sourcing of goods or services from a third person for the common use of its members in the housing society or residential complex. Guys, in a housing society or residential complex, there will be an association. Okay, like in flats, apartments, and all. Oh. So that association would be collecting a monthly maintenance from their residents. If it is up to 7,500 per month per member or per house, it is exempt. If it is more than that, assume the monthly maintenance is 10,000, fully taxable. Fully taxable. And there is a clarification given. Sir, what if one person owns more than one house in the same society? Then for each house, the limit is 7,500 per month. Got it? Yes. Then 77A. Services provided by an unincorporated body or a non-profit entity registered under any law for the time being in force engaged in what? Activities relating to welfare of industrial or agricultural labor or farmers, or guys, there are various unions formed by the agriculturists or farmers or industry people for the respective industries. Yes. Or for the promotion of trade, commerce, industry, or agriculture, arts, science, literature, culture, sports, education, social welfare, charitable activities, and protection of environment to its members against a consideration in the form of membership fee up to 1,000 rupees per member per year. So if they are charging membership fees for their members, if it is up to 1,000 rupees per year per member, exempt. If it is more than that, fully taxed. Fully taxable, guys. Yes, the last list, other exempt services. So here also the number of exemption is more here, but all others, whatever is not covered in the any of the above category, I have put it here. So what are those? One by one. Entry 2. Services by way of transfer of a going concern, that is a business, as a whole or independent part thereof is exempt, guys. No matter who is the transferor, who is the recipient, what is the consideration, it is always fully exempt. It is always fully exempt. Okay. 12. Connected to RCM also. 12. Important. Services by way of renting of residential dwelling for use as residence is exempt, except where the residential dwelling is rented to a registered person. Means if a tenant is a registered person, then it is taxable under RCM. That means exemption is given only when the tenant is unregistered. And it is a residential dwelling let out for what purpose? Residential purpose. Okay. So renting of residential dwelling for residential purpose to an unregistered tenant is exempt. Okay, sir. Then there is an explanation here. Important. Pay attention. What is this explanation? Let me explain. Guys, assume I am registered under GST. Actually, I am registered. So for my profession, I am registered under GST and I am acting as a sole proprietor. Okay. Now I am taking a house for rent in my personal capacity to stay there along with my family members. So as I am a tenant who is registered under GST, is RCM applicable? No, they told it is not. If a tenant is a sole proprietor who is registered under GST for his profession or business, and if the house is taken on rent for his personal use, that is in personal capacity, then RCM is not applicable. Then RCM is not applicable. That is what is given in the explanation, guys. Got it? Yes, sir. Next, sir, what if partnership firm is registered under GST and if they have taken any residential house for the residence of their partners? Is it exempt? No, no, it is taxable. In the hands of partnership firm under RCM, it is taxable. Next, assume company. Company is registered under GST. They have taken a residential house for the residence of their employees or members. Is it exempt? No. Please be careful. Here, the as per explanation, exemption is given only for sole proprietor, guys, who is registered under GST for his business or profession, but he has taken the house in his personal capacity for residence. In that case, will he enjoy the exemption? Yes, he will enjoy the exemption. Okay. Next. So here there is a more clarity given, but I will just try to explain it through a chart. Yeah. Observe, I have made one chart. Renting of residential dwelling. For what purpose? Guys, normally residential dwelling will be let out for residential purpose only, but it can be let out even for commercial purpose. Like 1 BHK, 2 BHK is let out for office purpose. Yes, it can happen. Okay, there are few offices which are run in the 1 BHK home or 2 BHK home like that. Okay, yes. Okay. So if renting of residential housing is for residential purpose, check who is the tenant. Is he registered under GST? If recipient is registered under GST, taxable under RCM. No, no, sir, tenant is not registered under GST, then it is exempt. Okay, that is what we just now learned. Okay, renting of residential dwelling for residential purpose. When tenant is not registered, it is exempt. If tenant is registered, RCM. Got it? Yes. Sir, what if residential dwelling is let out for a commercial purpose? Then check who is the tenant, whether he is registered. If tenant is registered, taxable under RCM. No, sir, tenant is not registered. Then it is not covered in exemption because it is not for residential purpose. It is for commercial purpose. In that case, it is taxable under FCM. So the supplier has to pay GST. That is the owner, because this will not fall under RCM also. Not fall under RCM also, not fall under, not, we will not fall under exemption also means taxable under FCM, guys. Is that clear? And if you remember, for this, I had explained it while covering RCM, guys. And I also made you to write for commercial or residential purpose. If tenant is registered, then it is taxable under RCM because there the purpose is not mentioned while discussing RCM, guys. Got it? Yes, sir. So if you want, you can just pause the video and take down this, make a note of this. Okay. So that is what explanation I have given you. You can also go through. Now coming to explanation 2. Nothing contained in this entry shall apply to. Okay. Means entry 12 is not applicable for the following. That is accommodation services for the students in the students' residences or accommodation services provided by the hostels, camps, paying guest accommodation, that is PG and like. Okay. So they don't enjoy the exemption as per entry 12. But for them, there is a separate entry, guys, 12A. Let us see that. So you can just draw the arrow mark here for this. It is excluded from entry 12, but there is a separate entry for it. Supply of accommodation services having value of supply less than or equal to 20,000 per person per month, provided that the accommodation service is supplied for a minimum continuous period of 90 days. That is minimum 3 months. So if accommodation is provided in hostel or PG for minimum 3 months, and if the monthly charges is 20,000 or less, it is exempt. Sir, what if the charges is more than 20,000? Fully taxable. Sir, what if accommodation is provided only for 1 month or 2 months? Assume you are going for an ITT orientation. I'm staying there only for 15 days, 1 month. In that case, sir, whatever amount is charged, even though it is less than 20,000, still taxable? Huh? Yes. Because here they are telling exemption is provided or available only if it is for a continuous stay of minimum 90 days. 90 or more. That is more than or equal to 3 months. Okay. Next. 19C. Satellite launch services is exempt. So Indian scientists are doing really good. ISRO, so for them whatever services they are providing with respect to satellite launch services is fully exempt, guys. 22, services by way of giving on hire, that is renting. Okay. To a state transport undertaking, that is STU, a motor vehicle meant to carry more than 12 passengers. More than 12 passengers means we can consider it as a bus. Yes. Assume I'm letting out, I own a bus. I'm letting out my bus to a state transport undertaking. Assume KSRTC. KSRTC is a state government undertaking for Karnataka state. Yes, sir. Even in Kerala also we call it by same name. So in that case, whatever rent I am charging for KSRTC, it is exempt from GST. Okay, and the bus which is having a capacity of more than 12 passengers can be petrol, diesel, or electric, anything here. Okay, next, AA. To a local authority, an electrically operated vehicle, that is EOV, meant to carry more than 12 passengers. So here they are clearly telling electric vehicle. And to carry more than 12 passengers means again we can consider it as bus only. That is, but electric bus. Okay. Local authority. Let me take an example of, sir, assume now, we have a local authority who is operating BMTC in Bangalore. BMTC. It is operated by a local authority. Okay, sir. In Bangalore area. Yes. So I am letting out my electric bus to BMTC, for which I am charging the rent. On that GST is exempt. Sir, what if it is a diesel bus or petrol bus? Then it is taxable, because here it is covered only electrically operated vehicles, guys. Okay, and they didn't even use the word bus. They told seating capacity is more than 12 passengers. So I am indirectly considering it as bus only. Got it? Yes. Next, to a goods transport agency, a means of transportation of goods. Okay. Next, C. Motor vehicle for transport of students, faculty, and staff, to a person providing services of transportation of students, faculty, and staff to an educational institution providing services by way of preschool education. Okay. And education up to higher secondary school or equivalent, guys. That is first category of educational institution, who is providing up to 12th standard or plus 2. Plus 2. Okay, I will try to explain this. Pay attention. Yeah, both of this. First, I will explain clause B, then C, guys. First, clause B. Clause B. Assume GTA is providing transportation of goods services by road to a recipient. Is it taxable or not? Depends on who is the recipient. If the recipient is a specified recipients covered in any one of them, given in the last column in RCM, hope you remember. First option is pay tax under FCM, supplier has to pay GST. If not, then it is taxable under RCM, recipient has to pay. Whereas if it is other than specified recipients, it is exempt, given in exemption list. Okay, this is for the services provided by GTA to the recipients. Now assume GTA doesn't own the vehicle. They are taking the vehicle on rent to provide transportation services to the recipient. So now assume transportation company is giving the motor vehicle on rent to GTA, goods carriage. Okay, so they are giving goods vehicle on rent to GTA, for which they are charging rent. On that also they are telling it is exempt. That is what is covered in here. If a person is renting out the goods carriage to or goods vehicle to whom? To GTA, then whatever rent they are charging on that GST is exempt. On that GST is exempt, guys. Then the last one. Now assume there is a supplier who is providing transportation services of students, faculty, and staff to a school. School means up to 12th standard. Okay, yes. Such services being an input services to a school is exempt. Okay, so he is a supplier and the school is a recipient, it is exempt. Now, what if this supplier doesn't own the vehicle? He doesn't own the vehicle. He is taking the vehicle on rent to provide transportation service to whom? School. Whatever transportation service he is providing to school is exempt. Same way, whatever renting of motor vehicle is provided by travels to this supplier is also exempt. On whatever rent the travels is charging to the supplier, it is exempt. And for this supplier, he will be the supplier and he is the recipient. Is that exempt from GST? Yes, provided this is a school. Sir, what if this is a college or university or professional education institution? Then this is not exempt, guys. When this is not exempt, even this will not be exempt. Hope you got it. So this is an input service to a first category of educational institution, which is provided by way of transportation of students, faculty, and staff. So for an education institution as an input service, it is exempt. Now, if the supplier is owning the vehicle, he himself is providing it, it is exempt. But what if he is taking the vehicle on rent and then providing transportation services to the school? Even in that case, on whatever rent paid by him, GST is exempt. Okay. Next, 23. Services by way of access to a road or a bridge on payment of toll charges. On toll charges, GST is exempt. Next, 25. Transmission distribution of electricity by an electricity transmission or distribution utility is exempt, guys. But the following were excluded from entry 25. For that, they have added a separate entry 25A. 25A. I repeat, the following were not a part of entry 25. That means it was taxable. But later they exempted that also by way of entry 25A. What is it? I will read it. Supply of services by way of providing metering equipment on rent, testing for meters, transformers, capacitors, etc., releasing electricity connection, shifting of meters, service lines, issuing duplicate bills, etc., which are incidental or ancillary to the supply of transmission or distribution of electricity, provided by the electricity transmission or distribution utilities to their consumer, are exempt. Clear? Yes. So, transmission or distribution of electricity was exempt as per entry 25. And in entry 25, they told for the following exemption is not applicable as per entry 25. But through entry 25A, they exempted the following. The following is now covered in entry 25A, guys. That means as on today, it is exempt, huh? Yes. Next, 44. Services provided by an incubator is nothing but the entrepreneur, the technology based entrepreneur. In fact, up to a total turnover of 50 lakh in a financial year is exempt, subject to the following conditions. Namely, the total turnover had not exceeded 50 lakh during the preceding financial year. Okay. In the last year, if the aggregate turnover or total turnover is within 50 lakh, in the current year, they will enjoy exemption up to 50 lakh. Okay. And a period of 3 years has not elapsed from the date of entering into an agreement as an incubator. Means maximum exemption is for 3 years, guys. Okay. So who is actually incubating? In simple, I told you entrepreneur. If you still want to know in detail, I have given it in my provision book. Just a minute, I will open it. Yeah, I will just display. You guys can just pause. Okay, I will only read it once. At least I will read. Incubating means an entrepreneur located within the premises of Technology Business Incubator, that is TBI in short, Science and Technology Entrepreneurship Park, that is STEP in short, recognized by the National Science and Technology Entrepreneurship Development Board of the Department of Science and Technology, Government of India. In short, we call it as NSTEDB. And who has entered into an agreement with TBI or STEP, which we covered here, to enable himself to develop and produce a high-tech and innovative products, that is tech-based products, guys. Okay, so fine. Let me come back to this. Next, 44A, research and development services against a consideration received in the form of grant supplied by, means the following people are providing research and development services for which in return they are getting what? Grant. On that grant, GST is exempt, guys. Okay. Who is a supplier? The government entity or a research association, university, college, or other institution notified under clause 2(3) of subsection 1 of section 35 of Income Tax Act. So if the following people are providing research and development services for which they are getting grants, it is exempt from GST, guys. But the condition is they should be notified. Notified in the sense, sir, what is it? They should be approved, guys, to do research. Even in income tax under PGBP head, we would have learned, if I am contributing to the following people for research, and if they are approved to do research, even though it is not related to my business, I can claim deduction under the head PGBP as if it is my business expenditure, provided I am following optional scheme. If I am following default scheme, then it is blocked, not available. Default scheme under section 115 BAC, if assessee is following, then contribution to outsiders for research purpose is not available, guys, as deduction. Correct? That is under section 35 of Income Tax Act under the head PGBP. So there the condition should be, for whomever we are giving the contribution, they should be approved to do research. Here also they are using the word notified, which is nothing but approved. Okay. Next, 48. Taxable services provided are to be provided by the TBI or STEP recognized by NSTEDB, which we already saw, guys, the full form, or the bio incubators recognized by the Biotechnology Industry Research and Assistance Control under the Department of Biotechnology, Government of India is exempt. Okay. Next. So whatever services. So here we saw services provided by incubative, that is the entrepreneur is exempt. Whereas here, whatever services are provided by TBI or STEP is exempt. Okay. Next, 49. Services by way of collecting or providing news by an independent journalist who is not an employee. Press Trust of India or United Nations News of India. They are working independently. Whatever news they collect, they give it to the news channel for which they get paid. On that GST is exempt. Okay, sir. Next, 50. Services of public libraries by way of lending of books, publications, or any other knowledge enhancement content or material. So, for lending the books, whatever nominal amount the public libraries charge, on that GST is exempt. Then 52. Services by an organizer to any person in respect of business exhibition held outside India. Sir, what if business exhibition is held in India? Then whatever services are provided by the organizer to organize that event, it will be taxable. Only if the business exhibition is held outside India, then it is exempt, guys. Okay. Next, 59. Services by a foreign diplomatic mission located in India is exempt, guys. So they are representing their home country but providing services in India but for their home country. Even in income tax, for them, few exemptions are given under salary head, like allowances, perquisites, and all. Correct? Yes, sir. So here also it is exempt. 65A. Services by way of providing information under the RTI Act, that is Right to Information. Now you guys can apply for a copies of your answer sheets or your answer booklets through RTI where some nominal amount would be charged. On that GST is exempt, guys. Okay. Next. 68. Services provided to recognized sports body means they are the recipients. Okay. So who is the supplier? By an individual as a player, referee, umpire, coach, or team manager for participation in the sporting event organized by recognized sports body. So the following people are the supplier. Okay. Who is the recipient? Recognized sports body. Or another recognized sports body means recognized sports body is giving services to another recognized sports body. Okay. However, services provided by an individual such as selectors, commentators, curators, technical experts are taxable, guys. Got it? Curators means those who are take care of the pitch. Okay. Yes. Who will look after the pitch, guys. Okay. So selectors, commentators, and also Ravi Sastry, Arsha Bogle, and all whatever services they provide, is it taxable or exempt? Taxable. Whereas the players, referee, umpire, all those people enjoy the exemption? Yes. Then the service of a player to a franchise, this is mainly targeted to IPL, to a franchisee which is not a recognized sports body is taxable, guys. They don't enjoy exemption. Okay. Only if they're representing the nation or the country, they enjoy the exemption, but not any particular franchisee. They are not recognized sports body, guys. Okay. Recognized sports body means what are those? The Indian Olympic Association, Sports Authority of India, a national sports federation recognized by Ministry of Sports and Youth Affairs of the central government and its affiliate federations. National Sports Promotion Organization recognized by Ministry of Sports and Youth Affairs of central government. Yes. Okay. The last one, people. Services by way of public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinal, or toilets. Even for this, a small amount might be charged. You might be seen, especially in public toilet. In front of public toilet, there will be one person. You will tell 5, 10, some amount they will be collecting. On that, will they collect GST also? No, it is exempt. It is exempt, guys. Yes, sir. Fine. So we are done with the list of services which is exempt under GST, guys. So the same list is exempt both under CGST Act as well as IGST Act. So we have covered section 11 of CGST Act along with section 6 of IGST Act. So we have one more new section, that is 11A, where it is giving power to the government. Guys, assume whatever services I am providing is actually taxable. But I believe that it is exempt. Not only me, entire industry, whoever is operating in the same business, they believe that whatever we are providing is exempt. And it is generally followed in the industry that what services we are providing is exempt. We have wrongly understood the law, maybe like that. Yes. But later we received a notice from the department telling we are supposed to pay tax on whatever services we are providing, and the amount of GST along with interest penalty and all is froze together. After receiving the notice, we are shocked. Entire industry is shocked. So now we are not able to pay so much of amount. We don't have so much of funds. So can we request the government to waive off this? Yes. As it is like in good faith, we have misunderstood the law. And I alone didn't misunderstood. It is a general practice followed in the industry. In that case, government can waive off our past defaults, guys. And they can tell from now on, please start paying GST. So they can tell us, forget about your past, going forward, please pay GST in simple. Or else it can be like this also, guys. For example, whatever outward supply I'm providing, the actual GST rate was 18%. But I did a wrong classification and I have taken the rate of GST applicable is 5%. And the entire industry was following the same rate, 5%. But later department sent a notice telling, no, no, what you're supposed to pay is 18% and not 5%. So for the differential amount along with interest penalty, they sent a notice. We are shocked. So now can we request the government telling, sir, please waive off our past penalties along with GST liability so that going forward we will pay at 18%? Yes. And obviously anyone who requests, government may not sanction only if they feel that genuinely we had missed out. We have misinterpreted the law or classifications. In that case, government can waive off our default tax. Is that clear? And actually, recent time, few months back, there were notices served on the bakery owners in Bangalore and many other small vendors also telling you have received more than 20 lakh, 40 lakh. So you're supposed to get registered under GST. And till now you are not got registered. Till now you are not registered under GST. So you're supposed to pay so much of GST along with interest, late fee, penalty. So much of crores together. Notice were served. And all these bakery owners and small vendors were like, sir, what do we do? Even if I sell everything, whatever I own, I will not be able to pay so much amount. So they requested the government. Later, government told, okay, we will waive it off. But now, from now, please register under GST and start paying GST. And during that time, many people wished to not receive any payment through even UPI. They were telling, please pay in cash. Please pay in currency notes and the. Yes. So this is the power given to the government under section 11A. But please be careful, government will use this power only in genuine cases, not always. Assume a person has fraudulently paid less GST or he has not paid. In that case, will government use this power? No, they will tell you how to pay it. If not, we will put you for free boarding and lodging, imprisonment. Yes, got it. Yes, guys. So this is all about the exemptions under GST. Yes, I agree. We have taken so much of time, but the content is like that, guys. So I want you guys to just be thorough with all this list, and it would be very easy for you to score marks in the exam. After this, just go through the questions. So go through the questions from my question bank. You will be able to answer each and every question, guys. I already given along with the solutions, and please be careful. Don't simply write in the exam taxable. You need to explain it. How to explain also I have given in my solutions, guys. So take care. Yes, students, now we will revise the place of supply provisions. Anything we learn in this chapter, that is the place of supply or even the concept of supply, is a part of IGST Act, guys. So before we learn the place of supply provision, first we should know why do we require the place of supply? To decide the nature of supply, guys. That is the concept of supply, whether the supply is intrastate or interstate. Accordingly, what tax has to be levied under GST will be decided. The concept of supply, or we also call it as nature of supply, is also a part of IGST Act. Section 7 of IGST Act talks about the interstate supply. What is interstate supply, sir? Where the location of supplier and place of supply is in two different states or two different union territories or one state or one union territory. We call it as interstate supply. Along with that, import and export will always be called as interstate supply. Then one special thing under GST. Guys, under GST, special economic zone, that is SEZ, is considered to be a location outside India. Even though it is actually a part of India, or even though it might be within the same state, but still it will be considered as a location outside India only for GST purpose. So if I am a business who is having any branch or unit in SEZ, then I need to take separate registration for it. Or else, if I am a SEZ developer, means assume I am a real estate developer, the government has declared any particular area as SEZ and they want me to develop that area so that companies come and operate there. So I am called as SEZ developer. And for me also, under GST, registration is mandatory. I need to take separate registration. Yes, sir. Now coming to the concept of supply. Anything supplied to or by SEZ developer or SEZ unit is always interstate supply, guys. Anything going to them or anything coming from them is treated as interstate supply. And in case of interstate supply, what would be levied, people? IGST would be levied and collected by the central government, but half of it will be shared with the destination state. Yes, sir. Then coming to what is intra-state supply is given in section 8 of IGST Act. Very easy. Sir, when location of supplier and place of supply is in the same state or same union territory, we call it as intra-state supply. And in case of intra-state supply, if it is within the state, we levy CGST and SGST. If it is within the union territory, then we levy CGST along with UTGST, guys. All this we have already learned, nothing new. But anyway, before we get into the place of supply, it is good to know why do we require place of supply. Yes. Then section 9 of IGST Act is telling if the location of supplier or place of supply is in territorial water, then we need to consider that the location of supplier or place of supply is in the nearest coastal state or union territory, whichever is closest or nearest to the baseline. Baseline, guys. Yes, sir. Now coming to the place of supply. So we require place of supply to decide the nature of supply. Actually, there are two things which we need to know. What is it? The location of supplier and place of supply. Location of supplier means wherever the supplier is registered, guys. Yes, sir. What about place of supply? Place of supply means actually where the goods is consumed or where the services are utilized. Okay. And GST is called as what? Consumption based tax or destination based consumption tax. So the revenue has to go, that is the tax revenue has to go to the destination state. So that is why the place of supply will play a major role. The government should know, that is especially the central government, when they levy and collect the IGST, they should know with whom they have to share that revenue. So for that, place of supply is very important. Or even to know, should I levy CGST, SGST or should I levy IGST? The place of supply plays a important role, guys. And the place of supply provisions are separately covered for goods and services. Yes, first we will learn for goods, then we will learn for services. Totally there are 4 sections. 2 sections talks about place of supply for goods and 2 sections talks about the place of supply for services. But what is covered in your syllabus is only 2 sections. One is for goods, one is for services. So we will see, guys. Yeah. Now first we'll learn section 10, which talks about the place of supply of goods other than supply of goods imported into or exported from India. If goods are imported or exported, then the place of supply for that goods will be decided as per section 11. And section 11 is not a part of your syllabus, guys. Got it? So whatever we are deciding the place of supply is with respect to domestic transactions. Okay, in simple, other than import and export. Yes, sir. So there are various scenarios. I have covered everything here. So please pay attention. Look here, look here. Hello. Yes. First, section 10(1)(a), where supply involves movement of goods. For example, assume I am supplying goods to you. So there is a movement of goods from my place to your place. So what is the place of supply? Wherever the movement of goods terminates, normally in your place. In simple, wherever it is delivered. Wherever it is delivered. Yes, sir. So 10(1)(a) I have covered. Now let me move to 10(1)(c). Later I will come to 10(1)(b), where there is no movement of goods in a supply. For example, you will go to a mall or you will go to any showroom and purchase the goods there. So is there a movement? No. After you purchase, you will carry it to your place. But from supplier to recipient, is there a movement? No. Or else, assume goods are already in your place. Goods are already in your place, but now you are purchasing it. For example, you have taken a building on rent where there is a fan, AC, everything. Now you felt that let me buy this fan, let me buy this AC, which is already in your place. So is there a movement of goods from supplier to you? No, no. In that case, what is the place of supply? The place of supply would be the location of such goods at the time of delivery to the recipient, guys. At the time of delivery. Normally, especially when you go to showroom and all, assume I went to Tata Chromo and purchased a laptop. So delivery will be given immediately. Yes. So they will issue me the invoice, deliver the goods, and immediately I need to make the payment. Yes. So wherever it is delivered, that is the place of supply, guys. Oh, now coming back to 10.1b. So we have seen when there is movement, when there is no movement. Next, 10.1b. Where the goods are delivered to the recipient or any other person on the direction of third party. We call this as bill to ship to transaction. Okay. So what is the place of supply? Place of supply of such goods shall be the principal place of business of the third party who is considered to be a deemed recipient. So I will try to explain this with an example. Yes, pay attention. Assume Mr. A ordered the goods with B to deliver it to C. So who is the person who ordered for the goods, who originated this transaction? A. So for B is the actual supplier. For B, who is the recipient, even though physically goods are delivered to C, for B, A is a customer. So he will send the bill or invoice to A, whereas he will ship the goods to C. So we call it as bill to ship to transaction, bill to ship to. Okay. So physically goods are received by C, but for GST purpose, we consider Mr. A as deemed recipient. That is as if he has received the goods. As if he has received the goods. Yes. And the place of supply provisions is telling the principal place of business of Mr. A is considered to be the place of supply. For the supply between whom? A and B. What is the place of supply? The principal place of business of the deemed recipient, who is A. Got it? Yes. And there is actually one more supply between A to C. Why did A ask B to deliver the goods to C? C will be A's customer. Yes. So there is one more supply between A to C. For that, what is the place of supply, sir? As there was a movement of goods, wherever the movement of goods will terminate, that is C's place, that is considered as place of supply as per section 10.1a. This is for the supply between A and C, guys. A and C, but this is as per 10.1a. I'm just covering that also. But what we just now learned is with respect to the goods which is ordered by A with B to deliver it to C, guys. So as per section 10.1b, the principal place of business of Mr. A, who is a deemed recipient, is the place of supply. Is that clear? Yes. See, I have just explained this part also. If they have asked you to explain in the exam, you are explaining. If not, you can ignore this transaction. Got it? Yes, sir. Yeah, let us continue. Next, 10.1ca, where an unregistered person purchases the goods over the counter, that is OTC, in one state and thereafter transport the goods to another state. In that case, the address of the unregistered person in the invoice will be considered as the place of supply. Address means should complete address be given, sir? No. Even if the name of the state is mentioned, it is enough. Even if the name of the state is mentioned, it is enough. Assume you are an unregistered person. You are coming to a Bangalore. In Bangalore, you purchase some goods over the counter and you are taking it to your state. And assuming you are outside Karnataka. Yes. So you are coming, assume from Andhra Pradesh. You are coming from Andhra Pradesh to Bangalore. You are purchasing the goods over the counter and you are taking back these goods to your state. And in the invoice, even if Andhra Pradesh is mentioned, that is the place of supply. Sir, what if nothing is mentioned in the invoice? Then, if address of the unregistered person is not recorded in the invoice, then the location of supplier will be the place of supply. Location of supplier and place of supply. Place of supply is also location of supplier. In that case, it will be intrastate supply, guys. See, in few cases, the location of supplier will be considered as place of supply. And in that case, it is implied that it is an intrastate supply because location of supplier and place of supply, which is again a location of supplier, is in the same state, guys. Okay, sir. And there is also one clarification here. Let me just read it. In case of supply of goods to an unregistered person, okay, that is B2C, where the billing address and delivery address are different, the supplier may record the delivery address as the address of the recipient on the invoice for the purpose of determination of place of supply of the said supply of goods. Let me give a simple example. Assume you are an unregistered person. You are ordering on Amazon a goods to be delivered to me in Karnataka. You are from Tamil Nadu. So you ordered a goods on Amazon or Flipkart to be delivered it to me. So invoice address, assume you are given your address, Tamil Nadu address, whereas delivery address is my address, that is Karnataka. So in that case, the place of supply would be delivery address, guys. So place of supply will be Karnataka. Hope you got it. Yes, sir. Next, 10.1D. Where the goods are installed or assembled at site, then the place of supply will be wherever it is assembled or installed, guys. For example, assume I have ordered for a AC to be installed in my office, or else I have ordered for a machinery which has to be installed in my factory. Wherever it is getting installed, that is my office or factory, that would be the place of supply. And don't worry, for all this there will be a hint given in the question, guys, that it has to be installed in so and so place and all. Accordingly, wherever the goods has to be installed, then or assembled, then consider that place as the place of supply. Okay. Then 10.1E, where the goods are supplied on a board, a conveyance. That is, during travel, you have purchased any goods. During the travel, during the journey, you have purchased any goods. Assume you are going in train. In your journey, you have purchased some food items or any other goods like books, or even you are going through flight. In the journey, you have purchased any item. In that case, can we so see where it is sold, where it is consumed and all? No. Wherever that goods was taken on board, that is the place of supply, guys. So you can see here, location where such goods are taken on board is the place of supply, and not where they are sold or where they are consumed, because that is difficult to decide, especially when you are in a journey. Okay, so this is all about the place of supply of goods in case of domestic transactions. If in case, if you cannot decide the place of supply as per any of the above provisions, then section 10 subsection 2 is telling decide as per the rules. Decide as per the rules. This is like a last option. If you cannot decide as per any of the above provisions as per section 10.1, then 10.2 is telling decide as per the rules. And rules is not a part of your syllabus, guys. Yes, sir. Then I told you 11, which talks about import and export of goods. It is also not a part of your syllabus. Yes. And for each of this, guys, in my provision book, I have given number of illustrations. I will just show you. If you also have my provision book, you just open it. If not, I will show you. Don't worry. Yes. So you can see here. If you want, you can pause for a moment and you can go through it. See, for each of the case, I have given the illustrations, guys. Okay, I will just display it now. So what I want you guys to is just pause the video and go through it one by one quickly. Quickly, go through. Don't waste time. Because when you go, read the provisions along with the case or an example or illustration, that will give you more clarity. That is why I'm just showing you all this. Yes, now we will move for services, guys. Now we will see what is the place of supply for services, where the location of supplier as well as the location of recipient is in India. It is as per section 12. Sir, what if any one is outside India? For example, location of supplier or location of recipient, if it is outside India, then we need to decide the place of supply for services as per section 13. and section 13 is not a part of your syllabus. Feel happy about it. Section 13 is not a part of your syllabus, guys. Okay. Now, before we learn section 12, I have just given a student's note here. Guys, here it is very easy for services. There are a number of different cases, but most of them will fall under one criteria. There is a one presumption here. What is it, sir? If it is a B2B supply, if it is a B2B supply, then what would be the place of supply means the location of recipient, because the recipient is registered. Obviously, the supplier knows the place of the location of recipient. That would be the place of supply. Okay, sir. Sir, what if it is B2C supply? B2C means the recipient is not registered. Recipient is not registered. Still, you can look for location of recipient if it is available. No, sir, it is not available. Then you can take the location of supplier, guys. Then you can take the location of supplier. Yes, I will just read it. You can see here. The default presumption for place of supply in respect of registered recipients, that is B2B supply, that is supply of services, is the location of such person, that is the recipient. Since the recipient is registered, address of the recipient is always there, and the same can be taken as a proxy for place of supply. Okay, sir. Then the default presumption for place of supply in respect of unregistered recipient, that is B2C supply of services, is also the location of recipient. First choice is location of recipient. If that is not available, then only we will take the location of supplier, guys. Location of supplier. So in simple, if I have to tell, I have given it here. You can see if it is a B2B supply where recipient is registered, location of recipient fixed. No, sir, it is a B2C supply. Still look for location of recipient if available. If not, then location of supplier. Got it? Yes, sir. Fine. So now let us go and read the section. There are a number of cases under this, guys. So please be attentive. Easy. It is easy. Yeah, pay attention. First, general principle. So general principle you need to apply only when your supply of services is not covered under special cases, guys. They have given number of special cases or exception cases. What is the place of supply in that scenario? If your supply of service is not covered under any of the special cases, then you have to apply general principle. Is that clear? Yes. So we will see that. So general principle, recipient is registered, that is B2B, location of recipient. No, sir, recipient is not registered, still look into the location of recipient. If that is not available, then the location of supplier. Whatever rebuttable presumption we saw. Yes. Now coming to the special cases. Guys, when your supply falls under any of the special cases, you have to apply this. Okay. Yes, sir. Let us see one by one. Directly related to immobile properties, lodging accommodation, accommodation for functions, or ancillary services to the above. Anything connected to the above, like decoration, catering, or anything related to immobile property or lodging accommodation, or you are booking any convention hall along with decoration services, all those falls here. Okay. Sir, what is the place of supply? Location where the immobile property or boat or vessel is located or intended to be located. See, if it's already constructed, obviously wherever it is located, you will take it. If it is yet to be constructed, sir, construction is not yet completed. Assume I have booked a pre-construction building. It is a supply of services. So what is the place of supply? Wherever it is intended to be located. That is wherever it is supposed to be constructed. That is the place of supply. Okay, sir. If the location of immobile property or boat or vessel is located outside India, then we need to take location of recipient and not the location of immobile property, guys. Okay. Sir, what if the immobile property is located in more than one state? Then the supplier and recipient will have any contract or agreement. And as per that, what is the value charged for each state? We need to decide the place of supply separately. For each state, whatever the amount is charged by the supplier to the recipient, we need to decide the place of supply separately. No, sir, there is no contract or agreement between the supplier and recipient. In that case, decide as per rules, guys. Decide as per rules means generally acceptable accounting principles. Generally acceptable accounting principles. Yes, sir. That is gap. Yes. Next, restaurant and catering services, personal grooming, fitness, beauty treatment, health service, including cosmetic and plastic surgery, wherever it is actually performed, guys. For example, assume a person is going to a beauty parlor or a saloon to get any treatment there or any services. So wherever the actual service is performed, that is in the saloon or beauty parlor, that is the place of supply. Sir, what if I book that service at home only? Now the person will come and perform the service at home. Then wherever is your home, no, that is the place of supply. That is the place of supply, because you can book any of the services, assume at home also. You want to receive it at home, then your home would be the place of supply, guys. If not, if you are going to their place, then that would be the place of supply. Next, training and performance appraisal. If recipient is registered, location of recipient. You know, sir, recipient is not registered, then location where the service is actually performed. Okay, let me give an example. Assume you appointed me to give training to your employees about income tax or even GST. So I am providing training, and the training is provided in your office, assume in Rajasthan. So service is actually performed in Rajasthan. Now, what is place of supply depends on whether you are registered or not. Assume you are a recipient who is registered under GST. Then wherever you are registered, that is the place of supply. Assume you are registered in Rajasthan only. So that is the place of supply. No, sir, you are not registered. You are still a small supplier. In that case, wherever the service is actually performed, that is the place of supply. So I have performed the service in Rajasthan. That is the place of supply. Now assume you have told, sir, you give services to my clients in Tamil Nadu. You have appointed me. You are unregistered. You told, because sir, you give services to my client in Tamil Nadu. Where am I performing the services, training services in Tamil Nadu? That is the place of supply. If you are not registered. If you are not registered. Okay. Next, admission to or a cultural, artistic, sporting, or scientific, educational, entertainment event or amusement park and services ancillary thereto. Anything ancillary to them. Okay. Place where the event is held or where the park or such place is located. And this is a place of supply for the entry fee which is charged for an admission for an event or any particular place, guys. For example, assume there is Wonderla, that amusement park or water park in Bangalore. So I want to go there for a day. They're charging me, assume 1500. So on that, what is the place of supply means? Wherever Wonderla is located, that is in Bangalore or Karnataka. It is in the outskirts of Bangalore. So let us consider it as Karnataka. So the place of supply is Karnataka. Next, assume A.R. Rahman is conducting a concert in Hyderabad. The entry fee for each and every person, depending upon the category, is 1000, 5000, 10,000, like that. So for this, what is the place of supply, sir? Wherever the event is held, that is Hyderabad. Wherever the event is actually held, that is the place of supply, guys. Okay, sir. Next, organization of the above events, including conferences, fair exhibition, etc., or ancillary services, or assigning of sponsorships of such events. So, we took an example of A.R. Rahman doing a concert in Hyderabad. Sir, can he arrange all the events? No, it is not possible. He cannot be involved in organization. Yes, he will just come, participate in the event, sing, entertain the people, and go back. Okay. Now let us assume he has given me the task. I am an event management company. So A. Rahman has assigned me, because you take care of this event, organize it really well. People should enjoy like anything. So make sure that everything is at its best, and even security should be taken care. Everything he assigned to me. So I told, okay, sir, no problem. I will take care. And for this, I am charging him 20 lakh. So for my services which I am providing, that is organization of the above concert, 20 lakh I am charging. What is the place of supply? It depends on whether A.R. Rahman is registered or not. If A.R. Rahman, who is a recipient of my services, if he is registered, wherever he is registered, assume he is registered in Tamil Nadu. So the location of recipient, that is Tamil Nadu, will be the place of supply. Sir, what if A.R. Rahman is not registered? Let us assume now he is not registered. Then where the event is actually held, no, that is Hyderabad. That is the place of supply, Telangana. Okay. Sir, what if the event is held outside India? Then location of recipient if the event is held outside India. For example, assume in Hyderabad the event was full grand success. Now A.R. Rahman also told, because you organize one concert in Dubai, and I am organizing an event for A.R. Rahman in Dubai, which is outside India, and let us assume A.R. Rahman is not registered under GST. In that case, the location of recipient, wherever he is, assume he is in Maharashtra. So that is the place of supply. That is the place of supply. And please be careful, he is not registered. If he is registered, where the event is held doesn't matter. It is always the location of recipient is the place of supply. If recipient is not registered, then we need to see. If the event is held in India, then wherever the event is held. No, sir, event is held outside India, then the location of recipient. Okay, sir. Next, if the activity is in more than one state, then we need to take proportionate. Proportionate means same like here. We need to take whatever is the value for each state as per the contract or agreement. If there is no contract or agreement, then we need to go as per the rules, which is gap. Yes, sir. Next, transportation of goods and passengers. So if recipient is registered, location of recipient. No, sir, recipients are not registered. It is common people who are availing these services. Then location from where the transportation of goods or passenger starts, guys. That is wherever the passenger embark the mode of transportation or wherever the goods are handed over for transportation. So in simple, wherever the journey will start, either of the goods or passengers. Got it? Yes, sir. Then onboard a conveyance, if any services is rendered, we saw already for goods. Now onboard a conveyance, that is during your transit or during your travel, if you have availed any services, then what is the place of supply for it? Location of first scheduled point of departure of that conveyance for the journey. For example, assume I am taking a flight from Bangalore to Mumbai, and during the journey I have taken various services like massage services or any other services. For this, what is the place of supply means? Where did I start the journey? So where did the first scheduled point of departure is? Bang. That is the place of supply, guys. Got it? Yes. Next, with respect to telecommunication services, including data transfer, broadcasting, cable TV services, etc., the place of services depends on what kind of services you have taken. First one, fixed telecom line, cable or dish antenna. The place of its installation or fixing is the place of supply. For example, assume I am getting a landline connection to my office. So where it is installed in my office, that is the place of supply. Okay, sir. Next, postpaid mobile or internet services, the billing address will be the place of supply. If by chance, if that is not available, then the location of supplier. Then the location of supplier, guys. Next, prepaid mobile internet or DTH services. How are you getting that services? Check it first. If it is through selling agent or reseller or distributor, then the address of such selling agent, reseller, distributor as in the records of the supplier will be the place of supply. Okay. Next, if you are getting it through by any person to final subscriber, then location where the prepayment is received or where the place of sale of voucher is the place of supply. Sale of voucher means previously it used to be there. Now it is very less prevalent. So assume you have purchased a voucher for 50 rupees. You will scratch that card and whatever number is given there, you will dial for it. You will get recharged. You will get recharged. So wherever that voucher is sold, no, that is the place of supply. Okay, sir. Then in other cases, sorry, the last one is there here. When payment made through electronic modes, sir, I am getting recharged through GPay, Phone Pay, or any other pay. In that case, location of recipients in the records of suppliers, guys. Okay, sir. Then in any other case, address of the recipient as per the records. If by chance, if the address of recipient is not available, then the place of supplier or the location of supplier. Okay, so this is with respect to telecommunication. We have some more. We have some more. Banking and financial services or stockbroking services. In that case, the location of recipient of service, if address exists, normally address will exist because there are a lot of KYC norms now applicable. So location of recipient will be available. Okay. If in case, if that is not available, then they are asking you, the second option is take location of supplier. Okay, sir. Next, insurance services. Location of recipient is the place of supply. Whether recipient is registered or not, location of recipient we need to take, and it will be there because the insured who has taken the policy obviously would have given their address. Because if anything goes wrong, the insurance company has to reach their address at least. No, yes, sir. Next, advertising services to government means the recipient is government, whether central or state, any. Okay. Each of the states or union territory where the advertisement is broadcasted, displayed, run or disseminated, that is wherever it is telecasted, and If it is in multiple state, we need to take proportionate value, guys, as per the contract or the agreement. If that is not there, then as usual, rules. Got it? And it is based on the number of internet subscribers in each state, like that. Okay, sir. Fine. So please be careful. This is only advertisement services given to the government. Sir, what if advertisement services is given to others who is recipient is not a government? Then you need to apply the general principle. You need to apply general principle. Guys, we have seen the list of special cases. If your supply of services is not covered here, I already told you what should you apply? General principle. There is also a clarification with respect to one advertisement. Guys, just look here. Just a minute. Yeah. So assume you own this board, signboard or billboard. Yes, you own it. Now I want to give advertisement for my brand or product in this place. So you are letting out this space to me. You are letting out this space to me empty. I can use it to advertise my product however I want. So you are giving a space to me to advertise my product, and it is immovable because it is attached to the land. Yes. So where will this service fall in? Here, guys. Here. Got it? So the place of supply would be wherever that immovable property is located. Wherever it is located. That is the signboard or billboard. Okay. Or hoarding. In short, we call it as. Yes, sir. Next, there is another type. Now assume you are a vendor or an advertising agency. You are a vendor or advertising agency. You own this board, or else you have taken it on rent from someone else. Okay. And now you will advertise my product here. I want to advertise my product, so I have approached you. You are like an advertising agency or a vendor who owns this place, or you have taken it on rent. Okay. Now you will advertise my product here. You will advertise my product here. Are you giving the space for me totally? No, no. You are just providing advertising services. So when you are providing advertising services to me, who is not a government, the place of supply will be as per general principle. We need to see whether I am registered or not. Hope you understood. So if it is a letting out of space in a hoarding or billboard or signboard, then it will fall here, guys. If it is an advertising services, then it will fall here, provided I am not a government. Got it? Yes. And I have also given few examples here to decide the nature of supply. Here I have given location of supplier and place of supply. We need to decide whether it is intra or inter, and accordingly what would be leave it. You can just pause the video for a moment and go through it, guys. Especially the last two, SEZ, non-SEZ and all. Even though it is within the same states, we call it as interstate supply, and IGST would be leave it. Because as I mentioned you, the SEZ is considered to be a location outside India. Okay, sir. Now coming back to this, for this also in my provision book, I have number of illustrations, guys. So you can see here, for each of the case I have mentioned illustration 1, 2, 3, 4 like that. And each of the case has a subsection. But in my revision book, I have not mentioned the subsections. If you can remember it with subsections, please have a look into you and try to remember it. If not, if you remember the main section also, more than sufficient. Yes, guys. So I will just quickly display the illustrations here. Have a look into. I want you to pause the video and go through it. Arey, pause the video, go through. What are you looking there? For each of the case, I have given the illustration. Yes, that's all. Fine, guys. So we have covered all the provisions. Yes. So section 13 is not a part of your syllabus. Now we will go to the section list. Come to the sections list at the beginning of the revision book. We'll just mark whatever sections we have covered. Straight away come to IGST Act, because as I already mentioned you, anything we covered in this chapter is a part of IGST Act, guys. Of. Section 7 talks about the interstate supply. Yes, sir. Then section 8 talks about intra. Then 9, supply in territorial waters, that is location of supplier or place of supply if it is in territorial waters. Then we need to consider it in the nearest coastal state or the nearest union territory to the baseline. Then section 10 talks about the place of supply of goods other than supply of goods in imported into or exported in simple domestic transaction. Sir, what if it is import or export? It is covered in section 11. It is not a part of your syllabus. Okay. Then place of supply for services where the location of supplier as well as location of recipient is in India is decided as per section 12. If any one of this is outside India, then section 13. But section 13 is not a part of your syllabus. Yes, sir. Then few more sections of IGST Act is there in your syllabus like zero rated supply and all. But guys, listen here. Majority of the syllabus covered in your inter syllabus or majority of the portions or provisions covered is a part of CGST Act. Yes. And from next chapter, whatever we will be learning, that is from time of supply, everything is covered in CGST Act. And in section 20 of IGST Act, they have clearly told that if there is no separate provisions covered under IGST Act, then mutatis mutandis, whatever is already covered under CGST Act, same to same is applicable even for interstate supply under section 20 of IGST Act. So in simple, if anything is not separately covered under IGST, whatever is already covered in CGST, same thing is applicable. Got it? Yes. Then one more thing is there with respect to foreign tourist coming to India. This is with respect to the nature of supply, guys. If a foreign tourist is coming to India and if they are buying any goods in India, whatever they will pay is IGST. If a foreign tourist is buying any goods in India, it might be within the same state. Still, it will be treated as interstate supply and IGST would be levied. And if they are taking that goods outside India, then it is at par with exports. We treat it as zero rated supply. And whatever IGST they have paid in India while purchasing, no, we will give a refund. We will give a refund. Sir, what if that foreign tourist consumed that goods in India or he gifted it to someone in India? Then no refund of IGST, guys. No refund of IGST. Got it? Yes, sir. So that is what is covered in section 15. Fine, guys. So that is all with respect to concept of supply and place of supply, which we covered in this chapter. Yes, students. Now we will revise the topic of time of supply. The provisions with respect to time of supply is given in section 12, 13 and 14 of CGST Act. Section 12 talks about the time of supply of goods, whereas section 13 talks about the time of supply of services. And section 14 will tell whenever there is a change in the rate of GST, how do we decide the time of supply for goods as well as services. But don't worry, section 14 is not a part of intermediate syllabus. So we'll be learning only the two sections, that is section 12 and 13 of CGST Act, guys. Yes. But before we get into the time of supply topic, we will see why do we require time of supply. We'll just try to recall whatever we have learned till now, guys. First, that is in the second chapter, we identified whether the activity or a transaction is it a supply or not, for which we need to refer to section 7 subsection 1 read with schedule 1. Schedule 1 talks about 4 activities. We even without consideration, they are still said to be a supply. Yes, sir. Then once we identify whether an activity or a transaction is a supply, then we need to classify whether it is a supply of goods or supply of services, for which we need to refer to section 7.1 capital A read with schedule 2. Okay. And is it required to do so? Yes, guys, because there are different rates of GST applicable for goods as well as for services. So we need to classify whether the supply is a supply of goods or services. Then if there is any supply covered in the negative list, it is not taxable. So we need to remove it. So negative list is read along with section 7.2 and schedule 3. Then coming to the exemption list is covered in section 11 or section 11 of CGST Act or section 6 of IGST Act along with notification. Because section 11 and 6 just give the power to the government to notify any goods or services which are exempt under GST, and this goods and services whichever has been exempted is through notification, guys. Okay, so anything covered in negative list or exemption is not taxable. So we need to remove it or deduct it. Fine. So remaining supply is taxable. So when it is taxable, we need to see who is liable to pay GST. So under GST law, they have given when a recipient is supposed to pay tax under reverse charge mechanism as per section 9.3 or 9.4 of CGST Act or section 5.3 or 5.4 of IGST Act. That is, the recipient is the one who is liable to pay GST. And in section 9.5 of CGST Act or 5.5 of IGST Act, they have also told when e-commerce operator is supposed to pay GST. So if there is any notified services which are supplied through e-commerce operator, even though e-commerce operator is neither the supplier nor the recipient, still he is the one who is liable to pay GST. And which are the services which are notified is the Devara Rath Yatra, guys. That is D for local delivery services, R for restaurant services, A for accommodation, and T for transportation of passengers. Then last one, H, housekeeping services. So if you have booked any of these services through e-commerce operator is the one who is liable to pay GST. And in any other case, the supplier is liable to pay GST under forward charge mechanism, guys. Yes, sir. So we understood who is liable. Next, sir, what should they pay? What amount of GST should they pay? For which government? Depends on the nature of supply. When location of supplier and place of supply is in the same state or union territory, we call it as intrastate supply. And in case of intrastate supply, CGST is levied by central government and SGST is levied by the respective state government. Or if it is within the union territory, then instead of SGST, UTGST would be levied, guys. Sir, what if location of supplier and place of supply is in two different states or two different union territories or one state, one union territory? We call it as interstate supply. And in that case, high GST will be levied and collected by central government, but it will be shared with the destination state. Yes, sir. So we have understood all this till now, guys. But sir, okay, you told who should pay and what they have to pay. Fine. But when they should pay, sir? When they should pay. So the time of supply will help you to decide what is the due date to pay GST. Guys, please be careful. The time of supply is not the due date to pay GST, but time of supply will help you to decide the due date of payment. Time of supply means when supply took place or when the goods or services are said to be supplied. That's all. Using time of supply, we can decide what is the due date to pay GST. Okay. And time of supply will also help you to decide what is the rate of tax whenever there is a change in the rate of tax, especially. Then what is the value of supply on that particular day? That is the date on which the time of supply has arisen. No, on that day we need to calculate value, and it will also help you to lock the due date. And please be very careful, guys. I'm telling it again and again. The time of supply is not the due date to pay GST. Assume the time of supply is on any day in March, that is from 1st March to 31st March, any day. The due date would be 20th of next month for the supplier who is under section 9. Got it? Yes. And there are different due dates also, but majority of them will fall under section 9 and the due date is the 20th of next month, guys. So in simple, the time of supply will fix the liability for a person who is liable to pay GST, whether it is taxable under forward charge mechanism or reverse charge mechanism. Yes, sir. Fine. So now we will start learning the provisions with respect to time of supply of goods as well as services. So I have made one single chart for goods and one single chart for services, guys, with respect to time of supply. We will learn it. Yes. So totally section 12 as well as section 13 has 6 subsections and they have been arranged in the order. If you study one section, then the other will become easy, guys. Got it? Yes, sir. Chalo. So 12, section 12 of CGST Act talks about the time of supply of goods. Subsection 1 is just like an heading. They will tell the time of supply of goods is as per section 12. It is just like an heading. Okay. So the actual content is from subsection 2. Yes. So what is the time of supply for a goods which is taxable under forward charge mechanism? If it is taxable under forward charge mechanism, we need to think from whose point of view, people? Supply. Supplier is the one who will supply the goods. He is the one who will issue invoice and he is the one who will receive the payment. Correct? He will receive the payment and not make the payment, because the recipient is the one who will make the payment, whereas supplier will receive the payment. Yes, sir. So section 12 subsection 2 is telling earlier of the following dates is the time of supply for the supplier who is supplying the goods under forward charge mechanism. So the date of issue of invoice or the due date of issue of invoice we need to take. Date of issue of invoice is nothing but on the invoice a date would be mentioned on the top, no, that date. Okay. Whereas due date to issue invoice is given in section 31, guys. It is a part of invoice chapter, but we will try to cover it here only, because the time of supply depends on what is the due date to issue invoice. Okay. We will refer to section 31 to know what is the due date to issue invoice for goods, guys. So if there is a movement of goods from supplier to recipient, then the invoice has to be issued before the goods are removed from supplier place. Because supplier is the one who is liable or who is responsible to issue invoice, right? Yes. So before the goods are removed from supplier's place, he has to issue invoice on or before that date. Okay. Sir, what if there is no movement of goods? Then it will be on or before the delivery of the goods to the recipient. Guys, similar thing we saw when we were discussing the place of supply, but please don't get confused. Now we are deciding what is the due date to issue invoice. Sir, why do we need due date to issue invoice? To decide time of supply. Okay, so we have discussed when there is movement, when there is no movement. Okay. Sir, what if there is continuous supply of goods? Continuous supply of goods means they would have mentioned in the question, guys. Assume the supplier is supplying the goods day in, day out to me every day. So is it possible to issue invoice for each and every supply and make payment? May not be. So assume there is a supplier who is supplying water cans for my office every day. So instead of making the payment every day, I have told him, sir, once in a month, you give me a statement. In that statement, give me the details on each and every day, how many cans of water you supplied to me. And accordingly, I will make the payment on 5th of next month. So he will give full details in the statement throughout the month what he has supplied, and I will make the payment based on that. So what is the due date to issue invoice here is, please be careful, statement is given by the supplier. Clear? We are not talking about the invoice there. Statement is different, invoice is different. Okay, now statement means he will give the details of what all goods he has supplied or how many cans of water he has supplied throughout the month, guys. Okay. So for the supplier, what is the due date to issue invoice? On or before the issuance of each statement of account or each payment is received, whichever is earlier. See, if they have given any one, you take straight away. If by chance, if they have given both the statement date as well as payment date, you can consider whichever is earlier. You can take whichever is earlier. Oh, then the last one, when goods are supplied on approval for sale or return basis. Assume I have sent goods to you, and when I have sent, it is not a sale for me. Only when you have approved it or when you have accepted it, it is a sales for me. Okay. Or else you have done something which will signify to me or it will imply to me that you have accepted the goods. Or else assume I have given 1 month time for you to accept or return back the goods. Even after 1 month, you are still holding the goods. That means you have neither accepted nor rejected nor returned back. So at the end of 1 month, that is the time which I have given to you. If you are not told anything, it is considered to be sales for me. Okay. But under GST, they are telling supplier, when you are sending the goods to the recipient, don't give more than 6 months. Means indirectly they are trying to tell, don't give more than 6 months. Even if you give more than 6 months, at the end of 6 months, it might not be accepted still. Still, for GST, it is treated as supply. For example, assume guys, I sent the goods to you and I have given 10 months time for you to accept or return back the goods. Assume you accepted the goods at the end of 4th month. It is a supply for me. So on or before you accept the goods, I have to issue invoice to you. Okay. Now, no, sir, goods was not accepted at the end of fourth month. Assume you are taking more than 6 months time because I have given totally 10 months time, no, either to accept or return back the goods. Yes. But under GST, they are telling if at the end of 6 months, if goods are neither accepted nor returned back, for me, it is treated as supply. It is treated as supply and I have to issue invoice for it. Got it? Because even government is feeling no fool will give more than 6 months time. The standard time is like 1 week, 2 week, 1 month, 2 month maximum, guys. Not more than that. Even in a genuine case, if supplier is giving more than 6 months time, the department or the law is telling at the end of 6 months, we consider it as supply. Let me read it on or before the time of supply, or okay, if it is already accepted within 6 months, at that time you have to issue invoice, or 6 months from the date of removal of the goods, whichever is earlier. So this 6 months comes into picture only when the supplier has given more than 6 months time to the recipient to either accept or return back the goods, but till the end of 6 months still it is not accepted by the recipient and he has not returned back also. Can we consider it as a supply? Yes. Okay, guys. So these are the due dates to issue invoice. So for the goods which is taxable under forward charge mechanism, very simple. Only two dates are there. We need to consider earlier of that. What is it, people? Come on, repeat along with me. The actual date of invoice or the due date to issue invoice, whichever is earlier. Sir, what if both the dates are same? Straight away take that only as time of supply. That's all. And sir, what about the advance or date of payment here? Date of payment is not covered. Yes, guys. See, actually in 12 subsection 2, date of payment was there, but it has been removed by way of notification. So as on today, date of payment is not there, which means assume I have received any advance from you to supply goods after 2 months and to issue invoice. Okay, let me put numerically. Assume guys, I have agreed to supply goods to you for 10 lakh rupees after 2 months. So after 2 months, I will supply the goods and issue invoice. But today, I have received 1 lakh advance from you. Is this 1 lakh taxable for me on receipt basis? No, no. Only after 2 months, whenever actually I supply the goods and issue invoice, no, entire 10 lakh will be taxable for me. Entire 10 lakh. Okay, because after 2 months, I will receive only the balance 9 lakh. Why so? Because 1 lakh is already received as advance. So will 1 lakh and 9 lakh be separately taxable? No. For entire 10 lakh, there will be one time of supply which we will decide based on the actual date of invoice or the due date of invoice, guys. So in simple, if I have to tell, if any advance is received for the goods to be supplied in future, it is not taxed when it is received, but it will be taxed when it is, means when goods are actually supplied and invoice is issued, guys. Okay. But I have mentioned your note. Note is at the bottom. Let us read it. There are two exception case for this. In case of specified actionable claim like casino, betting, online money gaming, like that, guys, and composition suppliers, the supplier is liable to pay tax at the time of receipt of payment. So only for the suppliers of specified actionable claim and the composition suppliers who are following any of the two composition scheme given under section 10, for them the time of supply is the date of receipt of payment. Only for them we need to consider the date of payment. For anyone else, we should always follow what is given here. Date of invoice or the due date of invoice. Got it? Yes, sir. Next, coming to for the goods which is taxable under reverse charge mechanism, we need to apply section 12 subsection 3. Guys, under reverse charge mechanism, who is liable to pay GST? Recipient. Now we need to think from recipient point of view. Recipient will receive the goods. He will receive the invoice and he will make payment. And he will make payment, yes. And when recipient make the payment, guys, you guys tell me, will his bank account be debited or credited? Assume you are making payment to me. I am the supplier, you are the recipient. So when you make the payment, your bank account would be debited or credited. It will be debited, guys. Your bank account would be debited, whereas my bank account would be credited. But here we are not bothered about supplier. We are bothered about whom? Recipient, because he is the one who is liable to pay GST under reverse charge mechanism, guys. Okay. And easy to remember. Reverse charge mechanism maximum cases are covered in which section? 9 subsection 3. Real estate transactions are also covered in subsection 4, but majority of the cases are covered in 9.3. Yes. So this subsection 3 has some connection with RCM class, because here also 12 subsection 3. And you can see there are 3 dates here. We need to take whichever is earlier. So 333 RCM. Clear? Yes, sir. Earlier of the following dates, what are those? Date of receipt of goods or 31st day from the date of issue of invoice. So supplier would have issued the invoice. We need not take date of invoice. We need to take 31st day. So actually how they have given in the law is date immediately following 30 days from the date of issue of invoice. So in simple, should we take 30th day or 31st day? 31st day. 31st day. Yes, sir. Then date of payment. And for recipient, date of payment means what? Earlier of the 2 dates, guys, I have given here. Date of payment is earlier of date of debit in the bank account of the recipient, or the date of recording the payment in the books of accounts of whom? Recipient, whichever is earlier. So what is this? Sir, date of debit in the bank account. Okay. What is this date of recording the payment in the books of accounts? Guys, in recipient book, you will pass the entry to bank. That is purchases to bank you will pass, or else if it is a credit purchases, you would have already passed the entry purchases to supplier. Now when he is making the payment, he will pass the entry supplier to bank, right? Yes. I repeat, if it is a cash purchases, made payment made immediately, purchases to bank. Yes. On what day did he pass this entry? We need to take it. If not, then, sir, if it is credit purchases, first he would have passed an entry. What is it? Purchases to supplier. Now supplier is a liability till the payment is made. And when he is actually making the payment, he will pass the entry supplier to bank. When did he pass that entry? So in simple, when did he pass to bank? We need to take that. Got it? Yes. I will just show you. You can see you. If it is a cash purchases of goods, he will pass this entry. On what day did he pass it? In his books, we need to take it. Sir, what if it is a credit purchases? First, he would have passed the entry purchases to supplier. Should we take this date? No. Supplier to bank, we need to consider this date. Got it? The date on which the recipient passed payment entry in his books. Okay, sir. Fine. Okay. So this is from recipient point of view, guys. There are 3 dates and we need to take whichever is earlier. And please be careful while counting this 31 days. Got it? I will explain you with an illustration later when I also cover the services, because for services we are supposed to take 61st day. Yes, sir. Fine. We are done with it. And whenever you are deciding the time of supply as per section 12 subsection 3, please think from recipient point of view. Okay, sir. Then coming to 12 subsection 4, which talks about the time of supply of voucher, has been completely omitted, guys. If you remember, section 7 subsection 2 read with circular, I had already told you. When I was talking about, or when I was explaining about supply, if there is any sale of vouchers or coupons, it is not a supply. As per the circulars, it is not a supply now. But when the voucher is redeemed against the goods or services, is it a supply? Yes. I repeat, when there is a sale of voucher, it is not a supply. But if that voucher is used to buy any goods or services, then whoever is actually supplying the goods or services against that voucher, that is a supply for them. That is a supply for them. Previously, we had a time of supply with respect to voucher, depending upon whether it is identifiable or not identifiable. When voucher is sold, is supply identifiable? If yes, date of issue of voucher. If not, we need to take date of redemption. But now that provision has been completely removed. Even for services also it is removed under section 13.4, guys. Okay, fine. So next, 12 subsection 5. This is residuary cases. Only when you cannot decide the time of supply as per subsection 2 or subsection 3, you will apply subsection 5, guys. Don't straight away go and apply subsection 5. It is like a safety provision which government has added. Okay. So if you cannot decide the time of supply as per subsection 2 or 3, then 5 is telling, check whether the person who is liable to pay GST, is he filing any periodical return? If yes, then the due date to file that return, whichever return he is filing, the due date to file that return is the time of supply. Sir, what if he is not filing any return also? Then the last case. Then the last case they're telling whatever day you will pay GST, we consider that only as time of supply. You please pay. That's all. It is like a last resort. Okay, sir. Then coming to subsection 6, guys, if supplier is charging any additional amount in the form of IPL, interest, penalty, late fee, to whom? To the recipient. So the recipient delayed the payment. So that is why supplier is charging some additional amount in the form of what? Interest, penalty or late fee. Is that also a part of value of supply? Yes, as per section 15 subsection 2 clause D, easy to remember. When recipient is delaying the payment, D for delaying the payment, then supplier might charge some additional amount in the name of interest, penalty or late fee. Should it be included in the value of supply? Yes, it should be included in the value of supply. In that case, what is the time of supply? The date on which the supplier receives such addition in value. On whatever date the supplier will receive that amount from recipient, no? That is the time of supply. And please be careful, guys. This is not the interest, late fee, penalty which we are paying to the government. Whenever there is a delay in payment of GST or whenever there is a delay in filing the returns, we will pay interest, late fee, penalty and all. We are not talking about it. This is the interest, late fee, penalty is charged by whom? Supplier. To whom? To the recipient. Why? For the delay in payment of consideration. So if at all, if there is any additional amount, no, then there will be two different time of supplies. For example, assume I have supplied goods to you for 1 lakh rupees. I have told you need to pay within 1 lakh, within 1 month. You need to pay 1 lakh within 1 month. If not, you have to pay 5,000 additional interest. You didn't pay the amount within 1 month, so you paid me later. So you are totally paying me 1 lakh plus 5,000, 1 lakh 5,000. So for 1 lakh, we need to apply whether it is forward charge mechanism or reverse charge mechanism. Accordingly, we need to apply either subsection 2 or subsection 3. Let us assume forward charge mechanism is applicable. So for 1 lakh, to decide time of supply, we need to apply subsection 2. Whereas for 5,000, we need to apply subsection 6, guys. Sir, can it be two different dates? Yes, it can. It can be, especially when there is an addition in the value, there can be two different time of supplies. For 5,000 different date, whereas for 1 lakh different date. Got it? Yes. I will also explain this concept when we go to the value of supply under section 15 to D. This point is covered. Clear? Because when interest, late fee or penalty is received, there are two ways to treat it. Should we consider it as inclusive of GST or should we consider it as exclusive of GST? Depends on what information is given in the question test. Is that clear? Yes, sir. Fine. Sure. So we are done with the time of supply of goods, guys. And you may ask, sir, why all this is required? Because to give clarity, guys. Because to give clarity. If I have to just give an example, see, assume there are different events happening on different dates. So recipient ordered for the goods through purchase order on 5th December. Then supplier sent the goods on 8th December. Then recipient received the goods on 10th December. And invoice is issued on 15th December. And payment is made by the recipient. That is the date of debit in the bank account is on 18th December. Then the payment or purchase entry is passed in the books on 31st December. So there are different events happening on different dates, sir. Now, how will I know when I am liable to pay GST? When did supply takes place? If the government just leave it for me to decide, then I will tell, sir, still time till the supply has not taken place. Got it? Yes. So that is why in order to give more clarity to the people or to the suppliers or the recipients, whoever is liable to pay GST, they have included time of supply provisions in the law. Okay, so coming back. So this is all about the time of supply of goods. But one thing to take care, guys, see, if both these dates are given for recipient, take whichever is earlier. But sometimes they will straight away give date of payment. Straight away take it. They may not give these two dates. They will just mention date of payment. Straight away take it. Or else they may give any one of these two dates. Consider it. Whatever is given, you take it. If both are given, take whichever is earlier. No, sir, they have given only one date or they have straight away mentioned date of payment. Consider it. Straight away, take it, people. Got it? Yes, sir. Yeah. Before we start with time of supply of services, guys, time is very important I know for some of you who couldn't clear in your first or second attempt or in the previous attempt, you will be feeling like, am I taking too much time to clear this? Yes, I agree. Whatever time you have spent, you feel like you have lost it. Guys, that is actually not true, because you would have studied, you would have gained a lot of knowledge. Maybe you couldn't see that successful on the screen. That's okay. And major concern for many students are, sir, I just came close, sir, 130, 140, 145. I've seen some of the students who have scored 147, 148, passed in all the subjects, but didn't get aggregate. I know it is very painful, but don't take it for your art. It's okay. Maybe ICI also felt that you need to put little extra efforts and they will clear. They will make you clear the exams. So you also know where and all you couldn't cover last attempt or which topics you didn't cover. Make sure that you are becoming strong in that topic and you will be that perfect person before going to the next exam, guys. So please don't take anything for art, especially when you fail or when you see failure. It will teach you a lot of things in your life. So take that, learn something from that lessons and try to rectify your mistakes, whatever you have committed, and bounce back. That is very important. I know, sir, I have got 145. Now I have to restart in the next exam from zero, sir. I know, guys. Yes, you have to gain the marks from zero, but you have a lot of knowledge. You have already gained a lot of experience. So continue with that. And you already know what extra you need to do, what extra the ICI is demanding from you. So please focus on that. And don't target getting that 40, 50. Please target exemption in all the papers. That is when you will be safe, guys. You will have that margin of safety. And if I have to tell about myself also, which is connected to this, see, even after having lakhs together views for my YouTube tax marathon videos, which was around 3 lakh for both direct and indirect tax, and more than 1,000 students were there, but I decided to restart again from zero, and it was my decision. I did it with a purpose, and I'm very happy for it. So sometimes it's good to restart. So you guys also have to do it with full art and full enthusiasm, and I'm sure you will do it. Fine. So now coming back, the time of supply of services under section 13 of the CGST Act. Subsection again, even section 13 has totally 6 subsections, guys, arranged in the same order. Same order, whatever we learned in section 12. 13 subsection 1 is just an heading. It is telling the time of supply of services is as per section 13. Is as per section 13. Okay, sir. So let us move to 13 subsection 2. When the services are taxable under forward charge mechanism, so we need to think from whose point of view, people? Supplier point of view. So what is the time of supply? It depends on one major event. Did you issue the invoice within the due date or not? If invoice is issued within the due date, then the time of supply will be date of issue of invoice or date of payment, whichever is earlier. Sir, what if invoice is not issued within the due date? Then, as invoice is not issued within the due date, we don't take invoice date. Instead of that, we will take date of provision of service, means on what day service was rendered. Okay. So I repeat, if invoice is issued within the due date. Sir, what is the due date to issue invoice is given in section 31. We will learn that. Here itself I have given. We will learn it. Okay. Yes. So if the invoice is issued by the supplier to the recipient within the due date given in section 31, then the time of supply is earlier of 2 dates. That is the date of invoice or the date of payment. Here payment date is there. For services, payment date is there. Whereas for the goods which is taxable under forward charge, payment date is not there. It is there only for two things: specified actionable claim and composition supplier. For any other supply, date of payment is not considered for the goods which is taxable under forward charge mechanism, guys. Yes, sir. Next, if the invoice is not issued within the due date given under section 31, then the time of supply is earlier of the following 2 dates. So now we will not take the date of invoice because it is not issued within the due date. So instead of that, date of provision of service or the date of receipt of payment, whichever is earlier. So date of receipt of payment is common, guys. Only thing which is getting replaced is, instead of date of invoice, it is date of provision of service. Okay, sir. Fine. Next. So this is clause A, clause B. Clause A is if invoice is issued within the due date, or clause B if invoice is not issued within the due date. If you cannot decide the time of supply as per clause A or clause B, then clause C is telling Date on which the recipient who is liable to pay GST supplier under forward charge. But as the supplier doesn't have data about this, assume he doesn't maintain, he doesn't have, or his books of accounts has been burnt by fire. So he doesn't have any of these dates. Then they're telling, look into recipient's book. Okay. Date on which recipient shows the receipt of services in his books. So the date on which recipient shows the receipt of services will be the time of supply for whom? Supplier. Okay, sir. Fine. So here we saw what if the invoice is not issued within the due date or issued within the due date. So now let us understand what is the due date to issue invoice as given in section 31. As per section 31, the time limit for issue of invoice is as follows. For whom? For a service supply. Taxable supply of services, invoice has to be issued within 30 days from the date of supply of services. That is, once the service is completed, within 30 days, the supplier has to issue invoice to the recipient. Whereas if supplier is a banking, insurance company, financial institution or NBFC, then instead of 30 days, they are giving 45 days. Please be careful. Only if the question specifies that supplier is the following people, go with 45 days. If it is anyone else or if they have just given supplier, that's all. They didn't tell who is it. Then go with 30 days, which is standard. Got it? Yes. Sir, what if it is continuous supply of services? The supplier is giving the services to the recipient throughout the year. In that case, the invoice has to be issued on or before. Check whether there is any contract between the supplier and recipient. If there is any contract between the supplier and recipient, and if the due date of payment is mentioned in the contract, the due date of payment is the due date to issue invoice. Okay. No, sir, there is no due date mentioned in the contract. It is just an understanding between the supplier and recipient. Then the actual date of payment will be the due date to issue invoice. The actual date of payment will be the due date to issue invoice. Then the last one. Sir, what if the payment is linked to the completion of a milestone event? Recipient has told, hey supplier, only if you complete so much of work, I will give you so much of payment. Assume we are entered into a contract where I am the supplier, you are the recipient. I am supposed to do construction work for you. You have asked me to construct, assume 10-floor building. Now the total contract value is 1 crore. And you have told, because sir, as you and when you complete one floor, I will pay you 10 lakh. You have told me. So what is the milestone event for me? As and when I complete the construction of each floor. So once I constructed 1 floor, you have to pay me how much? 10 lakh. 10 lakh, not entire 1 crore. 10 lakh. So for 10 lakh, what is the due date to issue invoice means? The date on which I completed that first floor or 1 floor. Got it? Yes. As and when I complete that milestone event, you are supposed to pay me the amount? Yes. So whatever amount you are supposed to pay me, I need to issue invoice on or before the completion of that milestone event. Is that clear? Yes, sir. Fine. Okay. Next, coming to reverse charge mechanism. So with respect to forward charge mechanism, we have covered everything, but there is one proviso. I will just talk about that also. Proviso. Guys, assume I have issued invoice to you. I am the supplier, you are the recipient. I have issued the invoice to you for 10,000, but while receiving the payment, I received 10,500. 500 more. So extra amount, if it is up to 1,000 rupees, they're telling this 500 can be adjusted in the next invoice. So it can be adjusted in the next invoice. The time of supply will be next invoice date. What if the amount is more than 1,000? Then we need to follow this provision. We need to follow this provision. Let me read that. This is provisos to section 13 subsection 2. As per proviso to section 13 subsection 2, where a payment of up to 1,000 rupees received in excess of the invoice value. Okay, invoice value is assumed 10,000, but I am receiving 10,500, 500 more. The supplier can choose to take the date of invoice issued with respect to such excess amount as the time of supply of services in relation to this excess value. So for 500, if I am adjusting it in the next invoice, we will take that invoice date as time of supply. Sir, what if I have received more than 1,000? For example, I have issued the invoice for you for 10,000, but while receiving the payment, assume I received 12,000, 2,000 more, which is more than 1,000 rupees. So in that case, for 2000, what is the time of supply means? We need to decide based on this. We need to apply subsection 2, guys. Got it? Yes, sir. Fine. Next, going to reverse charge mechanism. There is an amendment here, so please be careful. Yes. So what is it? 13 subsection 3 is telling 3 dates, guys. If invoice is issued, okay, we are thinking from whose point of view? Recipient point of view. Whenever a service or goods is taxable under reverse charge mechanism, we need to think from recipient point of view, guys. Okay. If invoice is issued by the supplier, then we need to take clause A or clause B, whichever is earlier. What is clause A? Date of payment. What is clause B? 61st day from the date of issue of invoice by who? Supplier. So A or B, whichever is earlier, is the time of supply for recipient. Sir, what if supplier is not registered? So he didn't issue invoice. In that case, recipient has to do self-invoicing. Recipient has to do self-invoicing, means he or she has to issue invoice for themselves. In that case, the time of supply for the recipient would be clause A or clause C, whichever is earlier. Clause A or clause C, whichever is earlier. That is date of payment, or C, date of issue of invoice by the recipient. That is self-invoicing, whichever is earlier. Whichever is earlier. Is that clear? That is A or C, whichever is earlier. I will explain this again. Okay. So date of payment is common. So if invoice is issued by supplier, A or B, whichever is earlier. No, sir, invoice is not issued by supplier, then recipient will do self-invoicing. Then A or C, whichever is earlier. Okay. So anyway, A is common. So what is A? Simple. Recipient has to make payment, receive payment, he will make the payment. When he make the payment, his bank account would be debited, credited, debited. Okay. So date of payment is earlier of date of debit in the bank account of the recipient and the date of recording the payment in the books of accounts of recipient, whichever is earlier. Whichever is earlier, people. Yes, sir. Important. Oh, fine. Now, we have something with respect to this. I will just explain you. This is also connect to invoice topic, guys. Yes. Now, assume there is a supply of services which is taxable under reverse charge mechanism. First check whether supplier is registered. If supplier is registered, he will supply the services which is taxable under RCM. So that means recipient is the one who is liable to pay GST. So in that case, recipient will pay only consideration to the supplier. He will not pay GST amount. Okay. So in that case, supplier will issue invoice. Will issue because he is registered. No, he will issue invoice to the recipient. Okay. So recipient will pay only the consideration amount to the supplier and issue payment voucher. He will issue what document? Payment voucher. Okay. And recipient of services himself will pay the GST to the government. Okay. You can see here, I have mentioned. Pay tax under RCM and issue payment voucher for the supplier. And for recipient of services to pay GST to the department, what is the time of supply? Clause A or clause B, whichever is earlier. That is date of payment or 61st day from the date of issue of invoice, whichever is earlier. Whichever is earlier. Got it? Yes. And how to count that 61st day also I will tell you, don't worry. Next, coming to, sir, there is a supply of services by the supplier which is taxable under reverse charge mechanism. But supplier is not registered, sir. Supplier is not registered under GST means he cannot issue invoice. He is not issuing invoice. Yes. So in that case, recipient has to do self-invoicing. He will pay the consideration to the supplier without GST. Only the value of supply he will pay. And issue what? Payment voucher. He will issue payment voucher. Okay. So if supplier is not registered, then what should recipient do? He has to pay tax under reverse charge mechanism and issue payment voucher for the supplier, and he has to do self-invoicing within 30 days of receiving the services. Within 30 days of receiving the services. Where is it given, sir? In section 31 subsection 3 clause F of invoice topic. Okay, na? Yes, sir. So in that case, for recipient to pay GST under RCM, what is the time of supply? The time of supply will be earlier of clause A or clause C, whichever is earlier, guys. Earlier of both the dates. So clause A is date of payment, whereas clause C is the date of doing self-invoicing, the actual date. No 61, no 31 and all here. Actual date. Actually, The time limit for the recipient to do self-invoicing when supplier is not registered is 30 days from the date of receiving the services or goods. Even, please listen here. Even if it is a supply of goods, if supplier is not registered, should recipient do self-invoicing? Yes, he has to do. But with respect to time of supply, they have not covered it. Okay, they have not covered the date of self-invoicing. They have taken 3 dates, whichever is earlier. Whichever is earlier, that's all. So I repeat, even for the goods which is taxable under RCM, if supplier is not registered, should recipient do self-invoicing? Yes, within 30 days of receiving goods. But have they connected that in the time of supply topic? No, they have not connected it. It was as before. Whereas for services, they have connected. We need to see who is issuing the invoice, which depends on whether the supplier is registered or not. Accordingly, decide the time of supply for whom? For the recipient, which is for the services which is taxable under RCM, guys. Not RCB, RCM. Yes, sure. You can just have a look into it. This is a part of invoice topic. I am covering it here itself because it has a connection to the time of supply, guys. Just have a look into it. You can pause the video and have a look into it. Yes, I will move forward. So, for the goods or services which is taxable under reverse charge mechanism, if any advance is paid by recipient, is it taxable on receipt basis? Yes. So you can observe for both services as well as goods, date of payment is one of the dates. So if any advance is paid, obviously that will be the earliest date. Earliest date. Okay. Whereas for the goods which is taxable under forward charge mechanism, if any advance is received by the supplier, is it taxable? No. Only when actual supply takes place and invoice is issued, it will be taxable. Exception is 2 cases. Got it? That is for goods. Whereas for services, for a services, important people. For the services which is taxable under forward charge mechanism, if any advance is received, is it taxable on receipt basis? Yes. Yes, it is taxable. Why, sir? Because one of the date to decide the time of supply here is the date of payment. And for supplier, what is the date of payment? I have given here. I have given at the bottom. Come to the bottom. We will learn it. Guys, assume I am supplying services to you and the services are taxable under forward charge mechanism. Now, will you make payment to me or should I make payment to you? You will make payment to me. So, supplier is receiving the payment. When supplier is receiving the payment, will his bank account be debited or credited? Credited. So the balance will increase. So it will be credited. Yes. So the date of receipt of payment would be earlier of. This is from supplier point of view for subsection 2. Subsection 2. Yes. Date of credit in the supplier's bank account or the date on which payment is recorded in the books of accounts of whom? Supplier. So supplier will pass the entry now by bank account debit to so and so. Correct? So when did he debit that bank? In his books of accounts. Please be careful. His bank account would be credited. The balance will increase. But I am talking about in books of accounts. As and when you receive the amount, you would have debited by bank or by cash. So we will consider the payment is received by through bank. So by bank. So when did he pass that entry? So the date of credit in the bank account or the date on which the receipt entry is passed in the books of the supplier, whichever is earlier, guys. So please be careful. This is from supplier point of view because you might get confused with this. This is from recipient point of view. Recipient will make the payment. So accordingly, his bank account would be debited. And in his books of accounts, it is a payment entry and not receipt entry. It is a payment entry. So he will credit bank in his books of accounts. Got it? Yes. So please be careful. Yes. So coming back to this. For the services which is taxable under reverse charge mechanism, if any advance is received, it is taxable. Yes. Let me take our old example for goods. Assume guys, I have agreed to supply services to you for 10 lakh rupees. And I am receiving advance today for 1 lakh. When will I supply the services? After 2 months. And I will issue invoice also after 2 months. So I will supply the services after 2 months and issue invoice after 2 months. But for that, I have received 1 lakh advance now. So 1 lakh advance has been received today. Whereas remaining 9 lakh, I will get it after 2 months or in 2 months down the line. when I actually supply the services and issue invoice. Yes. So in that case, we need to decide time of supply will be two different dates. For 1 lakh, it will be date of receipt of payment because that will be the earliest date. Whereas for the remaining 9 lakh, we need to check this whether invoice is issued within the due date or not. So for entire 10 lakh, will there be one single time of supply? No. For 1 lakh separately, for 9 lakh separately. Whereas for goods, it was not like that. Because if any advance is received for the goods to be supplied in future, it is not taxable on receipt basis. It is taxable only when actually goods are supplied and invoice is issued, guys. Is that clear? Is that clear? Yes. So please be careful. There is a difference, especially for goods and services, which is taxable under forward charge mechanism. Even for taxable and reverse charge mechanism also there is a difference, especially this point. Please be careful. And as I already told you, whenever goods or services is taxable under reverse charge mechanism, please think from recipient point of view. Think from recipient point of view. Got it? If for services, and easy to remember, 9(3) of CGST Act or 5(3) of IGST Act talks about reverse charge mechanism. The goods or services which are taxable under reverse charge mechanism. So here also, for the goods which is taxable under reverse charge mechanism, 12(3). For services which is taxable under reverse charge mechanism, 13(3). Easy to remember. And each of them has 3 dates. There also you can remember. Clear? So if supplier is registered, you will issue invoice. The time of supply for the recipient would be A or B, whichever is earlier. No, sir, supplier is not registered. So in that case, the recipient has to do self-invoicing. In that case, what is the time of supply for the recipient? Clause A or clause C, whichever is earlier. And I will also tell you how to calculate the 61st day, because you might go wrong with like +1, -1 days and all. So I want you to be extra careful there. Just a minute. I will just go to my provision book. I have given an illustration here. I will just show you. Just a minute. Yeah. So this is for a services which is taxable and reverse charge mechanism. I will just explain at least one case. So the date of invoice is 14th October. Date of payment entry in the books of accounts is 20th October, or date of debit is 21st October. So date of payment will be whichever is earlier, 20th October. Yes, sir. Log that date. And date of invoice. The invoice is issued by supplier. Invoice is issued by supplier. So for recipient, we need to count 61st day. How do we calculate it, sir? Simple. So invoice date is 14th October. How many days in October, guys? 31 days. So 31 minus 14 you do. 14 is the invoice date. How many days are remaining in October? 17 days. And November has how many days totally? 30 days. So if I add up both aggregate, I am getting 47. But totally I require what? 61. Please be careful. In the law, they have clearly told date immediately following 60 days from the date of invoice, which is nothing but 61st day. Which is nothing but 61st day, guys. Okay. So 61 I want. Till November end, 47 days is already over. Remaining is what? 14 days. So it is 14th December, guys. So 61st day from the date of invoice is 14th December. 14th December. Hope you understood. Now you compare both of it. 20th October at 14th December, whichever is earlier. 20th October is the time of supply for the recipient of services. Yes, sir. So you can just pause the video if you want, and you can go through the other cases also. I have given multiple cases here. Oh, fine. There is one more proviso to subsection 3. What is it? I will just cover from you. Provided further that in case of a transaction is between associated enterprise, that is supplier and recipient is an associated enterprise, and supplier is outside India. That means it is nothing but import of services. Yes. Recipient is in India, supplier is outside India, and they both are associated enterprise. Sir, what is the time of supply? They are told. The time of supply shall be the date of entry in the books of accounts of the recipient who is in India of the supply, or the date of payment, whichever is earlier. Date of payment for whom, sir? Recipient. Whichever is earlier, guys. And who is associated enterprise? They are connected to section 92A of Income Tax Act. So what is it? It is actually not a part of your intermediate syllabus, but still I have just given what exactly it means in simple. Broadly, an associated enterprise in relation to another enterprise means an enterprise which participates directly or indirectly or through one or more intermediaries in the management, control or capital of the other enterprise. In simple, if I have to give an example, holding and subsidiary companies. Is that clear? Yes. So this is only when the transaction is between associated enterprise and the supplier is outside India. So please be careful when they give a hint about it. You need to apply this provision. So I repeat, supplier and recipient is associated enterprise. Who is associated and all is not a part of your syllabus. When they give any question on it, they would have mentioned that supplier and recipient is associated or holding or subsidiary, anything like that. Okay. And supplier is outside India. Only then we have to apply this proviso, guys. Okay. I have also given one illustration for it. So just pause the video and go through it. Okay, fine. Now, even for goods, I will just show you that 31st day calculation because that is important. Yes. So you can see this is for the goods which is taxable under reverse charge mechanism, guys. So date of invoice is 20th October. 20th October. So we need to calculate 31st day. October has how many days? 31 days. So 31 minus 20 will give us 11 days in October. 11 days in October. So totally how much we want? 31. So 31 minus 31 it is. 31 minus 11 if I do, how much you will get? 20. So 20th November, guys. So 31st day from the date of invoice would be 20th November. Got it? So accordingly compare date of receipt of goods, date of payment or 31st day, whichever is earlier, 20th November. Got it? Likewise, I have given totally 4 cases. You can just pause and see. And voucher provisions is anyway omitted. You need not worry about it. Yes. Got it, people? Yes. Sure. We'll go back. Yes. So now coming to subsection 4. First, let us cross check whether we have covered everything with respect to subsection 2 and 3. Yes. Now, let us move to subsection 4, which is omitted. So nothing to cover here. So for goods as well as services, for both it is omitted, guys. Next, residuary cases. So for services, if the time of supply cannot be decided as per subsection 2 or subsection 3, similar to goods, we need to apply subsection 5. So if a periodical return is to be filed by a person who is liable to pay GST, then we need to take due date of filing such return. No, sir, no return has to be filed by them. Then whatever is the date of payment of GST, that is considered to be the time of supply. This is like a last option. This provision has been added by the government just to safeguard their revenue. Then if supplier is receiving any addition in the amount or addition in the value of supply by way of interest, late fee or penalty, then should it be added to the value of supply to the supplier? Of course, as per section 15 subsection 2 clause D. For that, what is the time of supply? The time of supply will be the date on which it is received. And as I already told you, if by chance if addition in the value is there, even in that case, there can be two different time of supply. Two different dates. Got it? Yes, sir. Fine, people. So this is all about the time of supply provisions. Yes. Now come to the beginning of the revision material where I have given the section list under CGST Act. Yes. Section 12, 13 and 14. 14 anyway is not a part of your syllabus. So we have covered it, guys. And I already mentioned you in the last chapter. Guys, anything which we are covering from now, that is from time of supply, is the provisions covered under CGST Act. Is there a separate provisions for these topics in the IGST Act? No. Whatever is already covered in the CGST Act, mutatis mutandis, that is same to same, is applicable even if it is a interstate supply as per section 20 of IGST Act, guys. So this is all about time of supply. Yes, students. Now we will revise the topic of value of supply as given in section 15 of CGST Act. Whether the supply is intrastate supply or interstate supply, the value of supply has to be determined as per section 15 of CGST Act, which means there is no separate provisions to determine the value in the IGST Act. And as per section 15, the value of supply means the transaction value. And what is transaction value? Is given you if all the three of the following conditions are satisfied, then whatever amount the supplier is charging to the recipient is considered to be the value of supply. In simple, the price. So what is it? We will see. The transaction value means price actually paid or payable for the supply of goods or services or both, which is the normal sale consideration which the supplier will charge to the recipient. Then the supplier and recipient should not be related. Sir, who is called as related person is given in explanation to section 15, which we have already learned in second chapter, guys. While we were discussing schedule 1, para 2, supply between related person or the distinct person in the course or furtherance of business, even without consideration, was a supply, right? Yes. So there itself we learned who is the related person for GST purpose. So same list is covered even here. Actually, whatever we learned there is given in explanation to section 15, which we already covered. Okay, sir. Then the price should be the sole consideration. Okay, so in simple, the transaction value or value of supply means the price plus in section 15 subsection 2 they have given few inclusions. Then if at all if it is given in the question we need to add it. Then the discount given under section 15 subsection 3, if the conditions given there is satisfied, then we need to deduct it while calculating the value of supply. So I have given a format to compute the value of supply, and this format has to be followed like this only, guys. Clear? First, we will take the price as a base, and price will be given in the question, guys. Price will be given in the question. This is the normal price which the supplier is charging to the recipient. If nothing, no masalas are given, straight away this becomes the value of supply. But in the exam, it will not be so easy. They will give you some masalas. So you need to decide whether to add it or to ignore it. Or if it is a discount, should I deduct it or ignore it? Okay. So for the price actually paid or payable for the goods or services, we need to add few items. So which are those items are given in section 15 subsection 2. See, we will be discussing all the items. Sir, will all the items be given in the question? May not be, guys. So if any of this comes in the question and if the condition given here is satisfied, then you need to add it. For the price, yes, sir. What are those? One by one. First one, 15.2 clause A. Any taxes, duties, cess, fees and charges levied under any law other than GST. Okay. Any tax which is levied under any law but other than GST. So anything charged under GST should not be added. Why so? Okay, simple. We are calculating the value of supply on which GST has to be charged. So even before calculating the value of supply, should we include GST component? No. Any other tax. Okay. If charged separately by the supplier, means this is the tax which is paid under any law other than GST, which supplier is charging to the recipient. Example, the excise duty paid on the manufacture of tobacco. Assume the supplier or manufacturer has paid it, but later he charged it to the recipient. Can we add it here? Yes. Same way, municipal tax paid on the property used for business purpose. If it is charged by supplier to the recipient, should we add it here? Yes. Same way, if it is a entertainment tax levied by local authorities. Local authorities, is it subsumed under GST? No. If it is levied by local authorities, it is not subsumed under GST. If in case it is paid by supplier but later recovered from recipient, should we add it here? Yes, guys. But there is a clarification given. If the seller is collecting TCS from the buyer, as it is an interim levy, it should not be included in the value of supply, which means we should not add it. We should not add it, guys. I'll just explain this concept. Listen here. I'm just taking my income tax revision book here to explain you the concept of TCS. We have already learned this in income tax, but I'm just explaining you to connect to section 15 to A, guys. Now, seller of some specified goods or services on which TCS is applicable. So when they're selling that goods or providing services, in addition to their sale consideration, they should also collect TCS at whatever rate, like 1%, 2%, 5%, whatever is the rate of TCS, they have to collect it. And whatever TCS they have collected, it is not their revenue. They have to remit it to the government within 7th of next month and also file TCS returns quarter. And whatever amount the seller has collected from the buyer as TCS, the buyer will get a credit of it. Means from its total tax liability, that is buyer's total tax liability, the TDS, TCS, advance tax, everything would be reduced. Correct? Yes. So as buyer will get the credit of the TCS, so should this TCS amount be added to the value of supply? No. That is what the clarification given as. Got it? Yes. So if I have to just give an example, assume the seller is selling the goods worth 10 lakh. So 10 lakh is a sale consideration on which is supposed to collect TCS at 1%. And TCS under Income Tax Act is covered under section 206C. Various subsections are there. Subsection 1, 1C, 1G, 1F, like that. Okay. Very few cases of TCS is there, whereas in TDS, the list is very lengthy. Yes, sir. Fine. So assume the seller is supposed to collect TCS at 1%. So 1% of 10 lakh is coming to 10,000. So totally seller is collecting from the buyer 10 lakh 10,000. So for the seller or supplier, is value of supply 10 lakh 10,000? No. 10,000 as it is an interim levy under Income Tax Act and buyer will get a credit of it. We should not add this 10,000. So from supplier point of view, what is the value of supply for GST purpose means it is 10 lakh guys. It is 10 lakh. Please be careful with this. Okay, sir. Next, clause B, 15(2)(b). Any amount that the supplier is liable to pay, but which has been incurred by the recipient of the supply. Means the liability of the supplier is paid by recipient. Assume I am the supplier, you are the recipient. I was supposed to pay 20,000 to a third person and I have asked you to pay it. It is as if you have paid me. It is as if you have paid me. Should it be included in my value of supply? Yes, guys. It should be added to the value of supply. Okay. So anything which I was liable to pay, if I ask recipient to pay it, it should be added to the value of supply. Then clause C, incidental expenses, including commission packing charged by the supplier to the recipient and any amount charged for anything done by the supplier at the time or before the supply or delivery of goods, guys. So simple. Assume I am charging you some commission or else you have asked for some special packing for me or special designing for a product for which I am charging you some extra amount. Should it be included in the value of supply? Yes. Anything which I charge for you, for anything extra I am doing. Assume I am also arranging for a transportation and for that I am charging you some amount. Should it be included in the value of supply? Yes. Like packing, transportation, designing, anything which I am doing for you, for which I am charging you a separate amount should be added, guys. Sir, what if it is already included in the sale value? For example, I have told you I would be selling the product for you for 1 lakh, which includes packing, transportation, insurance, everything. In that case, should we add anything extra? No, no, guys. Got it? Yes. And in question, if they have given price is 1 lakh and the amount of commission packing is separately charged by the supplier to the recipient, please add it, guys. Please add it. And if question is silent, if by chance, in that case, you assume that whatever price is given in the question, which you will take it as a starting point, will not include any of these items. Because if it already includes, then you need not add it. For example, assume packing charges is already included in the price. In that case, should we add packing charges? No, sir. So they would have clearly given in the question that other than the price, there are few more things which supplier is charging to the recipient, something like that. They would have given some hint in the question. Accordingly, you follow it. If by chance, if question is silent, then you can also consider that whatever price is given in the question is excluding the following items, guys. Got it? Yes, sir. Fine. Next, coming to D, it has also connection to time of supply. First, I will explain this, then I will connect to time of supply. Interest, late fee or penalty for delayed payment of any consideration. This is an additional amount which supplier is charging to the recipient for delay in payment of consideration. Assume I have sold the goods for you for 5 lakh and I have told you, you need to make a payment within 7 days. And if you fail to make payment within 7 days, I have told you need to pay extra 10,000. So you delayed the payment, you paid me beyond 1 week. In that case, I would be charging you an additional amount, assume in the form of interest. Should it be added to the value of supply? Yes, it should be added to the value of supply. And please be careful, guys. This is an amount which supplier is charging to the recipient for delay in payment of consideration. And this is not the amount which the supplier or recipient is paying to the government or department. Because whenever there is a delay in payment of tax or delay in filing the returns, we are supposed to pay interest or late fee or penalty to the department or to the government. We are not talking about that. This is an amount which recipient is paying to the supplier, guys. Got it? Yes, sir. So the interest, late fee or penalty which supplier is charging to the recipient for delay in payment, D for delay in payment, has to be added to the value of supply. Okay, sir. Yes, we will add it. And what is the time of supply for this is given in subsection 6, guys. If it is for goods, 12 subsection 6. If it is for services, then 13 subsection 6. For interest, late fee or penalty, the time of supply is the date on which it is received. By whom? By the supplier. And if at all, if there is a separate consideration along with interest, late fee or penalty, there will be two different time of supply. There can be two different time of supplies. Is that clear? Yes. So please be careful in that scenario. Okay, sir. So time of supply is given where? In section 12 subsection 6 for goods, and for services 13 subsection 6, guys. Okay, sir. And one more thing. Guys, whenever they have given this amount in the question, we need to check whether it is inclusive of GST or exclusive of GST. If it is inclusive of GST, then we need to check what is the value component. Assume they are told Vikas charged or supplier charged 10,000 interest for the recipient, which is inclusive of GST. GST is 18%. Okay. So 10,000 is equal to 118% of the value. Yes. So into 100 if you do, you will get value amount. That is with respect to interest, how much is the value? How did I get 118? 100 plus GST rate, which I mentioned as 18%. Sir, what if GST rate is 5%? Then this will be 105. Sir, what if GST rate is 40%? Then this would be 140. Got it? So if you do this, you will get what is the value component. Sir, what if I want to calculate GST component? Then simple. 10,000 divided by 100 plus GST, which is 118. Okay, into 18. Into 18, guys. You will get the GST component on interest. Hope you understood. But when you are calculating the value, we require the value component. So do it like this. The total amount inclusive of GST, whether you have received it as interest, late fee or penalty, the amount received you take, just a minute, amount received you take divided by 100 plus GST rate into 100 people. This is what you have to do while calculating the value. Sir, what if they have given that interest, late fee, penalty received by the supplier is exclusive of GST? Then whatever amount is received, no, straight away add it while calculating the value of supply. Just add it. No need to do anything else. Got it? Yes, sir. If it is exclusive of GST, please straight away add it. Sir, what if by chance if question is silent? What should we assume? Guys, in that case, assume it is inclusive of GST, provided GST rate is given in the question. If GST rate is given in the question and interest, late fee or penalty is received by the supplier for delay in payment, and the question doesn't specify about whether it is inclusive of GST or exclusive of GST, you can assume that it is inclusive of GST and give a note for it. And if question is silent, whatever you are assuming, please give a note for it. Got it? And if you want to be more safer, assume in your calculation you have taken the interest inclusive of GST, then you can also give a note telling if it is considered as exclusive of GST, then what is the amount? Then what is the amount, guys? Got it? Yes. And I have uploaded on YouTube channel the full class, whichever I have done as a regular class on value of supply, full video has been uploaded, including the questions. If you want more clarity and if you want to practice questions, please have a look into it if time permits. Got it? And the link for the same I would have attached here in the description. Please have a look into it, guys, so that you will get more clarity, if at all, if you want. No, sir, I already understood. Well and good. I had already practiced it. Now it was helpful for me to revise. Great, guys. Okay, fine. We'll move forward. Then coming to clause E, subsidies directly linked to the price, excluding the subsidies provided by the central government and state government. Okay, guys, if there is a subsidy which is given for a product and if the price is linked to it means because of the subsidy, the selling price has been reduced. Okay. And if it is given by central government, state government, don't add it. Sir, what if it is given by others? Then we need to add it. We need to add it, guys. I have given one chart here. See, what is given in the law is only this part, by guys, that is linked to the price. But I will just explain this part also so that you will have a clarity. Okay. First, let us focus on this side. Assume, guys, my normal selling price of this pen, I am selling the pen 100 rupees. But now I have received a subsidy of 10 rupees per pen to sell the pen at 90 rupees. So now assume the price is 90, which is linked, means subsidy is linked to the price. Yes, that means I am selling the product or pen at a reduced price because I have received subsidy. So can we call that subsidy is linked to the price? Yes, linked to the prices. Because of subsidy, we have reduced the selling price. Got it? Yes. So my actual selling price was 100, but as I have received a subsidy, I have reduced the selling price at 90 rupees. Okay. So now I will take 90. For that, should I add 10 or not? Depends on who has given the subsidy. So the price is 90 people. Yes. So for that, should I add 10 or not? Depends on who has given the subsidy. If subsidy is received from central government or state government, don't do anything. That means what would be the value of supply? Just 90 rupees. Just 90 rupees. Sir, what if it is received from others? Others in the sense, other than central government or state government. Assume the subsidy is given by a company out of their CSR fund, or subsidy is given by Infosys Foundation. In that case, we need to add it. So what would be the value of supply? Price plus subsidy. So totally it is 100. Got it? Yes, sir. Fine. This is what is given in the law and this is what you can expect in the exams, guys. Okay. But only for your knowledge, I will also explain this part. What if it is not linked to the price? Means, sir, I have received subsidy 10 rupees, but my selling price is still 100 rupees only. We have not reduced the selling price. So can we call it as not linked to the price? Yes. So if subsidy is not linked to the price, which means the selling price is not reduced. Okay. If it is received from central government or state government, what would be the value of supply? Now you need to deduct 100 minus 10. So what would be the value of supply? 90. As it is. Here also it was 90, no? Yes. Here also you will get 90. Sir, what if it is received from others? You need not do anything. You need not do anything means what would be the value of supply? 100. Same 100 we had here, no? Yes, guys. The only difference is it linked to the price or not linked to the price? Accordingly, we need to decide. Got it? Yes, sir. Fine, people. So we'll move forward. So we have seen what all items has to be included. So for the price, we need to include if any of these items are given and if the conditions given here is satisfied, we need to add it. Okay, sir. Then coming to the exclusions, which is nothing but discount as per section 15 subsection 3. I have highlighted here in the green clause A, clause B, guys. I will try to explain this through a chart. I have made a chart for this. Okay. 15 subsection 3 clause A. Clause A is covered here. Okay, let me just write it 1 second. Clause A, clause B. Okay, sir. So what is clause A is telling? If the discount is given before or at the time of supply and if it is recorded in the invoice, then we can exclude it from the value, which means deduct it. For example, assume I sold the goods for you for 10 lakh and I am giving at the time of sale itself, I am giving a discount of 10%. So in the invoice I have recorded value of the goods 10 lakh minus discount at 10% 1 lakh. Remaining is 9 lakh. So now GST has to be charged on 10 lakh or 9 lakh people. It is on 9 lakh. As discount is already given at the time of supply and recorded in the invoice, can it be excluded while calculating the value of supply? Yes. So in my example, the value of supply would be 9 lakh. Got it? Yes, sir. Next, coming to clause B. Discount is given after the supply. Okay, but the following three conditions has to be satisfied. If all the three conditions are satisfied, only then we can exclude the discount component from the value. Sir, what if any one of one of the condition is missing? Then we cannot exclude it, guys. So what are the three conditions? The discount is given after the supply, but it was known and agreed at the time of supply. Okay, it was already agreed between the supplier and recipient. Telling supplier had told recipient, if you purchase 10 lakh worth of goods during the year totally, I will give you a discount of 10%. Or else, if you purchase more than 10,000 kgs of goods, I will give you a discount. That is what the supplier has offered. So was it already agreed? Yes, sir. Then it should be linked to the relevant invoice. Guys, supply would have already taken place. So invoice also would have already been issued. But now, if supplier is giving discount to the recipient after the supply is made and after the invoice is issued, then he should issue a document called credit note linking to the respective invoice. Okay, so that discount amount which the supplier is passing to the recipient through credit note has to be linked to the relevant invoices which is already issued. Okay. The last one is the proportionate ITC, that is input tax credit, has to be reversed by the recipient. That is on the discount amount, whatever the supplier is giving to the recipient, on that whatever is the GST amount has to be reversed, guys. In simple, whatever amount would have been mentioned in the credit note issued by the supplier to the recipient, no, that GST component, if recipient has already claimed full credit, he need to reverse to that extent. To that extent means the GST on the discount amount. Sir, what if recipient has not yet claimed the credit? Then he can claim the credit on the remaining value, but not on the discount amount. For example, assume the supplier has supplied the goods for 1 lakh, on which 18,000 GST is already charged. So total invoice has been issued for 1,18,000. But later he is giving a discount of 10,000, on which GST is 1,800. GST amount is 1,800. Now, if recipient has claimed already full 18,000 credit means, you need to reverse how much? 1,800. That is the GST on discount amount. No, sir, the recipient was yet to claim credit. In that case, can he claim full credit now? No. How much credit he can claim? 18,000 minus 1,800. Only that much. That is 16,200. Only that much credit he can claim, guys. Who? Recipient. Got it? Yes. So if all these three conditions are satisfied, then that discount amount can be deducted while calculating the value of supply, guys. Is that clear? Yes. And sometimes in the question, discount will be given as a percentage. That percentage has to be applied on the price. The price which you will take it as a base figure to compute the value of supply, no? Yes, on that. Sir, should we apply discount percentage on this inclusions amounts and all? No. Because supplier cannot give discounts on this amounts, guys. If at all, if he is offering any discount, it will be on the price. So if discount is given as a percentage, please apply that percentage on this price, people. Got it? Yes. And I want you guys to practice good number of questions, because in GST, there are very few numerical area. One is value of supply. The other one is GST liability calculation. That is output tax minus input tax credit remaining, how much GST has to be paid through the cash ledger. I will upload a separate questions on GST liability calculation, separate altogether a video discussing all the questions on that, which is important because that will be asked as a compulsory question. Whereas on value of supply, as I already told you, whatever I have discussed in my regular class, video is already uploaded, including the questions. So please have a look into it, guys, and try to practice those questions. Okay, sir. Fine. Then there is one clarification telling what is it? We will see. I have given it as a note. Just a minute, before the discount part we have covered fully, no? Yes. Chalo. What is this note? We will see. No claim bonus, that is NCB in short, is a permissible deduction under section 15(3)(a) for the purpose of calculation of value of supply of the insurance services provided by the insurance company to the insured. What is this? I will try to explain with an example, guys. This also has a connection to supply topic. Yes. If you remember this example, we already covered it in chapter 2. Yes, we'll try to recall it. So assume a medical insurance policy is taken by Akash, who is an insured, for rupees 10 lakh. So the policy amount or the insured amount is 10 lakh. And yearly premium is 25,000. And please be careful, guys. This is not a life insurance policy. It is a medical insurance policy or health insurance policy. Okay, sir. So Akash has paid a premium of 25,000 in the year 2025. And there was no medical emergency for him in the year 2025. So he has not claimed the policy. He has not claimed the policy. So in the year 2026, he was supposed to pay 25,000 premium, but insurance company told Akash, as you have not claimed the policy last year, we will give you a discount of 3,000, which is called as no claim bonus in the insurance sector. So Akash is supposed to pay only 22,000 in the year 2026. So our question here is, sir, what is the value of supply for the insurance company? Is it 25,000 or 22,000 in the year 2026? The clarification is it is 22,000. That means the no claim bonus given by the insurance company to the insured for not claiming the policy in the last year, can it be deducted, sir, as per section 15(3)? Yes, guys, it can be deducted. As per section 15(3)(a), it can be deducted. So the value of supply for the insurance company in the year 2026 is 22,000. And we have also learned in supply topic that from Akarsh side, there is no supply, because there was a confusion. I will just repeat this again. We already learned it in supply topic, but still I am repeating it. Now Akarsh got a discount of 3,000 for not claiming the policy. So can we consider this as refrain from claiming the policy, not to claim policy? Akarsh got 3,000? No, because there was no agreement between Akarsh and insurance company telling Akarsh will not claim the policy in 2025. For that, insurance company will give 3,000. So is it a separate supply? No, people, because the purpose of taking the policy itself, whenever there is any medical emergency, we need to claim it. Just because Akash didn't have any medical emergency in the year 2025, he didn't claim the policy. That doesn't mean that he had already agreed not to claim the policy for which he will get a discount. Was it agreed like that? No, people. Nothing like that. Got it? Yes, sir. Fine. We'll move forward. So 15 we are completely done with. Yes, sir. Now, if any of this condition is missing, guys, for example, supplier and recipient are related, or price is not the sole consideration. For example, at least part of the consideration is in kind, like exchange, or full consideration is in kind, like barter. Sir, in that case, we cannot decide the value of supply as per section 15. So we cannot take price. In that case, we need to refer to valuation rules, people. Valuation rules. That is what is given here. Okay, let me just read it out. Supplies where value cannot be determined as per section 15 subsection 1. That is, if any one of the condition is missing. Section 15 subsection 4 lays down that where subsection 1 is not applicable, then the value will be determined in the manner as prescribed. As prescribed means where is it prescribed? In the valuation rules. And don't worry, valuation rules is not a part of intermediate syllabus, guys. Same way, 15 subsection 5 lays down in respect of certain notified supplies. The value will be determined in the manner as stipulated in rules for valuation. So with respect to few notified supplies, the value of supply will be decided as per valuation rules. So both section 15 subsection 4 as well as 15 subsection 5 will refer to valuation rules. But that valuation rules you will be learning at final level. Yes, sir. Then, coming to this. One rule I have given here, because that might be a part of your question, guys. Okay. And whatever is given here, I just now explained in section 15.4. Okay. So what is rule 35 is telling? If whatever amount the supplier is collecting from recipient, if it is already inclusive of GST, how to calculate the tax amount? How to calculate the tax amount? Simple. Value inclusive of taxes, that is the total amount which the supplier has collected including GST, into tax rate in percentage, whole divided by 100 plus GST rate, guys. Especially with respect to pre-packed items. Okay, where MRP already includes the GST. For example, assume the selling price is 200, which includes 5% GST. So what should we do? 200 rupees divided by 100 plus 5, that is 5%, into what is the actual GST rate? 5. See, in the both numerator as well as denominator, you can consider percentage or else you can ignore it. So what is the GST amount is 200 divided by 105 into 5. Sir, what if GST rate is 18%? Then 200, the price including GST divided by 118 into GST amount 18. That is 18%. Okay, if you want, you can use percentage also. Anyway, as we are using it both in denominator as well as numerator, it will get cancelled. Okay. Sir, what if I want to decide the value component like how you told for interest, late fee and penalty? Then instead of 18, we need to take 100. 100 is nothing but the value component, guys. Is that clear? And if you have used percentage here, then better use percentage here also. Or else you completely ignore the percentage, guys. Is that clear? Yes, sir. Fine. So we covered everything with respect to value of supply. Yes, very small topic, but you can get a question on this. Please don't lose out, guys, because it is just very simple, like your BRS question in your foundation accounts. Just it is a game of addition or deduction. So come to the page number 1. That is the sections list. We have covered only one section. We will just quickly mark it. Yes, sir. Value of supply. And you guys know, once you qualify, what value you will get in the society, in your friend circle, in your family, among your relatives, that cannot be matched with anything, guys. We cannot even measure that value. And I want you guys to experience that. That feeling what you get on the result day cannot be matched. Can we express it in the monetary term? Definitely not. And please ensure that you will experience that one day in your life. Whenever you feel like, sir, I will not do it. This course is not for me. Just think about that result today. The satisfaction you will get, how super proud that your parents will be about you. Just think about it. And you need to face that situation. You need to feel that situation, guys. So please give your 100% and make sure that you come out of the bracket as early as possible. Wish you a good luck. Yes, students. Now we will revise the topic of input tax credit as given in section 16 to 21 of CGST Act. And there is no separate provisions covered in IGST Act with respect to input tax credit topic. That means as per section 20 of IGST Act, whatever we are learning under CGST Act from section 16 to 21, it is same to same applicable even for interstate suppliers. Okay, sir. So before we get into input tax credit portions or the provisions, first we'll understand what is input tax. Right? Input tax is something which is paid on the inward supply of the input or input service or capital goods. Even on the capital goods, credit is available provided all these three are used or intended to be used for business purpose. And sir, what is capital goods? The value of which is capitalized in the books of accounts, means in simple, which is shown in the balance sheet as an asset, is called capital goods, guys. Like how you call fixed assets in accounts, no? Same way in GST, they're using the term called capital goods. Okay. So whatever tax we have paid on the inward supply of input, which is nothing but raw material, or the input service, or the capital goods, which is used or intended to be used for business. If I can claim the credit of it, we call it as input tax credit, guys. And input tax credit can be used against the output tax, which is payable on the outward supply. And if a person is eligible to claim input tax credit as per section 155, it is his responsibility or onus to prove that yes, he is eligible to claim credit. And as I already mentioned, as per section 20 of IGST Act, whatever provisions we are learning under CGST Act with respect to ITC, same to same is applicable even for interstate supply. Okay, so if I have to explain with an example, just pay attention. I will just try to explain the credit concept using this example. Assume guys, supplier is making an outward supply, which is nothing but sales, on which output tax is 5,000. So the value of outward supply is 50,000. On that GST is 5,000. So totally supplier will collect how much from the recipient? 55,000. 50,000 is supplier revenue, whereas 5,000 he has to remit it to the government. But should he pay entire 5,000 to the government is a question mark. We need to check whether he is having any credit of input tax. Okay, sir. So whatever he is liable to pay, no, that is 5,000 output tax will appear in the electronic liability register. As soon as a person register under GST, in his GST profile on the GST portal, there will be three ledgers or register, guys, which is electronic liability register, electronic credit ledger, and electronic cash ledger. Okay. So whatever output tax is supposed to pay on his outward supply, which is disclosed in his GSTR1, will appear in liability register, which is in my example 5,000. Okay. Now let us check the inward supply. Assume the same person who is registered under GST is also taken inward supply, which is nothing but purchases. On that, he has paid input tax of 1,000 rupees. So the value of inward supply is 10,000 and assume the GST rate is 10%. So 10% of 10,000 comes to 1,000. So totally this person as a recipient. So for inward supply, he will be called as recipient and supplier will be some other person. Okay. So as a recipient, he has totally paid 11,000, which includes 1,000 GST, which we call it as input tax. Okay. Now this supplier who has supplied the goods to this person would have filed his GSTR1 and he would have disclosed that his output tax is 1,000. And automatically, as soon as he disclose it as his output tax in his GSTR1, it will reflect to the recipient, that is for his inward supply, as credit. Where, sir? In electronic credit ledger. And what is the amount of it? 1000 rupees. And remaining, the supplier or the registered person has to pay through electronic cash ledger. And he should ensure that before he pay, he has a balance in electronic cash ledger. So this is the amount to be paid by the person after utilizing the credit, guys. So when can I utilize this credit, or when am I eligible to claim this credit, is what we are learning in this chapter, guys. And more about this register or ledger, I will be talking in the payment chapter, guys. I will explain there in detail about this. Got it? Yes, sir. Fine. Coming back. Yeah. So here I have given with respect to whatever provisions are covered in section 16, guys. Majority of them I have covered here. So what is it? We will see. So supplier has supplied the goods or services to the recipient, and he has given the goods or services along with the invoice, that is tax invoice, to the recipient. And he has collected GST on the supply, that is the value of supply plus GST. He has collected from whom? From the recipient. Okay, sir. And whatever amount of GST he has collected, he has to remit it to the government within the due date of GST. Okay, which is normally 20th of next month. And supplier should also file GSTR1, or using invoice furnishing facility, you need to give the details of outward supply. GSTR1 is the return. If he is filing it monthly, then whatever details of his outward supply, he has to give the details in GSTR1. If in case, if supplier is following QRMP scheme, that is quarterly return monthly payment, then for whatever supplies he has made with respect to the first 2 months of any quarter, he can give the details using invoice furnishing facility. This is only when supplier has opted for QRMP scheme. Whatever outward supplies he has made for the first 2 months of any quarter, if it is a B2B supply, that is when recipient is registered, and if recipient wants to claim the credit immediately, then he can pass on the credit to the recipient by disclosing the details of outward supply in invoice furnishing facility, guys. And more about this, I will talk or I will explain in returns chapter. That is GSTR1, GSTR2A, 2B, everything. Okay, sir. Fine. Including IFF, which is a QRMP scheme. Fine, sir. So as soon as the supplier files GSTR1 or give the details of outward supply in invoice furnishing facility, the credit will auto-populate to the recipient in his GSTR2B. And there is one more statement called GSTR2A also. 2A as well as 2B is a statement where the credit will auto-populate or will appear to the recipient. But which is more important is GSTR2B. And what is the difference between GSTR2A, 2B and all? We will learn in returns chapter, which is the last chapter in our syllabus. Okay, sir. Fine. Now, sir, can recipient claim the credit of whatever taxes the supplier has collected from him and remitted to the government? Yes, provided all these conditions are satisfied. So what are those conditions, sir? It is given in section 16 of CGST Act. One by one we will see. So recipient has to be registered, only then he can claim the credit. Yes. Sir, what if it is a B2C supply where the recipient is not registered? Guys, they cannot claim credit. They cannot claim credit. Why so? Because they are not registered under GST. If they are not registered under GST, they are not liable to pay GST on their outward supply. When there is no output tax, obviously, what do you do with your input tax? Okay. Next, for the recipient, the ITC should have been reflected in his GSTR 2B, okay, which will be auto-populated from the details given by the supplier in his GSTR 1 or invoice furnishing facility. Okay. And recipient should have actually received the goods or services. And there are few important things here. Sir, what if recipient is receiving the goods in lots or installment? There is a proviso to section 16 telling if goods are received by the recipient in lots or in installments, then recipient can claim full credit when he receives the last lot. So he is eligible to claim full credit only when he receives the last lot, guys. Okay. Now, for example, assume I have purchased 1 lakh kgs of raw material, but I am receiving in 10 lots, that is 10,000 kgs each. In that case, when I receive first lot, second lot, third lot and all, can I claim proportionate credit? No. For entire 1 lakh kgs, I can claim the credit when I receive the last lot, guys. That is the 10th lot. And as a tax planning, if I want to claim the credit as and when I receive the lot, it is better to give separate invoice. For example, for each lot, if supplier is issuing a separate invoice, then we can claim the credit as and when each lot is received, provided separate invoice is given. Whereas if one single invoice is issued for entire 1 lakh kgs, I can claim full credit only when I receive the last lot, guys. Okay. So they have told if only if the goods is received or if services is received by the recipient, he can claim credit. But in case of bill to ship to transaction also. Sir, what is bill to ship to transaction? So this is like this we have already discussed even in the place of supply topic, guys. I will just repeat it. A has ordered the goods to B to deliver it to C. So physically the goods are received by C. But who is considered to be the deemed recipient, guys? A. So for the supply from B to A, where the invoice is issued in the name of A, so who is the recipient? A. But physically goods are received by C. Can still A claim the credit for it? Yes. So even though goods are physically received by C, A is considered to be deemed recipient as if he has received the goods. He can claim the credit. He can claim the credit, guys. Got it? Yes, sir. And there is one more clarification. Just a minute. There is a clarification with respect to X works contract. Okay. Assume when goods are delivered on X works contract basis, that is, when the goods are handed over by the supplier to the transporter, all the risk and rewards is transferred to the recipient. So for the supplier, the delivery of the goods is completed when he is handing over the goods to the transporter and not when goods is actually received by the recipient. Okay, this we call it as X works contract as. Now assume the supplier is Global Manufacturing Incorporation. They're handing over the goods to the transporter to deliver it to the recipient. Okay. So when is it considered to be received by the recipient is when it is handed over to the transporter. So assume the goods is handed over to the transporter on 10th January 2026 and from supplier point of view supply is completed, guys. Now the risk reward ownership is transferred to whom? Recipient. And if anything goes wrong in the transit, in the transportation, the loss is for whom? To the recipient. Okay. And let us assume the recipient received the goods on 14th February. So when is recipient eligible to claim credit? Is it on 10th January or is it on 14th February? Is the question mark. As the delivery is said to be completed from supplier's point of view on 10th January itself, can recipient claim the credit for it? Yes, guys. He can claim the credit. On what day? He is eligible to claim credit on 10th January itself, even though he has not yet received the goods physically. Got it? And if in case, if goods is lost in transit, it is a loss to a recipient people. Got it? Yes. Sure. Coming back. Next. ITC should not be restricted or blocked as per section 17. If it is restricted or blocked as per section 17, obviously you cannot claim credit. Okay. Then he or she should be in the possession of tax invoice or any other document issued by the supplier. Okay. Next, the recipient in order to claim credit. So whatever supplier has given the details of his outward supply will auto populate to him in 2B. Now even recipient will be having outward supply on which he is supposed to pay output tax. Yes. So in his GSTR 3B, he need to disclose all this information, guys. All this information. Where is it? Just a minute. Whatever example I gave. Yes. So in GSTR 3B, you need to disclose all these details. What is his output tax and how much credit is eligible to claim, and remaining whatever he is paying through cash ledger, he has to pay it and then file GSTR 3B. And then file GSTR 3B. Yes. So GSTR 3B is the return through which the recipient will be claiming the credit. And after adjusting the credit, if any amount is yet to be paid, he will pay that through cash ledger and then he will file GSTR 3B, guys. Okay, on or before the due date. Okay. Next, the input or input service or capital goods used for the business purpose to provide taxable outward supply. So it has to be used for business purpose. Sir, what if input or input service or capital goods is used for personal purpose? No credit. Sir, what if it is used in the manufacture of exempt goods? Then if outward supply is exempt, guys, there is no credit available on inward supply. It is clearly told in the law. Only when outward supply is taxable, the credit is available on inward supply. So that is why I have told to provide a taxable outward supply. Okay, sir. Fine. And I will also just speak about the returns, guys. Just a minute. Yeah. There are mainly two returns which has to be filed under GST, that is GSTR 1 and 3B for the persons who are registered under section 9. And for the person who is following composition scheme as per section 10, anyway is not eligible to claim credit. So we need not worry about ITC there. Okay. So a registered person under section 9 will file every month GSTR 1 and 3B. Or if they are following QRMP, they will file both 1 and 3B quarterly. And if question is silent, always consider that GSTR 1 and 3B is filed monthly. Okay, if they specifically mentioned in the question that the supplier is following QRMP, only then go with quarterly returns. Okay, so let me consider it monthly here. So GSTR 1 contains the details of outward supply and output tax. It has to be filed on or before 11th of next month. Okay, so for March, we need to file it on or before 11th April. Then GSTR 3B, whatever details has already be given in GSTR 1 will come here, along with whatever credit is appearing in GSTR 2B, even that will come here. Okay. So GSTR 3B will contains the details of outward supply, output tax, plus inward supply, input tax. But the difference is in GSTR 1, we need to give the details invoice wise, whereas here we need not give it invoice wise, guys. It is just a summary. Okay, sir. So output tax minus input tax credit, remaining whatever I am supposed to pay through cash ledger, I need to pay it. And then file GSTR 3B on or before 20th of next month. For example, for March, it has to be filed on or before 20th April, guys. And please be careful, whatever I am explaining is monthly. If it is quarterly, then the due dates are different, guys. Got it? Yes, sir. Okay. Then there is a proviso telling if recipient has purchased any goods or availed services on credit basis, he should make sure that he is paying the consideration to the supplier within 180 days from the date of issue of invoice. Within 180 days from the date of issue of invoice. So for example, assume guys supplier has supplied the goods to the recipient for 1 lakh on which GST is 18,000. So the total invoice price is 1 lakh 18,000. So supplier has given a credit period to the recipient to pay, but for supplier, the time of supply assume is in July itself because the supply is made and invoice is issued in July. So even though he has not received the payment, so the time of supply for supplier is July. So on or before 20th of August, he need to pay GST to the government. Yes. So he will pay out of his own pocket entire 18,000. He will pay out of his own pocket, and the details of this he has also given in his GSTR 1. So can recipient claim the credit? Yes, he can claim free credit, BT credit. Okay, sir. Even though he has not paid any amount, the amount has been paid by supplier and he has given the details of outward supply, assuming GSTR 1. So the credit will auto-populate to the recipient in GSTR 2B. He can claim the credit. So he has claimed full 18,000 credit. If we pay the amount to the supplier within 180 days, no problem. We will not disturb him. But if recipient fails to pay to the supplier within 180 days from the date of issue of invoice by the supplier has issued the invoice and within 180 days the recipient has not paid. In that case, the recipient, if he has already claimed credit, he need to reverse it. Entire 18,000, he needs to reverse it. So after the expiry of 180 days, whatever BT credit, free credit recipient has claimed, he has to reverse it. He has to reverse it. In which return, sir? After 180 days period expires, whichever is the next GSTR 3B will find, in that he need to reverse the credit which he has already claimed with respect to this supply, which is 18,000 in my example. Okay. Sir, what if recipient has paid proportionately? For example, out of 1 lakh, he has paid 50,000 to the supplier. Sir. Then what is the unpaid amount? 50,000. On that GST comes to how much? 9,000. So in that case, recipient has to reverse only 9,000. So whatever is the GST amount which is not paid on the value which is not paid, I repeat, whatever is the GST amount on the value which is not paid by the recipient to the supplier within 180 days from the date of issue of invoice has to be reversed by the recipient. Reversed means simple. After 180 days, whichever GSTR 3B is filing, in that already output tax is there. Yes. For that, you add back this credit, whatever he has to reverse. So automatically his output tax will increase, guys. Clear? Yes, sir. But this 180 days concept is not applicable in few cases. I have given the exception here. You can see. Exception is when RCM is applicable. Okay, first of all, before this, sir, when RCM is applicable, the recipient has to pay tax himself. Can he claim a credit of it? Yes, it is an input tax for him. He can claim the credit. So for whatever taxes a recipient has paid, whether the supply is taxable under FCM or RCM, for recipient it is an input tax, he can claim a credit of it. So even if it is an RCM under which the recipient himself has paid the tax to the government, can he claim a credit of it? Yes, as it is an input tax. Okay, coming back to this. So within 180 days, if supplier has not paid, then he need to reverse it. And while reversing, it is along with interest at 18% per annum. From the date on which the recipient has claimed free credit till the date he reverse and pay to the government, the ITC amount has to be added back along with interest at 18% per annum. So interest will be from what date to what date? From the day it is claimed by the recipient till the date it is reversed and paid. Okay, sir. But this 180 days limit is not applicable in the following cases. When is it? RCM, that is reverse charge mechanism, because here recipient himself will pay the tax to the government. Only then he can claim the credit. So obviously, in that case, 180 days concept is not applicable. Whether the recipient pay to the supplier or not, the value doesn't matter. Because the government has received the amount, only then they will pass the credit to the recipient, guys. Okay. Schedule 1 cases, that is, there are 4 activities, even without consideration, it is a supply. As per para 1, 2, 3, 4 of Schedule 1. In that case, recipient is not paying anything because there is no consideration, but still it is considered as supply, and the value will be fixed as per the valuation rules. Yes. And in that case, is GST be levied? Yes. But as there is no consideration, there is no point applying this 180 days there. Got it? Yes. Then addition made to the value of supplies as per section 15 subsection 2 clause B. That is, the liability of the supplier is paid by the recipient to a third person. Assume I am the supplier, you are the recipient. I was supposed to pay 10,000 to a third person, which I asked you to pay it. So have you already paid it? Yes, to the third person. So for the value which we need to calculate for my supply, should we add this 10,000? Yes. But can we consider that, oh, within 180 days, recipient has not paid to the supplier, so we need to reverse the credit? No, 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 guys. As it is already paid by the recipient to the third person, that is why we are adding it to the value of supply between the supplier and recipient. So even though this amount is not directly paid by the recipient to the supplier, it is as if you have paid me. It is as if you have paid me. Even in that case, this 180 days would not be applicable. Got it? Yes. Fine. Now coming to, so whatever is covered in subsection 1 as well as subsection 2, we have learned, guys. And under subsection 2, there are number of conditions. If all the conditions are satisfied, only then recipient can claim the credit. Sir, what if one condition is missing? No credit. Okay, fine. Then coming to subsection 3, connected to income tax also. If depreciation is claimed on the tax component, that is GST component, of the cost of capital goods and plant and machinery under the Income Tax Act, the ITC on the said tax component will not be allowed. So in simple, I have drawn a chart here. Let us understand. If GST is paid on the purchase of capital goods or even plant and machinery, first check is ITC claimed. If ITC is available, if it is not blocked as per section 17, claim it. So if ITC is claimed, then you cannot add that GST amount to the actual cost of an asset to add the asset to the block. So whenever an asset is purchased and put to use during the previous year, we will calculate the actual cost of an asset as per section 43 subsection 1. No? Yes. So for GST paid on the purchase of capital goods or plant and machinery, if credit is available, then that GST component will not be capitalized for income tax purpose. So that means no depreciation on the GST component. Okay, as you already got the benefit under GST. Sir, what if credit is blocked or not claimed? In that case, the GST amount can be added to the actual cost of a capital asset, which will be used for the business, and it will be added to the block on which depreciation can be claimed over the useful life of the asset, guys. Got it? So on whatever GST is paid on the purchase of capital goods on plant and machinery, either you can claim credit or you can add it to the actual cost of an asset as per Income Tax Act, but not both. And this 43 subsection 1 talks about the actual cost calculation for claiming depreciation as per section 32 in income tax under the PGBP head. Got it? Yes. So I will just try to explain this with an example. Just a minute. Ah. Assume guys, I have purchased a capital goods or plant and machinery for 10 lakh plus GST on that is 18%, which is 1 lakh 80,000. So the total cost for me is 11 lakh 80. Okay. Now for income tax purpose, assume the actual cost we have taken only 10 lakh. In that case, can I claim the credit of 1 lakh 80,000? Yes, I can claim the credit of 1 lakh 80,000 under GST. So for income tax purpose to claim depreciation, what is the actual cost? Only 10 lakh. Okay. Now assume in income tax I have considered the actual cost is 11 lakh 80,000 which includes GST also. In that case, can I claim the credit? No, I cannot claim the credit. Is that clear? Yes. So, sir, what is more beneficial? Guys, whenever you purchase any capital goods or plant and machinery, first check whether credit is available. If yes, that is more beneficial, claim the credit because you will get the immediate benefit. Claim the credit, but don't add GST component to calculate actual cost for income tax purpose. Okay. Sir, what if by chance if credit is not available? Assume the GST credit is blocked under section 17 or it is not available because the assessee has not satisfied any one of the conditions given under section 16. In that case, you can add it to the cost of an asset under income tax to claim depreciation. So always, whenever you purchase any capital goods or plant and machinery, first thing you will check is whether credit is available under GST or not. Accordingly, decide the treatment, guys. Got it? Yes. And whenever assessee as a credit, he can avail it within the following time. As per subsection 4, the deadline to claim credit, deadline, it starts with the D. D is the fourth alphabet. So subsection 4. Yes. A registered person shall not be entitled to take input tax credit after, means this is the deadline, maximum deadline to claim credit. Ah. So that is 30th November of the following financial year, that is next financial year, or the actual date of furnishing of relevant annual return, that is GSTR 9, whichever is earlier. Got it? Yes. Assume the invoice date fall in any month of this financial year. So for this invoice, whatever credit is available, you can claim maximum within 30th November of next financial year or the actual date of filing the annual return for the current year for which the invoice relates to, whichever is earlier. And if by chance, if this date is not given in the question because it is subjective, it will vary from person to person. If by chance, if this date is not given, then you can straight away consider 30th November of next financial year. And please be careful, guys. What they have told here is actual date, not due date. The due date to file GSTR 9 is 31st December of next financial year. But they are not talking about the due date, they are talking about actual date, which is subjective. It will vary from person to person because different persons might file the returns on different dates. Got it? If it is given in the question, well and good. You take, compare with both and take whichever is earlier. If in case, if this is not given, straight away go with 30th November. Got it? Yes. Then coming to subsection 5, it is not relevant as on today, so you can just ignore it. And coming to subsection 6, guys, it has a connection to section 29 and 30. Section 29 talks about the cancellation of registration and section 30 talks about revocation of cancellation of registration. So as it has a connection to section 29 and 30, which we will learn in registration topic, I will explain subsection 6 when I cover section 29 and 30, guys. Is that clear? Yes. So you can just write it here, read with section 29 and 30 in registration chapter. Got it? Yes, sir. Okay. Next coming to rule 37A. I will try to explain this with an example. Just a minute. Yeah. Okay. Assume guys, the supplier has supplied the goods or services to the recipient in Jan 2026 and he has collected the tax from the recipient and he has filed GSTR 1 for Jan, which is in February. Okay. He has already filed GSTR 1 for January and accordingly for recipient the credit was auto-populated in GSTR 2B or it was reflected in GSTR 2B. Now they were using the word auto-populated, but recently they have amended and they have removed the word auto. Okay, they have just told GSTR 2B is a statement. But anyway, it will be auto-populated even today in the real world. Okay, I will explain that when we are covering returns topic, guys. Okay. So supplier has filed GSTR 1 for January in February and the credit as reflected in GSTR 2B to the recipient and recipient claimed the credit. But supplier didn't file GSTR 3B for January, which he was supposed to file on or before 20th February, he didn't file it. Okay, no problem. No problem till when? till 30th September of next financial year. So supplier filed GSTR 1, but he didn't file GSTR 3B for January. So recipient has also already claimed credit because all the conditions were satisfied. Oh. So if supplier didn't file, actually the due date to file GSTR 3B for January is 20th February. But the government is telling as per Rule 37A, wait till 30th September of next financial year. If supplier has not filed GSTR 3B till 30th September of next financial year, then recipient, whatever credit he has claimed, he need to reverse it on or before 30th November. He need to reverse it on or before 30th November of that year, guys. So he has 2 months time to reverse the credit. And if he reverse the credit within 30th November, then there is no interest for it. Only GST component he need to reverse. So for the default of supplier, they are punishing recipient. So automatically what happens, recipient will push the supplier to file his pending returns. So by doing this, they're actually disturbing the supplier's business, because whenever the credit is denied or has to be reversed by the recipient, maybe he will not go forward to enter into a transaction with the same supplier again in the future. So if supplier doesn't comply with the GST provisions, they may disturb his business by asking the recipient to reverse the credit cards. Okay, sir. So if recipient doesn't reverse the credit within 30th November, he has to reverse it even if it is later. But from 1st December, interest will start at 18% per annum. So from 1st December, if you delay further to 30th November, then from 1st December, he has to reverse it, but along with the interest. So interest will start only from 1st December. Got it? So if you reverse it within this time, only credit he has to reverse, no interest, because anyway, Papa, he has not done any mistake. Got it? Yes. But sir, what if later? Assume the GSTR 3B for January was not filed by the supplier till 30th September. So Papa recipient reversed the credit before 30th November. But later, whatever is the pending return by the supplier for January, no GSTR 3B. Assume he somewhere filed it in March 2027, he filed it. In that case, recipient can re-avail the credit. Recipient can re-avail the credit. Whatever he reversed it no before 30th November, he can re-avail that. If GSTR 3B is filed by the supplier later, guys. Got it? Yes, sir. And to re-avail the credit, whatever time limit we discussed no under section 16.4, that is not applicable. This is only for availing the credit for the first time. After availing the credit for any reason, if recipient has reversed it, and even for this purpose, that is if he has not paid within 180 days, later if he pays it, assume after 180 days he paid, so after reversing the credit he paid the amount to the supplier, can he re-avail the credit? Yes, he can re-avail the credit, but for re-availing the credit this time limit is not applicable, guys. Okay, yes. So that is what is given in rule 37A, guys. This is only for the mistake or default of supplier by not filing GSTR 3B. The recipient will be punished by reversing the credit. You need to reverse the credit. Is that clear? Yes. Fine. We'll move forward. So we are moving to section 17. Section 16 is completely done. Then 17, guys. Below is the list of situation when input tax credit will not be available. So section 17 talks about apportionment of credit or blocked credit. Oh. Guys, we already learned that the input service or capital goods which is taken as inward supply has to be used for business purpose. Sir, what if it is used for personal purpose? No credit. Sir, what if it is partly business, partly personal? Then whatever is attributable for business purpose, only that much credit can be used or claimed. For example, assume GST paid on the purchase is 10,000 and the inward supply 50% is used for business, 50% for personal. In that case, only 50% of 10,000, that is only 5,000 credit can be claimed. Okay, yes. Next, subsection 2. Subsection 2 and 3 has to be read together. What is subsection 2? Where the goods or services or both are used partly for affecting taxable supply, including zero rated supply. Even zero rated supply is considered to be a taxable supply, and partly for affecting exempt supplies. The amount of credit shall be restricted to input tax as is attributable to the taxable supply, including zero rated supply. Okay. So before I explain this, what is zero rated supply is given in section 16 of IGST Act. We will learn it. I had kept it pending. Come to this page. Okay. In the bottom, I have given in page number 50. Yes. Zero rated supply, section 16 subsection 1 of IGST Act. Zero rated supply means any of the following supplies of goods or services or both, namely export of goods or services or both is always zero rated, and next one is supply of goods or services to special economic zone developer or special economic zone unit is a zero rated supply, guys. I'd already mentioned it number of times. For GST purpose, SEZ is considered to be a location outside India. So anything going to them is at par with export, guys. And for GST, we treat it as zero rated supply. Okay, sir. So just a minute. Yeah. So if you take you can see SEZ unit or SEZ developer is there, and for them registration is mandatory as per GST. Okay. If there is any supply to SEZ unit or SEZ developer, means for them it is inward supply. It is interstate supply as well as zero rated. Whereas anything supplied by them, which is an outward supply for them, is interstate supply but not zero rated. And this is at par with import. If we are taking any supply from SEZ unit, it is at par with import, guys. Is that clear? For SEZ unit or developer, it is outward. Whereas for the receiver, it is inward. At par with import. Got it? Yes, sir. And if outward supply is zero rated supply, credit is available. Credit is available, guys. Yes, just a minute. Lock. Yes. Now, assume an outward supply is exempt supply. Sir, is credit available? And exempt supply includes nil rated, wholly exempt supply, and non-taxable supply, guys. As per section 2, clause 47, which defines exempt supply includes all these three. Okay. So if outward supply is exempt, then there is no credit available on inward supply. Okay, sir. Same way. If outward supply is taxable, including zero rated supply, is credit available on inward supply? Yes, credit is available. Yes, credit is available. Next. Sir, there is a common input or input service or even capital goods which is used in the manufacture of two goods, sir. I am manufacturing two goods. One is G1, the other one is G2. G1 is taxable supply and G2 is exempt supply. And this input, whatever I am purchasing, I am using for both these outputs. Can I claim full credit? No. Whatever is attributable to taxable outward supply, only that much credit I can claim. This is only when same input is used for the manufacture of two goods and one is exempt, one is taxable. That is where the confusion arises. If both are taxable, full credit is available. If both are exempt, full credit not available. But one is taxable, one is exempt. So proportionate credit has to be claimed, whatever is attributable towards taxable outward supply. Okay. I have just given one example here with numbers. Assume, guys, there is a common input which is purchased to manufacture two goods, FG1, FG2, finished goods 1, finished goods 2. Finished goods 1 is taxable, whereas finished goods 2 is exempt, which is an outward supply for me. Okay. So what is the GST paid on the common input used in the manufacture of both these goods is 50,000. Total GST paid on common input, which will be used in the manufacture of both these goods, is 50,000. I have paid GST of 50,000. Okay. So turnover from FG1, which is taxable, is 2 lakh, and turnover from FG2, which is exempt, is 1 lakh. So what is the total aggregate turnover? 3 lakh. So can I claim full 50,000 credit? No. So out of 50,000, whatever is attributable towards 2 lakh, only that much credit I can claim. So how is the calculation? Simple. 50,000 divided by total turnover into taxable turnover, which is 33,333. Only this much credit can be claimed. So remaining, that credit cannot be claimed. So 50,000 minus 33,333 cannot be claimed, guys. Got it? Which is simple, like the credit which is attributable towards exempt supply is not available. Got it? Yes. If you want, you can see whenever I am giving any example, you guys, if you want more understanding, just pause and go through it. You can just observe it. Okay, fine. I will move forward. Yeah. So subsection 2, and please be careful for subsection 2 purpose, outward taxable supply includes even zero rated supply, because zero rated supply is considered to be taxable, but rate is zero rated. So output tax might be zero, but still when my outward supply is zero rated, On my inward supply, is credit available? Yes. So even zero rated supply, when it is outward, it is considered to be a taxable outward supply, guys. Okay. And subsection 3 is only for subsection 2 purpose. What is it? Guys, here they try to inflate your exempt turnover so that the amount of GST credit what you claim will come down. So they will try to increase this as per subsection 3 for subsection 2 purpose. So this calculation we will do as per subsection 2, right? Yes. And actually this calculation is given in the rules, and that rules is not a part of your syllabus. You need not worry. I've just given an illustration here for better understanding. Sir, will they ask any calculations like this in the exam? No, guys, because this calculation is actually given in the rules, and that rule is not a part of your intermediate syllabus. Okay. So in subsection 3, they are telling for subsection 2 purpose, what exempt turnover will include? They are trying to include few things more. What is it? Subsection 3. The value of exempt supply under subsection 2 shall include. This is only for subsection 2 people. Only for subsection 2 purpose, not for the entire act. Oh, what is it? Supplies on which recipient is liable to pay tax on reverse charge basis. So, if my outward supply is taxable under RCM, they are telling for me, consider it as exempt supplies. It is taxable actually, but under RCM. But they are telling for supplier, consider it as exempt supply. Then transaction in securities. Actually, securities is neither the goods nor the services. That means it is not at all covered under GST. But still, they are asking you to cover here. Then the last one is sale of land and sale of constructed building, which is a part of Schedule 3. There are a number of items in Schedule 3, but they have covered only one item in Schedule 3. Got it? Yes. So all these three has to be included in the exempt supply, guys, so that your exempt turnover will increase, and accordingly the amount of credit which a person can claim will get reduced. That is the strategy played by the government. And subsection 4 is actually there with respect to banking company and all, but it is not a part of your syllabus. Okay. Input tax credit is available only on those goods and services which is used for business. Exports and supplies to SEZ fall under the category of what? Zero rated supplies. ITC is available on zero rated supply and taxable supply, but not on exempt supply, guys, which I already explained. Okay. Now coming to 17 subsection 5, which is important, guys. There are number of credits or number of situations when the credit is blocked or restricted. When is it we will be learning? And here I have differentiated by color, guys. Wherever I have given in green, that means in the such case credit is available. If I have highlighted anything in red, that means in such case the credit is not available. I repeat, red means no credit, green means credit is available. Got it? Yes, because there are chances that students might get confused here. So that is why I have differentiated by color. Okay, let us begin. Pay attention. Look here, look here. Input tax credit shall not be available in respect of the following, which are namely, first one, clause A, 17.5a. Try to remember in the order. I have given it in the order of the sections or clauses, guys. Okay. Motor vehicle for the transportation of persons. Means if it is for the goods, allowed on? Yes. So for the transportation of persons, having approved sitting capacity of not more than 13, means less than or equal to 13. Sir, what if it is more than 13? Means bus. Credit is available, provided it is used for business purpose. Yeah. Okay. So what is covered here is not more than 13 means maybe car. Okay. Including the driver. Okay. Not more than 13, including the driver. Except when they are used for making the following taxable supply. Means in the following cases, credit is available. Okay. When is it, sir? If it is for further supply of such motor vehicle, for example, I have purchased the car to further sell it, credit is available. Okay. Next, for the transportation of passengers. Guys, passenger is different, employees is different. Assume I have purchased a car to use it in my business. My business is to provide transportation services to the passengers. Means my customers. So is credit available for me? Yes. Next, imparting training on driving such of motor vehicles. Assume I am running a driving school. So I have purchased any car whose sitting capacity is less than or equal to 13. Sir, is credit available? Yes, credit is available. Okay. Fine. Hope you understood. If motor vehicle is purchased for transportation of persons and if seating capacity is less than or equal to 13, credit is blocked. But if it is used for the following purpose, credit is available. Okay, sir. Next. So motor vehicles done. Next, vessels and aircraft. Vessels or aircraft, except when they are used for. Means if it is used for the following purpose, credit is available, guys. Okay. Means if it is used for any purpose other than this, credit would be blocked. Okay. Here, assume motor vehicles is purchased. Assume a cab or a car is purchased by a company for using it for pick and drop of employees, like cab facility. So will employees fall here? No, no, no. In that case, credit is not available. So what if it is a bus which is used for the transportation of employees? Credit will be available because seating capacity will be more than 13. Here credit is blocked only if it is not more than 13. If it is more than 13 and if that bus is used for business purpose, even if it is for the transportation of employees, credit is available, guys. Got it? Yes. Vessels and aircraft except when they are used for, means in the following cases credit is available, which is same like for motor vehicles. For making the following taxable outward supplies, namely for supply of such vessels or aircraft, means I have purchased, assume vessel, to further sell it. On purchase, whatever GST I have paid, can I claim the credit? Yes. Next, transportation of passengers or imparting training on navigating such vessels, that is the training of the navigating the vessels. Vessels is nothing but ships here. Imparting training on flying of such aircraft, that is pilot training, credit is available. Even if it is for transportation of goods, if you have purchased any vessels or aircraft, credit is available. Is that clear? Yes. So clause A and AA talks about if you have purchased motor vehicle, vessels or aircraft on which you have paid GST, credit is blocked. But if you are using it for the purposes which I have highlighted in green color, credit is available. Credit is available, people. Yes, I will just show you a few examples which I have given in my provision book. Just a minute, have a look into it. Just a minute. Okay. So if you also have my provision book, you can just open. If not, you can just pause the video and look into it, guys. So these are the examples for 17.5 clause A. So please pause the video and go through it. Simple examples I have given. Okay. Next, for AA, I have given two examples, even that you go through. This is for AA, vessels and aircraft. Okay. Now I will go back. Next, AB. Guys, on purchase of motor vehicle, vessels or aircraft, if credit is not available, then if I have taken any general insurance, services, repairs and maintenance on which I have paid GST, even in on that whatever GST has been paid, credit is blocked. Credit is blocked. So in simple, just a minute. Okay. Let me explain you. Okay. Now assume a registered person has purchased motor vehicle or even a vessel or aircraft, any one of this. On purchase of any of this, if credit is not available as per section 17(5)(a) or AA, then for this motor vehicle, vessels or aircraft, if you take any insurance services, repair service or maintenance service on which he has paid GST, credit is not available as per section 17(5)(ab). So if on purchase, if credit is blocked, even for the services whatever is taking, credit is blocked. Sir, on purchase, if credit is available, then on the services also, is credit available? Yes. So credit on the services depends on the credit on purchases. Hope you got it. Yes, sir. Fine. Let me read it. Services of general insurance, servicing, repair and maintenance insofar as they relate to motor vehicles, vessels and aircraft referred to in clause A or AA. Okay. Means we are taking services for whatever we have purchased above, that is motor vehicle, vessels or aircraft. But credit is available if it is used for the following purpose. What are those? Where the motor vehicle, vessel or aircraft referred to in clause A or AA are used for the purposes specified therein. For the purposes specified therein means whichever I have highlighted in green color. So if it is covered here, on purchase credit is available. In such case, even for the services, credit is available, guys. Okay, sir. Next, where received by a taxable person who is engaged in the manufacture of such motor vehicles, vessels or aircraft. So assume I am a Tata Motors who is engaged in the manufacture of motor vehicles. If I take any of these services, is credit available what for whatever GST I have paid on these services? Yes, credit is available. Even if I am a manufacturer of vessels or aircraft. Next, if it is taxable person is engaged in the supply of general insurance services in respect of such motor vehicle, vessels or aircraft insured by them. So if recipient is engaged in the business of general insurance, if they have taken any of these services on which they have paid GST, credit is available. Sir, what if general insurance business is taking general insurance? Is it possible? Yes. What if it is reinsurance? So there is a possibility. Yes. And normally this general insurance services, whenever there is any damage of vehicles, they will get it repaired, for which they will take these services, on which they were liable to pay GST. And whatever GST they pay on the services which they are taking or which they are taking, can they claim the credit? Yes, they can claim the credit, guys. They can claim the credit. Okay, sir. So even for this, I will just show you some examples. Just a minute. Yeah, these three examples. You can just please pause the video quickly and go through. Yeah, I will move forward. Coming to clause B, there are a number of items covered here. Guys, if any of this is taken as inward supply on which GST is paid, credit is blocked. Credit is blocked. What are those? The following supply of goods or services are both, that is food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicles, vessels or aircraft referred to in clause A or clause AA except when used for the purposes specified therein. Okay, listen here. So we already learned if motor vehicle or vessels or aircraft is purchased, on purchase if GST is paid, it is blocked. But if it is used for the following purposes, credit is available. Sir, what if I don't have so much money to purchase? I am taking motor vehicle, vessel or aircraft on rent or on lease. So I am paying a rent amount. And on that rent, I am paying GST. Can I claim the credit? No, it is blocked. It is blocked. That means when you are taking the vehicles on rent, guys. Okay, na? Yes. But if it is used for the following purpose, is credit available? Yes. So whatever motor vehicle you are taking, whatever motor vehicles you are taking, and actually vessels and aircraft is not covered here, only motor vehicles. So whatever motor vehicle you are taking it on rent, if it is used for the following purposes, in that case, whatever GST is paid on the rent amount, credit is available. Credit is available, guys. Okay, sir. Okay, let me continue. Then life insurance and health insurance. So if you are taken any of this as an inward supply on which GST is paid, credit is blocked. However, they are given in the proviso, provided that whenever any paragraph starts with provided, it means it is a proviso, guys. Okay. Provided that the input tax credit shall be available where an inward supply of such goods or services or both is used for making an outward taxable supply of same category of goods or services or both. Means if the following is taken as inward supply to provide same category of outward supply, in that case, can we claim the credit on inward supply? Yes, guys. For example, assume I am purchasing food and beverages, not to consume, but to sell it to my customers in my canteen or in my shop. In that case, as I am providing the same category of outward supply, on the purchase of food and beverages, whatever GST I have paid, can I claim the credit? Yes, guys, I can claim it. And it is same for all the items covered here. Okay. Next, second and third. Membership of a club, health and fitness center, and the last one, travel benefit. And membership, assume it is taken for employees or for anyone, even though it is for business or profession purpose, on the membership, whatever GST is paid, no credit for it. Okay, sir. Next, if whether it is for a club, health, or even fitness centers like gym. Okay. Next, third, travel benefits extended to an employee on a vacation, such as leave or home travel concession. For this, actually, exemption is given for an employee under Section 10(5) of Income Tax Act for travel to any place within India. Got it? Yes. Okay. Now, sir, assume employer is providing this to employees on which the employer has paid GST. Can you claim a credit of it? No. But there is a provision here. What is it? Input tax credit shall be available where it is obligatory for an employer to provide the same to its employees under any law for the time being in force. Means for all these 3 points, guys. 1, 2, 3, whatever is covered under 17(5) clause B. Okay. If it is an obligation for employer to provide any of this to employees as per any law, then whatever GST is paid by the employer on the inward supply of this credit is available. Credit is available. For example, assume as per labor law, it is mandatory for an employer to provide lunch to an employee. So employer has purchased the food in order to give it to the employees On purchase of food, whatever GST is paid, can he claim a credit? Yes. Same way. Assume it is mandatory for employer to take health insurance policy in the name of employees. And on that, if GST is paid, can they claim credit? Yes, as it is obligatory for an employer to provide to the employees, guys. Is that clear? Yes. So I just gave two examples. Let it be any of this. Okay. If it is an obligation for an employer to provide, then credit is available. All. Then coming to clause C, which talks about works contract services. Contract C. Yes. Works contract services, which is capital expenditure in nature, when supplied for construction of an immobile property, credit is not available, guys. Works contract services, which is nothing but construction services, which is treated as capital expenditure, credit is blocked. Sir, what if it is treated as revenue expenditure? What if it is debited to P&L account? Credit is available. So normally works contract services, which is used for construction of immobile property, we treat it as capital expenditure. Sir, what if it is for any repair work and all, which I have treated as revenue expenditure? Credit is available, guys. Credit is available. Okay, sir. Next, even if it is used for the following purpose, credit is available. What is it? Other than plant and machinery. So if work contract services is taken for the construction of plant and machinery, credit is available. Okay. Next, except where it is input services for further supply of works contract service. For example, assume I am a construction company. I have given my work or I have outsourced my work to a subcontractor. So he is providing works contract services to me, which in turn I will provide it to my clients or customers. So whatever the subcontractor is providing to me on which I paid GST, can I claim the credit? Yes. Now I am providing works contract services to my customers or clients. Assume on that also I am charging GST. Can my clients or customer claim the credit? No, they cannot claim credit. So if I have taken works contract services for myself, no credit. If it is for the further supply of same nature, I can claim credit. I can claim credit, guys. Okay. Then clause D. Goods or services or both, which is capital expenditure in nature, which is received by a taxable person for construction of an immobile property other than plant and machinery. So for plant and machinery, credit is available. Okay, sir. On his own account, including when such goods or services or both are used in the construction or furtherance of business. Okay. Assume, guys, I have purchased various goods which is used in the construction or services like architect or interior decoration or anything. I have taken in order to construct my office building or factory building. So for whatever GST I have paid on the purchase of goods or services, credit is blocked. If it is even for my own account, even though the building is used for my business, credit is blocked. But what if I purchase goods or services to construct a building to my clients or customers? Can I claim the credit for whatever GST I have paid on the purchase of goods or services? Yes, credit is available. In such case, if it is for someone else, credit is available. If it is for me or myself, credit is not available. So if a construction company is purchasing goods or services which will be used in the construction of a building for a customer or client, for a construction company, credit is available, guys. Credit is available. Okay. And sir, what if in this case it is treated as revenue expenditure? Credit is available. So please be careful. Only if it is treated as capital expenditure in both these cases, credit is blocked. Okay. Here it is construction services and here it is goods or other services which is used in the construction of an immobile property. And other services here means might be architect or interior decoration or any other services. Okay, sir. Fine. So I will just show you some examples for this. So for clause B also I have given few examples. This is for clause B, guys. Just have a look into it. Pause the video and go through. Just read all the examples. You will get more clarity. Okay. Hope you're done. And this is for clause C. Works contract services. Then this is for clause D. Goods or services used in the construction of immobile property. Okay. So even the explanation will tell only to the extent it is capitalized, the credit is blocked. Means if the expenditure is treated as revenue, which is debited to P&L account, is credit available? Yes, guys, credit is available. Okay. Chalo, we'll move forward. Clause E. Goods or services or both on which tax has been paid under section 10, that is composition scheme. Guys, we have learned this in section 10 itself. The composition supplier cannot claim credit on his inward supply and he cannot also pass on the credit to his recipients. So again, it is repeated here. in clause E of section 17 subsection 5. Next, 17(5)(f). Goods or services are both received by a non-resident taxable person except on goods imported by him. Guys, this is a special person who is non-resident in India, is coming from outside the country or outside India to India for a temporary period to sell his goods in India. And he will take registration as per section 27 of CGST Act for a temporary period, that is maximum 90 days, which can be further extended for another maximum 90 days, 90 plus 90 maximum. Okay, sir. Okay. And what he can do is, as per GST law, he can import his goods from outside India, and on the import he will pay IGST. And whatever IGST has paid on importing his goods, when he further sell the goods in India, is liable to pay output tax? Yes. So against that output tax, he can claim the credit of IGST on the import of goods made by him. Sir, what if he purchase any goods in India or if he avail any services in India on which GST is paid? Credit is not available. Credit is not available. So indirectly they are telling, import your goods into India, sell them here, claim the credit and go back. In this process or during this period, if we purchase any inward supply in India on which GST is paid, no credit on it. No credit on it, guys. Okay. Next, FA. So this is connected to income tax also. Goods or services are both received by a taxable person which are used or intended to be used for an activities relating to an obligation under corporate social responsibility as per section 135 of Companies Act 2013. So before I explain this, let me recall your knowledge with respect to income tax. As per explanation to section 37, which is a general deductions under the PGPP head, they have clearly told if a company is incurring any expenditure towards CSR activities, they cannot claim it as deduction as it is not for business purpose. So no deduction is available for an expenditure incurred for CSR purpose. Yes, sir. This is as per explanation to section 37 under PGPP head. Okay. Same way here they are telling if any goods or services is purchased by a company in order to use it for their CSR activities, on the purchase whatever GST is paid, no credit is available. No credit is available. For example, assume a company has purchased a laptop on which they have paid GST. Now this laptop is used by the company as their CSR activities, means they are distributing it freely for, assume, government school students or for economically weaker section students as a part of their CSR activity. So on the purchase of laptop, whatever GST they have paid, can they claim the credit? No, they cannot. So purchase of laptop also they cannot claim it as an expenditure. They cannot even claim depreciation on it as per Income Tax Act. Okay. So on purchase of laptop we pay GST. No, can we claim a credit of it? No, as it is not considered to be used for business purpose. No credit, guys. Yeah, yes. See how they are doing. They are making companies to mandatorily contribute towards the society for which they are not giving any benefit to the companies. Okay. Then coming to G, goods or services are both used for personal consumption. This is also kind of repetition. Already they told only if it is used for business purpose, credit is available. So it is understood that if it is for personal purpose, no credit. Yes. Next, H. If goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. Okay. As there is no output tax, you cannot claim credit of input tax, guys. Okay. But however, where the activity of distribution of gifts or free samples falls within the scope of supply, as per Schedule 1, the supplier would be eligible to avail ITC. Very important, guys. So please pay attention here. Very important. Now assume I have purchased a goods on which I have paid GST. I have claimed the credit. And after claiming the credit, the goods is lost or it is disposed of free of cost. Is it a supply? Yes, it is a supply as per para 1 of Schedule 1, guys. Even without consideration, it is treated as supply. Why so? Because when I purchased, I already claimed credit. So in that case, on my outward supply, even without consideration, should I pay GST? Yes. Okay. Next, assume I have purchased the goods on which I have paid GST. Before I claim credit, I have lost it, or I gave it as a free sample, or I disposed it free of cost. In that case, have I still claimed the credit? No, I was about to claim credit. Before that, I have lost the goods or I have given it as free samples. In that case, Can I go ahead and claim credit? No, I cannot. As my outward supply is not taxable or output tax is zero, there is no credit, guys. Got it? So when goods are purchased, check whether credit is already claimed or not. If credit is already claimed, then this becomes a supply as per Schedule 1, Para 1. Para 1 of Schedule 1, read with Section 7(1)(c). So it is an outward supply, pay output tax. Okay. No, sir, before claiming credit, we already lost the goods or we are giving it as a free samples. Then don't claim credit. And in that case, will it be a supply as per Schedule 1? No, no. As you have not yet claimed the credit and your credit is blocked, it will not be a supply as per Para 1 of Schedule 1, guys. Is that clear? Yes. So in simple, whenever there is any of such events, check whether credit is already claimed or not. Accordingly, decide whether credit is available. If credit is not yet claimed, credit is not available. If credit is already claimed, then it will be a supply as per Para 1 of Schedule 1. Got it? Yes. How beautifully connected you see. Then one more clarification I would tell. Guys, on my outward supply, if I am giving any discount, like buy one, get one, or buy more, save more, like that. Sir, on my inward supply, can I claim full ITC or should it be reduced as per the discount on my outward supply? No, no, no. No need to reduce any credit. You can claim full credit. So if on outward supply, if supplier is giving any discount on whatever type of discount, will it affect my ITC? No, I can claim full ITC. Got it? Yes, it is just a strategy played by the suppliers offering the discounts and all. Okay. Next, any tax paid in accordance with the provisions of section 74 up to the financial year 23-24. Okay, so section 74 is a recovery section. If any amount is paid as per section 74 up to the financial year 23-24, credit is not available. Sir, what if it is paid after 23-24, credit is available? And what is section 74? It is a recovery section, not a part of your intermediate syllabus, so you need not to worry. Got it? Yes, sir. Okay. And one more thing, sir, with respect to the motor vehicles, credit is blocked. But by the distributor or the manufacturer, what if any vehicle is used as a demo vehicle, sir, which is used by the potential buyers to see the features of the car and all, or to experience it? Guys, it is considered to be for further supply of such motor vehicle. May not be same motor vehicles, but other motor vehicles. So demo vehicles will help the manufacturer or the distributor to sell other motor vehicles. So on demo vehicles, is credit available? Yes. There is a clarification telling on demo vehicles, whatever GST is paid, credit is available. Credit is available, guys. Okay, sir. Fine. We'll move forward. So section 17 is completely done. Now we will move towards section 18, guys, which talks about the credit in special cases. Credit in special cases. So what is it? 18 subsection 1, there are 4 cases here. Person who has applied for registration within 30 days from the date on which he became liable. So this provision is given in section 25. Whenever a person is liable, he need to apply for registration within 30 days. Okay. Goods entitled as on. He can claim the ITC on the inputs held in the form of raw material, WIP and finished goods as on the date immediately preceding the date from which he became liable to pay GST. Okay, or tax. Okay, but ITC has to be claimed within 1 year from the date of issue of invoice by the supplier. And this provision is given in 18 subsection 2. Okay, sir. Fine. This is when I am liable and I applied for registration within 30 days. Sir, what if I am taking voluntary registration? Even in that case, he can claim ITC on the inputs held in the form of raw material, WIP and finished goods as on the date immediately preceding the date of grant of registration. Okay, I will try to explain this with an example. Please pay attention. Just a minute. Yeah, pay attention, pay attention. Okay. After I explain, if you guys still feel that, sir, I want to just go through it once, you can pause and go through. Okay. Assume I was liable for registration on 1st January 26. I was covered in section 22 or 24. So I was supposed to get registered. And as per section 25, I should apply for registration in GST REG01 within 30 days. Okay. Assume I have applied for registration in GST REG01 on 15th January, which is within 30 days. Okay. And registration is granted for me in REG06. REG06 is a registration certificate. Okay. Yes. On 20th January. I am called as registered person from what date? From the date I was liable. As per rule 10, if I have applied for registration within 30 days from the date I was liable, rule 10 is telling the effective date of registration is the date on which I was liable. And section 18 subsection 1 clause A is telling whatever stock of raw material WIP, that is work in progress and finished goods, I had on 31st December, that is preceding day. From 1st January, I am called as registered person. Correct? Yes. So on 31st December, whatever stock of raw material, WIP and finished goods I have, ITC is available on it. ITC is available on it. Sir, what about capital goods? On capital goods, credit is not available. So listen guys. See, I am called as registered person only from 1st January. Anything I purchase on or after 1st January, I can claim the credit. Because on my outward supply, I am liable to pay GST. On my inward supply, I can claim credit. Okay. But anything which I was purchased before 1st January, I am not supposed to claim credit because I am not registered, hence my output tax is 0. Okay. But anything which I have purchased before 1st January, but if I am having it as my stock on 31st December 2025, that is the immediately preceding day, even though I have purchased it when I was unregistered, when will I use it, guys? On or after 1st January? Yes, because the closing stock on 31st December will become a opening stock on 1st January. So this stock, I will be using it on or after 1st January when I am a registered person. And anything I supply on or after 1st January, I am liable to pay output tax. So in that case, as a special case, they are giving credit for the stock of raw material, WIP and finished goods, whatever I am having on 31st December, even though I have purchased it when I was unregistered. Is that clear? Yes. Okay. Next. So you might actually get a doubt, sir, what if registration is not applied within 30 days? Still registration is granted. Registration will be granted. Assume I was liable on 1st January to apply for registration, but I applied on 14th February. It is a special date for me. So I wanted to apply on 14th February only, which is after 30 days. So registration will be granted to me. Assume it is granted on 20th February. As per rule 10, when a person has not applied for registration within 30 days, then the effective date of registration will be the date on which registration is granted to them. So anything purchased on or after this, credit is available. Sir, what about the stock? What about the stock? No. Section 18 doesn't cover this case, guys. Sorry. Section 18 doesn't cover this. So only if it is applied within 30 days, they are giving a benefit of claiming credit on the stock on the preceding day. Whereas if you don't apply within 30 days, you lose that benefit. So this case is not covered in section 18, but still I have explained you so that you will have a clarity. Got it? Yes. Next. Sir, I am not at all liable for registration, but still I applied voluntarily and I took registration, sir. So I applied for registration on 15th June and registration is granted on 18th June 2025. So I am called as a registered person from what date, sir? From 18th June, guys. From 18th June. So on or after 18th June, if I make any inward supply, I can claim the credit. On my outward supply, I am liable to pay output tax. But as per section 18 subsection 1, they are also telling on the preceding day, that is on 17th June, whatever stock of raw material, WIP and finished goods I have, I am eligible to claim a credit of it. I am eligible to claim a credit of it. But for capital goods, no credit. So in both these cases, for capital goods, they are not giving the credit, guys. So please be careful. Got it? Yes. So we discussed both of this. When a person was unregistered, now is getting registered under GST. We give benefit, but not full benefit. Only for capital goods, we are not giving. Whereas for raw material, WIP and finished goods, yes, we are giving. Okay, sir. Next. Registered person who switches from composition scheme to regular scheme. That is, he is moving from 10 to 9. Okay. Or else, a registered person whose exempt supply become now taxable. His outward supply was exempt previously, but now the exemption has been withdrawn. Now it is taxable. In that case, he can claim the ITC on the inputs held in the form of raw material, WIP, finished goods, as well as capital goods addition here. As on the day immediately preceding the date from which he becomes liable to pay tax under regular scheme, that is section 9. That is in this case. Whereas in this case, the date from which the exempt supply becomes taxable, no? Preceding day, whatever stock of raw material, WIP, finished goods, as well as capital goods he has, on that he can claim credit. But even in this case, he has to claim the credit within 1 year from the date of invoice, guys. Okay, and there is one more 5% point with respect to capital goods. I will explain it. Okay. So let me explain with an example. 18(1)(c). Assume a person was under section 10, now he is moving to section 9 because on 15th February he became ineligible for any reason. Maybe he started supplying outside the state, or his aggregate turnover crosses the threshold limit of 1.5 crore or 75 lakh or 50 lakhs. Okay, because there are two composition schemes, you should know when what is the limit applicable. Okay. So assume on 15th February he became ineligible, immediately you have to switch to section 9. And when he is under section 10, on his outward supply, he will pay tax under a composition rate, whereas on inward supply, no credit, guys. No credit. But as soon as he switches to section 9, on his outward supply, he has to pay tax at normal rate. And on inward supply, can he claim credit? Yes, he can claim the credit. But now, when he's moving from section 10 to 9, whatever stock he is having on the preceding day, that is on the 14th February 2026, stock of what? Raw material, WAP, finished goods, as well as capital goods, credit is available. Why, sir? Because when he will use this stock, guys, whatever is the closing stock on 14th February is the opening stock on 15th February. When is he going to use it? On or after 15th February? When he is under section 9? On outward supply is supposed to pay tax at normal rate? Yes. So can he claim a credit of it? Yes. So this is a special case covered under section 18(1)(c), guys. So if you remember, I had already explained when I was covering section 10, I had already explained this. There I had mentioned this point that I would be covering it in the input tax credit chapter. That is what we are doing it as per section 18. And the details of all this stock has to be given in ITC 01 within 30 days, guys. Within 30 days from year. Okay, not only in this case, in all the cases, whatever is covered here, no, all the four cases. Okay, so they are giving the credit on the stock of either raw material, WAP, or finished goods, whereas here, even on capital goods. So the details of all this inventory has to be given within 30 days in ITC 01. ITC stands for input tax credit. Got it? Yes, so for all the four cases. Okay, sure. Okay, so this I already covered in the composition scheme topic, guys. I will move forward. Okay. Now, previously my outward supply was exempt. Okay, when my outward supply is exempt, I cannot claim credit on my inward supply. Credit is blocked. Correct, sir. But on 1st October, assume the exemption is withdrawn. Means from 1st October, my outward supply becomes taxable. So when my outward supply is taxable, can I claim credit on my inward supply? Yes. So anything which I purchase on or after 1st October, I can claim the credit because my outward supply is taxable. But as per section 18(1)(d), what is special is whatever stock I am having on 30th September 2025, that is the preceding day, stock of what? Raw material, WIP, finished goods, as well as capital goods. They are giving me the credit of it. They are giving me the credit, guys. Got it? Yes. So as per section 18(1)(c) as well as 18(1)(d), they are giving credit even on capital goods. Got it? Yes. But there is one point. What is it? We need to reduce 5% for each quarter or part of the quarter for the period which is used before this. For example, assume I have purchased a capital goods when my outward supply was exempt. I have paid a GST of 10,000 and I have already used it for 2 quarters before 1st October. So can I claim full 10,000 credit now? No. So from 10,000, I already used for 2 quarters before 1st October. No, for each quarter, I need to reduce 5%, which is totally 10%. So 10% of 10,000 comes to 1,000. So what is the remaining credit I can claim on capital goods? 9,000, guys. 9,000. Is that clear? And the provisions with respect to capital goods is same even for section 18(1)(c). When you are moving from composition scheme to normal scheme. For each quarter you have used the capital goods before this, you need to reduce the credit by 5% for each quarter or part of the quarter. And while calculating the quarter, even if it is 1 day in a quarter, you have to take full quarter and it is standard quarters. Standard quarters means, for example, assume you have purchased an asset on 1st June and your exemption is withdrawn on 1st August. So how many quarters you have to consider? 2 quarters. April, May, June, July, August, September. Even a part of the quarter, you have to consider full quarters. And while counting the quarters, it is standard quarters, guys, like April, May, June, July, August, September, October, November, December, January, February, March. Got it? Yes, sir. Fine. So 18 subsection 1 covers totally 4 special cases. We have covered all of this and I have given the point with respect to capital goods here. Let me just read it. ITC on capital goods will be reduced by 5% per quarter of the year or part thereof of usage from the date of the invoice. And please be careful, capital goods is covered only in the last 2 cases because here a person was already registered, but now he was registered under 10, now is going to 9. And sir, if I have to pay tax under section 10, should I get registered? Yes, registration is mandatory. Okay, so I am moving from 10 to 9. Whereas I am a registered person, but my outward supply was exempt. Now it is becoming taxable. In that case, they are giving credit even on capital goods. Whereas yo, I was not registered, but now I am getting registered for the first time under GST. They are giving you a benefit, but not fully. On capital goods, it is not given here. Got it? Yes. So if you want, you can just write CG and scratch it, which means no credit for capital goods. Okay. Subsection 2, we already seen. Guys, whenever we are claiming the credit for any raw material, WIP or finished goods or even capital goods, it should be purchased within 1 year. Sir, what if it is older than 1 year? Assume it was purchased 1.5 years back, 2 years back, no credit for it. It should have been purchased recently. That is within 1 year. Within 1 year from what time, guys? Whatever time I have given here, no? Within 1 year from here. Okay, yes, within 1 year from here in all these cases. Got it? Yes. Okay. So subsection 2 is here that itself, which I already mentioned in the table. Subsection 3. In case of transfer of a business on account of sale, merger, demerger, amalgamation, lease, transferor, the transferor shall be allowed to transfer the ITC, that is unutilized ITC, which remains unutilized in his electronic credit ledger to the transferee. Guys, assume I am selling my business to you as a going concern. Now all the assets and liabilities of my business will belongs to you. From tomorrow, you are the one who is carrying on the show. Yes. So now whatever credit is lying in my electronic credit ledger, which I have not utilized, can I transfer it to you? Yes. I will transfer it from my electronic credit ledger to your electronic credit ledger. And you are supposed to take separate registration. As I have sold my business, I will cancel my registration. You will obtain a separate registration. I cannot give my registration to you because my registration would be under my PAN. So I will cancel my registration. You have to obtain a separate registration, and whatever credit is lying in my credit ledger which is not yet utilized, I can pass it on to you. Yes, I will just explain it. Just a minute. Okay. So this is as per section 18 subsection 3. You can see. Assume eBay has been acquired by Google and they have named a new entity as Google. Name of new entity. Okay. Okay. And eBay had unutilized balance of input tax credit in their credit ledger, which is 2 lakh. So now what they can do is they will form GST ITC 02 for the transfer of unutilized ITC and furnish a certificate certifying the transfer of business. So in that case, the new entity has to accept the details of input and get the credited of ITC in their electronic credit ledger. That is the new entities. And they have to record input and capital goods in their books of accounts, guys. Got it? Yes. Then 18 subsection 4 is, guys, whatever we learned here, no, that reverse case is covered in subsection 4. Here a person moved from 10 to 9, or his outward supply which was exempt became now taxable. Yes, but here reverse case is covered. Sir, I was under section 9, now I want to move to 10. Or my outward supply was taxable, now it is becoming exempt by way of new notification. In that case, what, sir? I will just explain the provision first with an example. Then we will go and read it. Assume, guys, I was under section 9 and on my outward supply I was paying tax at normal rate, and on my inward supply credit was available. Credit is available. But I felt, oh, yo, too much rate, high rate. Every month I need to pay tax. Let me move to section 10. Whenever a person wants to move from section 9 to 10, he has to move it from the beginning of the financial year, not in between the year. From 9 to 10, it is always from the beginning of the financial year. Okay, sir. And once he go to section 10, on his outward supply, he has to pay tax at composition rate. And on inward supply, he cannot claim credit tax. He cannot claim credit. Correct? No. Hello. Correct, right? Yes. Respond. Yes. Okay, sir. Now what they are telling is, on 31st March, that is the preceding day, whatever stock of raw material, WAP, finished goods and capital goods is there, on that, if when it was purchased, guys, when he was under section 9, so he was eligible to claim credit. Yes, but when he will be using this stock, on or after 1st April, when he is under section 10, when credit is not available? Yes. So they are asking you to reverse it. If you have already claimed credit, please reverse it. Means you have to pay it. No interest, you need to just pay the ITC, whatever you already claimed. No, sir, ITC was lying in my electronic credit ledger. I was planning to claim credit. Forget that. You cannot claim credit, forget it. Is that clear? Yes, sir. So same way, when they are giving you the benefit, when you are moving from 10 to 9, when they are giving benefit as per section 18(1), right? Yes. Same way, if you are moving from 9 to 10, they're taking back from you. They're taking back from you. Yes, sir. Same scenario is also covered. One more case under 18(4) only. One more case. Assume my outward supply was taxable. So I was supposed to pay output tax. So on my inward supply, can I claim credit? Yes, I can claim credit. No problem. Okay. Now, on 1st July, assume the government released a new notification telling whatever I am supplying is exempt. Oh, great. God help me or government help me. So on or after 1st July 2025, my outward supply is exempt. In that case, on my inward supply, I cannot claim credit. Right? No? Yes, sir. So anything which I purchase on or after 1st July, I cannot claim credit. But anything I have purchased before 1st July, can I claim credit? Yes, I was eligible to claim credit. But if I am having any stock on the preceding day, that is on 30th June, stock of raw material, WAP, finished goods and capital goods, I would have purchased it when my outward supply is taxable. But when will I use it, guys? On or after 1st July. That is when my outward supply is exempt. They're telling on this, if credit is already claimed, I should reverse it. No, sir, I am not yet claimed the credit. I was about to claim, but before that, my outward supply became exempt. In that case, you forget the credit. That's all. You cannot claim it. You cannot carry forward it. Got it? Yes, guys. Because the simple reason is, even though this stock is purchased before 1st July, you will be using it on or after 1st July. So credit on this is not available, guys, because the closing stock on 30th June will be an opening stock on 1st July. Is that clear? Yes. So even on capital goods, in both the cases, credit has to be reversed if you already claimed. But should I reverse full credit? No. They told for 18 subsection 4, consider the total useful life of a capital goods is 5 years, which is equal to 60 months. And check how much you already used. That much you need not reverse. Only for the remaining life you need to reverse. For example, assume I have purchased a capital goods on which I have paid GST 1 lakh rupees. When did I purchase it? When my outward supply was taxable. And before 1st July, assume I already used it for 20 months. Okay. So how much credit? Assume I have already claimed full 1 lakh credit. I have already claimed full 1 lakh credit. And before 1st July, I have used it for how many months? 20 months. Even part of the month, you need to round it off. For example, assume it is 19 months, 20 days. Round it off to 20 months. Sir, 19 months, 1 day. Round it off to 20 months. Oh. So what is the remaining useful life? 40 months. Only to this extent, credit has to be reversed. So what is the total credit already claimed? 1 lakh. Divided by total useful life, which is 60 months, equal to 5 years, into 40 months. So whatever amount we get here, that much has to be reversed, guys. That much has to be reversed. That means for the remaining 20 months, credit is available. Huh? Yes, you already claimed it. Is that clear? I repeat the example. I had purchased a capital goods before 1st July, and on that I have paid a GST of 1 lakh. And before 1st July, I have already used it for 20 months and I have already claimed full 1 lakh credit. Okay. What is the total useful life of the capital goods as per section 18 subsection 4 read with rules is 60 months. So what is the remaining useful life? 60 months minus 20 months. What is the remaining useful life? 40 months, which falls on this side. So for 40 months, we need to reverse the credit. So simple, total credit claimed divided by 60 months into 40 months. You need to reverse it. Got it? Sir, what if capital goods is already used for more than 60 months? Assume 65 months it is already used before this. Then nothing to be reversed, guys. See, in reality, some capital goods might be used for more than 60 months. But for section 18 subsection 4, we need to consider the maximum useful life as 60 months. For example, Assume a capital goods was purchased and used already for 65 months here, and remaining 15 months it will be used here. Should we reverse anything? No, guys. No need to reverse anything. Clear? So if the asset is used for more than 60 months before this, no need to reverse anything. And same to same provision for capital goods is applicable even in this case. Even in this case. Got it? Yes, sir. Okay. So that is what is covered in section 18, subsection 4. Let me quickly read it. Where any registered person who has availed of input tax credit opts to pay tax under section 10. That is, you are under section 9. You already claimed credit. Now you are moving to section 10. Or where the goods or services are both supplied by him become wholly exempt. New exemption has been introduced by way of notification. Okay. He shall pay an amount by way of debit in the electronic credit ledger or electronic cash ledger equivalent to credit of input tax in respect of inputs held in the stock and on capital goods on the day immediately preceding the date of exercising of such option or the date of such exemption, guys. Okay, whatever credit you already claimed, you need to reverse it on the stock. Okay. With respect to capital goods, for capital goods held in the stock, the input tax credit involved in remaining useful life in months shall be computed on pro rata basis, taking the total useful life as what? 5 years, which is equivalent to 60 months. So how much credit I need to reverse means simple. Total ITC already availed on capital goods into the remaining useful life, which will fall on or after that date, divided by 60 months. Remaining useful life is nothing but, guys, take 60 minus what is already used before this. Assume already used is 35 months. So you need to take 60 minus 35. The remaining will come here. For this much months, we need to reverse the credit. Clear? Which is 25 months. Okay, sir. Next, provided that after the payment of such amount, the balance of input tax credit, if any, lying in electronic credit ledger shall lapse. Means if you are still having any credit which you are supposed to claim, forget that credit. You cannot claim it now. Got it? Yes. Then coming to subsection 6, guys. Subsection 5, you need not worry, it is not a part. Subsection 6. In case of supply of capital goods or plant and machinery on which input tax credit has already been claimed, then the registered person shall pay an amount which is equal to ITC taken reduced at 5% or for every quarter or part thereof, or the tax on the transaction value determined under section 15, which is nothing but the GST on the sale value, whichever is higher. Whichever is higher, guys. And as I already told you, see, before subsection 6, subsection 5 will come. There is no content in that. They are just told as may be provided in the prescribed manner. With respect to the 60 months and all, actually it is given in the rules, guys. Even here, this 5% and all is there. No? That are the content which is actually given in the rules. Anyway, I already given you, so you can learn like however I have explained. Okay, sure. So, if there is any capital goods or plant and machinery which is purchased, and when it is purchased, whatever GST we have paid, we already claimed the credit. Okay. So take that credit, what is claimed, and for each quarter or part of the quarter, reduce 5% from the date of purchase till the date of sale. For each quarter or part of the quarter, reduce 5%. Keep that amount. Then calculate GST on the actual sale value. Whichever is higher has to be paid, guys. Whichever is higher has to be paid. Okay. I will just try to explain this with an illustration. Just a minute. Yeah. So this illustration I have given in my provision book. Yeah, just observe. X Limited purchased a machine for 1 lakh and brought it on 1st August 2025 purchase date or invoice date and paid 12% IGST on it, 12,000. He availed input tax credit and used the capital goods in his business. On 5th November 2025, he resold it as a second-hand machine for 65,000 transaction value. Find out the amount of tax payable or ITC reversible in the above case. So we need to, how many quarters it is used before sale, guys. So in between this, how many quarters are there? 2 quarters. Even part of the quarter you have to take fully. Oh. So what is the credit already claimed? 1 lakh into 12%, which comes to 12,000. Then for that, for each quarter which is used, we need to reduce 5%. So how many quarters it is used? I have given you. It is used before sale for 2 quarters. Okay. So for each quarter you reduce 5%. So totally 10%. So 10% of 12,000 comes to 1,200. Reduce it. You will get 10,800. Keep it aside. Let me denote it by A. Then take transaction value, calculate GST on it 12%, which is 7,800. Denote it by B. Compare both of this, whichever is higher has to be paid as. That is 10,800 has to be paid. Is that clear? Yes. Because some people, after claiming the credit, they may sell the asset for a very lesser value. So in that case, government is not ready to forego. Is not ready to forego the revenue. So they will check what is the ITC claimed. For each quarter or part of the quarter, it is used before the sale, reduce 5%. Then compare that with tax on the transaction value, whichever is higher has to be paid. But this point is not applicable in the following cases. When is it? Provided that where refractory bricks, molds and dies, jigs and fixtures are supplied as a scrap, the taxable person may pay tax on the transaction value of such goods determined under section 15. So for the following items which are normally used to give shape for the product's tax. So whenever a same product is produced in large quantity like 1,000, 1 lakh, 2 lakh and all, so there will be few equipments or instruments which is used to give shape for each and every product produced. So that are called as refractory bricks, molds, dies, jigs, fixtures and all. Okay. So after using this in the manufacturing process and if it is sold, then on sale value, whatever is the GST, just pay that. No need to compare this ITC and all. This point will not come for whatever I have highlighted here, guys. Is that clear? Yes, sir. Yes, till now we have understood when credit is available or when credit is not available as per section 16, 17 or 18. And 18 talks about only some special cases, guys. So please be careful with it. Whereas all the normal cases are covered in section 16 and 17. Yes. Sir, I am eligible to claim credit. So credit is lying in my electronic credit ledger. Tell me how to utilize it. No, sir. We are learning it, guys. So if a person is eligible to claim credit, how can he utilize it? So whatever credit is lying in electronic credit ledger, it can be used to pay only the output tax of a person. So output tax means whatever I am supposed to pay on my outward supply. Sir, on my inward supply, if RCM is applicable, I am supposed to pay as a recipient tax under reverse charge mechanism. So to pay that, can I use my electronic credit ledger balance? No, guys. Because if I am supposed to pay tax on my inward supply under RCM, it is an input tax. So once I pay it, I can claim that as a credit. But to pay that, can I use my electronic credit ledger balance? No. Even to pay interest, late fee or penalty under GST, you cannot use your electronic credit ledger balance. So the balance in electronic credit ledger with respect to your input tax can be used only to pay output tax. And whatever provisions we are learning now is as per section 49 read with rules, guys. And it is a part of payment chapter, but I am covering it here itself so that everything with respect to input tax credit, we will finish in this chapter itself. Okay, sir. Fine. So pay attention. This is very important. You will get a questions, guys. You can get an exclusive question only on ITC, or else they will ask you to calculate GST liability, or how much amount of GST has to be paid through electronic cash ledger, or what is the minimum amount of GST to be paid, that is through cash ledger, where even the utilization of credit will be a part of it. Will be a part of it, guys. Okay. So let us learn. So assume a person has a IGST credit. First, you should always use IGST credit before using CGST and SGST credit, guys. And you should know one thing. Whenever you are taking a registration under GST, it is state-wise and PAN-based. For each and every state, you have to take a separate registration. And payment of tax as well as return filing is registration-wise. For each and every registration, return has to be filed separately and tax has to be paid separately, guys. So whatever we are discussing this has to be done for each and every registration separately, yeah? Yes. So for a particular registration, a registered person will either have SGST or UTGST, guys, not both. Either of that. Okay? Yes. Fine. So let us begin with. Assume a person has a IGST credit. First, he has to use that against IGST liability. If still the credit is remaining or pending, he can use it against CGST liability or SGST liability in any order, in any proportion. This is at the option of registered person and it should be used in the most beneficial way. Very important in the questions, guys, in calculations, because it is left for us. I can adjust the remaining IGST credit fully against CGST or fully against SGST or partly against CGST and partly against SGST, however I want. And we should plan it in such a way that After utilizing the credit, whatever amount we pay through electronic cash ledger should be as low as possible or as minimum as possible, guys. Got it? Yes. And I will be uploading a separate video on the questions discussion on GST liability calculations or payment of GST. So once you cover the entire syllabus, please have a look into that also, because that covers the majority of the portions of GST, guys, including time of supply, value of supply, place of supply, exemptions, as well as the utilization of input tax credit. Okay, fine. So first, I repeat, IGST credit has to be used against IGST liability if still anything is pending against CGST or SGST liability in any order, in any proportion. And only once IGST credit is fully utilized, that is, it has come to zero, we can go ahead and use CGST and SGST credit. Okay, sir. So assume your IGST credit is zero now, or you don't have any IGST credit. In that case, CGST credit will be used first against CGST liability. If you still have a credit of CGST, you can use it against IGST liability. Sir, what if my IGST liability is zero? Then, if you cannot utilize the credit, you can carry forward it to the next month. In any case, if you cannot utilize the credit in the current period, you can carry forward it to the next tax period. Oh, next. So, CGST credit, can I use it against SGST? No, you cannot. Next, SGST credit will be first used against SGST liability. If still any SGST credit is remaining, you can use it against IGST liability, guys. IGST liability. And everything I have given here, guys. Clear? Assume a person doesn't have any IGST credit, then no need of these steps. Straight away, can I go ahead and use CGST? Yes. Or else, sir, whatever my output tax is there, no, everything I adjusted from my IGST credit only. Then there is no need to use CGST and SGST credit. In that case, if you already utilized full IGST credit against output tax, and now the output tax has already come to zero, which you have to pay through cash ledger, then there is no need to use CGST and SGST credit. In that case, you will carry forward it to the next tax period, guys. Got it? So, fine. So, this is the procedure or sequence which you need to follow to utilize the credit. Got it, sir. So, in simple, CGST credit cannot be adjusted against SGST liability. Same way, SGST credit cannot be utilized against CGST liability. And if it is a registration taken under UTGST Act, in place of SGST, UTGST would be there. That's all. Adjustment pattern or sequence would be same, but instead of SGST, it would be UTGST, guys. Got it? Yes. Then we have few rules to cover. We will just see that. This table, whatever I have given you, if you want, you can just pause and go through it once. Very important, guys, for utilization of credit, because normally students might go wrong here, especially in this step. Please be careful. So first utilize IGST credit fully, first against IGST liability, then if still use remaining against CGST or SGST in any order, in any proportion, guys. Only then you can go and touch CGST and SGST credit. Fine. Rule 86A. In case the commissioner or an officer authorized by him in this behalf, not below the rank of an assistant commissioner, has reasons to believe that ITC available in the electronic credit ledger has been fraudulently availed, or the person is ineligible for it, but still he has availed it. Maybe because of the bogus purchases or the fake bills or fake invoices. He may, after recording the reasons in writing, prohibit the use of ITC. Even though it is appearing in my credit ledger, I have fraudulently availed it. In that case, the commissioner or an officer authorized by him can prohibit me from using the ITC for discharge of any liability under section 49, that is output tax, or for claim of any refund of unutilized amount, guys. Okay, sir. Then coming to rule 86B, important. Guys, if the question doesn't specify anything about the rule 86B and all, then you will always adjust the credit in this order. Whatever credit is there, you utilize fully. But when rule 86B is applicable, we cannot utilize the credit fully. Maximum credit which a registered person can use is 99% of his output tax. 99% of his output tax. Okay, what is it telling? It is not applicable for everyone. It is only applicable for a big supplier. Okay. Rule 86B of CGST rules restricts the amount available in electronic credit ledger, which a registered person can use to discharge his output tax liability, to 99% of such liability in cases where the value of taxable supply other than exempt supply and zero rated supply. in a month exceeds 50 lakh. This rule overrides all other rules, guys. Oh, now, if a taxable supply of a registered person in a month is more than 50 lakh, only then rule 86B is applicable. So just because in a month it is more than 50 lakh, is it applicable forever? No. For every month we need to check separately. So in a month, if a taxable outward supply is more than 50 lakh, then rule 86B is applicable. So what is rule 86B is telling? Guys, assume my output tax is 20 lakh, but I have a credit of 25 lakh. Can I use full credit? No. They're telling maximum credit I can use it 99% of 20 lakh. That means remaining 1% should I pay through cash ledger? Yes, minimum 1% I have to pay through cash ledger. Sir, what if my output tax is 20 lakh, but I have a credit of only 18 lakh? That means I am paying 2 lakh through cash ledger. Yes, I have to pay it. So when is this rule effective is or relevant is only when a person is having credit more than output tax. In that case, can you utilize the credit fully? No. They're telling you can maximum use 99% of your output tax as a credit. Remaining credit, if any, you will carry forward. Whereas 1% of the output tax has to be paid through cash ledger. And this 50 lakh includes only the taxable outward supply, which excludes exempt as well as zero rated supply. Actually speaking, zero rated supply is taxable supply. But on zero rated supply, just a minute. On zero rated supply, output tax would be zero. On inward supply, credit is available. And when credit is available, you are eligible to use it, but you cannot use it. Why? Because output tax is zero. So they will give you a refund of entire 2 lakh. That is unutilized ITC in case of zero rated supply can be claimed as refund, guys. Yes, sir. So even though zero rated supply is a taxable supply, from calculating that 50 lakh, they're excluding zero rated supply because anyway, even if you don't use the credit, we need to give a refund of it. So that is why they have excluded both exempt supply as well as zero rated supply while calculating this 50 lakhs. Is that clear? For example, assume my taxable outward supply is totally 80 lakh. In that zero rated supply is assumed, this is zero rated supply, is assumed 20 lakh and others is 60 lakh. So I need to take only this. So 60 lakh is more than 50 lakh. Is rule 86B applicable for me? Yes, applicable. That is only if your domestic supply, which is taxable, is more than 50 lakh in a month, not in a year, in a month. And just because it is applicable in 1 month, will it be applicable for all other months also? No, for each and every month, we need to check it separately, guys. Got it? Yes. But the rule 86B is not applicable in the following cases. Even though the monthly taxable supply is more than 50 lakh, still in the following cases, rule 86B is not applicable. When is it, sir? This restriction shall not apply in the following cases where the said person or proprietor, said person means the registered person, or the proprietor, karta, managing director, or any of its two partners or old-time directors, members of managing committee of association or board of trustee, means whoever is the face of that entity, as the case may be, have paid more than 1 lakh as income tax, not GST, income tax in each of the last 2 financial years. Okay, so we are in the current year. We need to check what is the income tax paid by such person or whoever is the face of that entity. What is the income tax paid in last 2 years? And in each of the last 2 years, they have paid more than 1 lakh income tax. In each of the year. It is not both the years put together. In each year, they should have paid more than 1 lakh, more than 1 lakh. In that case, in the current year, for the said person or the entity, whoever is the face of it, if they have paid more than 1 lakh income tax in the last 2 years, in the current year for the said person or the entity, rule 86B is not applicable. Rule 86B is not applicable, guys. Entity means assume a company. So who is the face of a company, guys? The old time directors, correct? Or assume the trust is the entity. So who is the face of it? Board of trustee. Or if it is a partnership firm, who is the face of it? Two partners. Clear? So they are covering the said person, that is whoever is the registered person under GST, or whoever is the face of it. In case of HUF, we can call it as Karta, who is the face of it. Okay, yes. Okay, this is with respect to income tax, whereas B point is with respect to GST, guys. where the registered person has received a refund of more than 1 lakh in the preceding financial year on account of unutilized ITC. So he has claimed a refund of unutilized ITC of more than 1 lakh in 1 year. That is only the last year. For income tax, we need to check last 2 years. In both the years, they should have paid more than 1 lakh income tax. Whereas here, only 1 year, last year. Okay. In case of zero rated supplies made without payment of tax or inverted duty structure. What is it? I will explain. Okay. Just a minute. Yes. So assume my outward supply is zero rated supply. So my output tax would be zero. Okay. I'm exporting without paying GST. Whereas on my inward supply, can I claim ITC? Yes. I'm eligible to claim ITC. But to adjust my ITC, I don't have my output tax. That means, can I claim a refund of this unutilized ITC? Yes. So in the last year, if I have claimed a refund of unutilized ITC of more than 1 lakh in the current year for any month, Rule 86B is not applicable. Okay, sir. Then inverted duty structure. Inverted duty structure means simple, guys. The tax rate on my inward supply is more than the tax rate on my outward supply. For example, assume on my inward supply I am paying tax at 18%, whereas on my outward supply the GST rate is only 5%. So normally input tax would be more than output tax in every month. Yes. So even if I keep on carry forwarding the credit, how long will I carry forward? Every month it will be same story. So in that case, will they give a refund of unutilized ITC? Yes. Normally, guys, except these two cases. Except these two cases, if I have any unutilized ITC in any month, I will carry forward it to the future period and I will use it. But whereas in the following cases, even if I carry forward to the next period, it is same story in the next period also. So only in the following two cases, whatever unutilized input tax credit is there in the credit ledger can be claimed as a refund by a registered person, guys. Okay. So here we call it as inverted duty structure. So if I have claimed the unutilized ITC of more than 1 lakh in the preceding financial year, in the current year, Rule 86B is not applicable for all 12 months. Even though my monthly taxable supplies is more than 50 lakh, still, if I am covered under any of this point where I have claimed a refund of unutilized ITC of more than 1 lakh in the last year, in the current year, no Rule 86B. Okay, sir. Next, C point. Point is interesting. Cumulative calculation. Okay, pay attention, pay attention. Where the registered person has discharged his liability towards output tax through the electronic cash ledger for an amount which is in excess of 1% of total output tax liability applied cumulatively up to the said month in the current financial year. So this is the calculation in the current year. I will try to explain it with an example. Please pay attention, guys. Assume we are in August 2025. So we need to check from the beginning of the financial year till the end of last month, what is the output tax? Against output tax, what is the ITC claimed? And what is the remaining amount paid through cash ledger? Okay, so for each of the month, I have given the numbers. So for each month, the amount paid through cash ledger is 2 lakh, 5 lakh, 50,000 and 3 lakh. So cumulatively, total for all April, May, June, July, 4 months put together, cumulative output tax is 90 lakh, cumulative ITC claimed is 79 lakh 50,000. That means the cumulative amount paid through cash ledger is 10 lakh 50,000 for all 4 months put together. So just divide this by 90 lakh. Check how much is paid through cash ledger compared to output tax for all 4 months put together. So 10 lakh 50,000 divided by 90 lakh into 100, which comes to 11.67 percentage. Is it already more than 1%? Yes. So cumulatively from April to July end, already more than 1% of my output tax I have paid through cash ledger. So they are telling in August, even though my taxable supply is more than 50 lakh, still Rule 86B is not applicable. Rule 86B is not applicable for August. So should I check like this for each month? Yes. For example, assume I am checking for December 2025. So I need to check the cumulative figures of output tax as well as how much is paid through cash ledger from April to November 8. Sir, what if I am checking for February? From April to January end, we need to check. Sir, what if it is for April? For April, there is no benefit because there is no preceding month. No. So if it is the first month of the financial year, this benefit is not there, guys, of checking cumulatively. Is that clear? So for April, if taxable outward supply is more than 50 lakh, straight away Rule 86B will be applicable. Got it? Yes. Provided it is not covered under other exceptions. Got it? Yes. It is pertinent to note that GST liability paid under reverse charge mechanism should not be taken into account while calculating the total output tax liability paid through electronic cash ledger. Okay. Sir, whatever I am supposed to pay on my inward supply under RCM, I have to pay it through cash ledger. But that is what? My input tax. So whatever amounts we are taking here, no, paid through cash ledger. Should we consider input tax here or only output tax? Only output tax. So on my inward supply, if I am paid input tax under RCM through my cash ledger, should I take here that in that calculation? No, no. How much of my output tax is paid through cash ledger only we need to take here for calculation of that 1%. Is that clear? Yes. Even if you are paid interest, late fee or penalty and all through cash ledger, don't consider that. This is only how much of your output tax is paid through cash ledger, guys. Okay. Then D, where the registered person is government department, public sector undertaking, local authority or statutory body for the following four people, no rule 86B, guys. Rule 86B is not at all applicable. Okay. So this table talks about when credit is available or not. This actually I already covered along with exemption topic. I will quickly repeat it. If my outward supply is zero rated, which includes exports as well as supplies made to SEZ unit or SEZ developer, credit is available, guys. Credit is available on my inward supply. Whereas if my outward supply is nil rated, exempt or non-taxable supply, which is nothing but exempt supply as per section 2 clause 47, on my inward supply, no credit. And what is nil rated, what is exempt, what is non-taxable supply, I've just given an example. You guys can just go through it. Got it? Yes, sir. So this is all about the input tax credit provisions, guys. So come to the section list, which is at the beginning of the revision book. We'll just mark whatever we have covered in this chapter. CGST Act. So we have covered section 16, 17, 18. Even 19, 20, 21 talks about input tax credit, but they are not a part of your syllabus. I'm just marking, but I am given in the bracket that not covered at intermediate level, guys. Yes. And as per section 20, just a minute, of IGST Act, with respect to ITC, whatever we are learning from time of supply topic, all the provisions are covered in CGST Act. But mutatis mutandis is applicable even under IGST Act as per section 20, guys. As per section 20. And in this chapter, we also learned about zero rated supply. Guys. So hope it is clear for you. If not, please try to watch wherever you want more clarity, or if required, if time permits, do watch this video again, guys, because it is very important topic. Prepare well, guys. Yes, students, now we will revise the registration topic under GST. The provisions with respect to registration is covered in section 22 to 30 of CGST Act, and all the sections are part of your syllabus. I have just given the list of sections here. All the sections one by one will be covering it in this chapter, guys. But before we get into the sections, first we will see, sir, why registration is required. Guys, one of the important conditions to claim credit by the recipient is, as per section 16, is the recipient has to be registered under GST in order to claim credit. Same way, whenever a person is registered under GST on his outward supply, he will be liable to pay GST. But he has all the right to charge and collect it from the recipient by issuing tax invoice. And they have also defined what is taxable person under section 2 clause 107. Who is taxable person means a person who is registered under GST or who is liable to be registered under GST. Now let me explain this. Guys, assume I was liable to get registered under GST as per section 22 or 24, and I have applied for registration and I have got it. So am I called as a taxable person? Yes, I am called as taxable person. Next, assume I was liable to get registered under GST, but still I have not yet applied. Am I still called as taxable person? Yes. Once I am liable for registration, even though I have not applied or even though I have not got the registration, still I am called as taxable person. I cannot escape from the tax liability. Then the last one is, sir, even though I was not liable for registration, I took voluntary registration. Am I also called as the taxable person? Yes. You would also be called as the taxable person, guys. Okay. And the registration under GST is state specific and PAN based. Now assume I have the business in 5 different states in India, minimum I have to take 5 registration, but all 5 registration will be under my PAN. And within the state, if I have multiple branches, it is optional for me to take separate registration for each branch. If I want, I can take it. If not, I should at least take one registration. But once I take separate registration under my PAN, each registration will be treated as distinct person, guys. Okay. And once a person has applied for registration and registration is granted, he will be issued a registration certificate by the department. And in that registration certificate, a 15-digit GST IN would be mentioned, which is an identification number for GST purpose. Yes, sir. In that 15 digit, the first two digits will be a state code and the next 10 digits would be a PAN number, guys. Whatever PAN a person would have given, no. So the next 10 digits, first two digits, as I told you, state code. Then next 10 digits would be a PAN number. Then the 13th digit will be the number of registration in the state. Then 14th will be Z by default. And the last can be a check code. Any number can be allotted by the department. Yes, sir. Okay. And whenever a person get GST IN, in simple, whenever he get registered under GST, he need to display his GST IN on his name board at his principal place of business as well as all the additional places of business like branches. Okay. And whatever GST registration we would be taking, it is one single registration for all the components of GST, guys. Sir, should I take a separate registration under CGST, SGST, UTGST, IGST and all? No. Assume I am taking registration under GST in Karnataka state. So I would apply it under the Karnataka SGST Act. Yes. So once I have applied under the Karnataka SGST Act, it is considered that I am registered under all these guys except UTGST. Obviously, when I am registered in Karnataka UTGST, there is no question of UTGST. Yes. So in simple, I need not apply separately under IGST Act and SGST Act as well as CES, guys. That is GST Compensation Cess Act. Okay. Then coming to the section list, I have given the list of section, whatever we would be covering in this chapter. Important, guys, each and every section is a part of your syllabus. First, we will focus on section 22, 23 and 24, which will talk about who should get registered under GST. Who should get registered under GST? Yes. So actually the equation is like this. Let me just write it here. The equation is like this, guys. 22 plus 24 minus 23. Why? Because section 22 and 24 will tell who should get registered under GST. Whereas section 23 will tell who should not get registered under GST. For few persons, the registration has been exempted by way of section 23. So that is what is covered there. Okay, and we should know all these three sections to tell when a person is supposed to get registered under GST, guys. Very important, because they may ask the question connecting one or two sections or all three sections together. So please be very careful with it. Okay, yes. So we'll try to figure out, there are different types of possibilities, guys. So we will try to cover each and everything. So please be attentive. This will take time to cover these three sections itself. It will take time, but let us learn it in detail. First, section 22. Persons who are liable for registration under GST. Okay. 22 subsection 1 is very important because they have referred to this section even in other provisions. Okay. Every supplier shall be liable to be registered in the state or union territory if his aggregate turnover in a financial year. And whenever we are calculating the aggregate turnover, it is as per section 2 clause 6, guys. So what is aggregate turnover? It includes all taxable outward supply and it is other than the inward supply on which RCM is applicable. So in simple, it is only outward. Okay. So outward taxable supply plus exempt supply plus exports, interstate supplies of a PAN, it should be calculated on PAN India basis. And it will not include anything charged under GST like CGST, SGST, IGST, CES will not be a part of aggregate turnover, guys. So even though I have operations in more than one state, aggregate turnover has to be calculated PAN India based. That is all India based, guys. Okay, fine. So if the aggregate turnover is more than 10 lakh in the case of Manipur, Mizoram, Nagaland or Tripura, that is special states for registration purpose. In short, I call them as MMNT. Then for other states and union territory, more than 20 lakh. Whereas if the supplier is an exclusive supplier of goods within the state, as per notification, they have increased the limit to 40 lakh. Clear. Actually, section 22 subsection 1 gave the power to the government in case of exclusive supplier of goods at the request of the states. The 20 lakh limits can be increased to 40 lakh. And few states have requested the government. So accordingly, as per the notification for the exclusive supplier of goods alone, they have increased the limit to 40 lakh. And we will learn in detail about this 40 lakh little later. Okay, but one thing you have to take care. This is available only for the exclusive supplier of the goods within the state. That is only intra-state supply of goods. But if the person is supplying goods along with financial services, that is extending loans or advances for which in return interest or discount is charged, we learnt it in exemption chapter. It is exempt. In short, I call it as financial service. Yes. So assume I am supplying goods along with financial services. Here there is a clarification telling I am considered as exclusive supplier of goods, ignoring this, guys. Even though I am supplying financial services, we are ignoring it. It is considered that I am exclusively supplying only goods. And please be careful, only for financial services they have given that exclusion, not for any other services. So if I am supplying goods along with, assume, consultancy services, then what is the threshold limit applicable for me? It will be either 10 or 20 lakh. 40 lakh will not be applicable for me. Is that clear? I repeat, if I am supplying goods along with financial services, we will ignore the financial services and I would be considered as exclusive supplier of goods. And if I am supplying the goods within the state, am I eligible for 40 lakh limit? Yes, I am eligible. Yes, I am eligible, guys. Okay, fine. Now, coming to subsection 2, every person who on the day immediately preceding the appointed day, that is 1st July 2017, the date on which GST was implemented, guys, is registered or holds a license under the existing law that is previous to GST. For example, assume I was registered under the VAT law before 1st July 2017, which we call it as previous indirect tax regime, guys. Or I was registered under service tax, or I was registered under excise duty, which is now subsumed under GST. For me, as a transition, it is mandatory to get registered under GST, guys, as per subsection 2. As on today, it might not be relevant because all the people, whoever was registered already under the previous indirect tax regime, would have already been registered by now, guys. Got it? Yes. Next, subsection 3. Where a business carried on by a taxable person registered under this act is transferred to another person as a going concern, the transferee or the successor shall be liable to be registered with effect from the date of such transfer or succession. So simple. Assume I was carrying on a business which is registered under GST. Now I am selling my business to you. So I am the transferor, you are the transferee. So all the assets and liabilities of my business will belongs to you now. Can I give my registration also to you? No, because I have taken the registration under my PAN. So what I should do is I should cancel my registration. I should apply for cancellation of my registration, whereas you have to apply for fresh registration. So irrespective of your aggregate turnover, as you are succeeding the registered business, for you registration is must. Registration is must, guys. Even in this case, irrespective of the turnover of that particular person who was registered under the previous indirect tax regime, is it mandatory for them to get registered under GST? Yes. Okay. Then fourth one, subsection 4. In case of a transfer pursuant to amalgamation or demerger of two or more companies pursuant to an order of High Court or tribunal or otherwise, the transferee, that is the successor, shall be liable to be registered with effect from the date on which the registrar of companies issues a certificate of incorporation. So whenever there is an amalgamation or demerger of a company's, guys, so whoever is the resulting company or amalgamated company, okay, so they have to get registered under GST. And that demerger or amalgamation may be by way of an order of a high court, tribunal, or otherwise. So the transferee, that is the new entity, has to get registered under GST. Is that clear? Yes. So totally there are 4 subsections under section 22, guys, but the most important one is this one. Very important. If you guys remember, in various provisions like RCM, exemption, or even in 9 subsection 5, where e-commerce operator has to pay tax, they have given connection to 22 subsection 1. That is, if the aggregate turnover is within the threshold limit for registration, or if it is more than threshold limit, what is it? We have learned, guys. So please be careful. This is very important. And as of now, have I completely done with this? No. I still need to explain few more things, but before that, we will cover 24 and 23 also. Okay. Now coming to section 24, which talks about compulsory registration in certain cases. Notwithstanding anything contained in section 22 subsection 1 means irrespective of the aggregate turnover, the following categories of persons shall be required to register under this act. So who are those? Person making interstate taxable supply, they told it is mandatory to get registered, but in section 23 they are giving some exemption. So that is why for the first 3 points I have mentioned read with section 23, guys. Read with section 23 because here they told it is mandatory to get registered for them irrespective of their turnover, but in section 23 they are giving some exemption. So you should have a knowledge of both to tell whether they should get registered or not. Okay. Next, casual taxable person making taxable supply. Yes, compulsory registration, but still, even for them, there is one exemption given under section 23. We will see that later. Next, person who are required to pay tax under reverse charge mechanism. That is the recipient. For recipient, whenever RCM is applicable, registration is mandatory. Okay, sir. Just keep one thing in mind. For all these three sections, for all these three cases, we should also refer to section 23. First, we will finish section 24. Then we will go and connect to section 23, guys. Okay. Next, non-resident taxable person making taxable supply. For them, registration is always mandatory. Then, who are those? CTP and NRTP. Okay, in short, I call them as CTP and NRTP. They are covered in section 27. We will be learning it in the same chapter, guys, little later. Okay, next. Persons who are required to pay tax under section 9(5), that is electronic commerce operator on DRAT services. That is Devara Ratyatra services, guys. Okay, so next, sixth one. Every electronic commerce operator who is required to collect tax at source under section 52. Okay, whenever e-commerce operator is supposed to collect TCS, he should get registered mandatorily because he is acting on behalf of whom? Government. Next, persons who supply goods or services subject to threshold limit and conditions through electronic commerce operator who is required to collect tax at source under section 52. Guys, here they are telling electronic commerce operator has to get registered. Whenever they are supposed to pay tax as per 9(5) or whenever they are supposed to collect TCS, they should get registered. This is e-commerce operator. Sir, what about the suppliers? Persons here means the suppliers who is supplying goods or services through e-commerce operator. Should they also get registered? Yes, but subject to threshold limit and conditions. Subject to some threshold limit and condition. What is it? Guys, connecting all this 5, 6 and 7, I will explain you through a chart. I have made one chart for it. You can just come to that. Yeah. Come to this chart. Come to this chart. Yeah. So in this case, supplier is supplying goods or services through e-commerce operator. Okay, sir. And they will collect the payment not directly from the recipient, from e-commerce operator. Means actually the recipient, whoever wants to buy the goods or services through e-commerce operator, they will place the order. And once they place the order, the actual supplier will supply the goods or services. Yes, sir. Then the e-commerce operator will collect the payment from the recipient. They will collect their commission or platform fee and pay the remaining to the supplier. Okay. And if the service is supplied by the supplier through e-commerce operator, if it is Devara Ratyatra, that is DRAT or DRAT, yes. What is it, sir? Delivery services or local delivery services, restaurant, accommodation, transportation of passengers, H for housekeeping. H for housekeeping. In that case, section 9(5) is telling e-commerce operator, you have to pay GST. So when e-commerce operator is supposed to pay GST, it is mandatory for them to get registered, guys. Because as if they are the supplier, they are liable to pay GST. So in that case, irrespective of their aggregate turnover, they have to get registered. Okay, sir. Fine. If it is any other services other than this, if it is any other services, assume it is consultancy services, advisory services, insurance services, any other services, in that case, economic e-commerce operator, that is electronic commerce operator, has to collect TCS. Once they collect the payment from recipient, before they give it to the supplier, they are supposed to collect TCS. They are supposed to collect TCS as per section 52. And whenever the e-commerce operator is collecting TCS, they are collecting it on behalf of whom? On behalf of the government. And they have to remit it to the government within 10th of next month. For that, they have to get registered under GST, guys. So for e-commerce operator, is registration mandatory? Yes, sir. Registration is mandatory. Okay. So whether e-commerce operator is paying GST as per section 95 or whether they are collecting TCS as per section 52, they have to get registered. Okay. Now let us talk from supplier point of view. Sir, if supplier is supplying this services, should he get registered? No, they are the small suppliers. That is why we are targeting whom? E-commerce operator. And in few of the cases, they are clearly told, only if supplier is not registered, then e-commerce operator has to pay tax. Sir, what if the supplier is registered? For example, for D, that is local delivery services only. If supplier's aggregate turnover is more than threshold limit for registration, then supplier would have been registered. He will pay tax under forward charge mechanism. Got it? In that case, should e-commerce operator pay tax as per section 95? No, guys. They need not. But should they collect TCS in that case? Yes, they should collect TCS. If e-commerce operator is not supposed to pay tax as per 95, then on such goods or services, they have to collect TCS. Okay, sir. Fine. So for this services, let us assume e-commerce operator is paying tax. So he should get mandatorily registered. In that case, supplier who is a small supplier, so he is not registered. Okay. Sir, what if it is any other services? Supplier should get registered only if the aggregate turnover is more than 20 lakh or 10 lakh in case of special states. Whether the services is supplied within the state or outside the state, the threshold limit is applicable. Got it? That is for any other services, guys. Got it? Yes. Next, coming for goods. For any goods supplied by the supplier through e-commerce operator. E-commerce operator is supposed to collect TCS as per section 52. Yes. So in that case, should they get registered under GST? Yes. As per section 24, mandatory registration. Then coming to the supplier, actual supplier. If the supplier is supplying the goods within the state, only in one state, through e-commerce operator, then for them threshold limit is applicable. Only if they cross the threshold limit of 20 lakh or 10 lakh, they should get registered. But this benefit is given only for one state. And they have to give few details like PAN, address, state details and all. And also they would be getting some enrollment number. But they should make sure that they are supplying the goods within the state only in one state. They cannot operate in more than one state. Got it? Yes. So this is for the supplier of goods who is supplying within the state in one state. Sir, what if they are supplying outside the state, sir? What if they are supplying outside the state? In that case, if they are supplying the goods outside the state, it is mandatory registration for them as per section 24, guys. For whom? For the actual supplier. For the supplier, guys. Got it? Yes, sir. Yeah, we shall continue now. So we have covered point number 5, 6 and 7 through a chart, guys. We'll continue with point number 8. Persons who are required to deduct TDS under section 51. Guys, the person whoever is deducting the TDS, they are deducting TDS on behalf of government, and whatever amount of TDS they are deducting under GST, not under income tax. Please be careful. There is a concept of TDS and TCS even in GST, but it is covered only in one section. TDS is under section 51 and TCS is under section 52. Oh. Now the person whoever is deducting the TDS, the amount of TDS has to be deposited with the government within 10th of next month. And for this, they have to get registered under GST mandatorily, guys, because they are handling the government's money. So both whoever is collecting the TCS or whoever is deducting the TDS, for them registration is mandatory. Okay, next, ninth one. Persons who make taxable supply of goods or services or both on behalf of other taxable person, whether as an agent or otherwise. For example, assume I am a principal who is making taxable supply of goods. Now I have appointed you as an agent to sell goods on behalf of me. So for you, is registration mandatory? Yes, you have to get, because you are supplying the goods which is taxable on behalf of me. I am the one who is a principal who is making a taxable supply of goods or services, and I have appointed you as an agent, act on behalf of me to supply taxable goods. For you also, registration is mandate. Got it? Yes. For me, it depends on the aggregate turnover. If my aggregate turnover has crossed the threshold limit, I would have got registered. Now, if I am registered and if you are supplying goods on behalf of me, irrespective of your turnover, you have to get registered as an agent. Okay, sir. Next, 10th one. Every person supplying online money gaming from a place outside India to a person in India, This is for those people who would have built an app or platform which the Indians would be using in India. So for them, whoever is supplying the online money gaming services from outside India, they should get registered under GST in India. Yes. Next, input service distributor. Actually, the last 2 points are not a part of your intermediate syllabus, but still they have to get registration under GST mandatory. So input service distributor means when a input service is received by an entity and invoice is received by this particular distributor, whom we call it as like head office, and whatever credit is available on that invoice will be distributed by this head office to the other branches based on whether they have used that service or not. So the person whoever is distributing the credit to the other branches, which is nothing but like head office, we call them as input service distributor, guys. Okay. Then coming to 12, every person supplying online information and database access or retrieval services from a place outside India to an unregistered recipient in India. So recipient is in India, supplier is outside India, but the recipient who is in India is an unregistered person. So they're asking supplier, even though you're outside India, you have to get registered under GST in India. Okay, guys. So the following people, they have to mandatorily get registered under GST. Yes, sir. Now coming to persons who are not liable for registration. So exemption for registration is given in section 23, guys. So subsection 1. The following persons shall not be liable to registration, namely clause A. Very important, so please be attentive. Any person engaged exclusively in supplying the goods or services or both that are not liable to GST or wholly exempt from tax. Guys, assume I am supplying only the goods or services which is always exempt under GST or which is outside the GST like petrol or alcohol like that. Should I get registered? No. Irrespective of my turnover, I need not get registered. But what if I am making taxable supply along with exempt supply? In that case, I need to check what is my aggregate turnover. And aggregate turnover will include the total turnover including exempt supply. Yes. And if the aggregate turnover is more than threshold limit, I should get registered. I should get registered, but I should pay tax only on the taxable supplies and not on exempt supplies. Is that clear? So I repeat, if a person is making taxable supply along with exempt supply, we need to check their aggregate turnover. If aggregate turnover is more than threshold limit, they have to get registered. If not, no registration. Okay. Next, B, clause B. An agriculturist to the extent of supply of produce out of cultivation of land, in simple sale of agricultural produce, that is crops. So if a farmer or agriculturist is selling only the crops grown by them, then irrespective of their aggregate turnover, no registration. Sir, what if they are engaged in manufacturing also? Then we need to check their aggregate turnover. If the aggregate turnover is more than the threshold limit, they have to get registration, guys. Is that clear? Yes. So in simple, section 23 subsection 1 is telling if I am exclusively engaged in supplying the goods or services which is outside the GST or which is exempt under GST, or if I am selling only crops grown by me, then for me, irrespective of my aggregate turnover, no registration, guys. Okay, sir. Then coming to 23 subsection 2, this has to be read along with section 24. I told you now the first 3 points under section 24 read with section 23. Yes, here also you can see I have mentioned read with section 24. What is it? Following category of persons have been notified by the government as being exempted from obtaining registration under GST law. Okay, who are those? First one, persons, that is the suppliers who is engaged only in making taxable outward supplies, the total tax on which is liable to be paid on reverse charge basis by the recipient. So if I am a supplier who is supplying goods or services which is always taxable under reverse charge mechanism, as a supplier, I need not get registered. Irrespective of my turnover, I need not get registered. But for recipient, as RCM is applicable, they have to get registered, given in section 24. Whenever RCM is applicable, recipient has to get registered, guys. Okay. But there is one exception. However, nothing contained in this notification shall apply to any person engaged in supply of metal scrap. It is a goods taxable under reverse charge mechanism, guys. But goods which are taxable under reverse charge mechanism is not a part of your syllabus. So that is why you would have not learned while discussing RCM. But anyway, as it is connected here, let me explain it. Okay, I have given a chart for it. So come to the next page, next page. Yeah, to this point. Come to this chart. This is there in the revision book only. You need to just turn the page. Yeah. Okay. Now assume supplier is supplying goods or services which is taxable under RCM. Okay. So if supplier is supplying only exclusively means only the goods or services which is always taxable under RCM, for them registration is not at all applicable. Irrespective of their turnover might be 20 lakh, 40 lakh, 50 lakh, whatever might be their turnover, they need not get registered. Okay. Whereas the recipient, whenever RCM is applicable as per section 9.3 or 5.3, 9.3 of CGST Act or 5.3 of IGST Act, for them registration is mandatory. They have to get registered. Irrespective of their turnover, they have to get registered because they are the one who is liable to pay GST. Guys, I have given 9.3 of CGST Act or 5.3 of IGST Act because few of the recipients given in 9.3 or 5.3 may not be registered under GST still. Few of them clearly they told RCM is applicable only when recipient is registered. Got it? Yes. But in few cases they mentioned like body corporate or a business entity or a partnership firm or a banking company. If they are already registered, well and good, they will pay tax under RCM. Sir, what if any of these people are not yet registered but RCM is applicable? In that case, they have to get registered mandatorily, irrespective of their aggregate turnover. Got it, guys? Simple, simple. When RCM is applicable, recipient has to pay tax under reverse charge mechanism. Yes, sir. Now, if recipient is already registered, well and good, just pay the tax. And once you pay, that is called input tax, you can claim the credit of it later. Okay. Sir, what if recipient is not yet registered? Now you have to obtain the registration mandatory. Got it? Yes. And I have not mentioned 9.4 or 5.4 of IGST Act, 9.4 of CGST Act or 5.4 of IGST Act because it covers real estate transaction and in the section itself. So if I have to explain section 9 subsection 4, they have clearly told the government can notify the goods or services which are supplied by an unregistered supplier to the registered recipient. So RCM is applicable only when recipient is registered. So already recipient is registered. So again, there is no question of registration, guys, in that case. So that is why I mentioned 9.3 or 5.3 here. Got it? Yes, sir. Okay. But exception is supplier of metal scrap. So for supplier of metal scrap, we have a separate provision. So assume the supplier is supplying a metal scrap and the supplier is unregistered. So if supplier is unregistered, for recipient RCM is applicable, guys. RCM is applicable. So for recipient, when RCM is applicable, he has to mandatorily get registered. Yes, sir. Now, will it be forever? No. Once the supplier's aggregate turnover crosses the 20 lakh or 10 lakh, he should get registered. Who? Supplier. So, till when RCM is applicable is till the supplier's turnover crosses the threshold limit. RCM is applicable, recipient has to pay tax, but it is not forever. Once the aggregate turnover of the supplier crosses the threshold limit, he will take registration and immediately RCM will stop and FCM will start. Once supplier takes the registration, no, when will he take registration? When his aggregate turnover crosses the threshold limit. So he will take registration. Once he take registration, FCM will start and RCM will stop. And please be careful, this special provision is applicable only for the supplier of metal scrap. Whereas for other goods and services which is taxable under RCM, if supplier is exclusively supplying only goods or services which is always taxable under RCM, for him, forever exemption from registration, forever. We don't even check their aggregate turnover. Is that clear? Whereas for recipient, it is mandatory registration. They have to take registration and pay GST under RCM, guys. This is for other than metal scrap. Got it? Yes. And metal scrap is a goods. Please be careful. So for a supplier who is unregistered, if he is supplying metal scrap to a recipient, RCM is applicable. RCM is applicable, guys. Okay, sir. Fine, sir. Come back. Come back. Yes, we are done with this point. Next, B. The person making interstate supply of taxable services and having an aggregate turnover of less than or equal to 20 lakh or in case of special states 10 lakh in a financial year. So in section 24 they told in the person who is making interstate taxable supply has to mandatorily get registered. But now they are telling if you are supplying the services outside the state, for you aggregate turnover is applicable. If your aggregate turnover is within the threshold limit, no registration. If aggregate turnover is more than the threshold limit, obviously they have to get registered. Clear? Here exemption is given only to the extent their aggregate turnover is within the threshold limit of 20 lakh or 10 lakh, guys. Okay. So this is for the supplier of services. Next, goods. Last point. A person including casual taxable person making interstate. Okay, interstate means again outside the state. Supplies of goods having been exempted from obtaining registration subject to the following conditions. What is it? Persons making interstate taxable supply of what? Not any goods, only notified handicraft goods, or persons making interstate taxable supplies of products made by craftsmen predominantly by hand. That is, the major work is done by hand, even though some machinery may be used. Okay, machinery is used, but for a minor work, whereas the major work has been done by hand, guys. So if the supplier is supplying the notified handicraft goods or the goods which is predominantly made by hand, even if it is outside the state, for them registration is not mandatory. And their aggregate turnover should be within 20 lakh or 10 lakh in a financial year. Sir, what if their aggregate turnover crosses the threshold limit? They have to get registered. They have to get registered, guys. Okay. Or, and also one more condition, such persons have obtained a PAN and have generated e-way bill. They have to generate the e-way bill to carry the goods from one state to another state, and irrespective of the consignment value. Whether the consignment value is less than 50,000, more than 50,000, we don't check it. In the following two cases, when they are carrying the notified handicraft goods or the goods made by the hand predominantly outside the state, the generation of e-way bill is mandatory, guys, irrespective of the consignment value. Got it? Yes, so fine. And what is this handicraft goods or goods predominantly made by handmaids? Guys, simple. Which, like toys or basket or any carpet or candles, like this. So if I have to give an example, see, there is a city in Karnataka. There is a place called Chenpatna in Karnataka where they are well known to make toys for children's. And their majority of the people are engaged in that profession only or in business. Okay. But can they sell all the toys, whatever they are manufacturing within Karnataka? May not be. So what do they do? Being a small suppliers, they may carry the toys outside the state and sell it there. So as there are small suppliers who couldn't sell the entire products in one state, they may carry it outside the state to sell it. That doesn't mean that they have to take mandatory registration. So only for them, the registration is exempted until they cross the threshold limit for registration. So if their aggregate turnover is within 20 lakh, or in case of special states, if it is within 10 lakh, they need not get registered. Sir, what if their aggregate turnover crosses the threshold limit? Obviously, they have to get registered. Obviously, they have to get registered, guys. Okay. So even for this, I have given a chart. So let us just learn that. Yes, come to this. So before RCM, I have given one chart. Come to that. Interstate supply. Okay, interstate outward taxable supply of what? If it is services, then registration required only if aggregate turnover crosses 20 lakh, or in case of the special states, 10 lakh. If it is within the threshold limit, no registration. Any services. Okay. Sir, what if it is interstate outward taxable supply of notified handicraft goods or the goods which are predominantly made by hand by craftsmen, including when the supplier is a casual taxable person? The registration is required only if the aggregate turnover crosses the 20 lakh or 10 lakh limit. And please be careful, in this case, 40 lakh limit will not be applicable. Only 20 or 10, guys. Only 20 or 10. Okay. Sir, what if it is any other goods? If any other goods, assume this pen is supplied outside the state, the supplier has to take compulsory registration as per section 24, guys. So only for this goods, the threshold limit is applicable. Whereas for any other goods, mandatory registration. Got it? Yes, sir. So after studying all this, so if I go back to section 24 and understand, so it is like this. So the first point is, person making interstate taxable supply of goods only, but other than notified handicraft goods and the goods which are predominantly made by hand by craftsmen. So if any other goods is supplied outside the state other than this two, supplier has to take compulsory registration. Sir, what about services? For any services up to 20 lakh or 10 lakh, no registration. If it is more than 20 or 10 lakh, they have to get registered. So I repeat, This point actually, after, see, you don't amend anything. This is how it is actually given in section 24. But after studying 23, what should I understand here is, person making any interstate taxable supply of goods other than notified handicraft goods or goods which are predominantly made by craftsmen. Got it? Yes. Chalo, we'll continue. Okay. So I told you section 22 subsection 1 gave the power to the government to notify that the 20 lakh limit can be extended to 40 lakh limit for the exclusive supplier of goods within the state. And government has used this power and released a notification telling for the exclusive supplier of goods 40 lakh limit is applicable. But 40 lakh limit is not applicable for following people or in the following cases. What is it? We will see. Threshold limit for registration for those engaged in exclusive supply of goods enhanced to 40 lakhs. So previously it was 20 or 10 lakh. But after this notification for exclusive supplier of goods within the state, 40 lakh limit is applicable through notification. Except means in the following case, 40 lakh is not applicable. So that means in the following case, what will be the limit, sir? It will be either 10 lakh or 20 lakh. Got it? Yes. So what are those? We will see. First one. Persons engaged in making intrastate supplies in the states of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Mizoram, Manipur, Nagaland, Tripura, Puducherry, and Telangana. So totally 10 states are there. So this 10 states told, no, sir, 40 lakh limit is not applicable for us. Don't apply it. We don't want it. So for this states, it will be either 10 lakh or 20 lakh. I have given here. So for MMNT, the limit would be 10 lakhs, whereas for the remaining 6 states, the limit would be 20 lakh. For all the states and union territory, 40 lakh limit will be applicable. 40 lakh limit will be applicable, guys. So totally 10 states have been kept outside this notification for whom 40 lakh limit is not applicable. And easy to remember them, guys. Out of 10 states, from year to year, 8 states is as per section 10. So there is a composition scheme with respect to RTM, right? Restaurant supplier or the trader or the manufacturer. So for them, what is the threshold limit? 1.5 crore. But if the supplier is in 8 special states, what is the limit applicable? 75 lakh. So same 8 states we need to take here plus PT. PT means Puducherry and Telangana, additional, extra year, 2 more extra states. So 8 special states as per section 10, same to same, plus 2 more extra year, Puducherry and Telangana. Got it? So for totally 10 states are there. What is the limit applicable for them? If it is MMNT, 10 lakhs. If it is other 6 states, 20 lakh. Okay, so totally 10 are covered here as per first bullet here. Okay, sir, what if it is any other states or union territory? They are eligible for 40 lakh. Provided the supplier is exclusive supplier of goods within the state. Within the state, guys. Okay, sir. Next, second one. Persons who are required to take compulsory registration under section 24. So whoever is covered under section 24 is not at all eligible for 40 lakh limit, guys. Okay. Next, suppliers of the following goods, they are not eligible for 40 lakh. So that means they are eligible for how much? 10 or 20 lakh, guys. Okay. Who are those? Let me read it. Ice cream and other edible ice, whether or not containing cocoa, tobacco and manufactured tobacco substitutes, pan masala, fly ash bricks or fly ash aggregate or fly ash blocks, bricks of fossil mills or similar siliceous earths, building bricks and earthen or roofing tiles. If you can recall, same list we had seen in composition scheme. If a person is the manufacturer of any of these goods along with even aerated water, aerated water is not covered here, okay, but for composition scheme they have told, if a person is the manufacturer of the following goods, then they are not eligible for both the composition schemes. Only if they are a manufacturer. Can they be a trader? Yes, they can be a trader. Whereas here, they are telling suppliers of, whether they are manufacturer or trader, doesn't matter. If your outward supply is any of these goods other than aerated is not covered here, okay, then you are not eligible for 40 lakh limit. Okay, so shortcut is, so for composition scheme, I had given bat tip, but here it is only BT tip. A will not come. I have given A and I have scratched it. Please observe. I have given A and I have scratched it. Clear? So that you should know to remember that exactly Whereas in composition scheme, the manufacturer of aerated water is not eligible for composition scheme, both the schemes. Whereas here, if I am the supplier of aerated water within the state, am I eligible for 40 lakh? Yes, I am eligible. Please be careful. So BT tip is covered here. BT tip, not back tip, only BT tip. Or B stands for bricks or blocks, T for tiles, another T for tobacco, ice cream, pan masala. So please be careful. Aerated water is not covered here. Okay. Then the last one. Persons taking voluntary registration under section 25 subsection 3. Sir, a person himself is taking the registration irrespective of his turnover. Then obviously no limit is applicable for him. Got it, guys? Yes. Sir, what about for the supplier of services? For supplier of services, 40 lakh is not at all applicable because it is exclusive supplier of goods. But I told you, if you are supplying goods along with financial services, then financial services will be ignored and you will be considered as exclusive supplier of goods. Okay. So the threshold limit for registration for service providers would continue to be 20 lakh, and in case of special states, it is 10 lakhs, that is MMNT. Got it? Yes. So this I already covered. Just now I explained. So threshold limit for registration for suppliers of services or BT tip or goods along with services. So supplier is supplying goods along with services. What is the threshold limit? In case of MMNT, that is Manipur, Mizoram, Nagaland and Tripura, it is 10 lakhs. Whereas for other states and union territory, the limit is 20 lakhs. Got it? Yes. So yeah, this charts we already covered. Now coming to, sir, what are special states for GST purpose? So I have compiled it in one table, guys. So which are the special category states for GST purpose under different provisions? In one single table, I have tried to compile it. So please pay attention. Who should get registered? We are almost done. So I'm just taking an example of the states, special states as per the respective provisions. Okay. Guys, as per Article 279A, which we learned in first chapter, there are totally 11 special category states. That is 3 topmost states plus 8 northeastern states. So I have also given the map here, Indian map. You guys can just check. So 3 topmost states means Jammu Kashmir, Himachal Pradesh and Uttarakhand, which we also call it as hilly states. Plus 8 northeastern states, guys. Let me read it out. Sikkim, Assam, Arunachal Pradesh, Nagaland, Manipur, Mizoram, Tripura, Meghalaya. So 3 plus 8. So totally, how many special states as per Article 279A people? 11. Okay. And there they are not given any turnover limit and all. They have just classified 11 states as special states. Okay, sir. Whereas for composition scheme covered under section 10.1 and 10.2 for RTM, RTM means restaurant supplier, trader of goods or manufacturer of goods. Okay. For that purpose, they have taken only 8 special states. Out of this 11, they have taken only 8. So you can consider like this. 11 states as per Article 279A minus AJ. AJ means Himachal Pradesh, Assam and Jammu Kashmir. So are they considered as special for 10.1 and 10.2? No, it is minus. So 11 minus AJ. So totally 8 states are treated as special for section 10.1 and 10.2 composition scheme, where 75 lakh limit would be applicable for these 8 states. Got it? Let me read out that. Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura and Uttarakhand, guys. Whereas these 3 states, what is the limit, sir? 1.5 crore only. Please be careful. For these 3 states, they are not special for composition scheme. They are normal. 1.5 crore is applicable. Okay. Then coming to registration under section 22 subsection 1, there are 4 special states, only 4. MMNT, that is Manipur, Mizoram, Nagaland and Tripura. And for Meghalaya and all is there. So please be careful. We need to take Manipur, Mizoram, Nagaland and Tripura. And what is the threshold limit applicable for them? 10 lakhs. 10 lakhs, guys, for registration. Okay. Then section 22 read with notification, which gives the limit of 40 lakh. There are totally 10 special states. What are those 10 special states? Same 8 states we need to take plus PT. Same 8 states which is there here plus PT, guys. So I have given there 8 states as per section 10.1 plus Puducherry and Telangana. Okay. So let me just read out that state's name quickly. Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Mizoram, Manipur, Nagaland, Tripura, Puducherry, and Telangana. So for this 10 states, 40 lakh limit is not applicable, which means for MMNT, the limit is 10 lakhs, and for the remaining 6 states, it is 20 lakhs, guys. Is that clear? Yes. So where, under which provision, which state is special, I have given it in one table. So once we cover all those things, if you guys can just recall here, you will be having 100% clarity, guys. And this is important, especially because sometimes in the question they will use the state name. So you should know that what is the exact limit applicable. Please be careful with it. So are we supposed to remember all this? Yes, guys, you have to. Okay, sir, fine. So for GST purpose, even this we already covered, but just a repetition quickly. For GST purpose, totally how many states, guys? 31, including Delhi, Puducherry, and Jammu Kashmir. Whereas how many union territories? 5. 5 union territory and totally 31 states, guys. And 5 union territory without state legislature, which are Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, Chandigarh, and last one is Ladakh. Is that clear? Yes, sir. Fine. So we are done with who should get registered, guys. Who should get registered under GST? Yes, sir. I will just give few examples. Quickly observe, guys. Quickly we will go through. Tak, 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 tak. Yeah. So these are few examples with respect to section 22. Assume I am the supplier of goods within the state. In which states I am supplying the goods? Karnataka, Tamil Nadu, and Andhra Pradesh. Okay, sir. All are normal states. So what is the threshold limit applicable for me? Assuming in all the states I am supplying only within that state. Okay. What is the limit applicable for me? 40 lakh. Check what is the aggregate turnover. All 3 states put together, it is 45 lakh. So 45 lakh is more than the threshold limit. Should I get registered? Yes. Where and all? Karnataka, Tamil Nadu, AP. In each state I should get registered. Okay, sir. Now assume I am the supplier of services in Karnataka, Tamil Nadu, AP, Andhra Pradesh. So all 3 are normal states. So what is the limit applicable for me for registration? 20 lakh. Check what is the aggregate turnover. 12 plus 10 plus 5, 27. So 27 lakh is more than 20 lakh. Should I get registered? Yes. Where and all? Karnataka, Tamil Nadu, AP. All 3 states I have to get registered. And please be careful. I have told you aggregate turnover means we should take all India basis. You can calculate individually for each branch, but at the end you need to do aggregate. And if your aggregate turnover is more than the threshold limit, in every state, wherever you are making taxable supplies of goods or services, you have to get registered there. Sir, what in any state I am making only exempt supplies or non-taxable supply? For that state, you need not get registered. For that state, you need not get registered. Okay. But while calculating the aggregate turnover, should we include exempt supply or non-taxable supply also? Yes. Yes. I will explain that. Okay. Now, supplier of goods or services within the state. Okay. So, Karnataka, Tamil Nadu, Manipur, one of the special state. One of the special states. So, what is the limit applicable for me? 10 lakh. Even if I am operating in one special states, then a lower limit of 10 lakh will be applicable for me. Okay. So 10 lakhs. So my threshold limits is 10 lakh, which is applicable for registration. So check the aggregate turnover, which is 16 lakh. So 16 is more than 10 lakh. I should get registered in Karnataka, Tamil Nadu, as well as Manipur, guys. Okay. Next, supplier of goods and services, both within a state. So that means no 40 lakh. No 40 lakh. Which states? Karnataka, Tamil Nadu, and Kerala. All are normal states. So what is the threshold limit applicable for me? 20 lakh. Sir, why not 40 lakh? Because I am also supplying services along with goods. And when they just mention services, don't assume it is a financial services. Assume other than financial. Okay. So 20 lakh is the limit applicable. Check what is the aggregate turnover. It is 23 lakh. So 23 is more than 20 lakh. So I should get registered in Karnataka, Tamil Nadu, as well as Kerala, guys. Okay. Next. So I am the supplier of goods along with financial services within the state. In Karnataka, Tamil Nadu, and Kerala, all are normal. And even though I am providing financial services, we will ignore and we will consider that I am the exclusive supplier of goods. In that case, what is the threshold limit applicable for me? 40 lakh. And check what is the aggregate turnover. 8 plus 5 plus 10, 23, which is less than 40 lakhs. Registration not required. Registration not required, guys. Okay. Then as per section 23, if I am supplying only non-taxable supply, assume alcohol or petrol, should I get registered? No. Irrespective of my turnover, no registration. Assume I am supplying only exempt supply, which is exempt under GST. Should I get registered? No. In both these cases, irrespective of my turnover, I need not get registered, guys. Okay, sir. Next. Supply of taxable services is 12 lakh. Supply of exempt services is 10 lakh. So I am supplying both taxable as well as exempt. So should I get registered? Depends on my aggregate turnover. What is the threshold limit applicable for me? 20 lakh, assuming I am operating in normal states. Okay. If state name is not given, go with normal states, guys. Okay. So 20 lakh is the limit applicable, but my aggregate turnover is 12 plus 10, 22 lakh. So 22 is more than 20. Should I get registered? Yes, but paid GST only on 12 lakhs. Should I pay GST on 10 lakhs? No. Aggregate turnover includes exempt supply. And if aggregate turnover is more than threshold limit, I should get registered, but pay GST only on taxable supplies, guys. Clear? Whereas if I am a composition supplier covered under section 10, if I am a manufacturer or restaurant supplier, then I have to pay tax on total turnover. But now we are talking about the person who is under section 9. If he is taken registration, he should pay tax only on the taxable supply of goods or services, guys. Is that clear? Yes. So, next. As per section 2 clause 6, aggregate turnover includes mainly taxable outward supply plus exempt supply. And what is the exempt supply is given in section 2 clause 47. Exempt supply includes nil rated supply, wholly exempt supply plus non-taxable supply. So while calculating aggregate turnover, if there is any exempt supply or nil rated supply or non-taxable supply like alcohol or even petroleum products and all, should we take it? Yes, in aggregate turnover calculation, we should take it. And in addition to this too, I have given only the main two items. In addition to this, exports, interstate supply between the distinct person has to be considered, guys. Even that has to be considered. Okay. Few more example. Assume I am the supplier making following supplies in Maharashtra state, which is a normal state. I am supplying alcohol for 45 lakh and laptop for 6 lakh. So only one taxable supply is there. So in that case, should we check aggregate turnover? Yes. As I am supplying goods within the state of Maharashtra, 40 lakh is the limit applicable. And my aggregate turnover is more than 40 lakh. Should I get registered? Yes, in Maharashtra. But pay GST only on 6 lakh. Clear? Because on 45 lakh, GST is not applicable. But should it be a part of aggregate turnover calculation? Yes. But now listen. Assume I will scratch the Maharashtra part. I am supplying alcohol in Karnataka and laptop in Maharashtra. Okay. Now, what is my aggregate turnover? 51 lakh. Should I get registered? Yes. Where? Only in Maharashtra. Should I take registration in Karnataka? No. Why? Because in Karnataka, I am not making any taxable outward supply. In my aggregate turnover, we should include it. But while taking registration, should I take both in Karnataka as well as Maharashtra? No, guys. No need to take registration in Karnataka because I am making only the supply of goods which is outside the GST. Even instead of alcohol, if it is petrol, also same story. So I need to take registration only in the states where I am making taxable outward supply, guys. Okay. Next, supplier making following taxable supplies in Karnataka. Okay. So following supplies, what is it? Petrol 30 lakhs, pen which is included in GST 15 lakh. So aggregate turnover applicable for me, the threshold limit is 40 lakhs, but aggregate turnover is 45 lakh. So more than 40 lakh. Should I get registered? Yes, in Karnataka, I should get registered. But I should pay GST only on 15 lakh, guys. That is on the taxable outward supply. Okay, sir. Next, assume I am making supplies in the states of Kerala, within Kerala. What's the threshold limit applicable for me? Assume I am supplying only banana and banana chips, goods only. So within 40 lakh. 40 lakh is the threshold limit. Okay, sir. So supply of banana is an agricultural produce. Yes, exempt. Supply of banana chips is taxable. Okay, 12 lakhs. So what is the aggregate turnover? 42 lakh. So 42 lakh is more than 40 lakh. Should I take registration in Kerala? Yes, but pay GST only on 12 lakhs. Is that clear? Sir, what if I am supplying only banana in Kerala and my aggregate turnover is 50 lakh? No need to take registration. As per section 23, if I am supplying only the crops or agricultural produce, irrespective of my turnover, I need not get registered, guys. Is that clear? Yes, sir. Fine. We'll move forward. Done. Completely done with three sections, guys. 22, 24, and 23. First, better read 22, 24, then go and read 23, guys. Got it? Yes. So we'll move forward. Now, we have understood who should get registered. Now we will see how. How? So what is the procedure for registration? Every person who is liable to register under the CGST Act must do so within 30 days from when he becomes first liable for. Okay. Once I am liable for registration, whether as per section 22 or 24, I should apply for registration in GST REG 01 within 30 days, guys. Or as per the proviso, if I am a casual taxable person or non-resident taxable person, 5 days prior to the commencement of business, I need to apply for registration. And we will talk about this to people in section 27, guys, in the same chapter. And PAN is mandatory to get registered under GST. Exception is for NRTP because they may not have PAN. NRTP means non-resident taxable person. And they have also made Aadhaar authentication mandatory now. So for the person, this sections were added later, guys. That is section 25, 6A, 6B, 6C and all was added later. It was not from 1st July 2017. Okay. Now, before this provisions was added, if any person has already obtained the registration, they have to get their Aadhaar authenticated. If not, their registration can be cancelled. Their registration can be considered as invalid. Whereas once this provision is introduced, any person is freshly applying for registration has to get their Aadhaar authenticated at the time of registration itself. Got it? Yes. Let us see. 25(6)(a). Every registered person shall undergo authentication or furnish proof of possession of Aadhaar number. That is, whoever has already taken registration before this provision was introduced. Okay, sir. Fine. Then 25(6)(b). For fresh registration, every individual shall have to authenticate himself with Aadhaar number. Means whoever is applying for a fresh registration after this provision was introduced, they have to get Aadhaar authentication at the time of registration itself. Okay. Then 25(6)(c). In case of a person other than the individual such as partnership firm, AOP, BOI, company, trust, etc. for getting fresh registration, authentication shall be done by the Aadhaar number of a partner, means whoever is the face of that entity. That is the partner, authorized representative, managing director, trustee, etc. Okay, sir. And registration under GST is state-wise, and there are no centralized registration under GST. Sir, I have business in all the states in India and all union territories. So can I take one centralized registration? No. In each and every state and union territory, I have to apply for registration separately and I have to obtain it under my PAN. All registration will be under my PAN. Okay. A business entity having its branches in multiple states will have to take separate state-wise registration for the branches in different states, guys. A person having a unit in SEZ or being a SEZ developer shall have to apply for a separate registration even though it is within the same state. Because for GST purpose, SEZ is considered to be a location outside India, as distinct from a place of business located outside the special economic zone in the same state or union territory. A person who has obtained more than one registration, whether within the state or outside the state, each registration will be treated as distinct person, guys. If you remember, while covering schedule 1, we have spoke about this distinct person. As per para 2, if there is a supply between related person or distinct person in the course or furtherance of business, even without consideration, it is a supply. Correct. So there itself we discussed who is related person, who is distinct person and all about the registrations. Hope you remember it. Yes. Okay. And in rule 10, they have given what is the effective date of registration, guys. Okay. In case the application is submitted within 30 days, the date on which the person become liable for registration is the effective date of registration. Whereas, sir, what if the application is submitted after 30 days? Then the date of grant of registration is the effective date of registration. So I will explain with an example. Just pay attention here. Assume I was liable for registration as on 1st January 2026 as per section 22 or 24. I was covered in either of the sections. Okay. And I applied for registration on 15th January in GST REG 01. That is an application for registration. and registration was granted to me on 20th January in REG06. That is the form number for registration certificate. Okay, sir. So I applied within 30 days. So what is the effective date of registration is as per rule 10, 1st January, the date on which I was liable. So I am called as a registered person from what date? 1st January 2026, guys. Okay. Next example. I was liable on 1st January, but I applied for registration on 14th February, special date. Yes. And registration was granted on 20th February. So as per rule 10, I am called, okay, as per rule 10, I am called as a registered person from what day? The day on which registration is granted to me. The reason being is I didn't apply for registration within 30 days, guys. Still registration will be granted, but from the day on which the registration is granted is I am considered as a registered person. And in that case, actually, I will not get the benefit of section 18, if you remember. That is the input tax credit on the stock. That benefit will not be available in this case. Okay, sir. Fine. We'll continue. Next, bank account details may be furnished after obtaining the registration certificate as per rule 10A, but within certain time. What is it? A registered person has an option to give his bank account details after obtaining the registration, but within 30 days from the date of grant of registration or before furnishing the details of outward supply under section 37 in GSTR 1 or using invoice furnishing facility, whichever is earlier. So if a person has not given his bank account details at the time of application, he has to give the bank account details within 30 days from the date of grant of registration or before filing first GSTR 1, whichever is earlier. Whichever is earlier, guys. Or if they are following QRNP, their first IFF. For the first 2 months of the quarter, they have to give the details of outward supply in IFF. No, that one. Okay. But for the first IFF, we need to take. That is for the first month. Okay. Exception is no relaxation for TDS deducted, TCS collector, or the person who have obtained voluntary registration. For them, at the time of registration itself, they have to give the bank account details. Okay, sir. Then, sir, what if in case I have obtained the registration is granted, but the bank account details is not given within the time given in Rule 10A, then my registration is liable to be cancelled. The proper officer can issue notice to me to cancel my registration. Can he take a step? Can a proper officer take a step to cancel my registration? Yes. Next, unique identity number. Section 25, subsection 9 and 10, read with Rule 17. Any specialized agency of United Nations organization or any multilateral financial institution and organization as notified under the United Nations Privileges and Immunities Act 1947 or consulate or foreign embassies of foreign country, that is foreign embassies in simple, is required to obtain UIN from GSTN portal and it is centralized. So should we obtain it for each and every state? No. So these are the people who are providing services for their home country but in India. And they have to obtain UIN in India. Okay. And it is centralized. Should they take it in each state? No. Sir, why should they obtain UIN? Guys, for whatever GST they pay in India, we give a refund of it. They are like our guest, So we are giving a refund of whatever GST they have paid on their inward supply. So for that, they should have a unique number called unique identity number, guys. And it is centralized. Please be careful. And the person, whoever is having UIN, we don't treat them as the registered person. We don't treat them as registered person. Hence, they are not taxable. Now assume I am a registered person under GST. I am making any supply to a person who is having UIN. Is it a B2B supply or B2C supply? It is B2C supply. It is a B2C supply, but still, whatever tax the person who is having UIN is paid under on his inward supply, they can claim a refund of it. They are giving a refund of it. But for me, is it a B2B or B2C supply? B2C, guys. For me, it is a B2C supply. Because if a person is having UIN, we don't consider them as registered person. Okay, sir. Then, as per section 26, which is a small section, now assume I have applied for registration under Karnataka SGST Act and registration is granted. Should I separately apply even under CGST Act? No, it is deemed approval. What if it is rejected? Assume I have applied for registration under Karnataka SGST Act and they have rejected. Can I apply under CGST Act and check it? No. It is deemed rejection even under CGST Act, guys. Got it? Yes, section 26. Now coming back to 25 again. 25 we are not yet done. The procedure I have given you. There are two parts in the procedure, guys. Part 1 is the responsibility of the applicant, whereas part 2 is the responsibility of the proper officer. Okay, that is the department. Proper officer is nothing but GST officer, guys. In income tax, we call assessing officer. No, the income tax officer is called as what? The assessing officer. Whereas here under GST, we call them the GST officer as the proper officer. Okay, let me read it. Procedure for registration, part 1 means as an applicant, what should I do? Every person who is liable to get registered and the person who is seeking voluntary registration shall, before applying for registration, declare his permanent account number, that is PAN, and state or union territory in part A of form GST REG01. So REG01 is a form number in which we need to make an application for registration. It will has two part, guys, part A, part B. Okay. So you need to give your PAN number and the state details in part A. Okay. Then PAN is validated online by common portal from the CBDT database and is also be verified through separate OTPs sent to the PAN linked mobile number and email address. Okay. They will also cross check with CBDT database and for even income tax purpose. What is the unique number? PAN. So to some extent they are linking, guys, income tax and GST. So assume in GST I have disclosed as sales, but in income tax I have not disclosed it. Then it will lead to mismatch. It will lead to mismatch. Or even if it is vice versa. In one place I have disclosed, but not the other. Then it will lead to mismatch of figures, guys. The person may end up receiving the notice. Temporary reference number, that is TRN, is generated and communicated to the applicant on a validated mobile number and email address. Okay, TRN. As soon as we give this detail, a TRN will be generated. Okay. Using the TRN, we need to give the details of the business in part B. Business details has to be given in part B. Okay, let us see it. Using TRN, applicant shall electronically submit application in part B of application form, that is GST REG01, along with specified documents at the common portal. Part B of the application contains the details such as constitution of the business, jurisdiction, option for composition, means if you want to straight away start with section 10, you can choose here. If not, you can ignore. Date of commencement of business, reasons to obtain registration, address of principal place of business, and nature of activity carried out therein, details of additional place of business, details of bank accounts, details of authorized signatory, and other authentication. And guys, assume I have multiple branches within a state, but I am taking single registration. In that case, one branch I can specify it as principal place of business, all other branches I can disclose it as additional place of business. But do I have an option to take separate registration for each branch? Yes. Within the state also I can take separate registration for each branch, but in that case they will be treated as distinct person. If there is any movement of goods from one branch to another branch, even without consideration, and if the branches are separately registered, it is treated as supply as per para 2 of schedule 1, guys. So that will lead to an extra compliance and all. So better would be any person to take one registration in one state in order to reduce the compliance burden. Okay. And for each registration, return has to be filed separately, payment has to be made separately. So simply a headache. Okay. Next. On receipt of such application, an acknowledgement in the prescribed form shall be issued to the applicant electronically. A casual taxable person, that is CTP, applying for registration gets a TRN for making an advance deposit of tax in his electronic cash ledger, and an acknowledgement is issued only after the said deposit. So about this, I will talk in section 27, guys. As of now, we will keep it on hold. Okay. Application shall be forwarded to the proper officer. Okay. Once all this information in part A and part B is submitted by the applicant, the application on the details will be forwarded to the proper officer. That is either the state officer or central officer. Okay. The procedure after receipt of application by the proper officer is depicted in part 2. Okay. The applicant responsibility done. Now the proper officer, what right does he has? Okay. He will check whether all the details given by the applicant is it correct. Okay. So proper officer examines the application and accompanying documents. If the same are found in order, everything is proper. Guys, see, we need to learn this in two parts. First part is this one. Okay, this one. The other one is this. Okay, first let us focus on the first part, when all the things are smooth. Oh. If same are found in order, okay, sir. Yes, everything is in order, sir. The proper officer is happy with the application, so is straight away granting the registration, even without physical verification. Even without physical verification, is granting the registration straight away. So once an applicant has made an application, if proper officer is happy with everything, within 7 working days from the date of submission of application, without certificate verification, means without physical verification, if the applicant successfully validates the Aadhaar authentication, means applicant while making the application itself, he has made the Aadhaar authentication. In that case, the proper officer also is happy with all the information. He doesn't require any other additional information. He also doesn't want to do any physical verification. Straight away, he will grant the registration within 7 working days from the date of application of registration, guys. Okay, sir. Next, sir, all the details are okay. The proper officer doesn't require any additional information, but he wants to do Aadhaar authentication. Sorry, he wants to do physical verification. He wants to do physical verification. Physical verification means the proper officer will physically come and visit the place of business of an applicant, take the photographs and upload the details on GST portal, guys. That is in REG 30. He will upload all the details of whatever he has collected during physical verification in GST REG 30 on the common portal. Okay. So when will the proper officer come for a physical verification means any of these three cases, any of these three. When is it? I will read this. Okay. Yes. One by one. First, where applicant fails to undergo Aadhaar authentication, does not opt for Aadhaar authentication. Okay. Means I am not at all opting. Means I am an applicant. I am not at all opting for Aadhaar authentication for some reason. Or else I have opted for Aadhaar authentication, but I am not able to do it. Why, sir? Maybe I am not getting OTP. I'm not getting OTP. So even though I want to do Aadhaar authentication, I'm not able to do it. Okay. Or else second one, where the proper officer deems it fit to carry out the site verification. Okay. Means even though Aadhaar authentication is done, proper officer is feeling, I want to physically verify once. Let me go and check on that. Okay. The last one is system is identifying that the applicant is a risky applicant. Maybe because of the past or history. Okay. Where a person who has undergone Aadhaar authentication is identified on the common portal based on the data analysis and risk parameter to carry out the verification, site verification. So this is system based, guys. So in any of these three cases, please listen here. The proper once an applicant has submitted an application for registration, the proper officer will come for physical verification. He will do physical verification and update all the details of physical verification, and he should grant the registration within 30 days, guys. So he should complete two things. One is physical verification and grant registration. Actually, in fact, three things I will tell you. So once I have made an application, assume the proper officer wants to do physical verification for any of this reason. Okay, so he should come and do physical verification, update the details of physical verification on the GST portal in GST REG 30, and he should grant the registration. All these three he has to complete it within 30 days from the date of application, guys. From the date of application. Let me read it. Registration is granted within 30 days of application after verification, that is physical verification of site and prescribed documents. Is that clear? So hope you guys have understood. Now, sir, I repeat, please listen. I have made an application for registration. I have made an application for registration, and the proper officer is happy with the application, and he doesn't want to do any physical verification, then he will grant the registration within 7 working days. No physical verification, nothing. Okay, first case. Second one, no, the proper officer wants to do physical verification for any of this reason. In that case, you need to do physical verification, update the details of physical verification, and grant the registration within 30 days, guys. Hope you understood. Yes, sir. So I've just given details here. You can see. Actually, this is what the format. Whenever the proper officer is doing the physical verification, no? Assume I have applied for registration on 1st October, but the proper officer doesn't want to grant the registration straight away. He wants to come and physically verify my place of business. Okay. So registration will be granted within 30 days of submission of application after physical verification. Okay. So he should do the physical verification and grant registration within 30 days from 1st October. Within 30 days from 1st October. Okay. But the 30 days time period will get over here, no? At least 5 days before this, he should have completed physical verification and update the details of physical verification on GST portal in form GST RAG 30. Within what time? At least 5 working days prior. Prior to what? The end of this time. I repeat, once I have made an application, physical verification has to be completed and registration has to be granted within 30 days, right? Yes. So at least 5 days before this, physical verification has to be completed and the details of physical verification has to be updated by the proper officer in form GST REG 30 on the GST portal at least 5 working days prior to this. And within that 30 days, he should grant the registration. Is that clear? So all this task has to be completed within 30 days. But whereas this task they're telling, you will maximum get like 25 days for that. Okay. So this task has to be completed at least 5 days before this deadline. Got it? Yes, sir. Sure. Okay. So this was like smooth procedure where the proper officer is not asking for any additional information or clarification. What if additional proper officer wants some additional information? Now, if same are found in order, no. Proper officer wants more clarification, more information, more documents. In that case, he will issue a notice. He will issue the notice. So you can see this part. Let us move to this part now. Proper officer will issue the notice, thereby seeking clarification, information, or documents from the applicant electronically. Okay. And what is the time limit for the proper officer to issue notices? If he is doing physical verification for any of this reason, then to issue notice, what is the time he has? 30 days. Same like here. Here 30 days time was to grant registration, but here 30 days time is to issue notice. Okay, in any of these three cases. And this three case is nothing but the same which is covered here. Okay. No, sir, the proper officer doesn't want to do physical verification, but he just needs some extra information for which he is issuing notice. In that case, he has to issue notice within 7 working days, guys. So if you see the same time limit as given here, but here the time limit was to grant registration, whereas here the time limit is to issue notice. So this is the time limit to issue notice asking for a clarification, guys. Clarification or more information or more documents by the applicant. Okay, sir. Clear? Yes. So I repeat, if the proper officer wants to do physical verification, then he has to issue notice within 30 days. If not, within 7 working days. Okay. Now, once the proper officer has issued a notice, the applicant has to respond to it within 7 working days. He need to respond to it within 7 working days, and whatever proper officer has asked for, he need to provide it. Okay. And once the applicant has responded to the notice, the proper officer is he satisfied with it? If yes, then he will grant the registration within 7 working days. Once he receives the reply, within 7 working days, he will grant the registration if he is satisfied with the reply. Sir, what if he is not satisfied with the reply? Or else the applicant didn't reply at all within 7 working days. He didn't reply only. In that case, the proper officer will reject the registration, guys. So proper officer may reject the application for the reasons to be recorded in writing. That's all. Better luck next time. Got it? Yes, guys. So chalo. So this is all about the registration procedure. Okay, part 1 is easy. Part 2, be careful. Actually, if you understand one part, no, the other part becomes easy because the time limits and all is same. Here it is to grant registration, whereas here it is to issue notice. And once notice is issued, to reply for it 7 working days. And once the reply is received, to take final decision again 7 working days. Easy, guys. Easy, guys. Okay. Now, sir, a certain time limit is given to the proper officer to take a call or to grant the registration or to issue notice. What if by chance, if he is silent by the end of that day, then it is deemed approval, guys. Deemed approval. So I have told you here. I mentioned. If the proper officer doesn't take any action within 7 working days of submission of application, along with necessary details and documents, or within 7 days of receiving the clarification so solicited, that is replied by the applicant, the application of grant registration is deemed to be approved, guys. So, if proper officer is silent at the end of 7 days here, or at the end of 7 days here, or after receiving the reply for the notice, is silent here. So, if he doesn't respond till the end of 7th day, on the 8th day, it is deemed approval. That's all. Okay. Sir, what about this cases? 30 days time is given to the proper officer. No? Yes. So, within 30 days, if he doesn't take any call, then it is deemed approval, guys. However, if the other authentication is not opted for or other authentication has failed in validation, proper officer deems it fit to carry out a site verification or where a person who has undergone other authentication is identified on the common portal based on the data analysis and risk parameters to carry out site verification and no show cause notice is issued. In that case, registration will be deemed to be approved within 30 days. Clear? In simple, whatever is the time limit given to the proper officer to take the respective action, if he is silent by the end of the day, then it is deemed approval for the applicant, guys. Got it? Yes, sir. Yes, now we will get into section 27. Guys, 26 we already covered. That is the deemed registration, that is deemed approval or deemed rejection, which is very small. Now, section 27 talks about two special people, that is non-resident taxable person and casual taxable person. They are two special people for GST purpose, guys. So, who are they? It is defined, CTP is defined in section 2 clause 20 and NRTP is defined in section 2 clause 77. First, we will understand the definition. Then we will come back to section 27, guys. Okay. So, section 2 clause 20 defines casual taxable person as a person who occasionally undertakes transaction involving the supply of goods or services or both in the course or furtherance of business, whether as a principal agent or in any other capacity in a state or union territory where he has no fixed place of business. That is, he is already having business, regular business in one state, but he is going to a new state where he doesn't have any office or branch, guys. And is he going there to set up a new branch altogether? No, no, only for a temporary period. He is going there only for a temporary period. For example, assume I am having my regular business in Karnataka, so I am registered here in Karnataka. But I want to go participate in an exhibition which is happening in Gujarat for 20 days. So in Gujarat, should I take a registration? Yes, as a CTP. I should take registration as CTP in Gujarat. Got it? Where I will go and do the business for a temporary period, guys. Okay. Thus, a casual taxable person is someone who has a business in a different state but comes to a different state for a business purpose temporarily. Is he going there and setting up a new branch? No, no, no. If he is going and setting up a new branch, then he has to take regular registration. As usual, normal. Yes, sir. And application for registration by CTP has to be made in GST REG 01 5 days prior to the commencement of business. Okay. And they have to file GSTR 1 along with the GSTR 3B for their active period of registration. Sir, should they file GSTR 9 also? No, no. They should only file 1 and 3B for their active period of registration. And their registration will not be active throughout the year. So that is why GSTR 9 is not applicable for them. Because in returns chapter we will be learning whoever is filing 1 have to file 3B. And whoever is filing 1 and 3B has to file 9. Whereas CTP has to file 1 and 3B for their active period of registration, whereas they will not file 9, guys. Okay. Then coming to NRTP. Non-resident taxable person is defined in section 2 clause 77, which defines non-resident taxable person as any person who occasionally undertakes transaction involving supply of goods or services or both, whether as a principal or an agent or in any other capacity, but who doesn't have any fixed place of business or residence in India. Do they have any branch or any residence in India? No, guys. Okay. So, hence, a non-resident taxable person is someone who has a business outside India, but they are coming to India for a temporary period to sell their goods. For example, assume there is a person from Singapore is doing business there, but now he wants to come and participate in an exhibition in Gujarat for 30 days. Okay, he wants to come and sell his goods in exhibition which is held in Gujarat. So for Gujarat, can he take a registration as NRTP? Yes, temporary registration. Yes, sir. In that case, You need to import his goods. When you import his goods to sell it in India, you would have paid IGST because it is on import IGST is applicable. And can he claim the credit of IGST when he actually sell his goods in India? Yes, he can claim the credit of it. But if he purchase any goods in India or if he avail any services in India on which he pay GST, no credit on it. 17 subsection 5. Hope you remember. NRTP can claim credit only on the goods imported by him. Whereas if he purchase anything within India, no credit on it. Okay. And application for registration has to be made by him in REG09. REG01 is not applicable for him because for him different procedure. We will ask for different information. And he should also apply for registration at least 5 days prior to the commencement of business. And he should file GSTR 5 for his active period of registration. And what are these returns and what is the due date and all? We will learn it in the last chapter, guys. Chapter 15. Okay, sir. So this is all about the definition of CTP and NRTP. What is given in section 27, we will see now. Oh. Registration granted for casual taxable person or non-resident taxable person is valid for a period of 90 days, which can be further extended for another 90 days maximum, or, or for the period which is mentioned in the registration certificate, whichever is shorter. For example, assume I am asking registration in Gujarat for 30 days. So for how many days they will grant the registration? 30 or 90, whichever is lower or whichever is shorter, 30 days. Assume I am asking for 100 days. 100 or 90, whichever is shorter, 90 days. Sir, extension 90, no. So straight away 90 plus 90. Can I ask for 180 days? No, no. First you should ask for 90 maximum. If required, you can again request for extension. Okay. Now, assume I have applied for registration as CTP. I asked for 50 days registration. They granted. Later, the exhibition was a super hit. It got extended. Now, can I ask for an extension of 90 plus 40 remaining was there no balance carry forward? Can I ask for 90 plus 40? 130? No, no, no. Sorry. I repeat. Initially, I took registration for 50 days. Okay. Later, can I ask extension for 90 plus 40 balance from here? No, no, no. Maximum extension will be for 90 days, guys. That to maximum. I can ask extension for only 10 days, 20 days, 30 days also. But maximum extension will be given for 90 days. Okay. And whenever CTP or NRTP is about to do business in the new territory, they have to obtain registration before they make the taxable supplies. Yes, 5 days before the commencement of business, they have to make an application for registration. And they should have deposited the tax in advance based on their estimation, guys. Means they are asking, assume registration for 50 days. So for 50 days, whatever might be the estimated tax liability, they have to calculate and deposit that amount in advance because they are going to a new territory. How will the government trust them? So they have to deposit the tax in advance, but that may not be the exact amount of their tax liability, guys. Okay. Assume for 50 days they estimated their tax liability to be 5 lakh. They will deposit into their cash ledger, which will be credited into the electronic cash ledger. And as and when they supply the goods, when they are liable to pay GST, they can use this amount. Assume at the end of 50 days, sir, only 4 lakh was my output tax. That means remaining 1 lakh, you can claim a refund. Sir, what if actual tax liability was 5,50,000? That means you need to deposit 550,000 more. Got it? So there will be a difference because whatever amount we deposited as advance based on estimation might not be the exact tax liability, guys. So if there is any shortfall, we need to deposit more, or if already excess amount is deposited, we can claim the refund of excess amount, guys. Got it? And even if a person is asking for an extension, for that extended period, whatever is the estimated tax liability, no, even that he has to deposit in advance when he's asking for extension. Got it? Yes, sir. Fine, guys. So this is all about section 27. Yes. And for CTP and NRTP, registration is mandatory. Please be careful. Except for a CTP who is supplying the notified handicraft goods or the goods which are predominantly made by hand. If they are supplying it outside the state also, still for them threshold limit of 20 lakh or 10 lakh will be applicable. Whereas if they are supplying any other goods, mandatory registration, guys. Mandatory registration. And for NRTP, always mandatory. Okay. Then amendment of registration. Section 28 read with rule 19. Guys, I would have provided various information in my application for registration at the time when I'm making application. Based on that, registration certificate will be granted to me. Later, what if there is any changes? For example, change in mobile number, change in email address, change in address, anything like that can happen, no? Yes. So in that case, I need to apply for amendment. So what is the procedure for applying for amendment is given in section 28, read with rules. I will just try to explain it with a chart, guys. Okay. This is not there in the revision material. You just observe. If you want, you can later, once I complete the explanation, you can just pause, and if you want, you can make a note down of it. Yeah, sure. Whenever there is any changes of the information which is already given by me in an application, within 15 days, I need to apply for amendment. By whom? By a registered person. RP means registered person. Okay. If it is core fields, then approval by proper officer is required. If it is other than core fields, then deemed approval. As soon as I apply, it is deemed approved. Okay. Sir, what is core fields? Change in NAP, that is name of the business or address of the business, and persons, that is the new partner is joining or one of the partner is retiring, plus or minus of the persons who are doing the business, guys. Simple. Plus as well as minus, both. New admission or retirement, death, anything, we need to apply for an amendment. Okay. So if there is a change in NAP, okay, yes, so for that, approval by proper officer is required. So within 15 working days, once a person apply for amendment of NAP, within 15 working days, the proper officer can either approve or he cannot straight away reject. He need to give an opportunity of being heard. So he will issue a show cause notice to a registered person, and once a show cause notice is issued to a registered person, he has to reply for it within 7 working days. Okay. And once the registered person has replied for show cause notice, now the proper officer has 7 working days. And within 7 working days, if the reply of the registered person is satisfied for the proper officer, he will approve, the amendment is approved. Okay. So, what if the reply is not satisfied to the proper officer? Or else the registered person didn't reply only for the notice, no reply. In both these cases, the proper officer can reject the amendment, guys. He can reject the amendment. Got it? Yes, very simple procedure. This is what is actually covered in section 28. Very simple. Okay. Then, amendment is not possible when there is a change in PAN. For example, I sold my business to you. My business was registered under my PAN. Now, can I give my registration also to you? No, no. I have to apply for cancellation of registration, whereas you have to apply for fresh registration under your PAN. So in that case, can I apply for amendment or should I apply for cancellation? I should apply for cancellation. Okay. Next, if there is a change in address, it is a part of core fields. But if the address is changed outside the state, then I cannot apply for amendment. For example, I am shifting my business from Karnataka to Tamil Nadu. In that case, as it is a change in state, I need to apply for cancellation of registration in Karnataka and apply for a fresh registration in Tamil Nadu, guys. Is that clear? So in both these cases, amendment is not possible. Amendment is not possible. Yes, I will just show you the chart. You can give an heading, amendment section 28. Yeah, just pause the video and take down. Yes, we will move forward. Now section 29. 29 talks about cancellation of registration or suspension of registration. Read with rules, guys. Okay. See, there are two scenarios when the registration under GST can be cancelled. One is the registered person, he himself is asking for cancellation, that is as per section 29 subsection 1, or else the proper officer is taking initiative to cancel the registration of a registered person. Why, sir? Maybe the registered person has contravened the provisions of GST. That is why. There are two scenarios. Okay. So when registered person himself is asking, the scenarios would be like this. That is as per section 29 subsection 1, guys. Assume I was carrying on the business from a very long period. Now I want to close. I want to just relax. So I'm closing down my business. Can I ask for cancellation of registration? Yes. Or else I have sold my business to you. I am the transferor, you are the transferee. Now, as I cannot give my registration to you, I need to apply for cancellation of my registration. Got it? Yes, sir. Or even I told you, I'm shifting my business from Karnataka to assume other states. Even in that case, I need to apply for cancellation of registration in the state where I had business. Okay. Or else the registered person is gone forever, has died. In that case, the legal heirs can apply for cancellation, guys. Can apply for cancellation. So what is the procedure, sir? Very simple, guys. Very easy. Smooth procedure. Okay. Voluntary cancellation as per section 29 subsection 1, that is the registered person himself is asking for cancellation, or if he has died, the legal heirs are asking for cancellations. Okay. Legal heirs or legal representative. Okay. So there is an event which is leading to cancellation of registration, like sale of business or shifting of business from one state to another state, or I'm closing down my business, or the person has died. Okay. There is an event. Within 30 days, the registered person himself or the legal heirs has to apply for cancellation. And the proper officer within 30 days will pass the cancellation order, guys. CO stands for cancellation order. So the proper officer will pass the cancellation order within 30 days of application. That's all. And once the cancellation proceedings is started, still it is completed, the registration would be suspended, guys. I repeat, once the cancellation proceedings is started, immediately it may not be able to closed or completed. So till it is completed, during this intervening period, registration would be suspended. Got it? Yes, sir. Or. So 29 subsection 1 we discussed. 29 subsection 2. Here, the registered person is not applying for cancellation. Proper officer is taking an initiative. Okay. But he cannot straight away cancel the registration. If any of this contravention has happened, first he has to issue a show cause notice. He has to wait for the reply of the registered person. Only then he can take a final call, guys. Okay, so fine. Let us see. The proper officer may cancel the registration of a person from such date, including any retrospective date as he deemed fit, where, guys, this is important. They're asking theory questions, straightforward questions on this. When the proper officer can cancel the registration of a registered person. Okay. A registered person has contravened such provisions of the act or the rules made thereunder as may be prescribed. Okay. So, which are those contraventions? They are given in Rule 21. The registered person does not conduct any business from the declared place of business after obtaining the registration, is not doing any business from his place of business. Next, issues invoice bill without supply of goods or services in violation of provisions of this act or the rules made thereunder, means he is issuing fake bills or bogus bills. Next, violates the provisions of section 171 of the CGST Act. That is, section 171 of CGST Act 2017 contains the provisions relating to anti-profiteering measure. Anti-profiteering measure means the registered person should not make profit in the name of GST, guys. So recently, that is last year, central government gave a Diwali gift to the people of the country, telling we are cutting the rates of GST on few goods or services. But still, even after that, many suppliers were selling the products at the price at which they were selling before the rate cut. That means the rate cut benefit was not passed on to the people. Government clearly told all the business officials, whatever rate cut benefit is there, it has to be passed on to the people. But many of the selling price was not reduced even after the rate cut. So there is supplier trying to make profit in the name of GST? Yes. Yes. Got it. Or else sometimes some suppliers will, like, from the recipients they will collect 18% GST even though only 5% is applicable for them. Means they are trying to collect higher rate. So they will collect from a recipients 18%, whereas to the government they will remit only 5%. Remaining is their profit margin. Can they do so? No, no, no. Sorry, it is a violation. Next, violates the provision of Rule 10A, that is bank account details. If you don't give it within the time limit given in Rule 10A, can the proper officer cancel your registration? Yes. Next, avails the ITC in violation of provisions of Section 16 of CGST Act or the rules made thereunder. Only if recipient has satisfied all the conditions given under Section 16, he can claim the credit. But even though he has not satisfied few conditions, assume he has went ahead and claimed the credit. In that case, can proper officer take an action? Yes. Next, violates the provisions of Rule 86B. That is, when monthly taxable supply is more than 50 lakh, at least 1% of the output tax has to be paid through cash ledger. So even though Rule 86B is applicable to the registered person, he didn't follow it. He utilized full credit. Okay, again a violation. Then there is a mismatch of information between GSTR 1 and GSTR 3B, guys. Section 39 talks about GSTR 3B only. So there is a mismatch of outward supply or output tax between GSTR 1 and GSTR 3B. Okay, for example, just a minute. Yeah. Assume for December 2025, a registered person has filed GSTR 1, giving the details of outward supply and output tax. As per GSTR 1, the output tax is 10 lakh. Again, for December, he also filed GSTR 3B on or before 20th January, giving the details of output tax as 9 lakh. So there is a mismatch between GSTR 1 and 3B for the same month. Yes. So even in that case, can the proper officer take an action to cancel the registration of a registered person? Yes, guys. So for the same months, if there is a mismatch between GSTR 1 and 3B, then it may give a right to the proper officer to cancel the registration. But now actually, if there is any mistake in GSTR 1, if you have noticed it before filing GSTR 3B, you can amend it through GSTR 1A. I repeat, if there is any mistake in 1 and if you have noticed it before filing 3B, you can amend the mistake in GSTR 1 through GSTR 1A. We will learn about that in returns chapter, guys. Okay, chalo, we'll continue. So done with rule 21, that is clause A. Now coming to clause B, 29 subsection 2 clause B. A person paying tax under section 10 has not furnished returns for financial year beyond 3 months from the due date of furnishing the said return. Guys, this is composition supplier. So the composition supplier has to file GSTR 4 as annual return on or before 30th June of next financial year. So even though the due date is 30th June, they are giving 3 more months. So that is, if they are not filed the returns on or before 30th September, then their registration can be liable for cancellation. Their registration is liable for cancellation by the proper officer, guys. Okay. Then C. Any registered person other than the person specified in clause B, that means the person who is under section 9, guys. Okay. Has not furnished the returns for a continuous period of 6 months. Continuous period of 6 months. Or if quarterly return filer, that is who is following QRMP, does not file returns for a continuous period of 2 tax periods. For them who is following QRMP, tax period means what? Quarters. So if they are filing monthly returns and if they are not filed the returns for continuous 6 months, they are covered here. Or else if they are following QRMP, if they are not filed the returns for 2 continuous quarters, they are covered here. Got it? Yes, sir. Fine. And you should know under GST, return filing is on in the sequence, guys. Sequencing of return is mandatory. Means if I have not filed the returns for last month, can I file the returns for the current month? No, not possible. So here they're telling continuous 6 months you have not filed or 2 continuous quarters you have not filed, then the default is covered here and the proper officer will have a right to cancel the registration. Okay. Next, any person who has taken the voluntary registration under section 25 subsection 3 has not commenced the business within 6 months from the date of registration. Simply has taken the registration and he has kept quiet, not doing anything. Then the last one, registration has been obtained by means of fraud, willful misstatement or suppression of facts. That is by giving wrong information or false information, or I have not disclosed all the facts. Okay, sir. So in any of this case, can proper officer straight away go ahead and cancel the registration, guys? No, no, no. First, he has to give the opportunity of being heard. Means he will serve a show cause notice for which the registered person has to reply. Once the registered person reply, the proper officer can take a final call, guys. So not only in this case, whenever the proper officer is taking any decision which might have a negative impact on the registered person, first he should be given a show cause notice. He should be given an opportunity to explain. Only then the proper officer can take a final decision, guys. Got it? And even here, from the time the cancellation proceedings is started till it is completed, the registration would be suspended. And during suspension period, a person cannot make any outward taxable supply, he cannot file any returns, and also he cannot even get a refund of any amount of tax even though he is eligible under GST. So during suspension period, I will repeat, he cannot make any taxable outward supply, he cannot file any returns, and also any refund will not be processed for him during suspension period. And when the suspension will end, sir, when cancellation proceedings is completed. When cancellation proceedings will be completed, sir? When the cancellation order is passed by the proper officer, or else he told, okay, we will drop the cancellation proceedings here, your registration will continue. Clear? In any of this case, the suspension will end. Suspension will end. So if proper officer has passed cancellation order, in that case, suspension also will end along with registration. Whereas if proper officer has asked registered person, okay, you can continue with your registration, suspension will end and registration will continue. Registration will continue, guys. Got it? Yes. So at the end of cancellation proceedings, it can be of two. There can be any two of the scenarios or outcomes. One is the cancellation order is passed. That means registration has come to an end. The other one is the proper officer will pass an order telling the registered person, okay, you can continue. You can continue. In that case, suspension will end, but registration will continue, guys. Okay, sir. Coming to this. So 29 subsection 2. So proper officer has to issue show cause notice whenever there is any contravention by the registered person as per section 29 subsection 2, read with rules. So within 7 working days, the registered person has to reply to the show cause notice. He has to reply once he receives the show cause notice. He has to reply for it within 7 working days. Sorry, within 7 days. Okay. And once the registered person has replied to the show cause notice, now the proper officer has 30 days time. So within 30 days, he can either accept the reply and drop the proceedings. Drop the proceedings means registration will continue. Registration will continue. Registered person is happy. Okay. The other one is reject the reply and pass what? Cancellation order. Pass the cancellation order means registration has come to an end. That's all. Game over under GST. Okay, sir. Fine. So 29 subsection 2 we have covered. Then 29 subsection 3 is telling the cancellation of registration under this section shall not affect the liability of the person to pay tax and other dues under this act or to discharge any obligation for any period prior to the date of cancellation. Okay, means I'll just explain. Assume the effective date of cancellation is from 1st July 2025, guys. Okay. Now for the period after this, should I file the returns? Should I pay GST and all? No. On or after July, I need not file returns. I need not pay any tax. But for the period prior to this, like assume April, May, June and all, if return is still pending, should I file it? Yes. And if any tax dues is still pending along with interest, late fee or penalty, should I pay it? Yes. Even if it is after 1st July, still I should file my pending returns and pay the tax dues, guys. And as long as I pay the tax dues, the interest will be keep on accumulating. Burning interest 18% per annum as per section 50. Yes, sir. Okay, na? Yes. Fine. So, just because my registration is cancelled, can I take a protection telling I will not pay my tax dues, go? I will not file my pending returns, go? No. I have to make all those things good. Okay. Next, 29 subsection 4. The cancellation of registration under the SGST Act or UTGST Act, as the case may be, shall be deemed to be the cancellation of registration under this Act. So, if my registration is cancelled under the respective SGST Act, it is deemed cancellation even under CGST Act, guys. Got it? Yes. Then 29.5 is talking about the GST liability. Interesting provision. Please pay attention. Every registered person whose registration is cancelled shall pay an amount equivalent to credit of input tax in respect of inputs held in the stock and inputs contained in semi-finished or finished goods held in stock on the day immediately preceding the date on which such cancellation or the output tax payable on such goods, that is if it is actually sold, whichever is higher. If you guys remember, when we were covering Schedule 2 in Chapter 2, which talks about the supply of goods or supply of services. So if a taxable person ceases to be a taxable person, means when his registration is cancelled, whatever stock he is having, is it a supply of goods? Yes. If you remember, I had mentioned there, we will cover it along with section 29 in registration topic. Okay. So when registration of a registered person is cancelled, whatever stock he is having, it is deemed to be supplied by him. It is a supply of goods tax. So how much GST he has to pay on it depends on. Okay, just a minute. Listen here. Okay. Assume the registration is cancelled effectively from 1st July 2025. So we need to see what is the stock he is having on 30th June. Stock of what? Raw material, WAP and finished goods. This is something which you would have already purchased and you would have already claimed credit. Clear? When his registration was effective. But now his registration has been cancelled. So on the preceding day, whatever stock he had, for which he has already claimed credit, we are taking it. Okay. So ITC already claimed on, or GST on transaction value means if the stock is sold, what is the transaction value? On that calculate GST and take whichever is higher, pay that. Sir, what if on the stock still credit is not claimed? Then straight away you can take GST on transaction value. Clear? Because this would be 0. GST on transaction value, whichever is higher, straight away you will get this one. This is for the stock of raw material, WAP and finished goods. Sir, what if it is capital goods? Assume I had purchased capital goods when my registration was effective or it was active and I have already claimed credit on it. But on 30th June, I am having it as in my inventory. Okay, capital goods. Okay, sir. So how much tax should I pay? ITC, which is already claimed, minus 5% per quarter or part of the quarter for the period I have used it year. That is before cancellation of my registration. For how many quarters I have used? For each quarter, I have to reduce 5%. Okay. Or GST on the transaction value, which is sale value. Whichever is higher, I need to pay. And this is very similar to section 18.6, guys. So even in section 18.6, which is we are talking about ITC in special cases, if any capital goods or plant and machinery is purchased on which ITC is claimed, after using it for business for few months or few years, if I am selling it, then should I pay GST on it? Yes. What is the term? ITC, which I already claimed I need to take, minus 5% for each quarter or part of the quarter I have used it from the date of purchase till the date of sale. Then I need to compare that with the GST on transaction value. Whichever is higher, I have to pay. Here also same provision. Under section 29 subsection 5 also same provision. But 18 subsection 6 is applicable when I am selling my capital goods or plant and machinery, but I am not closing down my business. I will continue with my business. Whereas 29 subsection 5 is applicable when, sir, I am closing down my business. My registration is cancelled. That is when. Got it? Yes. The provision is same, but situation is not same. 18.6 is you have sold the asset, but you will continue with your business. Whereas 29.5 is your business is closed, registration is cancelled, like that. Okay. Let me just read it. The second paragraph. Provided that in case of capital goods or plant and machinery, the taxable person shall pay an amount equal to the input tax credit taken on the said capital goods or plant and machinery reduced by 5% per quarter or part of the quarter, or the tax on transaction value of such capital goods or plant and machinery under section 15. That is nothing but GST on that sale value. Whichever is higher. I have given same as section 18.6 means the calculation is same as 18.6. Got it? Yes, sir. Fine, guys. So we are done with section 29. Then, now, once a cancellation order is passed by the proper officer, a copy of that will be sent to the registered person telling your registration is cancelled. Now, after receiving the copy of cancellation order, the registered person, dumb, sir, my registration is cancelled. So, is there any way to get back his registration? Yes, he can ask for revocation of cancellation, guys. Okay. But revocation of cancellation is possible only when the proper officer has taken an action to cancel the registration by issuing show cause notice as per section 29 subsection 2. Sir, what if registered person he himself has asked for cancellation and registration is cancelled? Can he ask for revocation? No, sorry. In this case, revocation is not possible. Only as per section 29 subsection 2, when proper officer has sent a notice and cancelled the registration by passing cancellation order, only then, after receiving the cancellation order, the person can apply for the revocation of cancellation as per section 30, guys. As per section 30. What is the procedure? I have tried to simplify it by way of chart. Okay, here. Look, communication of cancellation order by proper officer. So you would have sent a copy of that to a person whose registration is cancelled. So once the copy is received by that person whose registration is cancelled within 90 days, which can be further extended by another 180 days by the commissioner or the person authorized by him, but not below the rank of additional commissioner or joint commissioner. Okay, in simple, the time limit to apply for revocation of cancellation is within 90 days of receiving the cancellation order, which can be further extended for another 180 days maximum. 90 plus 180. Okay. And once application for revocation of cancellation is made, the proper officer will have 30 days time. he can either accept the application and pass revocation order. So if he pass revocation order means the person will get back his registration. Will he continue as a registered person? Yes. Happy, happy. Okay. If not, if he is not accepting it, straight away he cannot reject, first issue show cause notice. So within 7 working days, once the person receive the show cause notice, within 7 working days, he has to reply to the show cause notice. And he has replied. Within 30 days now, the proper officer either have to accept or reject. If he accept the reply, he will pass the revocation order and the registration will continue for the person. Or else, if you reject, then the cancellation will continue. The cancellation will continue. Yes. Sir, once a person registration is cancelled, can he apply for a fresh registration again? Yes, he can. Okay. Now, they have also told, now if revocation order is passed, then a return has to be filed within 30 days, guys. What is it? I will just read out the last part. All returns due for a period from the date of order of cancellation or effective date of cancellation of registration till the date of order of revocation of cancellation of registration have to be furnished within a period of 30 days from the date of the order of revocation. Okay, just a minute. Now, we already discussed. Now assume my registration is cancelled from 1st July 2025. So for the period after this, should I file the returns? No. Should I pay tax? No. But for the period before this, if there is any returns pending or liability pending, should I make it good? Yes. Even if it is after this, I should file all that returns and pay the tax. Okay, sir. But what if I get back my registration? The cancellation has been revoked. Then, just a minute. Yeah, here. Okay. Assume guys, the effective date of cancellation as per the cancellation order passed as per section 29 is 1st October 2025. Okay. So if there is any returns for the period before this, we should file the returns and pay all the liabilities. Okay. But for the period after this, that is October, November, December and all, should I file the returns? No. But the person whose registration was cancelled, he applied for revocation, he requested for revocation of cancellation, and on 1st January 2026, revocation order was passed as per section 30. Revocation order was passed. In that case, for the period between this, that is October, November, and December, should returns be filed? Yes. Within 30 days from the revocation order, the return for the period from 1st October to 31st December, that is in between this, has to be filed. You would have not supplied anything in between this, at least nil returns has to be filed. Even if zero activity is there, at least nil returns has to be filed, guys. Is that clear? So I repeat, once revocation order is passed, assume in my example it is on 1st January. Within 30 days from 1st January, the returns has to be filed for October, November and December. Sir, which returns, sir? Whichever you regularly file, that is GSTR 1, 3B or whichever returns, which the person was filing when his registration was active. Okay. And guys, one section under ITC chapter I had kept pending. That is section 16, subsection 6. I will cover it now. Listen. Now, assume I had 2 lakh credit here before 1st October. I was supposed to claim it, but before that my registration is cancelled. So can I go ahead and claim it here? No, not possible. I had 2 lakh credit in my electronic credit ledger before 1st October, but my registration is cancelled from 1st October. Now I cannot claim the credit. Okay. And I got back my registration on 1st January. In between this, whatever is the maximum time limit to claim credit as per section 16.4, no, that is 30th November of next financial year or actual date of filing annual return, whichever is earlier, that is expired. Assume on 30th November, the time limit to claim credit is over. So this 2 lakh is gone. Whatever credit I was supposed to claim for which time limit is over is gone. No, guys. So for any credit, if the time limit given under section 16.4 has expired in between this time period, section 16 subsection 6 is telling we will give you another 30 days from the revocation order to claim that credit. So as per section 16 subsection 6, you see, claim ITC whose period is expired between this, within what time that credit has to be claimed? Means your time to claim credit has expired in between this. So can you still go ahead and claim that credit? Yes, within 30 days from 1st January. That is the date on which revocation order is passed. Hope you understood. Oh. Sir, what if by chance the time period to claim credit 2 lakh was already over before 1st October? The time limit to claim credit of 2 lakh was already over before 1st October. For example, assume the annual return was already filed on 15th September 25. So what is the deadline to claim credit, guys? Actual date of filing annual return or 30th November, whichever is earlier, 15th September. So the deadline to claim credit is over already, as expired before this. So in that case, will I get a benefit of section 16 subsection 6? No, I will not get that benefit. Because section 16 subsection 6 clearly told, if the time limit given under section 16 subsection 4 to claim credit has expired in between these dates, that is from the effective date of cancellation till the revocation order date. In between this, if the time limit to claim credit as per section 16.4 has expired, then we will still give you 30 days time from the date of revocation order to claim that credit. Guys. So this is the provisions covered in section 16 subsection 6, guys. Got it connected to section 29 and 30. Very important, guys. If they want to really keep challenging questions in the exam, they can connect like this. So please be very careful, because you have to connect and explain section 29, 30, 16.4 as well as 16.6. Make sure that you do it. Got it? Yes, sir. So finally, guys, so we are done all the sections with respect to registration topic. So almost all the heavyweight chapters we have covered. So we'll just go to the section list and mark whatever we have covered under CGST Act, guys. So we have covered all this section 22, 23, 24, 25, 26, 27, 28, 29, 30. Yes, sir. Guys, I know by now you will be little tired, mentally exhausted. Sir, still so much is there. I need to study other subjects also. Taxation alone is taking so much of time. Guys, that's okay. Good things will take time, and the knowledge, whatever you are acquiring now, you will also be proud of. You will also be satisfied. Correct? Yes. And in final, guys, there are two tax papers, DT for 100 marks, IDT for 100 marks. So please make sure that at intermediate level, whatever extent it is possible, acquire the knowledge in a best possible way, so that it will also help you at final level. Because the same provisions you would be learning even at final level, but maybe little advanced and few additional topics. So if you have learned the tax properly at intermediate level, then final becomes easy for you guys. Group 2, especially in final, becomes a cakewalk for you. So I know you guys are tired, but still you are willing to give your best. Do it, guys. Yes, students, now we will revise the topic of tax invoice, debit note and credit note. The provisions with respect to this topic is covered in section 31 to 34 of CGST Act, and there is no separate provisions with respect to tax invoice, credit and debit note covered in IGST Act, which means as per section 20 of IGST Act, whatever we are learning under CGST Act from section 31 to 34, same to same is applicable even under IGST Act, guys. Okay. First of all, sir, what is tax invoice? It is a commercial document which is issued by the supplier of goods or services to the recipient. And it contains the details about the goods supplied or services provided, along with the quantity, HSN code, and also the details of the supplier as well as the recipient. Especially when recipient is registered, the name, address as well as GSTIN of recipient has to be mentioned in the invoice. And along with this, the date of invoice and the serial number on the top of the invoice, then also the place of supply or the delivery address, then the quantity of goods, all these details will be mentioned on the invoice, guys. And also about the amount of discount or percentage of discount if anything is offered by supplier to recipient at the time of supply, and even the rate of GST along with the amount of GST, all this information would be provided in the invoice. Okay. And totally, we would be learning 4 sections in this chapter. All 4 sections are a part of your syllabus, guys. Section 31 talks about tax invoice and various other documents and what is the due date to issue invoice. Whereas section 32 talks about the prohibition of unauthorized collection of tax. When a person is not registered, he is not eligible to collect tax from the recipients. Then section 33 talks about the amount of GST has to be clearly mentioned in the invoice or any other document issued by supplier to recipient. Then section 34, which talks about credit and debit notes and its declaration. Okay, so each of this section we will be learning in detail. Section 31 mainly focuses on what is the due date to issue invoice. Guys, if you remember, we already covered this topic along with the time of supply of goods as well as services. Because the time of supply of goods or services as per section 12 or 13 depends on the due date to issue invoice. So, but still, we'll quickly revise even in this chapter once. Okay, so as per section 31 subsection 1, the time limit for issuing tax invoice in case of supply of goods depends on whether there is a movement of goods between supplier and recipient or not. So if there is a movement of goods, then the invoice has to be issued before or at the time of removal of goods from the supplier's place. Sir, what if there is no movement of goods? Then the invoice has to be issued before or at the time of delivery of goods or making the goods available to the recipient, guys. Okay. And who has the responsibility to issue invoice? Supplier to the recipient. Okay, sir. Sir, what if it is the supply of services? So subsection 2 talks about the time limit for issuing the tax invoice in case of supply of services along with rule 47. So first we need to check whenever there is a supply of services, is the supplier a banking company, financial institution, NBFC or insurance company? If yes, then invoice has to be issued on or before or within 45 days from the date of supply of services, guys. So once service is completed or provided by the supplier who is banking, NBFC or financial institution or even insurance company, within 45 days they have to issue invoice. Sir, what if the supplier is any other person other than them? Then invoice has to be issued within 30 days from the date of supply of service, guys. If in case in the question they have clearly mentioned that the supplier is the following person, then go with 45 days. If question is silent, then you can always go with 30 days, guys. Consider that the supplier is any person other than this one. Got it? Yes, sir. Then in section 31 subsection 3, they have spoke about few important documents or special documents like bill of supply, revised tax invoice, the refund voucher or the receipt voucher, like that. We will discuss that in a table. In the same chapter, I will discuss little later, guys. Okay, sir. Then subsection 4 and 5 talks about continuous supply of goods or services, guys. So when there is a continuous supply of goods by the supplier to the recipient, whenever he is supplying the goods, for each and every supply, he will not issue invoice. So maybe once in a month or once in a while, he will issue a statement of account, giving the details of what all goods he has supplied during that period. So what is the due date to issue invoice by the supplier is, the invoice shall be issued before or at the time of each statement of account is given by supplier to recipient or the payment is received. If any one date is given, you take it. If both are given, means the statement date as well as payment date, both is given, means consider whichever is earlier, guys. Okay. Sir, what if there is a continuous supply of services, which means the services are provided by the supplier to the recipient for more than 3 months? Okay, more than 3 months means it can be for 6 months, 12 months, whatever, but more than 3 months. Okay. In that case, if there is a contract between the supplier and recipient, then check what is the due date for payment as per the contract. So the due date for payment is the due date to issue invoice, guys. Okay. Sir, what if due date is not mentioned in the contract? Then whatever is the actual date of payment, that is the due date to issue invoice by the supplier. Okay. Sir, what if the payment is linked to the completion of milestone event? Means the recipient has told supplier only as and when you complete so much of work, I will make a payment of so much. In that case, on or before the date of completion of that milestone event, the supplier has to issue invoice to the recipient for the amount mentioned by the recipient for that completion, whatever payment the recipient has committed to pay, for that much the invoice has to be issued on or before the completion of the milestone event. Okay. Next, sir, what if before the completion of the supply, if it ceases to exist, means the contract has been cancelled. So where supply of services ceases before its completion means it is cancelled. For example, assume you had appointed me to provide accounting services for your business throughout the year for full 12 months. And you have agreed to pay me 1 lakh for each month. So I am the supplier, you are the recipient. So I provided this accounting services for 3 months, but you were not happy. So you are cancelling the contract at the end of 3 months. So should I issue invoice for whatever work I have done? Yes. So for whatever work I have done at the end of 3 months, I have to issue invoice. So as I have told you, at the end of 3 months, we are cancelling the contract. That is you. In fact, you are cancelling the contract. So I am eligible to receive a payment of 3 lakh. Yes. So for 3 lakh, on or before the date of cancellation of the contract, I have to issue the invoice, guys. Got it? Yes. Let me read it. In a case where the supply of services ceases under a contract before the completion of the supply, the invoice shall be issued at the time when the supply ceases to the extent of supply made before such cessation. I cannot issue invoice for you for full 12 lakh. That is 1 lakh into 12 months. No, I didn't render the full service, right? Yes, throughout the year. So I have given only for 3 months services for which I am eligible to receive 3 lakh payment. So for 3 lakh, I need to issue the invoice on or before the cancellation date, guys. Or next, subsection 7. If goods is sent on sale or return basis by the supplier to the recipient. So if recipient has accepted the goods, then on or before the date of acceptance, the supplier has to issue invoice. But if recipient has been given more than 6 months time by the supplier, so at the end of 6 months, the recipient has neither accepted the goods nor returned back. For GST purpose, as per section 31 subsection 7, it is considered to be a supply at the end of 6 months from the date of removal of goods from the supplier's place. So in that case, should supplier issue invoice? Yes. Even though it is not a supply, still he has to issue invoice. It is considered to be a deemed supply for GST purpose, guys. Okay, means indirectly they are trying to tell, don't give more than 6 months time to the recipient to accept the goods. Okay, let me read it. Where the goods being sent are taken on approval for sale or return or removed before the supply takes place, the invoice shall be issued before or at the time of supply if it is already accepted by the recipient, or 6 months from the date of removal, whichever is earlier. So if goods is already accepted by the recipient within 6 months, then on or before that date. No, sir, at the end of 6 months also, it is neither accepted nor returned back. Then, for subsection 7 purpose, we treat it as supply and supplier has to issue invoice, guys. Got it? Yes. Then coming to e-invoicing, that is electronic invoicing. All registered person with an aggregate turnover based on PAN, that is all India basis, in any preceding financial year from 1718 onwards, even in 1 year in the past from 1718, that is the first year in which GST was introduced. In any 1 year, if the aggregate turnover is more than 5 crore, then they are supposed to issue e-invoices for B2B supplies. That is when recipient is registered, guys. Okay, sir. Presently, invoices, credit note and debit notes when issued by the notified person to registered persons, that is B2B supply. Or in case of exports, guys, in case of exports, actually the recipient is outside India. They would have not been registered under GST, but still they're asking you to issue e-invoice. Okay. Are covered under e-invoice. Are covered under e-invoice. Sir, what about B2C supplies? They are not covered under e-invoice, guys. Thus, presently, such notified persons are not required to report B2C invoices. Anyway, they are not eligible to claim credit. No. So it doesn't matter for the department. So they are more bothered about B2B supplies because as recipient is eligible to claim credit, they are trying to avoid the people claiming or the registered persons claiming the fake credits, guys. So that is why they have introduced e-invoicing. Okay. Further, e-invoicing is also not applicable to the invoices issued by the input service distributor for their branches and for the import of goods. For export, e-invoicing is applicable, whereas for import, e-invoicing is not applicable, guys. Got it? Yes. And e-invoicing is not applicable in few cases. Just a minute, I will just show you from my provision book. Just a minute. Yeah. So you can see here, for the following suppliers, e-invoicing is not applicable. Even though their aggregate turnover is more than 5 crore, still e-invoicing is not applicable. Sir, who are those? I will just read it out. Special economic zone units. Okay. Just a minute. Yeah. Insurer or banking company or financial institution including NBFC, GTA, that is Goods Transportation Agency, supplying services in relation to transportation of goods by road in goods carriage, supplier of passenger transportation services, then person supplying services by way of admission to exhibition of cinematograph films in the multiplex screens. Okay, yes, that is PVR, INOX and all. Then the last one, a government department and a local authority. So for the following suppliers, even though their aggregate turnover is more than 5 crore in any of the past years, still e-invoicing is not applicable, guys. E-invoicing is not applicable. Okay, sir. Coming back to revision book. Next, QR code. Facility of digital payment to recipients as per section 31 capital A of CGST Act. The government has notified that the invoice issued by the registered person except specified class of persons discussed below. So these are the exceptions, whose aggregate turnover in any of the financial year, that is in the past financial year, exceeds 500 crore. For e-invoicing it is 5 crore, year 20 extra. In respect of B2C supplies, supply of goods or services or both to an unregistered recipients, including the person having UIN. Guys, if recipient is a person who is having UIN, is considered to be an unregistered person only. We already discussed in registration chapter. Yes. So will it fall under B2C? Yes. Shall have a dynamic QR code. On the invoice, the dynamic QR code has to be displayed through which the recipients can scan and make the payment. Is that clear? Yes. So please be careful. You might get confused between QR code and e-invoicing. E-invoicing is applicable only with respect to B2B supply and exports, and only when the aggregate turnover in any of the past financial year is more than 5 crore. Whereas the QR code is applicable only with respect to B2C supply or supplies made to a person who is having UIN, only when the aggregate turnover in any of the past years is more than 500 crore. More than 500, 2 zeros extra. Okay. So be careful while making the payment. Don't put any extra zeros. Dynamic QR code is not applicable to an invoice issued to an unregistered person by following suppliers. Okay. For the following suppliers, even though their aggregate turnover is more than 500 crore, still QR code is not mandatory. Who are those? Insurer or banking company or a financial institution including NBFC, GTS supplying services in relation to the transportation of goods by road in goods carriage, supplier of passenger transportation services, then person supplying services by way of admission to exhibition of cinematograph films in multiplex screens, that is PVR, INOX and all, supplier of online information and database access or retrieval services. Similar list which we already saw for e-invoicing exemptions. Okay. No dynamic QR code in case of exports also, because that is covered under e-invoicing. So when e-invoicing is applicable, dynamic QR code is not required. And when dynamic QR code is required, e-invoicing will not be applicable, guys. Hope you got it. Yes, sir. Next. Prohibition of unauthorized collection of tax as per section 32. Very small section. A person who is not registered shall not collect any tax under this act, guys. So only when I am registered under GST, whether voluntarily or mandatorily, whenever I have taken registration, on my outward supply, I am liable to pay GST. Can I charge and collect this from my recipients by issuing a tax invoice? Yes. But what if I am not at all registered? When I am not registered under GST, first of all, I am not liable to pay GST on my outward supply. But still, can I charge and collect it from my recipient and keep it with me? No, no, no. I cannot do it. No registered person shall collect tax except in accordance with the provisions of this act or the rules made thereunder. And even assume I am a registered person under GST. On my outward supply, 5% GST is applicable. But can I collect it at a higher rate of like 12%, 18% and all? No. Whatever is the rate applicable on my outward supply, I can collect only that much. And that too, I cannot keep whatever I am collecting. I have to remit it to the government within the due date. Yes. Next, 33. Amount of tax to be indicated in the tax invoice and other documents. Section 33. So section 33 is telling the amount of GST along with the rate has to be mentioned in the invoice, guys. So don't simply disclose the value of supply. So value of supply as per section 15 has to be there, plus CGST at so and so rate, plus SGST at so and so rate, or if it is an interstate supply, IGST at so and so rate, and the amount of GST has to be mentioned. Is that clear? Yes, sir. Then coming to the summary of various documents, I have given it in one single table, guys. So what are those? One by one we will see. First, tax invoices. It has to be issued by the supplier to the recipient for outward taxable supplies. If it is for the goods, then it has to be issued in 3 copies, that is triplicate. One is for supplier, the other one is for recipient, and the last one is for transporter. So what if it is a taxable supply of services? Then the invoice will be issued in 2 copies. That is duplicate. One is for supplier, the other one is for recipient. And for services, there is no question of transporter, guys. Okay. Then we have already discussed about the contents of tax invoice and all, guys. All the details about goods, services, tax rate, tax amount, supplier, recipient, all the details has to be mentioned. Okay, including the date of invoice, serial number, everything. Next, consolidated tax invoice. As I already mentioned, guys, under section 31 subsection 3, there are number of different documents covered. Now I will be explaining each of them. All these are covered. I have mentioned in the bracket are covered in section 31 subsection 3, guys. So which are those documents? One by one we will see. Consolidated tax invoice issued by the registered person when only if all these three conditions are satisfied. All three conditions has to be satisfied. What is it? It is issued when value of supply is less than 200, that is each individual supply is less than 200, recipient is unregistered and is not demanding for a separate tax invoice for each supply. In that case, at the end of each day, the consolidated tax invoice can be issued by the supplier to the recipient, guys. Okay. Next, coming to revised tax invoice has to be issued by the registered person. When so? I will just try to explain this with an example. Yeah. Listen, people. Assume I was liable for registration on 1st January 26. So I applied for registration on 15th January in GST REG 0. So did I apply within 30 days? Yes. So as per section 25, once a person is liable for registration, he need to apply for registration within 30 days. So I have applied it. Okay. And registration is granted on 20th January. So registration certificate is issued to me on 20th January in GST REG 06. So as per rule 10, what is the effective date of registration, people? It is the date on which I was liable for registration. So I was liable for registration on 1st January as per section 22 or section 24. So on that day, I am called as registered person. This provision is given where? In rule 10. If a person has applied for registration within 30 days from the date on which he was liable, then the effective date of registration will be the date on which he was liable. Okay. So that means any outward supply which I make on or after this date, I am liable to pay GST? Yes. Can I charge and collect it from my recipients? Yes. But the problem is, for any supplies made in between this, I didn't had my GST IN. So I would have not issued a tax invoice. So that is why section 31 subsection 3 clause A is telling, for whatever supplies has been made from 1st January to 20th January, a revised tax invoice has to be issued, guys. Revised tax invoice has to be issued between for the supplies made between 1st January to 20th January. Within what time, sir? Within 1 month from 20th January. That is, once the registration is granted, within 1 month from here, revised tax invoice has to be issued for the supplies made between 1st January to 20th January. So once the person has applied for registration or once he is liable, he should keep the details about all the recipients for whomever he has made supplies from year to year. Or else, without making any supplies, just wait till you get the registration certificate. So if at all, if the supplier has made any supplies in between this date, he has to issue revised tax invoices for all those recipients within 1 month from 20th January, guys. Got it? Yes, sir. Next, bill of supply to be issued by the registered person who is making the exempt outward supply or the supplier whoever is registered under section 10, that is composition scheme, both the composition scheme, whether 10.1 or 10.2a. So whoever is a composition supplier or the person who is under section 9 but making exempt outward supply, they have to issue bill of supply to the recipients, guys, where the tax amount or tax component will not be mentioned. Next, payment voucher. This is important. Section 31 subsection 3 talks about payment voucher. So issued by whom? Recipient, not supplier. Recipient. All other documents was issued by supplier to recipient, but this is issued by recipient. Okay. Paying tax under RCM. Okay. First, let me explain, guys. Pay attention. Pay attention. This is important. Have connection to other topics also. Now assume the supplier is registered under GST, is supplying services which is taxable under reverse charge mechanism. So in that case, recipient has to pay tax himself. Okay, RCM, no, that's why. So in that case, the supplier will supply the services or even if it is a goods and issue invoice to the recipient, but it will not be a tax invoice because supplier is not liable to pay GST, no, he will just issue a normal bill or invoice. Okay. So recipient will pay tax to the government and he will issue the payment voucher to whom? To the supplier. He will issue payment voucher to whom? Supplier, telling, sir, I have made a payment of so much to you. Okay, sir. Got it? Yes, sir. And for the recipient of services, when supplier is registered, the time of supply for the services which is taxable under reverse charge mechanism is clause A or clause B as per section 13 subsection 3, whichever is earlier, which means 60, this is as per RCM guys for services. That is 61st day from the date of issue of invoice, or that is date immediately following 60 days from the date of invoice, which is nothing but 61st day, or the date of payment, whichever is earlier. Whichever is earlier. Oh, this is when supplier is registered. Sir, what if supplier is unregistered? In that case, as he is not registered, he will not issue invoice to the recipient, but recipient has to pay tax himself and issue payment voucher to the supplier. Yes, and one extra responsibility he has. As supplier is not registered, he has to issue self-invoicing for himself. Okay, this is as per which section, sir? Section 31, subsection 3, clause F. Okay, you can see here, pay tax under RCM and issue payment voucher for supplier and do self-invoicing within 30 days from the date of receiving the goods or services. And here it is services, so within 30 days of receiving the services. Okay. And time of supply will be for the recipient who is for the services which is taxable under RCM. For the recipient, what is the time of supply? Clause A or clause C, whichever is earlier, guys. Okay, as per section 13 subsection 3. So that means date of payment or the date of self-invoicing by the recipient, not 61st day and all, date of self-invoicing, actual date, whichever is earlier. Whichever is earlier. If you remember, I had already explained this in detail when I was covering the time of supply people. Got it? Yes. And unregistered supplier will also include one person. That is the assume the supplier is registered under GST only to deduct TDS under section 51 and they are not making any taxable outward supply. For self-invoicing purpose, still even though they are registered, still we treat them as unregistered. I repeat, if supplier is registered under GST only to deduct TDS under section 51 and they don't make any taxable outward supply, for the purpose of self-invoicing, we treat them as if they are not registered. So in that case, if recipient is liable to pay tax under reverse charge mechanism, should they do self-invoicing? Yes, they have to do it. Yes, they have to do it. And in this example, I have used services everywhere. Sir, what if it is goods? Guys, even if the goods is taxable under reverse charge mechanism, anyway, goods which is taxable under reverse charge mechanism is not a part of your syllabus, but still, let me talk about self-invoicing if goods is taxable under reverse charge mechanism. If there is a supply of goods which is taxable under reverse charge mechanism, and if supplier is not registered, even in that case, the recipient has to do self-invoicing within 30 days of receiving the goods, guys. Within 30 days of receiving the goods. Is that clear? Yes. But with respect to goods, when self-invoicing is applicable, have they connected it to time of supply? No. Only for services they are connected as per section 13 subsection 3. That's all. For goods under section 12.3, which is taxable under reverse charge mechanism, they are not connected to the self-invoicing provisions, guys. So for the goods which is taxable under reverse charge mechanism as per section 12 subsection 3, what is the time of supply? The date of receipt of goods or 31st day from the date of issue of invoice or the date of payment. Any of these three, whichever is earlier. Got it? Yes, sir. Fine. So let me read this. Recipient shall issue an invoice. So please be careful, guys. It is a recent amendment. Recipient shall issue a self-invoice within 30 days of receiving the goods or services in respect of goods as well as services so received by him from an unregistered supplier. Okay. So this self-invoicing is applicable only when supplier is unregistered, including the supplier who is registered under GST, but only to deduct TDS under section 51. So for self-invoicing purpose, we consider them as unregistered supplier. Okay. And he shall also issue payment voucher at the time of making the payment to every supplier. Okay. See, payment voucher will always be there, people. Whether supplier is registered or not, recipient should always issue payment voucher. Whenever RCM is applicable, the recipient has to issue payment voucher to the supplier, whether the supplier is registered or not registered. Okay, sir. Okay, done with this? Yeah. Next, payment voucher is done. Receipt voucher. This is issued by the registered person who is receiving the advance from the recipient for the goods or services to be supplied in future. So as a proof, the supplier has to issue the receipt voucher to the recipient. No? Yes. When an advance payment is received for the goods to be supplied or for the services to be rendered in the future, the receipt voucher will be given by supplier to recipient. And in the future, when supply actually takes place, the supplier has to issue invoice to the recipient, guys. Okay, sir. Next, refund voucher. Now, assume I am the supplier, you are the recipient. I had received advance from you telling that I will supply goods after 2 months. But actually, supply didn't take place. So there is no supply, no invoice issued. In that case, I need to return back the money to you. Yes. If not, you will chase me. Okay, you will come chasing me. Yes, sir. So when I'm returning back the money to you without supply and without invoice, I need to issue a refund voucher document to you guys. Is that clear? This is when advance money is received, but no supply, no invoice is issued. In that case, I need to return the money back. And while returning back, I need to issue refund voucher. The name itself will tell you what is that and when it is issued, guys. When advance is received, receipt voucher. If it is returned back without supply and without invoice, then refund voucher. Okay. Then coming to delivery challan. Delivery challan is issued or generated when there is a movement of goods without supply. For example, assume I am sending the goods for a job work. Once job work is done, the goods will come back to me. Or there is a movement of goods from one branch to another branch within the state, which is not separately registered. So is it a supply? No. In that case, what document should we generate? Delivery challan. Or else, sir, when goods are removed from supplier's place, it has to be delivered to the recipient's place. But when goods are removed from supplier's place, the quantity is not known, sir, because it is a liquid gas. So the quantity will be known only when it is delivered to the recipient. In that case, when the goods are removed from supplier place, it will move along with the delivery challan. Once it is delivered to the recipient, it is a supply. Yes, tax invoice has to be issued. Tax invoice has to be issued, people. Okay, sir. Then coming to e-way bill, issued by every registered person who causes the movement of goods through a transporter only when the consignment value is more than 50,000 guys. So consignment value of more than 50,000 means it is nothing but value of supply plus GST. So consignment value is nothing but value of supply plus GST, guys. Is that clear? So for example, assume value of supply is 48,000 plus GST is 6,000. Should we generate e-way bill? Yes, consignment value is 54,000. So we need to generate e-way bill. And who should generate e-way bill? The first option is for the supplier, whom we also call it as consigner, or the recipient, whom we also call it as consignee. If not, transporter. Any of these three persons can generate the e-way bill. And about e-way bill, we will learn in detail. We have a separate chapter for it. Okay. Then coming to credit note and debit note, very important documents, guys. So you have to be ultra attentive now. Be ultra attentive. I will also try to explain you through the concept of accounts and all here. Okay. So when will credit note be issued as per section 34 subsection 1 means? Guys, whenever already invoice is issued, but in the invoice already excess amount is charged or excess tax amount is charged. Now, sir, whatever excess we already charged, can we call the recipient, tell, give your invoice, I will change the amount and give? No. So how can we cancel that extra amount is by issuing credit note, guys. So even though supply has already taken place, invoice is already issued, with respect to whatever extra amount is already charged, the supplier can issue the credit note to the recipient. So when is it? We will see here. Issued by registered person, that is supplier, to the recipient. In which all situations? Any of this situation. Where the taxable value in the invoice is more than the taxable value of supply. So in the invoice already more amount is charged. Or else the tax charged in the invoice is more than the actual tax payable in respect of such supply. Or else whenever there is a sales returns or any damage where the recipient is giving back the goods to the supplier, or where the goods or services have been found to be deficient, that is damaged. The last one, the discount as per section 15 subsection 3 clause B, that is the discount which is given by the supplier to the recipient after the supply. Whether it was agreed or not, it is given by the supplier to the recipient after the supply. So for that amount of discount plus GST on it, the supplier has to issue credit note to the recipient. Okay, sir. So in simple, if I have to explain, just a minute. Yeah. You can see, guys, as per the invoice, this is the amount charged. Whereas actually, this is the amount which was supposed to be charged. Okay. So value of supply as per the invoice is 10 lakh, but actual amount to be charged was 9 lakh. So already 1 lakh more is charged in the invoice. Yes. So we need to do minus 1 lakh. For that, we will issue which document? Credit note. We will not change anything in the invoice. We will issue the credit note linking it to the original invoice. Okay. Then assume the tax amount charged in the invoice is 1 lakh, whereas actually it was supposed to be charged only 80,000. So 20,000 more is already charged. So we need to do minus 20,000. How do we do it? By issuing credit note. Or else the tax rate charged assume is 18%, but actually it was supposed to be charged only at 12%. So already 6% more is charged. So what should we do now? Minus 6% by issuing credit note, guys. Got it? Yes, sir. Next, debit note. Debit note is, sir, already invoice is issued, but the amount charged in the invoice is less, sir. So we need to charge more. What do? We will issue debit note. So as per section 34 subsection 3, issued by the registered person to the recipient in the following cases. Where the taxable value in the invoice is less than the actual taxable value, or the tax charged in the invoice is less than the actual tax to be charged. Okay. So let me explain this with an example. Okay. So these three are for debit note. Assume in the invoice the actual amount charged is 10 lakh, but actually it was supposed to be 12 lakh. So 2 lakh less is charged. So for that 2 lakh, we will issue what? Debit note. Or else the tax amount charged in the invoice is 1 lakh, but actually it was supposed to be 1 lakh 20,000. So we have charged less 20,000. So for the remaining 20,000, whatever short we have charged, we need to issue what? Debit note. The last one is, assume the tax rate charged in the invoice is 18%, but actually it was supposed to be 40%. So it is less charged in the invoice. So for 22%, we need to issue debit note. That is the difference. Got it? Yes, guys. So I will also try to explain you why credit note, why debit note, because students might get confused between credit note and debit note. Yes, I will just try to explain it. First, credit note. Assume, guys, in the books of supplier, I am the supplier, you are the recipient. I have already passed the entry in my books. It is a credit sales. Let us assume it is a credit sales. Recipient to sales, 10 lakh, 10 lakh. So after this entry in my books, you are supposed to pay me how much? 10 lakh. You are a debtor in my books. You are liable to pay me 10 lakh. Okay. But after that, assume there was a sales returns or a discount allowed. So I need to pass an entry for it. Sales or sales returns or discount allowed account debit 1 lakh to recipient. Okay. So this will bring down your liability, whereas my asset. Yes. So I'm giving a credit to recipient 1 lakh. So after this entry, you are liable to pay how much for me? Only 9 lakh. So in my books, the recipient net debit balance is only 9 lakh. So for this entry, what did I do? I gave credit to recipient's account in my books. Who am I? Supplier. So when in supplier's book, when recipient account is credited, we issue credit notice. For how much? 1 lakh. For this entry, recipient account is credited. Accordingly, supplier has to issue credit note to whom? To the recipient for 1 lakh. Hope you understood. Same way. Let us discuss about debit note. Assume already in my books, that is supplier's book. Who am I? Hello, who am I? Not Vikas, supplier. Yes. So assume in my books already entry is passed, recipient to sales, credit sales, 10 lakh, 10 lakh. So now you are liable to pay me 10 lakh. Okay. But later we realized that, oh, it was supposed to be 12 lakh. So I have charged only 10 lakh. So 2 lakh less. So I am passing again the same entry I am passing for another 2 lakh. Recipient to sales, 2 lakh, 2 lakh. So after this, your account is having a debit balance of 12 lakh in my books. So you are supposed to pay me totally how much? 12 lakh. Okay. So for 10 lakh, I would have already issued invoice. But for this 2 lakh, I need to issue what now? Debit note. So whenever recipient's account is debited in supplier's book after issuing invoice. So for this invoice would have already been issued. So after that, again recipient account is debited in supplier's book. In that case, the supplier has to issue debit note to whom, guys? Supplier has to issue debit note to the recipient for 2 lakh. Is that clear? So hope you understood when credit note, when debit note, and why is it? Why are we using that credit note and debit note name, guys? Actually, whatever I just now explained, it is an accounting concept, but still I explained you so that you will exactly know when credit note has to be issued and when debit note and why. Okay, sir. Fine. And whenever a credit note has been issued by the supplier to the recipient, he need to disclose the details of credit note in the return, that is GSTR 1, which he will file for the month in which credit note is issued. I repeat. Assume I have issued credit note in Jan month for the supply which already happened in November. So in Jan, I am issuing credit note. So for Jan month, I will file GSTR1 in February. So in that GSTR1, I have to give the details of this credit note. But I can also give it later. Later means within 30th November of next financial year or actual date of filing annual return, whichever is earlier, guys. Okay, let us learn that provision first. So 34 subsection 1 talks about credit note when it has to be issued, and 34 subsection 2 talks about the declaration of the credit note. Any registered person who has issued a credit note must declare the details of such credit note in the return for the month during which such credit note was issued. Okay, but can he issue later also, or can he give the details later also? Yes, but not later than 30th November of the following financial year or date of furnishing the relevant annual return, whichever is earlier. And the liability will be adjusted accordingly, means the tax liability will come down. Tax liability will come down, right? Yes. So because of the credit note, the tax liability of the person will come down or increase. It will come down. The GST liability will come down, guys. Because we are issuing credit note in order to reduce the amount. Got it? So it is a loss actually to the government. So that is why they are giving more and more time to the supplier to disclose the details of credit note so that they will enjoy the money. Time value of money. Correct? Now, if I already paid excess tax, so if I give the details of credit note later, till then government will enjoy that money? No. Yes, sir. So credit note details can be given even later, guys. Okay. So within what time, sir? Let us discuss it. I have put some examples here. Assume, guys, the original invoice was issued in the month of December, that is 10th December. So the financial year is 25-26. And the credit note with respect to this original invoice is issued in the month of February 2026, which fall in the same financial year. So the credit note details has to be given in which month? GSTR1. So the credit note details has to be given in GSTR1 of February, which will be filed in March 2026. Yes. But can it be given later also? Yes. But within 30th November of next financial year, that is 30th November of 2026, or actual date of filing the annual return for 25-26, whichever is earlier. That is the deadline to give the credit note details, guys. You can give it in February month GSTR1 only. But can you give it later also? Yes, within this time. Okay. One more example. Assume the original invoice date is 10th December, which fall in financial year 25-26. For this, to reduce the value, the credit note is issued on 25th April, which will fall in 26-27. That is financial year 26-27. So, this credit note details can be given in GSTR1 of April 2026, which will be filed in May. But can it be given later also? Yes, but within 30th November of next financial year. Please be careful. The credit note is issued in 26-27. Correct. So we need to take 30th November of next financial year. That is the financial year 27-28, which is the 30th November 27. Hope you're understanding. The credit note is issued in the financial year 26-27. Okay, because it is in April 2026. Please be careful. So we have time to give the details of credit note till when? 30th November of next financial year, or actual date of furnishing the annual return for 26-27. That is the year in which credit note is issued. Got it? Yes. Okay, fine. Now coming to debit note. So as credit note will reduce the tax liability of a person, government is ready to wait. Okay, because they will not lose anything. No. Yes. In fact, actually their tax revenue is coming down. So that is why they're trying to push it as late as possible, guys. Sir, what about debit note? Actually, debit note will bring more tax revenue to the government. So they are not ready to wait. So whenever debit note is issued, in the same month GSTR1, the details of debit note has to be disclosed. Sir, can I give it later, like for credit note? No, no. For debit note, no extended time, guys. So let me read it. Any registered person who has issued a debit note in relation to supply of goods or services or both must declare the details of such debit note in the return for the month during which such debit note was issued, and the tax liability will be adjusted upwards accordingly. So the tax liability of a person will increase. So you can just see here, because of debit note, will our tax liability increase or decrease? It will increase. It will increase, which will bring more revenue to the government. So whenever debit note is issued, the details has to be given in same month GSTR1, guys. Let us discuss. Assume the original invoice was issued in December, that is 10th December 2025. Whereas with respect to this invoice, a debit note is issued on 25th February 2026. So the financial year 25 26. The year in which the invoice debit note is issued is 25 26. Okay. Assume in the original invoice the amount is 10 lakh plus GST 1.8 lakh, 18% I have taken. Then in the debit note 2 lakh plus 18% on that 36,000. Okay, sir. So this debit note details has to be given in GSTR 1 of February only. Sir, can I give it later? No such options. No such options, guys. Is that clear? Yes, sir. Next, one more example. Assume the original invoice is issued on 10th December 2025, which fall in financial year 25-26. So the invoice is issued for 10 lakh plus GST at 18%, which comes to 1 lakh 80,000. Then for the same supply, again a debit note is issued on 25th April 2026. Okay, same dates, whatever I had taken for credit, no, same dates I am taking here. Okay, so debit note is issued for 2 lakh plus GST 18%, that is 36,000. Okay, sir. And the debit note details has to be given in GSTR 1 of April 2026, guys. Can I give it later? No, sorry. And you have to pay 36,000 more now. Here also, you have to pay 36,000 more. Got it? For which month, sir? For year, it is for February, and year it is for April. So for February, you need to pay on or before 20th of March, whereas for April, it is on or before 20th of May, guys. Assuming the person is following monthly returns as per section 9. Okay. Now, sir, for recipient, this is from supplier's point of view. I will also explain from recipient point of view what is the deadline to claim credit. Important, guys. So deadline to claim credit is given in section 16 subsection 4. Yes. What is the deadline to avail the credit, guys? 30th November of next financial year or actual date of filing annual return. Same like this one. Same like for giving the details of credit note, whatever deadline is there, no? Same deadline is given to the recipient to avail the credit as per section 16 subsection 4. Okay. Now let us try to connect these cases. Okay. This case I will explain from recipient's point of view. As per section 16.4, what is the deadline? So to claim a credit of 1,80,000, what is the maximum time limit available for recipient? Okay. So this invoice is issued on 10th December 25. So that means financial year is 25-26. Okay. So to claim 1,80,000 credit, what is the maximum deadline for recipient? 30th November of next financial year. Okay. So this financial year is 25-26. So 30th November of 2026 or actual date of filing annual return for the year 25-26. Actual date of filing annual return in GSTR 9. Whichever is earlier. That is the maximum deadline to claim the credit of 1,80,000 to the recipients. Okay. Sir, what about 36,000, which is with respect to debit note? Recipient can claim a credit of 36,000 also, but within what time? Debit note is issued in the financial year 26-27. So the maximum deadline to claim 36,000 credit to the recipient is 30th November of next financial year is, that is 2027. Because here debit note is issued in the financial year 26-27. So 30th November of next financial year means 30th November 2027, guys. Or actual date of filing annual return for 26-27. That is financial year 26-27. Whichever is earlier. Hope you understood. Hope you understood. Is that clear? Yes, sir. Whereas here, to claim this entire credit, as both of them will fall in the same financial year, guys, the deadline would be 30th November of next financial year. That is 30th November 2026 or actual date of filing returns, annual returns for the year 25-26, whichever is earlier. Within that time, this entire credit has to be claimed by recipient, guys. Because here, both invoice as well as debit note is issued in the same financial year. Got it, people? Yes. Sure. Fine. So I guess this is all about. Then, yeah, we have discussed all this. Next, the last one, Rule 46A, where a registered person is supplying taxable as well as exempted goods or services or both to an unregistered person, that is single recipient who is unregistered. In that case, instead of issuing two separate document, tax invoice and bill of supply, can we issue one invoice come bill of supply? Yes. When for the same recipients taxable as well as exempt goods or services are supplied, instead of issuing two separate document, we can issue one invoice come bill of supply, guys. Is that clear? Yes, sir. So we have covered section 31 to 34 in this chapter, guys. Come to the section list. We will just mark it quickly. Yes, under CGST Act. So in this chapter, we have covered section 31, 32, 33, and 34, guys. Done? Yes, sir.